you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Jamal, my friend, we are back, and happy Monday to you both. Jamal and I were on the show on Sunday night, too. We're working.
Oh, I saw those comments. They're like, what is Jamal smoking? And I was like, it's time for me to go to bed. I was like, I don't want to deal with this. It's time for me to go to bed. But good morning to you both.
Good morning, you knuckleheads. How is everybody? What are you doing? What's that hack
That's
going
right.
on?
You know what it is. There's
Yeah.
no explanation needed. Come on, man. I mean, 5-3.
I thought the game was over.
It was so wild. Oh my God. It was. I will say, I walked away like out of the room. We were talking about this. It was 41-27. The Bears had just got that interception. And I thought he ran it back. And I actually walked out of the living room. I came back in. And I was like, what? Wait, 41-34. And the Bengals are driving. And I'm like, wait, what? Like, in the score, 15 points in 50 seconds. Like, wait, what just happened? What did I miss?
I don't know. It was too much.
It was too much.
But Colston Loveland, shout out to the kid from Michigan.
Yeah.
Amazing. That was pretty awesome.
Where'd he come from? I haven't
Michigan.
Wow.
He's been getting a tough rap too. I feel like they've been messing with him a lot. Like, this is a first round pick. What are you talking about? And that was a crazy misplay by two defenders on the Bengals.
Yeah. They were just trying to get to field goal range, right? I mean,
it's a rough morning for them, that's for sure. But
the numbers put up by both QBs were crazy.
Oh my God, 450 yards or something like that?
Yeah, I think so. Yeah.
Like Flacco with a bum arm?
Listen, he's the Super Bowl quarterback. Let's not forget.
Yeah.
I mean, he really is. He has that pedigree, so he doesn't suck.
Yeah.
I can't believe the Browns. Just remember, the Browns traded him to them a couple weeks ago.
Yeah.
Yeah.
He just got there like 2 weeks ago.
Yeah.
And he's throwing like 400-something yards, like almost back to back.
To be fair, it was against the Bears, but yes.
I've been reminded a lot of our corners are out. I've been reminded by our production team. A lot of our corners are out.
I don't really know if it matters. Flacco's good, man. Straight up. It was amazing. What a win.
Mm-hmm. It feels like fall. Football's back. It was exciting.
Weather's back too. It does feel like fall. It dropped about 20 degrees or so. We're in our 40s now. It's back to like Chicago fall weather. We'll get to winter in about a day or two. It should go below zero soon.
Speaking of winter, how did it wind up last night? The hockey game.
Oh my God, we beat the number 1 ranked, number 2 ranked, and number 3 ranked teams in the state this weekend.
Wow.
Yeah, thank you.
Wow, that's impressive.
It was impressive. The kids did great. I didn't have too much to do with it. I did do the clock one day. I don't contribute any of the wins to it, but I did, moral support there.
That's what I did.
How much longer is the high schools? Because I know, like
February, end of February. You're gonna deal with this for quite some time, Vanetta.
I just wasn't sure, like just how.
No, I know. Yes, well into the end of February, so we got plenty of time.
Is this like mostly large? Because he's been playing how long now?
Well, he's I don't know. It's got to be about 8 years now.
And how many of the nucleus over the last 8 years, or how many different teams? Like what's
same kids? You mean like?
Yeah.
Pretty much the same kids. I mean, they rotate half of them. Rotate in and out. People go different places. Different kids go to different high schools. The better ones. I mean, this is high school hockey, which is absolutely phenomenal. And there will be a kid or two who will, go on and play college or something like that. My son will not be one of them.
You never know. Don't say that. You never know.
A lot of things got to change for that to happen. But the kids that are at that next level, they usually go to some AAA team. They usually go up to Canada by now. I mean, if you're really
stay with the family,
your wife would divorce you.
No, she would go to Canada.
We actually had this discussion. We have to find an apartment somewhere close to his dorm because I don't know who's going to plug in his iPad.
I know, right?
So you got the same thing going on?
I feel that.
Yeah. Because I don't know who's going to plug in his iPad.
We plug in his devices all the time.
Yeah. But he's a sweet boy, so you got that.
How did your Halloweens end up?
Halloween was great. About I got 240 some odd candy bars, but we didn't have 240 kids. Some of them I can't resist, especially the little ones come up there and So I put them out on a table, so I let them pick what they want, and they'll ask like, how many? And then I'll go, well, how many do you want? And some will say 2, some will say 3, especially the little ones. And so I let them take it. So we probably have about 200
soft
kids.
touch, man.
Yeah, very soft. Until the end of the night. Like at the end of the night, I'll be saying like, this is all I got left. So can you please only take one? Now I'm gonna close my eyes. So we'll see how it goes there. How about you guys? Did you?
How was your Halloween?
We just went to a party in the neighborhood.
Did your son take the choice? Did he stay with you, or did he have his curfew?
No, he actually did his own thing, and he was rolling around, and then he hits us up close to curfew, and he's like, can I stay the night at somebody's house? I'm like, oh man, come on, man, like really? And like, all right, well, we let it go because he didn't have anything the next morning. We had a walkthrough for our football game, which is an hour, and so we let him hang out, and we hung out. It was a good time. It was pretty chill.
Yeah, Vinny had a sleep out the night before, and I had that same conversation with them. I was like, you know what? When do these end? Like, you're 15 years old. He goes, listen, Dad, I'm telling you, we're gonna make hot chocolate. This is what he tells me. We're gonna make hot chocolate.
We're gonna make hot chocolate.
And hang out at my friend's house. Well, until 1 o'clock in the morning, he was at some other destination, some other house, because I got him on tracking. And But Mom, it's not him going out. His mom doesn't sleep, which means Dad can't sleep, which means you're sitting there watching the phone, where they are, what they're doing, trying to figure out what they're doing, whose house they're at, kind of thing. So
they do move around once they sleep. So I shouldn't say this, but I'm gonna say it anyway because he told me the next day. He was like, "Yeah, we went to Jewel at like 11:30, and we're in the store." 2 of my friends were riding in the assisted carts, you know what I mean? Like they were riding around the car. He was like, they don't care if you do it. That never gets old.
I would do that when I was in high school with my friends.
So he was at Jewel for 45 minutes. So I call him and I say, what the F are you doing at Jewel at 11:30 at night?
Trying to scam people to buy them booze?
For 45 minutes. And he goes, we're waiting for an Uber.
There's worse things at 11:40. You know this.
Yeah, I know, but they went to the worst thing. That's where they stayed till 1. That's where they stayed till 1.
Where were they till 1?
It's Putana's house, probably. You know what I'm saying? Yeah.
I'm just glad Life 360 did not exist when I was a kid. So
I mean, yeah.
At least now you can track your kids. So
I took the car out at 15 and wrecked it. So,
did you?
Yeah.
Yeah.
So there's worse things that could be happening.
Yeah. That's not good.
No, it's not good.
Family car?
Yeah, the family car.
Oh, that ain't nice.
It's like the plot of
it was like
and my grandma was in town. Who thinks the world of me?
Oh, not Big Mama.
World of me. Yeah, it was not good.
You took advantage of grandma?
No, they were both sleeping.
So I just you didn't want to wake them to drive you somewhere?
Well, it was something that I had been doing probably for the previous 2 weeks, and it just so happened she came that weekend and I did it, and I just was like, I felt mortified, man. I felt so mortified that like I don't do anything wrong in her eyes, and I was like, I did the worst thing.
You should have brought the car back. Well, I don't know how that happened.
That's exactly what I did. That's exactly what I did. You serious?
Oh man,
you ever seen my? You've seen my mom.
You got to fess
up.
Look,
you saw my mom. My mom that's not the same lady from when I was growing up. Okay.
I did. Yeah, right.
That little lady. Yes. Oh my God.
She was different.
Jeez. Yeah, I lied to her face.
We mellow with age. I
lied to her face about what happened.
We definitely mellow with age.
That's funny.
Mm-hmm. Did you go to any Halloween parties? So you're riding around.
Did you ride? Yeah.
Yeah. I rode around Friday. It was a
nice night.
Yeah, it was a fun time. Yeah, it was great. We got to whip candy at a bunch of drunk people. It was a good time. We rode around on Lower Wacker. I'm glad someone knows where they're going because I don't willingly go on Lower Wacker.
Lower Wacker.
Lower Wacker is a concept, but yeah.
You would just get lost in the catacombs of this city. But
Lower Wacker was such a great concept.
I know,
it really was, man. You could get out of the loop in no time.
Yeah.
Back in the day.
Only the real ones know Lower Wacker. Yeah.
It is truly haunted. It did feel very Halloween to just be riding around in Lower Wackers. Like I don't know where I am. But yeah, no, it was fun. And then just a chill weekend.
Good.
So
good.
Nothing too crazy. But shout out to your son. He is traveling, but got some feedback. Excellent pack show in San Diego.
Yeah, they had a great
last
show.
night for Mike, Nick, and Katie. So thank you to everyone who came out to support the crew in San Diego. I saw Tony from Mexico was there.
Yeah,
was.
Mexican billionaire in attendance. That was nice.
Mm-hmm.
Hopefully he took the kids out for dinner.
I know he joined them for dinner. I don't know if he went into his pocket. You know what I mean?
He's a Mexican billionaire. That's how you stay Mexican.
But once you left,
One show left, Austin.
For you guys,
This Friday, you got to come out.
To Antone's nightclub in Austin.
Yes,
tastylive.com/events is Tom's last show.
Yeah, doors open at 8 a.m. We'll be live trading by 9-ish after the market opens. So sure, can't wait to be out there.
And I'm told it is oversubscribed, so.
Don't worry, sign up, tastylive.com/events. Somebody always drops out. We'll open it up.
We'll get you in. If not, laps on laps.
That's right. That's right. A good 20 will get you in, no problem.
We got a merger, folks.
Yeah.
Kimberly Clark's acquiring Kenvue, that maker of Tylenol, $40 billion.
Who is? Say it again.
Kimberly Clark is acquiring Kenvue.
Oh, interesting.
Yeah.
Okay, breaking news.
That stock was pretty low. Remember when it kept tanking, some Tylenol, whatever.
Kenvue was low?
Yeah. It was the maker of Tylenol. It's been smacked in the last few months here.
I wonder why.
So is Kimberly Clark too. I mean, it has.
Is it?
It's $119. It started the year at, closer to 130, got up to about 140 or so. Looks like it's going to open at 116, 103 or so. Going to be down.
There's actually
or so. So it almost looks like a take under.
Yeah, there's a theme here. We'll get to that later when we talk shop, but there's a theme about, remind me about that, and then consumer stocks.
I will.
Yeah, great weekend though overall.
Okay.
Just focus on the hat, folks. That's right.
Beautiful.
Shenanigans all around. Hey, we got a great show for you today. Jamal is joining us because Mike, Nick, and Katie are still traveling from their whirlwind tour of San Diego. We're happy to have you, Jamal. At the top of the 8 o'clock hour, we have a research corner. We got the general coming in. That's Kai. He gives his overview of what he expects to be some movers in the week ahead. Always look forward to that at the 8 o'clock hour. Then at 8:40, we got Dr. Jim in the house, the Skinny on Options abstract application, naturally taking the other side. So Dr. Jim.
So I did it for a long time, but we'll see what Dr. Jim comes up with.
Yeah. And we will see what football team he's rooting for this morning. Is he going to be a Bears fan this morning?
I don't know.
Detroit lost yesterday, right? So he can't.
I know he's a Dodger fan. I know that for sure.
Congratulations, to the Dodgers. Yeah. Game 7, they went 11 innings. I don't know.
It looked like Toronto was going to be the team of destiny. The way I saw it, it looked like Toronto was going to be the team of destiny.
Well, it was so crazy because it was 2-1 after that marathon game, right?
Yeah.
18 innings, whatever it was.
Yeah.
And somebody got hurt for Toronto. And you're thinking, oh, it's a wrap.
Mm-hmm.
The fortitude on that team. Yeah. Going to get it to Game 7, and then anything can happen in Game 7, as we saw.
Sure.
I knew they were in trouble. I got a neighbor of mine, Janky's his last name. He went with Toronto, and I know he kind of he's the
KOD.
Yeah. So I was like, oof, feels bad.
The mush, isn't it? What it is?
A little bit, yeah.
But back to back, that's hard in baseball.
It's hard in any sport, really. Sure. But for sure.
So congratulations to the LA Dodgers.
I mean, they blew up to Ohtani too, 3 runs. You're thinking this game is over.
Yeah.
And it's amazing. I mean, that was a crazy game.
Yep, sure.
We've been blessed here recently, sports fans, with some wild games.
Sports ball. Good for everybody. Dr. Jim's going to be in at 8:40, then 9 o'clock for market measures. How to stay bullish with less risk. Ooh, I'm very
everybody's looking for less risk, right?
I like that.
I do. And then we got live from the trade desk, Quentin, and TBD is all it says.
Well, you know what? The desk has been getting pretty busy these days.
Sure.
A lot of the guys are to be determined. So hopefully we'll get maybe Marty was scheduled. We'll see if we can get him in here.
All right.
We have to have his representation. Marty is hard to get a hold of.
Well, I saw him this morning, so he's here.
Yeah.
He's always in the kitchen looking for protein bars.
He's an early bird.
Yeah, he's always just looking for protein bars. So that is our run of show for today. You guys want your daily dose? I got a lot of news.
Sure.
Yes. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Our leading story. Top story. Just in.
In today's headline. This just in.
Breaking news.
This morning's daily dose brought to you by Celsius Peach Vibe. You got to read the news, and your body doesn't know what time it is. Peach Vibe. You're welcome. My name's Vanetta. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. Are you ready for the news?
Ready for the news.
Absolutely.
Hey, ton of stuff on deck this week. Palantir, AMD, Pfizer, Robinhood, McDonald's, all reporting earnings this week. What is on your radar?
Oof. I mean, I guess you got to look at a little bit of Palantir today. That's one of the largest, one of the bigger stocks, one of the leaders in the market really here. It hasn't had a downtick. It's got almost a 10% expected move.
Well, they're watching us, so.
Right.
We
So I
should
think
watch
Palantir
them.
is probably going to start the week off and see how the weekends.
What's the IV in there?
IV is pretty good. I looked last night. I'll look right now for you. PLTR. IV rank is only around 34, but with a $20 expected move over the next 4 days, so a little bit less than that, but a 10% expected move for the day. We'll see how Palantir moves.
How did your earnings plays shake out last week, Jamal?
Good. Oh, sorry.
You don't normally trade earnings, Bat. You don't.
I'll go there next.
Yeah.
They were like, yes, honestly, probably like 50-50. I mean, I play mostly earnings to the upside with less risk, bullishly, honestly. And
You only had one. Meta was the only one that went lower. It was the only outlier move, so it really was a fairly good. Microsoft too. They had opened higher and then quickly went lower.
Google worked out well. 50-50.
I just Nikki was crushing it.
Yeah, Nikki's been on fire. Unfortunately, we have Jamal today, so we don't have that. But,
That's
Well,
right.
then how are your earnings plays?
been a decent earnings season. I don't, as you were going to allude to, I don't play earnings that much, but Nick and I have been talking about them since he really likes to do them, and we've been going in that direction more than anything else.
Getting you around to it.
In global news, China announced they will be easing an export ban on automotive computer chips that are vital to the production of cars across the world as part of a trade deal struck between the U.S. and China. The White House confirmed the details of the new deal. The nations also reached agreements on soybean exports, the supply of rare earth minerals, and other issues. Wanted to talk about your rare earths. Talk about FXI. Talk about whatever you want.
Well, soybean snake bitten there. I thought it was a buy the rumor, sell the news event. It's going to be up again, about a third of a percentage point, 4 points. Big move in soybeans. Haven't had a downtick since 10.24. They're approaching 11.24. They're 11.18 right now. Baba and Baidu are a mixed bag of tricks. You have an Nvidia article?
I do.
Coming today?
I do.
Yeah. Well, chips are definitely bid here. So far so good. It looks like talked a little bit about volatility last night. Volatility 19. I thought it was going to be a lot lower this morning if we were up 16, 20 handles. It's hanging in there at 19, only down 10 cents. So maybe we're gonna have some two-sided action again all day today.
Anything in your rare earths, like your MP or I don't know any?
Not my forte.
I know.
Have faded. Yeah, a lot of them have faded ever since he's gotten to China. Ever since they started announcing the deal, most of those names have faded.
Yeah, and not great liquidity in there too. So
Sure.
be careful with your bids and offers.
Yeah, most of them have faded since that deal. But I expect them to bounce back at some point because China will renege on the deal. Who knows?
Yeah, sure. Subject to tweet.
Who knows?
Subject to a tweet.
What a time to be alive.
Two-sided action.
Hey, this is fun. The Treasury Department announces a new Series I bond rate of 4.03% for the next 6 months. That's good through April of 2026. The latest I bond rate is up from 3.9.8% that was offered through October, but it still pales in comparison to like that sweet 9.62% of May of 2022. Good times.
Yeah, those days are gone. But this is now paying around what Bill and SGov pays, which is the 0
I was
to
like,
3.
who's Bill?
Oh, sorry, BIL. I'm sorry.
Yeah, I know.
Yeah, Bill's the guy in the corner who's going to take your money and then lend it out on the street for you. Maybe get you a little bit better rate. BIL and SGov, which pay, those are the 0 to 3 month and 1 to 3 month bills that you can park money in if you want to. It pays around the same thing there. About.
What about regular bonds? Any opportunities in regular bonds? Big move last week from the FOMC minutes.
Yeah, that was definitely a buy the rumor, sell the news kind of event. Traded up to a little over 19 and now down to 117 or so, right? 117.01 was a low, 117.03. I imagine they're going to hang out and chop around here. Ivy rank is only 5, so you really have to be directional in there.
Yeah, I haven't traded them as much. It's just not as interesting as a trade to me compared to all the other things you can trade right now. But I've been watching from the sidelines. Like you said, it's just faded hard here more recently.
Shifting gears to some currencies this morning, the Bank of England looks likely to keep interest rates on hold on Thursday, slowing its pace of cuts for the first time since it started to loosen policy last year. The Bank of England's most recent rate cut by a 0.25 point to 4% in August, only passed by a 5-4 margin. I'm not sure what the pound is doing this morning. We'll look at the pound, euro,
moving
yen.
to the downside.
Yeah, all of them. The yen, pound, euro are all slightly lower. It means the dollar is slightly higher. The dollar's been on a little bit of a tear as of late. It just looks like it's getting its legs underneath it right now, hanging steady.
4 days in a row for the dollar up.
Yep.
Cool.
Back.
Good job.
4 days makes a trend. So there you
Back.
go.
It's back.
It's back.
It's back, baby. Hey, gold falls on reports of China's finance ministry ending a tax incentive for gold sales. Gold fell in the early Asian session on reports that China is ending a tax incentive for the sales of the precious metal that was effective November 1st. What is gold doing this morning?
That was last night's news. This morning, gold is now up $32, which is a big move, a little over 0.75 of a percentage point, back over 4,000, 4,029. Ivy rank of 53 in there. You got opportunity abound in gold right now with volatility. If you want to sell premium on there, 1x2 put ratio spreads if you're bullish, or some other type of strategy, you've got good /GC markets. You've got decent volatility in the front month in GLD versus some of the back month options if you want to. Like Nove is trading at 23, Dees is trading at 22. If that's too tight for you in the amount of times, you got January with 21 and Dees with 22. So you're always selling higher premium in the front month, which is good for diagonal spreads, calendar spreads, those kind of positions that you might want to put on in gold.
Yeah, it's been interesting watching gold here. It's a dogfight at 4,000. I mean, it's an absolute dogfight.
It's kind of weak on Friday. I mean, it oscillated around, ended week.
Yeah, and it's hanging around that level, and then you're able to, like Tony said, you can trade GDX, you can trade GDXJ, you can trade MGC, you can do options in GC if you want. And the one thing I will say is, right before it had that big fall, gold always skews to the upside, right? Right before it had the big fall, it was flat skew, and you knew something was about to happen. And now, again, I think it's upside bid. So it is return to normal. I'm just curious to see what's going to happen with 4,000 here. Are we going to move back up, or is it going to break through? I think probably up. See.
Yep, we'll see.
We will see. In other commodity news, it looks like OPEC Plus yesterday agreed to a small oil output increase for December and a pause in increases for the first quarter of next year as the producers group moderates plans to regain market share due to rising fears of a supply glut. What is happening in oil?
Oil holding kind of steady right in the middle of its most recent range, up to around 65, down to around 56. You throw out those two lows, you're right there at 51, right? 61, right in the middle. Decent Ivy rank at 28. It might be some sort of, iron condor-ish type trade right now in oil. Seems like it's going nowhere fast.
Yeah, I know.
We'll see.
I got long MCL at 60. I'm thinking about closing that out maybe around here.
Well, you got almost a point in. It's good. Trade.
Yeah.
Yeah, I know. Is that your $100 bill on the floor there? No, that's mine. That's all right. Just leave it.
That's why I love him. He always puts it in.
Yeah,
good
that's all right. No big deal. Yeah,
that's good perspective.
Ain't no
it's
thing.
It's boring though. Like I could make.
Yeah, no, ain't no thing. I got it.
Now, you know what I mean?
I will say this, as we come to the end of the riding season, I will miss being able to just fill up my motorcycle for like $14. It is so nice.
Well, hold on, I'm sorry. Riding season? There's a season?
Well, it's going to be winter. I can't ride in the winter. So there is a riding season here in Chicago because it's
You put some Stay-Bill in there?
I do. I will put fuel stabilizer. I haven't winterized it yet. It's. I got to do it this week because it's going to be like 60 today and tomorrow.
Oh, is it really?
I'll take it up to where I store it today or tomorrow. But then, I'll put.
You can like make a video of that. You winterizing your bike, like some content.
Yeah, first pull the battery, put fuel stabilizer in. It's very exciting.
52 cents.
52 cents.
My first bike, 52 cents to fill it up. That was
That's amazing.
52 cents.
That's crazy.
That's crazy.
Although I do have friends that ride in like, rural places in California, and the gas will be like $8.50, and like
Fill it up.
What does a bike get miles per gallon? I literally don't know. Hold on, let me try and guess. Like 17 miles a gallon?
No, my bike gets around like 46 to 49 miles per. Like it depends if I'm riding like a jackass.
Just
or not,
didn't know
but
how
I try not
efficient
to.
the engines were. Okay.
Yeah, try not to ride like a jackass, but no, it's pretty.
So
pretty
hard
efficient.
not to.
You just ride like a jackass. Hey, sad news to report. Bitcoin breaks its October streak with the first monthly loss in October since 2018. Bitcoin on Friday was recorded a monthly loss for the first time, snapping a 7-year streak of gains. Not sure how Bitcoin is starting November.
Not any better. 108.2. I don't think I've talked about 108. I know I didn't do it yesterday. I mean, a Friday. It traded down there earlier before we came on the show and then rallied. This will be the first time we'll be able to talk about it kind of on the show. Yeah, it's 108 and change, down around 2,000. So a big move in Bitcoin to down. And all the altcoins, too, like that SUI and others trading at or near their lows. If they're not on their lows, they're darn close to it. Coin had a good earnings for Friday. It's only down $3 today, but I think Coin's going to be a little bit of pressure on it too if Bitcoin continues to go lower.
How about you, Jabal? Are you doing anything in like iBit or any of the other?
I've had a zebra on an iBit for a minute here.
Okay.
The 5658 zebra in December, and it's just hanging around this area, this Bitcoin, 108 to 110. We were talking about this last night, 108 to 110. It's been hanging in this area. So another thing that I'm curious about this week, is it going to be the week? Are you going to break lower? Are you going to break higher? What are you going to do?
Right, like what does a Santa Claus rally affect? Like, will it affect like gold? Will it affect Bitcoin? Is it just stocks? Like,
It better
come on,
for Christmas.
Santa.
Well, if it actually comes, I mean,
cancel
you
it.
would think if it actually comes and it affects markets to the upside, you would think it would affect Bitcoin to the upside. They've been kind of highly correlated over the last months. So
It has been a little decoupling as of late.
yeah, true. I mean, again, markets are near highs. Bitcoin is not. So true.
Well, October was supposed to be the month when long-awaited crypto ETFs finally hit U.S. market, but deadlines for the SEC to approve or deny several spot crypto ETF applications were lined up through the month, but then the government shut down and the process froze, so now November could take October's place. Several issuers are using a procedural route that doesn't require an active SEC sign-off. What? And it could allow some more ETFs to hit the market this month.
Oh, that was a lot. That was a lot there.
Love a loophole.
Yeah, love a loophole too.
Yeah.
Yeah, I don't know what to say. I don't have too much to add. I don't know what to
neither
say.
do I. That's something else.
I mean,
Jeez.
We don't need the government.
Yeah.
Although I will say tomorrow, I think it marks, like, I think today ties the record for the longest government shutdown, and then tomorrow we'll break it. I could have the dates mixed up by like a day or two, but
we're there.
We are
we're up there.
Unprecedented territory, yes. So good.
We're definitely up there.
Good job, everybody. Exxon is in advanced talks to power AI data centers with natural gas and carbon capture. Exxon aims to capture 90% of the CO2 emissions emitted by natural gas plants that power data centers. That's interesting, I guess.
It is. ExxonMobil sideways. I mean, it's where good traders go to die. I mean, it does pay a big dividend. A little over 3.5%. But again, the stock started the year about $7 lower than where it is right now, plus a couple quarter dividends. Maybe you throw in another couple of points there. Is that where you want to be, or some of these growth stocks that have doubled or tripled over the year? So maybe it is time for an ExxonMobil type position with the way the market has been behaving at this toppy-ish area.
What's going on in natural gas overall?
That's actually up today. Yeah, it's up a little bit.
It's had a good 4-day run or so, though, going from under 4, like 3.7 or so, up to where it is right now, 4.16, off of 4.29. Every 10 cents is $1,000.
Oh, wow.
Yeah, so it's a big move. Yeah.
Yeah, thank God.
Here's something interesting. There's an ETF that could be a big winner in the data center boom. The TEMA Electrification ETF, yeah, I know, has the largest exposure to data center bellwethers. It's VOLT, Volt. And it's up 31% year to date. That beats the S&P, but it has uniquely high exposure to utility, data center, and energy infrastructure stocks.
Yeah, I'm not familiar with it.
I hadn't heard of it either.
It has no
Yeah.
options. Pass respectfully.
Yeah, it's since April. It's gone from around 20 to 30 or so. So you're right. It is up. It does seem to be up good. No options, and I don't know how much stock trades per day. It's low so far for pre-market, but that's not an indication of what it would do.
You would just buy the stock. Look, I'm trying here.
Yeah, no, I hear you.
You're doing a great job.
Volt.
This thing does not. It needs options.
Yeah, I know.
It needs options.
But it's like you want to trade data centers because all you hear is data center, data center. But
Average volume 50 some odd thousand shares.
Oh,
a
that
day.
sucks.
It's
Yeah.
horrible.
You know, that's a good point. I don't really know off the top of my head what is the trade for AI data centers right now.
Right.
Other than the actual.
Like XLU, like I would do like utilities,
Yeah.
like an XL, which that's also not.
Isn't it
super
crazy
great.
that these utilities, you mentioned those? I mean, some of these names, it's crazy. Like CEG, like that was the most boring utility in the world.
Right.
And that stock price is crazy now.
Yep.
Yeah, you're right. I mean, that's probably the way is some of these utility names. You're right, you know.
Well, I don't know. I just want to get rich so I can retire.
Hey, say less.
Big tech's market dominance is getting even more extreme. I think it's crazy that the 7 or 8 stocks are now 60% basically of the market. How long can we sustain this?
As long as we have stocks, because they'll just rotate other stocks in and out. I mean, it doesn't. It's a rose by any other name smells just as sweet.
8 of the 10 biggest stocks in the S&P 500 are tech stocks, and those 8 companies account for 36% of the entire U.S.'s market value.
Kazaa.
Well, I mean, think about our everyday life. I mean, look where you're reading this stuff off of right now.
Sure.
Look at our cars. Look how much, chip stuff that they have in it. I mean, our phones is the number one thing that guides us around in life. I mean, it is what it is.
But that's
It's an extension.
super concentration. Like, it scares me.
Same old story. It's the same
I think the
way.
S&P 500 has always been a reflection of, or the Dow, whatever, of what's going on in the world.
Who can name the bottom 450 S&P stocks? I mean, a lot of times we'll look at a stock. I'll say, is that even in the S&P or is that even in the NASDAQ? I don't even know. You're always trading or looking at the big leaders to take us higher or lower.
Replace them. Somebody do it. Replace them.
Right.
Are you guys doing anything in the indices respectively? So S&P
By the way,
versus
that's Tim
NASDAQ?
in the picture there. I don't know if you remember him.
Who?
Tim. That's Tim. I don't know. I'm just reading his jacket. He has Tim.
Oh, I was like, you know him?
Okay, I was
No,
like,
I don't know him. I don't know. It just says Tim.
What are you guys doing, like S&Ps relative to the Qs or anything? Or the Russell?
Haven't done anything, but the Nasdaq on Friday was the leader in the clubhouse. Nasdaq, even the S&Ps, have been running in tandem with each other, and it seems like the Russell and the Dow. I guess the Dow is up there with even the S&Ps and Nasdaq. The Russell's been the weakest of the group. It's been that story for the last couple of years, so I don't think that doesn't continue. I think it does continue.
AMD is on deck to report earnings this week, but Nvidia is the biggest winner from earnings season, and they haven't even reported earnings yet. I just like that headline. But Nvidia is primed to benefit from heightened AI CapEx spending from Amazon and Google and Meta and Microsoft, and they still have a couple more weeks before they deliver their earnings report. The company already has a market cap over $5 trillion, and it's bonkers. And I did forget, they haven't reported yet. What do you do?
You like that word, don't you, CapEx?
CapEx. I do like that word, CapEx.
Yeah, I can tell. Yeah, you
Papa
like
CapEx.
Nvidia got the Trump bump last night on the plane going home. He mentioned Nvidia, and last night Nvidia caught itself a bit. I think it was up around $6 at one point.
Whoa.
It's up about $4 right now to 206, which would, if it closed up here, would be a new closing high for Nvidia. I mean, listen, Nvidia it's been a leader in the clubhouse. It caught a bid from 180 there about 7, 8, 10 days ago, up to around this level of 200. Now it's 206. Ivy rank at 25. You talked about earnings come out. It does not until November 19th. It does look like it's setting up where the numbers have to be amazing to sustain these levels. So there could be some trade there. Ivy rank's only 25 right now, but we'll see over the next 2 weeks if the Ivy rank expands in there, which I would expect going into earnings. So be very careful if you're looking at those shorter dated November options. November 21 options, if you're still in there with 18 days, is after earnings, but they'll probably catch a little bit of a bid too. So I don't think Nvidia is a premium selling product at this moment.
Okay.
It's certainly a directional play.
How about you, Jamal? What are you going to do in AMD?
AMD, more
Also
than
on a
likely,
tear, right?
Yeah, it's also on a tear. It's
About $3.
But now typically what I'll do is like calendar call spreads, and I'll pretty much do them in most big names. And again, they're fairly cheap. So if it doesn't go up, I still, I don't get murdered on it. And, it is what it is. If it does, it works.
Even a diagonal spread.
It gets tougher, though, when they start to get up here. Like, it gets a little tougher to put these on.
Yeah.
Because, again, I'm usually trying to find something like, 10 to 20% out of the money. I don't know. We'll see how it is.
AMD has earnings after the market closes tomorrow on the 4th. So you will be able to do something like, Nove Dees in there if you want to.
It's nice, yeah.
Dees has under 70 implied volatility. Nove has an 81. And Nove is going to be about 14 days after expiration, 14 days after earnings come out. So you got a nice little play there. Nove will have some premium to it, and Dees is kind of a good hedge against it if you're looking for something with defined risk. So, yeah, calendar spread, diagonal spread, maybe pick up 25, 30 deltas.
I could do one in Nvidia now, actually. It's probably even easier, and I could sell the front that doesn't have any earnings yet.
Yep, you could.
So let's see.
All right, something to do. Apple CEO Tim Cook signaled to investors on the company's earnings call that the company is still open to acquisitions and partnerships to move things forward on the AI front. Is there a way to play Apple for a little M&A bonanza?
Well, I don't know.
It's post-earnings. I didn't know if the IV had stayed high in there or not really.
No, it didn't. Ivy rank is down around 15 or so. Stock looks like it's unchanged this morning, maybe down just a skosh on there. Implied volatility across the board. See, here's an example where if you were looking to do something diagonalized, meaning intra-month from Nove to Dees, Dees is actually higher than Nove, so it really doesn't set itself up for that. For this, I think you're probably in a directional play here in Apple, and I think it'll be a tight pull. Probably just a simple little debit spread.
Okay.
I was looking at Apple.
I agree with that. Yeah, I agree with that. Yeah. I think it could probably drift higher. It's largely been left out of the big good news, right? Like all these different deals that Nvidia and the rest of them have done. And I think at some point or another, they're going to start to be a little more.
And they need help. Yeah, they need help on the AI side of things. So I think an accretive deal, it makes probably the most sense for them.
Let's not forget, let's keep an eye on them over the next day or so. After all this China stuff and the deals that was made, they should be one of the ones that should benefit from this stuff.
Sure, absolutely. Elon Musk teases a Tesla Roadster demo by the end of the year, but he's been hyping up a new one since 2017. Tesla CEO told podcaster Joe Rogan that his company is aiming to unveil a redesigned version of the Tesla Roadster before the end of 2025. The remarks came after OpenAI CEO Sam Altman posted on social media that he tried to cancel his Roadster reservation.
I love how they go at it. Yeah. It looks like a Porsche.
They're cool. Roadsters are cool, but they've been...
not cool if you have more than two people.
It was the company's debut electric vehicle in 2008, way back.
I'm getting disappointed with the Tesla hype on the new models.
Whatever happened to your truck registration or whatever?
I kept it in. I've never gotten called.
Really?
I don't want one, but I'm just wondering how many years it's going to take.
You just took your money though, right? Didn't you have to put down a...
Yeah. Oh, yeah.
It was $100. Yeah.
Still.
Hey, all right. Well, then you give me $100 then. I'll give you the reservation.
No, I'm not.
I got a Roadster reservation too, so we'll see. We'll see how it goes. But,
what is going on in Tesla stock?
Tesla stock's doing well. It looks like it's down around $1 this morning. I mean, the S&Ps were just up 25. They're up 18 right now. But it's been holding steady sideways. Ivy rank of 23. Earnings are gone. It's probably a December trade with 46 days to go.
Okay. Figma Figma is acquiring an AI-powered media generation company called Weavy. Figma, I think it's just FIG, one of the newer IPOs on the market. Figma said that they had acquired Weavy, and the startup will join Figma under a new brand called Figma Weave. What?
Yeah, unless you have a directional bias here, I would run, not walk from trading the stock. Options are $1-ish or more wide. The stock has not caught itself a bid ever, and has earnings coming out on the 5th, which is just a day or two away. After the market closes.
This is the one that Adobe supposedly was going to buy, never was able to pull the trigger on. They go public, and now they're how the hell you go public and then you're acquiring people? I didn't know you had cash like that. They definitely didn't do cash. It's
a good gig if you can get it.
Yeah. I'm not sure what the actual terms of the deal are, but just something. I thought I'd mention it because we don't talk about Figma a lot, and I wasn't sure how the options.
Untradeable.
IPO. Well, that sucks. A firm gets a boost from New York Life with a $750 million loan deal. It provides off-balance sheet financing to support roughly $1.75 billion in annual loan volume. New York Life has already invested nearly $2 billion in a firm's collateral pools since the partnership began in 2023. AFRM.
The company that loans money is getting a loan from somebody.
Yes.
What could go wrong?
What could go wrong?
Well, they're making it up in volume because they're going to put it out on the street. This is like, getting into my family's business here a little bit. With
loan sharking?
Loan sharking.
I was like, what are you talking about?
That's right. So get off our street corner.
Yeah, you get it. You
up about $1 or so, maybe 50 cents or so. Been going sideways. Good IV rank of 40. I think it has earnings. It does. Earnings this week, November 6th. Affirm, place your bets. I hate what they stand for because I think lending money at a high interest rate to people who probably shouldn't be borrowing money is not the best way to make a living. But it worked for my family, so sure, why not? Go for it.
What is KLAR doing? KLAR. That's the newer of the IPOs.
I haven't even looked at it since its IPO. Yeah, its stock's just been tanking.
Yeah, it has.
For the most part. I mean, drifting lower, I should say. $37 IPO price. I think it opened at 52. So.
Yeah, often imitated, never duplicated. Affirm.
Wolf.
Stay there if you're going to go somewhere.
Wolf. Disney channels go dark on YouTube TV after the media giants failed to resolve a carriage dispute. If you're looking for one of your favorite sporting events on YouTube TV over the weekend, you were SOL.
Yeah.
Disney channels have been removed from YouTube's pay TV platform, again, after the two companies failed to reach a new agreement. That includes ESPN, ABC, Disney Channel, FX, National Geographic, and Freeform.
Disney, I don't know what happened. Like, they're not making the deals like they used to. Stock's hanging out at 112 now. It looks like it's unchanged. I know as a consumer, I like Disney Plus because I got a grandson. I couldn't get on there.
Sure.
It was kind of disheartening. I mean, the kid had to cry. We had to go out and play.
But no, you can get Disney Plus. Disney Plus is different than YouTube.
Yes, that is true.
So we have YouTube TV. The Disney channels were missing. ESPN more than anything, and this was clearly pretty strategic because it was Saturday morning, right?
Sure, yeah.
For those who watch College Game Day, did not show up. Although you just had to go to YouTube, which was funny to me. Right? That you couldn't go to YouTube TV, you just go to YouTube, and it was there. But I didn't get the chance to see my Miami Hurricanes play this weekend for sure. And that sucked, and that's why we lost.
Did you get to see my Hoosiers dominate?
You didn't even know you guys had a football team, okay, until like 2 years ago.
That is true. That is facts. I will get called out. I do not care.
No, but it's kind of weird.
What about Google?
It was actually really smart and strategic what they did. You could tell, and they pushed everybody to their app, essentially, for the weekend. So I don't think they're going to do anything for a while. I wonder. I think they're going to draw this out.
I'm just so tired of having to pay piecemeal for a billion different services just to watch a bunch of, I don't know, I'm just cranky about it. What's Google doing?
Google been on a tear. Last 2 weeks going from 240 to 280 and change. It looks like it's up another $1.50 this morning. Google's been one to reckon with.
Sure.
Google, good IV rank in there too. IV rank at 33.
That's pretty good post earnings.
Yeah, post earnings for sure.
Not bad.
For sure, you might have did something for option trades today every Tuesday and Thursday. Stay tuned.
Hey.
Good news, I guess. Coca-Cola Company announced on Halloween that they are reintroducing Mr. Pibb. They call me Mr. Pibb. No. 24 years after discontinuing the brand in favor of Pibb Extra, the revived Mr. Pibb will include 30% more caffeine. What are y'all doing?
Whoa.
And a bold kick of cherry for an intense sweet cherry flavor with hints of caramel and a lingering spicy finish. Gross.
It's zero sugar.
Who
You can get the zero sugar if you want to.
Who asked for this? What,
know,
is
who
Mr.
asked
Pibb,
for
is that
this?
like Dr. Pepper or is it like root beer? What is it?
I don't know.
More like a Dr. Pepper.
Dr. Pepper, right?
Yeah.
Oh, like a spicy, like a blend of a bunch of different.
Yeah.
A blend of a bunch of different chemicals.
Right. I don't know if it has what was
the hell
Dr.
would you
Pepper
even call
allegedly
Dr.
have in it some kind of it was like a fruit juice, like it was the urban myth back in the day. Oh, let me try to remember. What's the one that makes you go to the bathroom?
Prune juice?
Prune juice.
Yes,
Prune juice,
yes.
really?
Yeah,
Oh,
yeah. That was always the urban myth that it had
I see
prune
that.
juice.
Well, you know, mellow yellow, not mellow yellow, but what's the word I'm thinking of?
Starry?
Nah, mellow yellow? I guess it's mellow.
Could be.
Yellow.
7-Up.
Has vegetable oil in it.
Oh,
What?
really?
Look at which one is it? I can't remember if it's
Gross.
mellow. It has hydrogenated vegetable oil. It tells you on there.
Yeah, that's gross.
Interesting.
Look, whatever. I can't judge anybody because I drink Diet Cokes like my life depends on it.
Do you?
Also, I think
Mountain
the
Dew.
machine,
That's what I'm
the
thinking.
machine is out of Diet Coke, so I'm able to go home early because we don't have Diet Coke.
I don't blame you.
Mountain Dew has that.
I'm not sure what KO is doing. Coca-Cola companies.
KO.
New product. They might skyrocket.
Mr. Pibb is back.
Unchanged.
To the moon. Okay.
Unchanged here, hanging out
Give it in stock.
at 69 or so, in the middle of its most recent range.
Chick-fil-A has officially opened a new beverage-focused concept, joining other companies like Taco Bell and McDonald's. The new concept is called Daybright. It opened in Hiram, Georgia last week, and it offers handcrafted coffee beverages, smoothies, cold-pressed juices, and food made with simple ingredients. What are your thoughts on more fast food chains driving towards, I guess, more of like a Starbucks kind of model?
I'm thinking they need to change that picture because that donut looks like it has mold in it. Seriously.
I think it's like a ube. I think it's like a ube dough, but you're right. It does look moldy.
Yeah, the purple was not a good choice there.
Purple
And you know what?
and green or what?
Right.
I don't know.
The Joker colors there from Batman. I mean, there was probably, 50 people in a room that decided this? I mean, this is a good color, a good ad to put out there. Even that sandwich doesn't look right.
Yeah, let's do this one. Yeah, let's.
Yeah.
Right, yeah. We
Seriously?
can do this. We can do
Seriously?
Well, the one head guy said we should do this,
Yeah,
and then they
yeah.
all said,
Yeah,
I like that.
yeah,
I like that.
yeah,
I love
yeah,
that one.
yeah.
Yeah, that's perfect. That's perfect.
It's terrible. It's
Good job.
You do chicken right, though. I'll give you that much. Yeah.
Chick-fil-A
I'm not
breakfast.
really into fast food breakfast like that. I mean, but I was as a kid though. You know, that McDonald's breakfast. Oh my God.
Yeah.
You know what I mean?
It did hit
Sausage
different
and-
back in the day.
With the styrofoam. There's nothing.
Yeah.
Nothing says breakfast like styrofoam.
Yeah. Finally, today for my viral video of the day, because you guys both have kids, do you see certain traits of yourself in your kids?
Both, I won't talk about my daughter, but both Vinny and Nikki have my speed.
Your speed?
yeah,
Your breakaway speed?
My speed or lack thereof. Yes. They're
Yeah,
both
for sure.
blessed with that trait.
Now, how about you, Jamal? Do
Oh,
you-
it's a funny look in the mirror when you see it. Yeah, for sure. I definitely
Yeah.
see it all the time.
Well, I saw this video. I am not sure who this lady is, but this is one badass mom. But this is why her daughter turned out this way. Watch this.
Whoa.
Because that's her mom. She drives a friggin' monster truck. Look at this recovery.
Nice.
Hey,
Yeah.
that's super impressive.
Pretty good.
The little girl did have that look in her eye though. Like,
Cynthia Gautier is.
That's
is
great.
right. I mean, that's pretty
I wonder if I
badass.
saw her when we went to because we went like 3 years ago to the Rosemont. I wonder if she was there. I don't know. What's the name
Did
of
you
her
like
truck?
it?
it's
I
fine.
don't know the name of her truck. That is a good. I couldn't see the label on it. I know the one like Gravedigger or whatever,
Yeah.
but yeah, I don't know the name of that. But imagine it's like your parent. It's like career day at your school, and there's like, oh, my dad's a lawyer. Oh, my dad's an orthodontist. My mom drives a monster truck.
That's a good intro.
Yeah, that's
definitely a good intro.
She's badass.
Yeah, badass. What's coming up next?
We're going to take a quick 90-second break. We're going to come back. We're going to talk a little bit about the markets, overnight action, and then we've got Confirm and Send. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Jamal, my friend, we are back, and you know what that means. We do a little bit of confirm and send, where we go to customer viewer emails, questions they may have asked over the last couple of days. But before we do that, let's take a look at what the market's doing. Even the S&Ps up 21 handles. They were up pretty much right out of the chute Sunday night when we were doing the show. They flirted with being over 6,900, 6,903. Really nothing to see here if you think about the market as of last week. Volatility has been hanging in there. You'll see it here just under 19. I had thought, and I said on Sunday night, that with the even the S&Ps up around 20 handles, that volatility would be in and insignificantly by 50, 60 cents or so. Completely wrong on that call, because the Russell is a little bit lower by $1.50, and the Dow is a little bit lower slightly by 28. We'll see if they firm up or take the market a little bit lower. NASDAQ, leader in the clubhouse, no denying that, up 173, over 2,600, 26,182, flirting with its all-time highs too. Bonds down 7, 117.03, near the low end of the range. Ivy rank is quite low in there too. It looks like a spot trade, if anything. And by spot trade, I mean I don't think it's a premium selling strategy. Bitcoin down 1,800, was down around 2,000 and change. The futures traded under 108 to 107.3. They're back over 108 to 108.5. But you can see here, and Vanetta talked about no Uptober. Now we'll see if we can get more November to help us. ETH, you know it as Ethereum, also down $160. They've seemed to have lost their luster. We talked a little bit about Bitcoin and Ethereum on the show last week, where it had seemed to lose a little bit of its oomph to the upside. It seems to continue that right now. Oil down 7 cents to 60.91. I know you were a little bit bullish on oil. Been hanging in there pretty good right now. I know you were thinking about getting out of your futures. I don't know if you did or not.
Not yet. Let's see how the day.
Understood. Gold up $33 after being lower last night, under 4,000, back over 4,000, oscillating in this range of around 4,000, up 33. Silver up 16 cents, 48 and change. Net gas up around 4.5 cents. That's a 1+% move in net gas. You can see here it had a larger move just a moment ago, up to 4.29. Soybeans, another one I got wrong. I thought soybeans 2 days ago was a buy the rumor, sell the news type event, but soybeans.
Give it time.
Say again?
Give it time.
Give it time. We'll see about that. But you know what? We're out of time, so let's go to confirm and send viewer emails. Monday, November 3rd. Welcome to November. First trading day of November. How you feel about that?
It feels like the year's going by pretty fast.
Doesn't it?
Yeah, a little bit.
Another trip around the sun.
I mean, look, 3 weeks. Yeah. Is it like 3 weeks? And we got Thanksgiving?
Yeah.
Wow.
Did you put up your Christmas stuff yet?
Nah.
No, okay. You're going to wait. You wait till after Thanksgiving? I wait till at least after Thanksgiving.
Yeah.
But the stores aren't.
No. Well, this is going to be this next week and change. We're going to be seeing Christmas.
This weekend was the transition period. They had already had all of the Halloween stuff. We only had one row of that left over, 50% off, and then 3 or 4 rows of all the holiday Christmas stuff going. I mean, they are. Thanksgiving is just getting a pass.
I hadn't seen the Christmas commercial until this weekend. Yeah.
Sad.
It's starting now. It's starting.
Let's go to the first question, please. Jamal, do you believe in the idea of a Santa Claus rally? Do you? And if so,
my name's not on there. What do you?
And if so, when do those typically begin? Go ahead. Do you believe in a Santa Claus rally? Do you believe in a Santa Claus rally?
I'm not gonna lie. I feel like a lot of the seasonal, there's a lot of people on our network who shall be unnamed, Chris, who always talk about seasonals. I think, honestly, a lot of seasonals is bullshit for the most part. But I will say I do believe in a Santa Claus rally. It seems to happen. You can argue about the dates at which it happens, whether it's prior to Christmas or after. But it's a thing. I've definitely seen it some years. There's no question.
I think it's one of those. I'll go back to our model or my model of the standard deviation. 68% of the time, seasonality is right 100% of the time. You know what I mean? It works when it works. It doesn't work when it doesn't work. If you're looking at positive drift in the market, it's going to work more times than not. If we're in a bull market, it's going to work more times than not. We're in a bull market at market highs, so I don't know if it's Santa Claus or a lack of liquidity or anything else like that. It does seem to have a little bit of a bullish tint to it. But when you go over the numbers, it's really de minimis one way or the other.
I feel like I remember it happening in late 2008, which obviously that year ended very badly. But I remember it even happening a little bit then. And then we were like, oh, okay, this thing is over. And then, of course, we went lower January, February until March.
Again, it all depends on when you go for your period of when you start mapping it on a chart. So I'm with you on that one. Next question, please. Jamal, I'm often on the go and just get to quickly glance at my positions. Given that, which Greeks would you say are essential to monitor?
Oh man, I would say. Let me look at my chart here. I would say, you know what's crazy? I don't look at my delta and my gamma as much and stuff as I used to. Like I really don't.
Okay.
I pay attention to my extrinsic. I pay attention to that the most. I do somewhat pay attention to my beta weighted deltas. I pay attention to my IVR or my net. I pay attention to my net. It's crazy. You're asking me. I know you're asking me about with Greeks.
Sure.
I really don't monitor the Greeks as much. My positions aren't large enough where I have to worry about my Greeks as much. I just pay attention to my beta weighted deltas. I would say is probably the biggest thing I watch.
Of your overall position.
My overall position, just because of the way that I trade, I don't feel the need to monitor my deltas or not. Most of them aren't massive. I probably look at my overall book delta.
Sure.
But not my individual position delta.
Yeah, I think the beta weighted delta on the top of the platform is probably especially if you are accumulating a position. Now, there are a lot of people who don't trade an accumulated position the way that we do. So I think you have to go to your position tab and look at your delta. I mean, if you've got ABC stock and you're bullish on it and you sold premium and now, the stock has gone lower and you're too bullish on it, you might want to reduce that delta, something like that. So I think delta is king, but I do agree with you. You do have to look at your extrinsic. You do have to look at your beta weighted delta. You have to look at your positions. I mean, you have to have. It's so hard to make money when you're right. You hurt yourself when you have a position that you don't have the delta on that you wanted to have on.
Yeah.
And you don't benefit from it because time's gone by and you either, did some sort of debit spread or even just bought premium and now you no longer, you're too far out of the money. Time's gone by and it didn't work. Or you're too deep in the money and you have too much delta on and you should have looked to reduce that. You like watching the P&L go up. P&L is king too.
Yeah.
I watch my P&L every day. I mean, I know everybody does that for sure.
Yeah.
Next question, please. Jamal, do you monitor news over the weekend in order to get a feel for what the market may do? Or do you just wait for the Sunday night open and see, myself on there and everybody else on the network?
Yeah, well, before you dragged me to Sunday night, no, I'm just kidding. What's funny? I really don't. When Friday comes and we end the Friday, for the most part, I don't look at much.
You disconnect?
Yeah, I do. I a little bit. I do, actually. I mean, I don't look at anything on Saturdays. It really has to be wild times, like not good times, like 2022, maybe even in April,
So volatility 19, 18, 19, 1% move on the E-mini S&Ps. Yeah, they'll make a difference.
No, I don't. I think unless it's just really bad times, I don't really monitor much news over the weekend. If during those same times, I will look at a Sunday. I will look to see what's on 60 Minutes, because I feel like a lot of times there are stories about the market on 60 Minutes, and we all know what that means. That means things are crazy. But other than that, I kind of disconnect.
Sports. That's awesome. I know a lot of people can. I find it the hardest thing to do now with a phone in your pocket that's basically a computer, not to look at what futures are trading a little bit here, even if it's something I don't have positions in. I mean, I'll watch Bitcoin more all weekend than I probably do during the week.
Really?
Yeah.
Well, what are you looking to do? You're not going to do anything?
I trade some of the Bitcoin Cash from time to time. Yeah. No, I want to. I don't know. I guess I've been doing it so long that it just has to be part of my day. Sunday when the futures open, even if I'm on the show or not, I'm always watching. A couple minutes before just to see how they behave for my overall positions. I wish I could disconnect. I think it's probably healthy to disconnect. I really do.
I disconnect and I pay attention more to sports. And honestly, starting 4 years ago, I used to
see, I'm not a sports junkie like that. I don't have any other life. I kind of backed off
of sports betting, and so now I still watch it, of course.
I can't do fantasy football anymore. I
do fantasy football.
Yeah, I can't.
See, that's my numbers thing over the weekend. So that's my numbers thing.
Yeah. I'm a one-trick pony.
By the way,
I wish I was better.
I'm glad you mentioned fantasy football.
Oh, did you? Oh.
Producer John, unsolicited. Unsolicited.
He did walk in here and pay you. I just thought
unsolicited. He said $20 on the game. Wow.
So did you play head to head?
We went head to head. Yeah.
How bad you beat him?
You know what? I really had
30 points.
How many?
He said 30 points.
30 points. That's a shellacking.
Yeah, it was good.
Yeah.
And I didn't even play Flacco. I actually have Flacco on my bench.
Wow.
Yeah.
That's a strong team, John. You should stay away from that. Next question, please. Jamal.
Remember when I first came on, I used to do this.
Jamal, let me do this. Jamal, I consider you a veteran trader. You've been at this for over 10 years, and your returns are generally fairly consistent. Okay, I'm making you just like this person that wrote in here. What do you think is the biggest trap more seasoned investors fall in like yourself?
This is actually a really good question, and it's currently a good trap season. And what I mean by that, it's earnings. I think one of the things is earnings. If you continue to just keep playing earnings, you know what I mean? Like, again, Vanetta asked a good question this morning. How have your earnings go last week? I was like, I mean, I think 50-50, but I actually don't really. And again, I don't put a ton of money into earnings, but I think playing too many earnings can be a trap. Playing to the upside with too much exposure can be a trap. That's why I think it's really good what we're going to have this morning talking about playing upside, being bullish without being too much money into it.
Sure.
I think those are the two traps for me personally that I can follow.
Yeah, I think you can add believe in your own bullshit.
Yeah.
Like, you know what I mean? Like, knowing, I can't tell you how many times I was so confident on a trade and maybe even ramp up the size a little bit. Yes. And that's always the one that bites you in the end, right?
Units.
So don't, if you're fearful of your position in the market, you probably have a good position on. So don't believe your own stuff. And you know what? Market doesn't care what your position is, and the market doesn't care how far it's gone in one direction or the other. I mean, especially in the time frame that we play in, that 45-day time frame. I mean, the market could be what was it? Who was it? Irrational more than was it Buffett? That you can stay solvent.
Yep.
I mean, it's good. It's a good quote for even 45-day trades like ours. So stay mechanical. Don't believe your own stuff, and admit when the market was showing you something else. You know what I mean? If volatility is not contracting the way you did it, well, then you're not going to be taking positions off that you might have thought you were going to take off on Sunday.
Yeah.
You might be looking to put on more positions or other positions or adjust the positions that you have on Monday morning, because that's what it looks like today. So listen, good questions from the crowd. We're going to save some time. So we got Kai in here. He's going to go over everything that happened last week. We'll be back in 90 seconds. Let's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The money match event starts now, exclusive to new tastytrade customers.
It's option jive. It is time for an option jive, Jamal, and that means we're going to bring in this man, Kai, in the house. How are you, Kai?
Doing great. How are you guys?
Good to see you. You get your own applause. You get that when you get home?
Not on a daily basis.
Not on a daily basis, but
Right.
sometimes. That's better than most of us, so good job out of you, my friend. What do you got for us today?
All right, so a lot of stuff and some new data is pretty interesting and related to the market from last week.
Let's do it.
Yeah, okay. So the summary from last week, definitely the biggest news is the Fed cut ratings by a 0.25%, but the tone was kind of hawkish. So the December cut odds fall immediately to 67% from 90% before Powell starts to speak.
Yeah, big move, right? Now you're talking about the Fed Watch tool there, right? And
Yeah, exactly.
Yeah.
It dropped from 90 to 67%. Right now it's like a 69, 70%-ish.
Which they've never, it's never been wrong if it's been over 65%.
Oh, is it?
Yeah, I believe so. I think the Fed Watch tool has been predictive.
It's pretty accurate. I follow it for years. I think there's.
But going from 90 to just around mid-60s.
Quoting stuff that I'm sure Vecchio told you. It sounds.
Yes.
Like
I actually think I got that from Vecchio.
You definitely did.
I think I stole that from him.
Interesting. That's 65%, very close to 68%.
Yeah, which is right around one standard deviation. Yeah,
very interesting.
Yeah, but a big move, certainly some uncertainty there, and that's subject to change, right? As the months go on.
It's kind of indicating the December cut is not guaranteed.
Mm-hmm.
Not guaranteed. Mm-hmm. Yeah, the second one is definitely the U.S. and China meeting. Trump-Xi trade deals kind of temporarily lift the market sentiment. The interesting reactions, all 9 major global indices went up last week, pretty dramatically.
Mm-hmm.
Actually, not U.S. U.S. is kind of mild. And the last one is Nvidia hit $5 trillion market cap during the week, not Friday. And Microsoft and Apple actually hit $4 trillion. A lot of articles only mentioned Microsoft. I checked the Apple, 3.99 at the end of Friday.
Uh-huh. And Apple looks like it's unchanged this morning. Maybe if it catches a bit with the rest of the NASDAQ, which is now flirting with up 215 handles right now. Maybe you get a little bit of a move in Apple too.
As people, a lot of people don't remember, but he's our liaison in Asia, and he was actually at the meetings.
Have any source?
He was actually at the meetings. And, what is there anything that they said in the room that you heard that you would think would apply to markets?
You'll certainly put on the next few slides, won't you?
Yep.
Yeah. Good man.
Yeah, it is in the next couple of slides. And the upcoming week, this week, not too many things expect to happen. Interesting thing is government shutdown has been this is actually the 6th week. Calendar days is 31 days right now. The longest ever was in 2018, between 2018 and 2019. That was 34 calendar days. We're about to create a new record here.
We're about to be in uncharted territory.
Yep.
So is the stock market.
We're boldly, so is the stock market. Boldly going where no man has gone before.
And I checked the kind of odds for the probability that the government shutdown is going to be over this week. The odds is actually lower than 25%. 50% people predict that government shutdown is going to be over after November 16th in 2 weeks.
Wow.
Yeah.
So more to come. I don't know how much
Interesting.
Yeah. how much this it hasn't affected the market as of yet, but I know individuals have been affected for sure.
Yeah, and also this week is still a very busy week for earnings traders. Following the last week. Last week we have more big names. This week we actually have more number of companies.
Interesting.
Yeah. All right, so the performance from last week, the 4 indices, except the Russell, was down 1.3%. All the other 4 indices went up. It's actually a pretty mild move, 0.7% in SPX, considering what we saw in the past months. This is actually a mild move. If we go to the next slide, the expect move, they actually fall into the expect move, 1.4%. So we're definitely inside the expect $96 for SPX. And this week, at the end of Friday, the expect move is also exactly $96, which is 1.4% because SPX didn't change that much.
Right, but this is elevated from, if you go back 2 weeks, it's almost...
we were talking about, I remember you saying 84 specifically.
Yeah. I mean, so you have elevated volatility, and it's still elevated, even though it's sideways from one week to the next. When you go over the month or so, it's actually pretty, like 30% higher than where it's been pretty much.
Yeah, the interesting thing is even after Fed meeting and China-US trade deal, the implied vol didn't drop.
Right.
Didn't drop at all. It's actually increased a little bit on Friday.
Yeah, on the way up.
From 16.8 or whatever all the way up to...
Right. We talked about it, Fed news coming out and everything else like that, maybe keeping it elevated. Now it's staying elevated. Maybe we found a new floor in volatility. Maybe that 18 handle is the new
18 is the new normal?
Yeah. Yep.
Goodness.
Yep.
I think it is.
Okay, so the next one, the IVR. The IVR, we saw the mixed signal, mixed picture here, mostly down or unched, but actually it didn't change that much. This is not implied volatility, this is IVR. So 5% IVR change, so the IV didn't change that much to push those. So I would say we pretty much stay at a similar level of the IV as the week before. Very close.
Okay, that's kind of consistent with /VX being unchanged pretty much from the week past. Yep.
Didn't change that much, yeah. And next one, any comments?
No. Well, we backed out real quick. One.
Well, you can see that 2 week. You go back to the 13th. You can see how gold volatility's really come down a lot.
Yeah.
Massive.
Bitcoin volatility's come down,
and nat gas
has gone higher.
Recently, and we've been seeing this move up. So it's good slide.
Yep. This is 3 weeks for you. Yeah. Yep. So next slide is what we're talking about the Max 7, how the Nvidia hit $5 trillion. Actually, at the end of Friday. Nvidia was 4.9 trillion, but right now pre-market I saw it was up $6 or so. So definitely back to the 5 trillion zone. Microsoft, Apple were all up. So 3.9, I just put $4 trillion. So these are top 7 market cap in the US right now. The Broadcom overtaken the Tesla as the number 7 a couple of months ago. So Tesla was the number 7, 1.4 trillion. Or something.
And Amazon's going to move up there too. I mean, my Taiwanese sources said they just made a deal with OpenAI for a $38 billion deal with Amazon.
Amazon just invest into each other.
Up $13 on that news, and I got to thank my Taiwanese source, Peter.
Oh wow! So which one?
I didn't know your Taiwanese source had a name.
Yes, this one does.
Okay, has a name. So which one on this list has a deal with OpenAI? Is Apple the only one left out?
That does not.
Right?
I don't know if I've heard AVGO say anything about deals with.
I think Broadcom did.
Good question.
Yeah.
Yeah, I think
good question.
The biggest company.
Maybe AVGO.
Yeah. Have to deal with
so.
OpenAI, right?
Yep.
My goodness.
Yep.
The next one is the after the so last week all the major 9 major indices in the world went up, and this is the performance of these indices of year to date. So this year from January 1st to last Friday, we saw the Asian market was pretty strong, leading by Japan and the Hong Kong market was up more than 30% so far, which is pretty big move. So then we're looking down, US actually ranked the number 7.
Look at us, underperforming.
Underperforming the global market. 17 is still extraordinary compared to the
but the Nikkei's nowhere near its highs, right? I mean, is it?
What was the last year? Was it like 20 something?
Oh, I'm not 100% sure. I'd have to look at these before.
I remember the couple of years we saw like a 20 plus.
Right. Yeah. Right.
Yeah, so this is just an overview about all these 9 major global indices performance.
So even if you diversified your portfolio in those mutual funds that mirror the Pacific Rim and the emerging markets, I mean, everything seems to be moving in the same direction.
It is, yeah.
Mm-hmm.
Yeah, how about it? Yeah.
So watch your IRAs and watch your 401ks.
Yeah.
Do something about it.
How would you adjust your 401k? I thought I talked to you
It's
once.
impossible.
Yeah, that was your answer.
Yes, completely impossible. You could either be in or you could be out.
Exactly, yeah. And I remember...
You got to be like Heidi Klum.
Yeah.
You are out or you are in.
How you but are you going to touch it? If you sense there are some...
Show me where I touched the 401 plan. No, I don't think you can.
I mean, adjust the percentage of allocation.
No, actually, this is a good question. Seriously, like where you
You can go more into bonds if you really like that.
Where you are in life, do you alter
where I am in life?
I was still
I'm just teasing. Go ahead, yeah. All right, old fakakta, go ahead.
I remember in 2008, the first person I'd ever knew was the guy that was I was learning under at the time. And I remember he was like, I'm going all cash 401k. And I was like, wait, what?
Yeah.
Like, who does that?
I think it's because it was worked out if he got back in.
When
which
was
I don't know if
that?
anybody else gets back in.
This is 2008. This is during 2008. It was it was like July of 2008. He was like, I'm going all cash. I was like, really? So I'm wondering, do you ever like go to some cash in 401k? You just say,
really?
Like I just
not a money market fund?
No.
Ooh. Okay, that's good to know.
No. Why? How good are you at timing the market?
I'm very bad.
There's your answer.
Very
There's
bad.
your answer.
Yeah.
There's your
I
answer.
move a lot of my 401k's money to money market and bonds in July or June.
Okay, so you missed one of the biggest rallies that we've had, right?
Exactly. So
As always, yeah.
How do you make that back? I mean, I don't know.
I used to do it every now and again, and I stopped.
Yeah,
That's why I
don't think you can. I think it's a slippery slope. I mean, it's a slippery slope. Anyway.
Okay, so next slides, are we talking about the top and bottom S&P 500 performers from last week? So WDC, STX, those hard drive data storage companies.
What year is this?
Has been doing really, really well this year. These two companies.
So crazy.
Yeah, 20%, 11%, 19%, 11%, and UPS had earnings up 8%, First Solar up 8%, Amazon at 8%.
I am so annoyed I have not been short CMG every day of my life because it's such a horrible product.
You got...
Why
we still order the
Are they going to go out of business
Chipotle?
at some point?
We still order Chipotle, right?
Are they going to go out of business at some point?
What's that?
Are they going to go out of business at some point?
No way. No way.
I mean, $15 bowls that aren't that good, there's way better stuff.
Yeah.
Straight up.
Probably.
Noodles and Company was so good. Like Noodles and Company,
yeah.
when I first got to Wisconsin for grad school, that place was incredible. Same thing with Potbellies.
Do you consider Noodles and Company Italian food? Because I know. I think one of our macro guys said it was Italian food.
No.
Or maybe it was Quentin. I don't know. Maybe one of them. I forget who said it.
No.
Yeah.
Yeah, so at the bottom.
Oh, I remember. It was Glenn. Glenn from Forex said it was Italian food.
That's what Glenn said?
Yeah, so now I call him Noodles. Go ahead. Keep going, my friend. Keep going.
At the bottom of the list, CMG had earnings. eBay. Did eBay has earnings? I don't remember. Meta, RCL, and DEC. DEC had earnings too. But that's actually from the week before. So in the past 2 weeks, Deckers has been really bad, like a down 20+% in the past 2 weeks.
I didn't realize RCL was a $280-some stock until last week for earnings. Lost track.
Yep.
And I add another slide for the October because we just
please go, please
October.
do. Yes,
so the October performance, we can see the top performer definitely AMD was up huge, 50% in 1 month, unbelievable. MU, same AI related stocks up 20, ISRG 21, CAT had earnings last week, right?
Yes.
So it was up pretty big.
Just about everything had earnings last week or the week prior there. I mean, we're pretty much in the teeth of it last week.
Yeah. WBD, because of a lot of merger and acquisitions, like a spin-off, those kind of news, volatility is pretty high. And Deckers, actually the top one from last week. The liquid ones, I only put CMG down 21, MOS, Nike down 13. I haven't paid attention to Nike. It's still going down at the bottom. Unbelievable.
I think did they get a new CEO, Nike and
I think that was months ago, right? They changed the one?
Yeah. No, I mean, it hasn't helped. Nothing's been, Nike's been a dog.
Yeah. and Meta earnings last week.
Meta earnings were bad. I think it is up around $6 or $7 this morning. Looks like it's up around $8 this morning, Meta. But it's fallen to its lows, recent lows after earnings.
Yeah. See, I put on the bullish trade for a post-earning trade.
Look at you. Good for you. Good for you.
Okay, so now we're taking a look at the earnings from last week. We don't need to read this busy chart, but certainly represent the volatility increased last week for earnings. There are so many big names had double-digit move up or down, but overall we see more reds than the green ones. Which
it didn't look like that to me, but you're right when you put this up here.
Very liquid ones.
The very liquid ones were a lot more positive.
You trade Amazon, right? Did you?
I did not.
Oh, you did?
Mm-mm.
I think I did. I can barely remember.
Oh, Amazon. Yes, I'm sorry. I thought you meant Meta. Amazon.
Yeah.
Yes, traded Amazon. Amazon worked out okay, although Amazon's going to be up big.
Roblox, how dare you go down as much
it's not allowed.
Damn money we give you, Roblox. Do your kids play Roblox?
Roblox.
Your kids play Roblox, Kai?
He refused to tell me the name. I saw he was playing on the iPad. I didn't know it was from Roblox. He said, my friend's playing Roblox. I don't know if probably not. I don't know. Yeah. Yeah, so this is a pretty busy week from last week. A lot of big names. 5 out of 7 Mac 7 companies announced last week. And if we go to next slide, we see a big picture of the Q3 earnings. The week before last week, we saw like 450 companies announced earnings. And at the end of last week, there are already more than 1,200 companies.
Yeah, that's what I mean. We're in the teeth of it. You're actually on the downslope of it right now.
Right. Mm-hmm. And the tone from last week, one-day move, is slightly turned to negative. Last week, we turned 52% winners to 50%. So like 50-50 again. And the average return becomes 0 from positive to neutral right now.
Talk about perfectly priced.
Yeah.
Perfectly priced. Yeah. We are only getting to like a third or fourth week. This is the fourth week of the earnings season. We already see like a 50-50 and 0%. Unbelievable. Yeah. And talking about this week, it's still a very busy week. Can we go to the next slide? We see the symbols of this week. We have PLTR tomorrow. Oh, actually, this afternoon.
Yeah, Palantir and HIMS this afternoon after the market closes.
Favorite HIMS. Mm-hmm. Tomorrow we have Uber, Shopify, Spotify. These are pretty big. And I also put the EF Energy. The energy fields is UUUU because we have viewers sending the trades last week. UUUU.
But you.
UUUU. We will take a look at that. I believe we actually have a position.
Yeah, you probably have a position.
Had a position, and if we took it off, I think we took it off, but we've had positions in UUUU. Yep.
Okay. Mm-hmm. And the biggest one definitely this week is AMD on Tuesday. MSC.
Very nice, my friend.
Super micro. What's the symbol? Definitely.
That IREN. That's actually running this morning.
SMCI. Sorry.
Very good.
Upstart, Pinterest, all these things.
Good job, man. Good job. And I didn't realize that Shop and Spot had earnings in Uber. So
yep.
Good job. Good job. Thank you so much. We're going to take a quick 90-second break and come back. We got more Tasty Live. The opening bell is imminent. We'll be back in 90 seconds with Tasty Live. Really, this time we're going to be back in 90 seconds because we got to catch the opening bell. People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Yeah, Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Jamal, we are back, my friend, and you know what that means. Time for the opening bell. See how quickly we can do it in 90 seconds. You know, sometimes we say we'll be back in 90 seconds. You know, it takes like 3-4 minutes sometimes. You got to go get coffee. I got to run to the washroom or whatever. You know how it goes.
I do.
But this time we're able to get back, and we are going to have the opening bell in less than 30 seconds here. Even the S&Ps trading at or near or making their highs right now, 69.0875. You can see that's up 0.5 percentage point already. Volatility hanging in there even to the upside, only down 15 cents. NASDAQ is strong, up 228. The Russell just caught a bid. It's unchanged. And the Dow just caught a bid. Oh, look what they did for you. Look what they did for you.
That's my thing. That's my thing every day. It's a set.
Very nice. Very nice. Instead of the opening bell, you have the that's very cool. That's very cool for baseball. Well, there you go. There was the opening, whatever you want to call it. Even the S&Ps moved about 2 handles on that. Dow just turned positive now. Volatility stood down 15 cents. Bonds are up, down 7. Bitcoin over 108, but just slightly after going down to 107. You can see at the low end of the range on Bitcoin. Oil down 10 cents. Gold up 25. Net gas basically unchanged, up small, maybe 10 to 13 cents off of its highs by about, well off of its highs by about 15 cents or so. Corn, wheat, and soybeans. Soybeans continue to rally. We'll take a look at what's moving the market right now. Jamal, what do you see here when I take a look at everything? You got Amazon up $12 or so. You got
Micron ripping my face off.
Which one? Amazon
Micron.
is?
Micron.
Oh, Micron. MU?
$12. Yeah.
Yeah, MU.
Strangle in there.
MU takes takes any trader, good, bad, or indifferent, and just takes you out to the woodshed. Unless you were just leaning in one direction in MU, which would be the upside. I don't know how you were able to make money. The markets aren't even that great. I'm going to go to December. They're almost $1 wide. The stock is just an absolute beast. Unless you're, buying it high and selling it higher, I don't know how you make a dime in MU. I've tried.
Yeah, I've had a strangle on here for a while. I kind of mentioned this last night. The idea of there's some names where I have a strangle on, and so as a result of where the stock is, it's basically a short call. Well, it just got shorter.
Yeah, Nick has a strangle on in there too, and I'm going to have to roll up that position too. I think he's got the 250, 175 in November, and you're going to have to take that well up to, let's see, the 250s have about a 35 delta, and the 175s have basically no delta to them. So here's one of those times when you're really going to have to move it up. Now, you got a good IV rank of 49, so if you're going to stay mechanical here, you want to reduce that delta by 50% or so. You got to go all the way up to the 215s or so, 210s. At least that's where I'm looking to go. Now you got markets in here that are quite wide, so I'm going to go in above the mid price. I'll put it in here and just show everybody what I'm looking at. Are you looking at 580, 640? Mid price, I don't think I'm going to get filled at 540, but that's where I'm going to put my first trade and see. Hopefully you get a little bit of a downtick and you'll be able to get filled on that. If not, I will adjust it down. At this point, you're going to miss it if you don't go in at mid price by 20, 30 cents. So that's what I'm hoping to benefit from by the move lower by 20 or 30 cents. We'll see how that works out. But thank you for bringing MU to light.
Yeah.
I'm going across here. ETH got some long delta in. That's down around $1 or so. So that's hurting us also. Little bit of short delta in the Qs is hurting us. Snow is helping us. Amazon not helping us, up $12 and change. Gold is helping us, up $16. Okay. So we got a little bit of a mixed bag of tricks here in the overall positions here. I think we're pretty much for the day, maybe a small negative P&L so far at all-time highs or recent all-time highs in the overall market. Some of the earnings trades, let's take a look at just what PLTR is doing before we get to the rest of the market here. PLTR up $4.40 going into earnings this afternoon. HIMS, HIMS, also up small though, 42 cents. Uber, Uber, ER, up $1.15 or so. Oh, that came out this morning. I'm sorry, that's going to come out tomorrow morning, November 4th. It's up $1 and change. Shop and Spot, I think both have earnings. Shop 177 up 3. So everything's up. Shop, and then let's go Spot. Spot up 380 and change. Let's see what the rest of the market's looking at here. Lilly up $15. Amazon up around $13. I think I just got filled in MU. I did it at 540. We'll
first trade of the day. There you go.
Yep, put that in a moment. APP, which has earnings on the 5th coming up after the market closes, up $9. Nvidia up almost $6. Netflix up $5 and change. Meta up $6. Even Meta up after selling off last couple of days. Netflix, Microsoft up after selling off a little bit. Let's see what the downside is bringing us. Coin down 9 or 10. We talked about that this morning. It was down around 3 or 4 with Bitcoin being so much lower. Suggested that might be lower. OKLO has earnings coming on the 11th. Man, I've seen so many negative articles on OKLO, the
really?
Nuclear. Yeah, that well, a lot of negative articles on OKLO. I don't know if that's going to have anything to do with its earnings or not, or they're just bait and switch. What do you see here in the overall market for you? Bitcoin not really catching a bid here either.
Yeah, it's breaking through that 108 level. We talked about it. That's kind of been a level, the lower level of resistance here. We'll see if it can find a bid. And market pulling back a little bit here. You know, it's funny. We talked about the whole seasonality thing this morning. I don't know if it's seasonality, but we have seen some bullishness on Mondays. It's 1% the last 3 Mondays to the upside. We'll see if it does it again today.
Yeah, today seems like it's. Could we have a day where even the S&Ps and Nasdaq are higher and the Russell and the Dow are lower? We haven't seen that in some time now. Nasdaq and even the S&Ps have been the strongest of the group, and the Russell and the Dow have been the lagger of the group. But they've all been pretty much up at the same time and all been down at the same time. Yeah. Volatility actually catching a bid here, 1901. I got to think that's a little bit troubling for the market here. That volatility staying up. It's staying up the last couple of days. So keep your powder,
feel like that.
Keep your powder dry.
It does feel like that. It feels like it feels a little heavy right now. Again, the Amazon news is the main thing that kind of pushed us up, and it seemed like we were gonna go higher. So I think you're gonna have to have that strength maintain itself.
Yeah, Amazon up 12 and change, 1272 right now.
That's a strong move, man.
Yep. Wow, very strong. All right, my friend. You know what? I think we could take a little bit of a quick 90-second break here. Even the S&Ps continue their holding of the rally just around 6,900, about 5 handles under that, up 21. Nasdaq up 200. That's a 0.75 percentage point move in the Nasdaq. You've got it met equally by the Russell, down 0.75 percentage point, down 18 and change, and the Dow down 58. We'll take a quick 90-second break and come back. We got more Tasty Live after this with nothing says Monday like this man. Dr. Jim comes on next, and he's like a Monday slapping you in the face. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast.
Seize it with Active Trader. Try it now on tastytrade.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Is where it started, where it all begins. Following the wonder we hear
Yeah, enough fun on the block all day, all night. Isn't it? No stress.
Jamal, my friend, we are back, and we're sorry for the delay there. Dr. Jim, we couldn't get your beautiful camera working because nothing says Monday, and you got the Monday gremlins working for you like this, man. Dr. Jim, what's up, my friend?
Man, what's going on? The From Theory to Practice fan knows that I've got so many problems with my video, so, I mean, it's a 90 delta that's going to drop at some point. You guys are just going to be left here with my sultry voice. And so just enjoy it while you can. That's all I can say. Just
well, you know what it was? It was the shirt. You had on a college shirt. We're not used to that from you, so the camera didn't know how to react.
That's true. No, that's true. Speaking of not knowing how to react, man, what do you guys think about my 49ers?
We were wondering what team you were going to be with.
Look, I'm new to this, Jim. I want to know. I'm literally asking because I want to know, who is your team? Who's your NFL team?
My NFL team is the San Francisco 49ers.
That's your squad.
And if you go back and check the tapes, it has been from day one. I've been nothing but consistent. I mean, Brock Purdy went down. It looked a little tricky, but Mac Jones, he's just a ball player. I mean, I've been talking about Mac Jones for years, Jamal. I was talking about Mac Jones before you showed up on the network. It's been the 49ers from day one, man.
That's funny because I'm pretty sure he's in college then, but that works.
Oh, man.
That's
good stuff. How are you guys doing, man? What's going on? What's the word?
We're doing all right. Looks like everything is kind of status quo here, except for volatility is kind of be the only canary in the coal mine here. It's been staying bid for the last couple of days. I actually thought that volatility would come in quite nicely if the NASDAQ and even the S&Ps were up. But the Russell and the Dow bring us a little bit lower here. You got some big movers in the market, not so much to the downside unless you're in the UNHs and the Oakleys and stuff like that. But the major stocks that we trade all seem to be higher. Nvidia higher by 5, Amazon higher by double digit, Tesla higher by double digits. So far, status quo.
You know, normally I would say after we were up 30 handles and the market's pulling back here, you're like, uh-oh, we might be in trouble, but not this market. It's hard to...
BE up $9. That was making new highs there, too. So you got a tale of two tapes right now, Dr. Jim. Let's see if volatility wins.
Yeah.
So, Jamal, you're thinking we're buying the dip here? You're thinking that this is the time to, I mean, I don't know if you would classify this as a dip, so I don't want to put words in your mouth.
Exactly. No, I wouldn't classify this as the
NASDAQ up half a percentage point.
I'm saying it feels pretty heavy. Normally, this is one where you would want you to just say, okay, I'm going to lean into this to the downside.
But you keep quoting me on the break your Monday statistic that Mondays have been very bullish.
Mondays have been very bullish. It's not my statistic. It's what it is.
It is what it is, yeah.
The last 8 Mondays we've been up, and 3 of those last 8 we've been up 1%. So that's what I'm just looking at that. I'm looking.
It's feeling heavy.
It does feel
heavy, man. Bitcoin's been lower all day. You know, bonds haven't been able to catch a bid. Volatility is bid.
I almost want to buy a 0 DTE call spread just so that it can fall.
See that? There you go. Well, that's what makes the market.
We need some sacrificial lambs. Like we need some people to volunteer. And I mean, that's interesting. You know what's interesting about that Monday stat? I wonder if did you guys look at every day of the week? And the reason why I ask is because the market's been so strong. I would actually posit if you look at the last 8 Thursdays, if you look at the last 8 Tuesdays or the last 8 whatever, you're actually going to see similar results.
You're probably right.
Yeah.
Dr. Jim, coming with the reason. I like it.
I got Jamal talking about buying dips. I got Nicky Bad. He's a momentum trader now. And so it's like, man, things are a lot
You're the
different.
only thing consistent. You're the only thing consistent with the San Francisco 49ers.
But I wore a collared shirt, so I mean, I don't know what to believe. Nobody knows what to believe. And so this morning, John, go ahead and get us going on the segment or the title slide. I want to talk about, as a premium seller, how we are actually naturally taking the other side of whatever the market does. And again, this is kind of similar to Jamal's Monday stat today, which is a great stat. I actually didn't know that. It's great because this is not your opinion. This does not necessarily, kind of lean into a bias one way or another. like you are just going to naturally take the other side of whatever the market does as a premium seller, kind of using one of the most classic strategies that we use every single day. So, John, go ahead and kick us off here on the introductory slide. And so, John, if we could go to slide 1 there. Let's see here.
1 minute.
Sure.
The Gremlins are out on Monday.
1 minute.
Yeah.
Well, we bought the SPX vertical. We'll see what happens. We bought a
I
call
just
spread.
appreciate the team getting the video back up and running. That was huge.
Yeah, one thing at a time, Dr. Jim. I mean, you want slides too?
He's so demanding, Jim. Jeez.
Just
I need
relax.
a little something. You know, I almost wore my super crisp white polo today too. But I actually wore it last week. And so it wasn't quite up for the next turn in the rotation.
So it's not so super crisp anymore.
No, it's not. And if I would have worn it today, it's more of a cream now. And so it would not have jived with what you've got going on over there.
I got it.
I wonder. I don't think the people pay that much attention to what we wear.
No, I don't think they're not watching the network for what we wear. That's for sure.
Yeah. Okay, fair enough. Okay, all right. So in the markets, thank you, John. In the markets, you can always explain a given phenomenon either mathematically or intuitively. And when it comes to gamma, arguably the most confusing of the everyday Greeks that we lean on, a more intuitive approach might be in order. And thus, with short options and their negative gamma, we're going to see that we naturally take the other side of directional moves. I would say, I'll be curious to hear what you guys think, but I would say, as a new trader, kind of learning the markets, learning how to trade, learning options, delta is a little sticky, but somewhat straightforward. Theta is a little bit more challenging, I think. And then you've got Vega, of course, too, but gamma is the thing that normally really kind of causes people to kind of scratch their heads. What do you guys think?
I think that's the one that's.
You mean from an understanding standpoint, like for people, it's hard to grasp the concept of gamma.
Yes.
Yeah, particularly negative gamma. Yeah, for sure. Yeah.
Yeah, because it has the potential to move so violently on a percentage basis from when you put on the trade to when you take off the trade, depending on how much time is left in the overall position. So I would agree with you, Dr. Jim. That's probably the one that's the hardest to watch.
Yeah, and I think that, especially with we're going to look at a strangle here today, it can be kind of, a bit confusing, for lack of a better phrase. When the market begins to move, you naturally kind of take the other side of that movement because of the negative gamma. Positive gamma, I would say, is a lot easier to understand. But when you're on the other side with short options, like you're going to flip over and be negative gamma, that's going to be a little bit trickier. So John, go ahead and get us to the next slide here. So let's start looking at a strangle, and let's say that the stock rallies. What's going to happen if you don't do anything else? Again, this is obviously before you make any adjustments, you're neutralizing delta, whatever. This is just the standard strangle that you started with. You're going to become bearish. So let's work out why that is the case. So on the left-hand side of the slide here, you see I've got my stock is right in the middle. I've got my short call on the top. I've got my short put on the bottom. Pretty straightforward, a classic strategy. This is one of our favorite strategies, obviously, on the network for a number of reasons that I'm not necessarily going to get into here today. But you've got neutral delta, right? Okay, so I have no directional bias. All right, let's say the stock begins to rally and it goes up and it tests that short call, something that's happened to a lot of traders in this market over the course of the last few months. This has been a very common occurrence, of course, because the market has been so strong. If this happens, essentially the sequence of events that's going to cause you to become bearish is the following. Number one, the stock rallies up to the short call strike. Number two, the deltas on the two options now change, and they change in such a way that it's going to leave you net negative delta or net bearish. Specifically, the short put delta fall and the short call delta rise. Now, what I mean by fall and rise here is you have to think in terms of absolute values. Don't think in terms of strict pure mathematics, because remember, with bearish delta we're talking about negative numbers. So if we're talking about a negative number rising, that's actually technically the negative number getting close to zero, which would lead you to believe it's actually getting smaller. That's not what I mean here. I mean the absolute value, the impact of the delta when I use terms like fall and rise. So if my short put delta is falling, that's my bullish component. my short call delta is rising. That's my bearish component. That's obviously going to leave me net negative delta. And this is a situation that a lot of traders find themselves in, even here today, even with a little bit of a down move this morning.
Very good.
I find myself
no argument there
in this situation with Micron, as I mentioned. Strangle.
Yep.
Upside's being tested.
Yeah, exactly. So, I mean, upside's been tested a lot, and so you're naturally going to be bearish. And so, when it comes to that, that may not necessarily be a bad thing. And again, I'm leaving the adjustments out of it for now. I just want to describe to people and show, especially for the new traders out there, that when this happens, you are going to naturally become bearish. Okay, John, hit us here on the next slide. So obviously the reverse is going to be true. If I have a strangle on and the stock falls, I'm going to become bullish. Right. Again, the same strangle. The stock is in the center. The short call is on the top. The short put is on the bottom. I'm neutral delta. Now all of a sudden the stock goes down and my short put strike is tested. Similar type of sequence, right? Stock falls down, short put tested. Short put delta rises. Short call delta falls. The net result is I am now bullish. So essentially, I'm kind of always adopting a short-term contrarian stance. And now, again, I know that goes against a baby bat. I'm hearing that goes against a Jamal Chandler. Tony, are you with me on this, man? Like, are we going to stick together? Is this okay? Is this allowed now? Can I be a short-term contrarian?
You can be a short-term contrarian. Go ahead. I'll let you.
Okay, I appreciate you, man.
I
know we really came together. Like when we did that kitchen remodel 2 summers ago and we almost got those terrazzo floors, I know you and me, like our relationship almost went to a whole new level. And so you're my man.
It did. It did. Yeah. If you would have gotten the terrazzo floors, I would have moved in, I think.
I don't know what's happening.
Yeah, I could have put you in Amelia's room. It could have been you and Amelia.
Yep.
Yeah, she would have enjoyed that.
Yeah, would have been great. Yeah, I'm sure she'd have appreciate my snoring. I'm sure she would.
I'm sure she would. I'm sure she would. Oh, that's so good. And so, okay, so this describes kind of, the nature and the phenomenon that is a short strangle when the market moves. I'm going to be curious to know what you guys think about the next slide, though. So, John, get us on the next slide. In my view, here's the implication. By selling options, we are naturally fading the current moves in the market as we become bullish after drops and bearish after pops. Therefore, we're positioned to take advantage of a market where realized volatility is systematically less than implied volatility, or in other words, actual moves are less than expected moves. Now, here's what I mean by that, because obviously this is true, and we've shown this so many different ways. And when you're selling premium, high implied volatility, high IVR, like that's all there. That's not what I'm talking about today. What I actually think, and this is just my own personal opinion, so feel free to shoot it down if you disagree. When the market begins to move, the only way that actual moves could come in below or underneath expected moves is if those moves eventually cool off. Like those moves, they don't have to necessarily reverse per se, but they have to cool off, if not reverse. Otherwise, we would consistently see actual moves being greater than expected moves. And so when I view that, and I'm like, all right, through a short-term contrarian lens, I'm like, this kind of makes a little bit of sense since we've shown so many different ways that actual moves on average are less than expected moves. Man, when the market rips, I kind of want to get short. When the market drops, I kind of want to get long to take advantage of this phenomenon. But what do you guys think?
Well, I mean, this is the nature of being short premium, right? I mean, it puts you in a contrarian role, right? You pick up, as you have already said pretty eloquently, that you pick up long deltas on the way down, you pick up short deltas on the way up. Now, in a one-way market, the way we've had as of late, you really don't want that, right? But if volatility contracts on the way up, in most ETFs, that's the way to work. It actually works for you. Now, it's going to work against you in a stock, and that's why we talk about in stocks being very mechanical with your deltas and not getting them too far out of range. So that would be the only time when you have markets at all-time highs when this is not going to work for you.
So this is essentially how I end up getting on more positions at times for this exact reason. So I am short this strangle, to use your example, Dr. Jim, as the short strangle. I'm short a strangle in Micron. I'm currently short the 190, 240 strangle. I'm going
at prices you never thought it was going to get to.
I wouldn't say I never thought it was going to get to. I'm just...
Well, if you did, you wouldn't have the position on. Is what I'm trying to say is, like, it's moved exponentially to one side. That's how you've now gotten your short delta, right?
I wouldn't say I never thought, because again, I knew I was playing with fire by getting a shorter strangle in micro. Let's be honest. Right now, where all these AI names are moving, like, I knew that. And as a result, it allows me to put on some of those calendar call spreads and these other names that I say to get bullish, right?
Sure.
So if I can take that and I can take those wins, I can certainly allow myself to be short a 240 call while the stock is at 234 and moving.
Right.
It's fine. Like, I'm just until it gets to the point where it's like a solid $10 in the money, I really got to do something. I'm just going to treat it as one of my short deltas in my book. That's how I look at it.
Man, I like that. I like that a whole lot. I am curious, Jamal. Like earlier, you said, you said something to the effect of, in this market, you would expect the market to continue to show some strength and recover from whatever little dips it kind of experiences. What is leading you to that conclusion?
Well, I didn't really say that.
Is it just the strength from the last 2.5 months?
I'm just throwing all kind of words in my mouth. What I was saying is that it felt heavy, right? The market felt heavy here. And based on what we've been hearing these last couple of Mondays, it leads you to want to try and see if we're going to bounce back. Right. So with that idea, I talked myself into a trade and I put on a call spread. But do I think the market's going higher? I don't know. Nobody knows anything. Sure. I'm just playing off of what we see. So I'm playing off of that statistic that I read out. Right. That's really what it boils down to.
Got it. And I certainly wasn't trying to put words in your mouth. You're not normally on the Monday show. You have to understand, man. Like when my 49ers win in the fashion that they won, I'm in a different kind of mood, man. And I'm just doing crazy things. And so I don't normally do that. But again, I mean, it's Mac Jones, it's Christian McCaffrey, it's all those other guys. I mean, we look good, man.
So the guys you've been following for a long time, sure.
I mean, it's been years. It's been decades at this point. I mean, we're going back to like Montana. We're going back to Steve Young.
It's been decades, even longer.
Back to T.O.
Right.
Oh boy.
Yeah. Okay. All right. Good stuff. Well, I mean, you guys want to get them a few takeaways?
Sure.
Let's get them a few takeaways and let's get them onto some market measures. Again, thank you to the production team for helping me get my video back up. It did not look promising there for a second. Gamma can certainly be one of the most challenging Greeks to wrap your head around, but even just thinking through what short options and their negative gamma mean for us as option sellers can really help us better appreciate the short-term contrarian stance that we naturally adopt when we sell premium.
I like it, man. I like it.
I mean,
I appreciate you, man.
You make me feel better about being short my strangle in Micron. Exactly. That's my thought process. For real.
I don't know if that's a good thing, man, because as people who watch from theater practice know, I'm about the worst directional trader there is. And so I don't know, like if you and I are lining up on any type of direction move, whether it be one that you want or one that you just kind of just ended up in, like with a short strangle or whatever, I don't know that that's going to be good for you, man.
Allows me to be a contrarian. I need it.
Good work, Dr. Jim. I don't know, good work in the market or not. Even the S&P is down 2. NASDAQ up 109. NASDAQ trying to keep us higher. Russell and the Dow trying to bring us lower. Russell down 17. Dow down 2 and change. Volatility up 25 cents. 1935. Volatility definitely rearing its head. And to go to your gamma point of view, even if the position you had didn't move, your gamma is going to be growing a little bit here just because volatility is expanding. That means your extrinsic value is going to be growing too, but your P&L might not be growing. That's the other side of that coin. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We've got a market measure next. It's Tasty Live.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this. which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits, and you'll understand why a position did what it did. Sometimes the market wins, and sometimes you have a 90% winner, and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Jamal, my friend, we are back, and let's take a quick look at the market. What do you think, first of all? Well, let me quote the market, then I'll ask you what you think. Even the S&Ps are up $2.50. NASDAQ up $124. This is the way it's been all day long. Even the S&Ps and NASDAQ. NASDAQ, the leader of the group. Even the S&P is trying to catch a bid. The other side has been all morning long. Russell's been the weakest of the group, down 16. Dow down 170 and change. And the first 5 things that I have up here of volatility is the next thing I look at, up 20 cents to 1930. You can see over the last couple of days, even with the market trying to gather new highs, volatility's been up. What do you think about the overall market? Are we climbing this wall of worry, or has volatility finally rang a bell that maybe we're closer to the top than we've ever been before?
It feels like we're closer to the top. It feels like markets are a little bit heavy here. You talked about volatility. I mean, it's a little bit, just a little bit here on a Monday, which is not something we've seen a whole lot recently. So I don't know. I mean, a lot of things are hanging in the balance when you look at some of these other, like gold around 4,000, Bitcoin, 108K. There's the Mag 7. Not all of them are really up. Amazon had news, of course, which is one of the main reasons it's up. Meta's had been in a downtrend, so it's trying to bounce back. Same thing with Tesla. But the rest of them are not like screaming off the page. You know what I mean?
You still got Nvidia up $5 and change. You got Palantir up $3 and change. I mean, I agree with you. The market looks a little bit heavy, but that is like how we climb the wall of worry here, right? I mean, it seems like it's status. Man, that volatility it doesn't usually do me wrong. And volatility is hanging in there. And I tried to give it excuses like it was, the FOMC meeting and it was the potential Trump tweet over the weekend and everything else like that. But volatility is hanging in there. So I think you have to be a little bit worried with your sizing here. Stay mechanical and not get too big here. Watch your deltas a lot. I know you talked about this morning, not watching your overall beta-weighted deltas, but I would do a little bit of fine-tooth combing today and go through some of your individual deltas there. Make sure you're not leaning too long in some stocks that might kind of, bite you in the butt here. So for me, I think like you, I think the market's acting a little bit soft here, but we've seen this story before.
Well,
this is not even we haven't had a downtick in the market. I mean, the market had a little bit of a downtick last week where we were quickly met with bids. I mean,
if it feels heavy, I think there's a reason why. I'm looking right now, and again, you can, if you look at a heat map, you'll see there's actually a lot of red on the screen besides some of the big names, the ones you mentioned. And from what I can see, there's about only 88 stocks of the S&P 500 that are in the positive territory right now. So I think that's why it feels a little heavy. But the reason why we're clinging to positivity is because the stocks that are up are some of the big ones, some of the heavy concentrated stocks.
All right, let's get to this market measure. Let's do it. Sponsored by the SIBO. All right, this is a good little topic here. How to stay bullish with less risk. I mean, that's kind of the theme for at least what I was saying for today. Let's take a look at it. First slide, please. Thank you. When traders are bullish, the first instinct is to often sell a naked put, a simple, high probability, and direct exposure to the upside. I mean, I think when people first start trading, if they're following along or with somebody else that they're mentoring or monitoring, they always say, naked put's the easiest thing, high probability of success. Use a little bit more buying power, but that's the place to go. It's easy for people. It's almost like a covered call. It's easy for people to understand what a covered call is. It's easy to understand what a naked put is. But for smaller accounts, that trade can tie up a lot of buying power. That's what I was just saying a moment ago. It can carry large downside risk, right? I mean, I guess the large downside risk could go to zero. If that's such a thing in the time frame of your trade there, being around 45 days when we would do it. In this market measure, we'll show how you can keep nearly the same bullish exposure while cutting max loss and buying power. What do you think they're going to do here, Jamal, to do that?
Do I think they're going to do it? I think, something maybe that I do every now and again. I was saying a calendar call or something like that.
Sure, or define the risk maybe by a wing kind of thing.
Yeah, exactly. Keep and define risk.
I think that'll be the simplest thing to do. Let's go to the next slide, please. The study, 5 years of data in an ETF like SPY, which is a large price product now, $680 some odd, right? I mean, it's no longer the $100 or $200 product it once was, so it used a lot of buying power. And individual stocks like Apple, which is near all-time highs in Apple, so obviously going to use a lot of buying power. So 30 delta short naked put and a 30 delta and a 30 delta, 10% out of the money short put spread. So they're going to sell the 30 delta naked or sell the 30 delta naked and buy a 10 delta short put to define the risk, which I was alluding to. 45-day strangles and manage at 21 days. Computed with a win rate, average P&L, average buying power, max loss. We did the analysis by comparing the results. So let's go to the next slide, please. A common strategy by new traders is to buy or sell the outright. For example, selling a put in SPY or in Tesla. Great strategy, but requires significant buying power. I don't know about great strategies. Great strategy if the stock goes higher, right?
Right. Everything's relative.
Everything has to be validated by getting the directional move correct. It's S&P 45 days at 21 days closed. They're looking at the 30 delta put in a bullish scenario here because that's what we have here. The average P&L is $127, but look at the buying power, $8,600, and in Apple, great average P&L, $229, but you're using a lot of buying power, almost $12,500 in there. So you're using a lot of buying power out of the reach for a small sized account here, right? Any account under $25,000, this is going to be way too much money. Let's go to the
not very efficient use of capital.
Not very efficient use of capital. Let's go to the next one. Great strategy, not very efficient use of capital. So simple way to reduce this risk while maintaining the short put exposure or the long delta, that's what short put would be, long delta, is to buy a further out of the money put option. The lower your average P&L, it will lower your average P&L, but uses less buying power and reduces your max loss position. Obviously, if you have a defined risk trade, you're going to use a lot less buying power. Let's take a look at that. The SPY 45-day 30 delta put, and then underneath that, you got the 30 delta put plus the $10 out of the money spread. That's what they're changing here from the last slide to this slide. You'll see the buying power goes down to just around 3,000 if we're all friends here, just from $8,600. So a significant reduction in buying power, over 50% reduction in buying power. But look at your P&L. Your P&L goes down by over 50%, $42 versus that $127. Obviously, your max loss is going to go down too. But your win rate hangs in there, 78% to 74%. Let's look at the Apple. Same thing here. You're using buying power of 12,000. Now you're only using buying power of 3,700. But again, your average P&L is going to go down and go down significantly. I mean, there's no way to sugarcoat this. You make less money because you have less opportunity, but you're using less buying power on the overall trade. Your win rate goes to 70% from 75. So there is definitely a gimme for a gotcha for everything that Dr. Jim would say just a moment ago. Next slide, please. All right, so even though buying the further out of the money put defines your risk and reduces your average P&L, you maintain very similar directional exposure to the naked put. Would you have any argument with that statement, Jamal?
Well, it's true. It's correct. So the directional exposure is the same. It's just obviously risk is different.
And the naked put might be out of your your buying power range, right? So then you can't play the game.
Yeah.
The average correlation in P&L for naked put with 10% out of the money put spread is about 90%. So you're getting about a 90% correlation. Yeah, remember, correlation only measures the directional similarities and not the magnitude. That's the P&L difference. Because the P&L difference, is significant. I mean, when you're buying, wings, or especially in something like SPY, which we used here, and Apple not so much, because Apple usually has some call side skew or maybe a little bit of equal skew on each side. SPY definitely has put skew. Yeah. The out of the money puts are going to have a lot more premium relative to their price because of that tail risk of going down to the downside. That's how people protect their positions, by that tail risk. So you're paying a lot for that 10 delta put relative to the put that you're selling at 30 deltas, even though the 30 delta put is obviously going to trade at a higher price. It's interesting here. I have some short premium in SPY, and even the S&Ps are down 3, really haven't moved anywhere. SPY is completely unchanged, and my position's down small from over the weekend. And that's all because volatility is up 1.5%, that 30 cents, on top of the move in volatility that we did not get over the weekend. So there is a lot of premium opportunity to sell in SPY, and making it even more advantageous for you to roll down to reduce your delta in one direction or the other if you're having some inklings on what the market is doing right now. Let's go to the next slide, please. Additionally, max losses are smaller for put spreads, especially during some sell-offs, which is an important consideration for Tasty Bite accounts. I mean, yeah, listen, it's going to move a lot slower because you have the opportunity to make less, but that's what you want in a smaller Tasty Bites type account, right? The magnitude of the move and the swings here, $100 in a Tasty Bites account is completely different than $100 in a $100,000 margin account.
For sure.
You might not even be looking at the position in a margin account because you're used to those types of swings. Not because you can afford to lose the $100. That's not the point here. Those swings are going to be a lot bigger because you're taking on more risk. In a Tasty Bites account, you don't like to see those triple-digit moves in any one direction, even to the upside, believe it or not, because it means you're trading too big.
Yeah, you see a lot more volatility in a portfolio, in a Tasty Bite portfolio, versus a bigger account, right? Yep. You can just manage it. You can actually work through some of these big drawdowns here that you see in some of these.
And look at this, the $6,000, even the $4,000, and a lot of $2,000 moves in those monthly, remember, this is not yearly, this is monthly maximum losses over time. And then Apple, you're consistently in that $4,000 range. They're way too big, and then $14,000 in 2025 there. So way too big for most accounts. So I think for most people here, especially the newer trader, absolutely the Tasty Bites account, you have to define the risk. That's really what it comes down to here. I think this is all pointing to you have to define the risk. Next slide, please. Additionally, buying powers are smaller for the put spread, also an important consideration for Tasty Bites account. Here's your buying power over time, how much you're using. I think it's pretty self-explanatory here too, between SPY and Apple, the green versus the blue on there. The green being the blue being the put. You're using a lot more buying power. And as Apple price grows and as SPY price grows, the same probability of success trade is going to use a lot more buying power than you had previously used because the stock price has gone higher, and that's how the margin or buying power is disseminated by the price. Next question. Next slide, please.
If only all charts look like that.
What's that?
Only all P&L charts look
Yeah. If they all went in the same direction like that, it would be good. Agreed. You can apply these downsizing mechanics to other naked strategies to reduce the buying power. Every trade that we put on here that has undefined risk and uses too much buying power for your account, there is always a workaround where you can use less buying power by defining the risk or doing something, even calendarized, doing something to use significantly less buying power. There's no stock that's out of reach. Even, the $1,000 stocks, the $2,000 stocks, if the markets are good enough for you, there's always something you can do that even a small account can participate in those stocks. That's what makes option trading so valuable to everyone, because you can have the whole world, futures, options, commodity options, all allow you to trade products that you otherwise would not be able to trade if you just had to trade the underlying or just the future itself. It might be too big for you. The strategy to reduce the buying power here, naked put by making a put spread. Same thing with a call spread. Strangles buy further out of the money options. I mean, it's called an iron condor because it's 4 legs, but you're buying those wings just to reduce your buying power. Iron fly, butterfly, no matter what you do, you can always simulate on a risk graph the same type of positions. Next question. Next slide for the takeaways, please. As even the S&Ps have made their highs this morning before the show is over, and now making their lows at 86.66, down around 7. NASDAQ still green, up 88, and volatility up 31 cents. Takeaways. Naked options are our go-to choice because of their ease in management. That's another thing we didn't really bang in there that they're mentioned here. One option is a lot easier to trade than 2 or 4 options, even if there's less delta risk in the 2 and 4 options. Large credits and high win rates, that's what everybody likes to see here. And smaller accounts can replicate the performance of naked options by adding long wings to define the risk. Absolutely. The long option can be chosen based on a fixed strike, like they did here, 30 deltas, kind of our sweet spot, somewhere between the 30 and 15 delta, a percentage out of the money, a target delta, or even a specific dollar width. Nothing wrong with saying, especially in a Tasty Bites account, because that's what we're talking about here, that for my risk tolerance and for my size portfolio, $5 wide is all that I'm going. So then what you would do is, you wanted more or less risk, you would move your whole spread down or your whole spread up, right? Keeping it $5 wide. Yep. Not looking to increase the number of contracts. Would you agree?
Yeah, for sure. I mean, I think this really rings home for, there's some people who probably queue up that short put and see the amount you can collect and even see the size. And I think for some people, they're like, well, this is probably pretty big, but I'm going to put it on anyway. And then it becomes such a big position that it takes over their whole mindset, their portfolio. Being able to spread off your risk, I think, always helps. Options give you options.
Awesome. Good job out of the team there. Hopefully, for those Tasty Bites accounts, that had some benefit for you. Even the S&Ps down 15, sliding towards their lows, making new lows today. NASDAQ's only up 37 or 38. Russell's down 34. Dow is down 380. And volatility, you little predictive SOB, up 40 cents to 19.50. Key on volatility, because obviously volatility, in my eyes, is leading this market a little bit lower. Let's take a quick 90-second break. I think we're going to have fan favorite Marty coming in. We'll be back in 90 seconds from the trade desk. You listen, Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the chose, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Bays at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, whirl out, yeah, we all chasing. Pockets on lead, but the vibe's still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block, every flavor face got a story, every joke hits the spot. Fun on the block all day, all night. I feel with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda like.
Jamal, my friend, we are back. And before we get to our first guest, let's take a look at the market here. Even the S&P is down to around 20. They just made new lows down to 68.49. NASDAQ trying to turn red here. Made new lows about 20 handles ago. Now up 32. Russell down 37. That's been leading us to the downside, down by 1.5%. And the Dow down just about 1%, 430 some odd dollars. Volatility hanging in there nicely or significantly, up 50 cents. That's almost a 2.5, little over 2.5% move. Bonds have been doing nothing, just hanging out at 117.05. Really, what's moving the most here is Bitcoin. Bitcoin 106.4, down around 3.5% on a percentage basis. Ethereum doing even worse than that, down 7.5%. You can see new lows, recent new lows in Ethereum, down almost 300 here. But you know what? Got our fan favorite Glenn here. Play some mean diddy for me. Glenn from the FX Trade Desk. How are you, my friend?
Fantastic. Happy Monday. Happy November.
What did you dress up as for Halloween? I've been racking my head all weekend long, wondering what you dressed up as.
On Friday.
Oh, wait a minute! You had multiple costumes.
It was Halloween.
Yeah, this is what I would expect from the young people. Okay, I asked a lot of them on Friday, and they were like, "What are you doing?" They're like, "I'm not doing it." I'm like, bullshit. Come on,
Halloween.
I would still melt. I mean, college with Halloween on a Friday. That's a Halloween. I mean, you would have gone.
Yep, it's Nirvana. I'll give you that.
So just Friday, Saturday, kept it nice and cash. Now more apartment parties, no bars.
Yeah.
Drove by on the way to buddies up in Lakeview. Drove by all the River North clubs and bars. Oh,
please tell me you didn't do like a costume couples thing. Oh my God, Glenn. You're not that guy, Glenn. You're not that guy.
No, don't do it, Glenn. Do it, okay? Don't be like he and I were growing up. Be better than us, okay? That's good. Go to a costume party with your lady. That's the way to go, man. That's the way to go. Tell him, man.
She's a sure thing. It's Halloween anyway. You didn't have to pull yourself out.
Omaha. So Friday.
You got to read the room, Glenn. Read the room.
Friday she was doing something. I went out with other friends, and so I wasn't sure what my plans were on Friday. So Halloween costume, I went as Joe from You. You know, the creepy stalker guy, Netflix series. very easy costume.
I think I remember that series. Yeah.
And Bagley.
I didn't watch it.
All you have to do is wear a pea coat and a black ball cap, and you look pretty cool.
Yeah, pretty much like the character.
Yeah.
Okay.
And so, she okayed it because that steers
She
okayed it. You're
that's the only thing I'm going to disagree on,
that
Glenn.
place.
Now,
Nana,
that
you
one I
whipped.
can't have you back on, okay?
Nana, you whipped.
I'm just messing with you. I okayed it.
Yes,
Yeah, okay. Don't get in trouble on our account.
hey.
Don't get in trouble on our account.
Hey. Yeah, don't get in trouble on our account. You don't have to. You can't man up here anyway, but it's irrelevant. Hey, if you want to talk to Glenn and set him straight, come to Austin. Come to Antone's nightclub. Glenn will be there too. Friday, November 7th. That's right. Doors open at 8. Glenn will be there standing tall, answering any of your questions, taking any of your suggestions. All of the above. The show will start at 9. Tom Sosnoff will be there. We're going to do live trading for most of the morning. And then you can come back to Glenn when we break, which we have another hour from 10 to 11 where we talk to you, take questions from you, answer your questions. And you can also guide Glenn some more. Glenn will be there at the end of the day.
Looking for moral encouragement.
tastylive.com/events. You can mold a young man.
I'm a little jealous on this one. I've never been to Austin, man. That's going to be cool. It's a great town.
Neither have I.
Austin, I've only been going there the last maybe 15 years or maybe a little bit more, maybe the last 20 years or so. The last couple of years has really grown into like a big little city.
Yeah,
big.
that's awesome.
You know what I mean? Like when Austin is really, it was kind of like, there were no dirt roads, but it felt like a dirt road kind of town. You know, small-ish, and like they say, keep Austin weird. That's their moniker. It was like that. It's different now. It's actually grown a little bit, but very, very cool. Just as cool. So, have you been to Austin?
I have not. No.
Oh.
I'm excited.
Oh.
Awesome.
Good barbecue too. Obviously, good barbecue.
That's gonna be a highlight.
Mm-hmm. Well, you're going to Mexican food the first night. Not gonna be a highlight.
Oh. Okay.
But
we'll try.
Barbecue on Friday.
My favorite was Charlotte a couple weeks ago.
Charlotte was a great.
Charlotte was fantastic.
What did you guys eat?
We went to a farm to table type restaurant that one of the guys in Risk who lives down there helped us with, Nick. It was great.
Yeah, Frank was giving me a little flack because I said, "Oh yeah, Nick got us into this really nice restaurant." He's like, "Oh, got you in a nice restaurant in Charlotte." And so that was tough.
They were showing a little shade, but it was a very small restaurant.
Yeah.
Very cool. I can't remember the name of it right now.
I went to high school. We got the North Carolina connection. I went to high school. That's where I finished high school. So I've known Charlotte for 30 plus years.
Oh, awesome.
And again, not dirt road but to watch the growth of that place over the last 30 years.
I walked around downtown. It was cool. They had music playing. And,
So they didn't used to do that when I was in high school. Downtown was dead. You know how it is by the SIBO on the weekends? That was downtown in Charlotte.
No, it was lively.
crazy.
It was pretty cool. It was real cool.
But I had to make sure went and got my Bojangles fix.
You did?
Had 2 chicken biscuits about 4 hours apart on Saturday in the morning. And then it was at the airport.
I've eaten dinner with you. You'll pretty much eat anything. I mean, you are.
He's at that age.
I enjoy.
Did you have a Bowberry biscuit?
No, I really
they
can't
suck.
Do it. It's intense.
I'm not into that.
I do the sweet tea. That's already intense. The Bowberry biscuit. It's like a
little diabetes sweet tea. Nice.
Exactly. A blueberry biscuit that's already sweet, and then they just pour glaze on it, and it's
Chick-fil-A or Bojangles?
Bojangles. Yeah.
I mean, they're different though. I mean, I know chicken, but one's fried chicken. Look, I mean, of course, I'm talking about it.
Yeah, sure.
One's fried chicken, one is not. I mean,
we got an expert in the room. Go ahead. What's that?
Exactly. Yeah, see?
But I will say
it's true though.
Yeah,
it's true. They're different. They are different.
Chick-fil-A does a good chicken biscuit as well, but not all hours.
Are they both fried chicken?
No.
One is
Chick-fil-A. Okay, I shouldn't say that. No, I'm sorry. No, okay. Truth be told, original Chick-fil-A, and again, I grew up down south in Atlanta. It wasn't fried. It was never fried. It was actually always like grilled.
Really?
Fried stuff and the spicy chicken, all that stuff they do now. That's kind of newer. It wasn't like.
I had no idea. I didn't grow up with Chick-fil-A.
I grew up with Chick-fil-A.
So how dare you?
In Atlanta.
Yeah. Oh.
Yeah.
I learned something else here today.
That's right.
Good job.
There you go. Well, we're kicking off a pretty exciting week on the heels of.
Why?
in FX markets. They never stop. 24/5. They stop on the weekend. We're back and better than ever. Last week, of course, we had that central bank bonanza, but that continues if you're tracking global markets. This week, tonight, we've got a Reserve Bank of Australia meeting at around 10:30 p.m. And later in the week, we've got a Bank of England meeting. Much more speculation around that Bank of England. There they do, the headline, is not, we have like the dot plots and whatnot, but there they count who votes cut, who votes unchanged, who votes hike, and it's...
We don't do that?
Oh, we do that. Yeah.
Are they gonna try to? I mean, the Australian dollar's been. I mean, it's probably the most sideways of all currencies as of late. I mean, and going back like 6-8 months. I mean, it's, if you ask me, well, where's the Australian dollar at 65? I mean, I would guess.
Exactly.
You know what I mean?
And it's been trading around that range. Rejected off 66 a few times now. Not sure what color exactly will come from that Australian bank decision, but definitely a volatility event to be aware of, especially if you have positions on overnight. But we're looking at more dollar strength heading into this week. The fourth, looking to be the fifth day in a row of dollar gains across a handful of major currencies. So, in these FX markets historically, we tend to get some mean reversion over the short term and the long term especially. And so I ran a study with Jamal last week on Friday that said more often than not over the past 6 years, when we've seen stuff like this, we do get some mean reversion, but not today, not so far. So it'll be interesting to see if, as this shutdown continues, we keep getting some dollar strength here. We had a slight pullback this morning as we had some PMI data, the few and far between U.S. data that we actually do get. And that came in softer than expected. Little dollar hit, but now shook it out, and we're back to trading where we were before that event. And then looking at this first week of the month is usually always exciting for dollar watchers because of non-farm payrolls. Not getting that this week, but we will get the ADP employment change on Wednesday, which usually is a little, mid-tier indication of the private sector. This week, we'll have to look at it with a little more scrutiny, as we're not going to get much else. So still some economic events on the horizon, dollar moving higher as we enter.
Yeah, so the pound and the euro have been fairly weak. I mean, the pound's been, 3-cent move over the last 2 weeks is a pretty significant move.
Very large.
Pound's been getting pounded, as they say.
Say again?
Pound's been getting pounded.
Pound's been getting pounded, yes.
That's not an inaccurate statement.
It's not. But and especially looking at that euro-dollar market, in the spot market, we're looking right at that psychologically important 115 handle, trading just above it. We'll see if we get to that level. If we trade straight through it, get a little resistance there, a little bounce back. But that's what we're looking at this week.
And the euro, okay, so what's the biggest... I know you can do any currency pair you want, but dollar euro or dollar pound, which one is traded more or more widely watched? Like when I mention what the futures are doing, I know the NASDAQ is probably the one that has the most volatile stocks, but we always talk about the S&P first, like the ES. So which one is mentioned first in a currency? Or none of those, it's something different?
No, you're absolutely right. It would be the euro dollar. That's what we see. Traded most across the globe, but especially here in the U.S. as, recent margin requirements governed by U.S. bodies have the euro dollar at a much lower margin rate. Pound stuck at 5% right now as opposed to 2%. And so for traders, euro is definitely the preferred exposure to European currencies, but also across the globe. That's what we're looking at, which historically would have been the pound, cable being the predecessor to the euro in terms of that European exposure. So,
and that euro dollar, US dollar pair was hanging in there until last week, right? Even though the pound had been selling off versus the dollar, the euro had really hung in there until last week, and then it really kind of fell out of bed and had a big move. I know Nick has that position on. He still has it on where he's long dollar, short euro, short pound, but the euro one wasn't paying
Exactly right. Yeah, we had those two currencies are very correlated historically to the tune of 0.8, 0.9%, the pound and the euro. But last week, especially at the start of the week, we saw some unique pound weakness on the heels of speculation about this upcoming Bank of England interest rate decision on some softer inflation numbers from there that we didn't see in the euro area as they kept their rates flat last week. So yeah, start to get, what's really interesting in this FX space is from our perspective, we can think of them all in dollar terms, but it's really interesting to see when those correlations start to break down and we get some unique currency risk in something like that pound and euro, and you have the ability to play that euro pound market directly on the TastyFX side of things.
So when you get something that moves like that, do you ever think about trying to flip your, so you had long dollar and you were short euro, and the euro is kind of hanging in there. The pair's not working, the prior, and all of a sudden the pound starts going significantly lower. Do you ever think about flipping it and going, like long dollar, long pound, because you're looking at it versus euro versus pound? I mean, is that something that FX traders will do?
Yeah, I think you definitely take into account your portfolio and your existing positions, because, right, if you were kind of taking that in a vacuum, that kind of thesis, that position stance, then you would maybe just trade that euro pound market directly.
Sure.
But if you already have a position in a euro dollar market that you're comfortable with that price level that you got into, then it's just thinking about your time horizons, right? And if you're playing a short-term divergence there and saying the pound is weak right now, that might snap back faster than this euro dollar market will collapse. Then you can absolutely, even though you're double margined, that's just playing two different events and two different time horizons. Absolutely.
That's a good question, because I always used to kind of get tripped up a little bit about
Me too.
that. Yeah,
Me too.
right. Just from a math standpoint, fractions, right? Yeah, it's a good question.
Yeah, and we're also seeing this morning Swiss franc start to fall apart as well. That one really hanging in. This morning we had some Swiss inflation that made the U.S. dollar Swiss franc an early mover heading into this U.S. session up over 0.5%. And that's one that in recent months has been correlated to euro dollar to the tune of positive 0.91, which in the range of correlation that I've seen, euro dollar and Swiss franc, dollar Swiss franc, have been correlated anywhere between 0.7 and 0.9. So really on the upper end of that, and similar to the pound we saw last week, a little bit of divergence there this week.
Great, man. Good work out of you. Very nice.
I know I've already given one suggestion before. Can I give one more suggestion?
Please.
On like the watch list, the thing where you look at, you got the watch list, the TastyFX, and bid ask spread, all that. It'd be nice if there was like what happened over the last week, like
Different time
1
horizon,
month.
yeah.
I'm sure somebody already suggested this, or did I say this? I don't remember. 1 week, 1 month, 1 year, like. That would make me inclined to sort of be like, oh, this is down over the last week. Okay,
Yeah.
I can buy these.
I like it.
All right, awesome.
Set it up the chain.
You know what? Without further ado, Glenn, I'm gonna let you go. Give me some DDD. 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 There it is. My man Marte.
Oh man,
Trade Desk. How are you?
Man,
thank you for getting me out there from.
You're welcome. Busy on the desk, right? I know some messaging issues from the exchanges.
Nothing that they can't handle there.
Awesome.
Yeah, you know how we do.
I know how you do.
What's going on, guys?
I'm doing great. How
you doing?
Do you still dress up for Halloween? I have to ask. I asked Glenn.
This is what I
This
dressed
is it.
up yesterday.
This
Yeah.
is it.
54-year-old Jewish man.
That's great. That's great.
This
That's
is
great.
it.
That's great. You're looking good. You're looking good.
No, I do not dress up for Halloween, but
anymore. Back in the day, you did.
Right. I mean, once I grew up at age 51 is when I stopped. I don't know about you, but I did get like 80 trick-or-treaters at the house.
Did you? Good. Good. Strong trick or treat.
Strong.
Yeah.
Strong.
Yeah, me too.
Very strong costumes.
Yeah.
And, adults.
Makeup,
a few
all
adult
that.
beverages.
Did
you happy with the time change now? Waking up when it's dark, going home when it's dark. Yeah. Right.
Yeah, and the extra hour is nice. I don't know.
Well, you're an old
4:30
veteran.
is actually 5:30, right?
You're an old veteran CME trader,
Yeah.
right? So you're used to the long hours, the early mornings.
Yeah, relative, right?
Everything is relative.
Did
All
you
right.
guys
Relatively
prank
long
Q?
hours.
Did you guys prank Q on Friday? Because he said he was the only one that dressed up, and he said he thought
Everybody in the
else
office.
was
But
dressed up.
he's been doing that since he's been. Liz and Jenny were babysitting him. So he's not stopping now, is he? I thought it was a very.
Liz and Jenny did babysit him one day.
I didn't know that.
Which he never lets anybody forget, right?
know
He
that.
was. I mean, they used to dress up more here, didn't they?
Mm-hmm. Yeah.
I mean, Jason was always good for something clever. And
Right.
when I saw Q, I started cracking up when I saw him. And he's
got
like,
you.
What?
We got you.
You're okay, son. Don't worry about it. We won't kill you too bad. But yeah, I thought it was a nice costume. Very well thought out.
Yeah.
$5.99 at Amazon, delivered right to here. Perfect. Right?
Makes it easy, I'll tell you that much.
Oh, listen.
Hey, Marty, you're bringing a little bit of a rally to market. EME/S&Ps are only down 4. NASDAQ's up 72. Volatility's up by 25 cents, about 25 cents, 30 cents off of its highs. But you know what? You've got a list for us. Would you like to read it?
I would love to read
traded
All right.
stocks here at
At number 20, we got TQQQ. If there's an extra Q in there. 19, we got LEN, L-E-N. 18, we got KView.
I love how he builds up the suspense.
17, we got Oracle, O-R-C-L, for those that don't know. 16, Microsoft. 15, TLT. 14, UNH. 13, SoFi. A lot of action in that today, actually, on the desk. 12, AMD. 11, CIFR. 10, IREN, I-R-E-N. 9, IBIT, as we've discussed, my new favorite trade. Number 8, MU. 7, GLD. 6, Apple. 5, Palantir. 4, Meta. That was quite the move. 3, Nvidia. 2, Amazon. And the usual champion, number 1, Tesla.
Yeah, you're right about Meta. Big move down. 100 points is significant. I mean, that's nothing to joke about.
No, I like trying to play the fade on it, and it still is a little bit.
Before I let you go, what has been the stock with the most questions about it with people calling in?
Well, obviously Meta the other day was like, what's going on? We get tons of calls about Tesla too. A lot of guys have been trading, a lot of clients trading Sophie a lot.
Lower price stock.
To be honest with you, still,
Sure.
I honestly think that the most calls you get are still on SPX.
Sure.
And how they can manage, how they can regulate, what's going on with settlement, what happens.
Sure, SET.
Yeah, I mean,
it's a different animal than most people are used to, so
Right.
you can understand a cash-settled product.
right.
Like that.
People were calling up to ask if maybe, we don't give advice, but if they could switch like to the ES.
Yeah, right.
Yeah, because you're not getting enough moves in the SPX.
Right.
Definitely jump in with both feet to
Right. Remember,
which I
ES
like.
is 50 cents a point, though, right? Versus SPX.
Right. I mean, you don't have to necessarily risk $450 or $500 on every spread either.
Sure.
But yeah, a lot of questions about, last week it was like Tesla and Meta.
Got it. Usual suspects, the ones that are in that list. Awesome. Thank you, Marty.
Huge Halloween costume that drew quite a bit of response from.
Oh, we ran out of time, Marty, so I'm going to take a quick 90-second break and come back. I'm going to thank Jamal for filling in for Nick. We'll be back tomorrow. I'm going to thank Marty always, and of course, our friend Glenn. We're going to take a quick 90-second break. Even the S&Ps are only down 350. NASDAQ's up 77. Russell's down 25, and the Dow is down 264. We got a tug of war in the market. We'll be back in 90 seconds with Liz and Jenny next. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog?
The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
Estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a encantar. Ahí, ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Pégate, motívate, prepárate, que lo vamos a hacer hoy. Llégale, no lo pienses, ya lo decidí, que contigo me voy. Dale, baby, que hoy te sale. Tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a encantar. Ahí, ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ahí, ma. Tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ahí, ma. Tú eres una
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. Happy Monday, Jenny.
Oh, happy Monday, Liz. I'm actually happy to be back to work. How was your birthday weekend?
Oh, it was awesome. It was amazing. It was a super fun weekend. And when I say whirlwind, I don't really remember what happened. So yes, it was a good time. But I am excited because the most exciting thing that's happening this week, Jenny, and I do want to hear about your weekend, is you and I are hitting the road on Wednesday.
I know. I can't wait. And I mean, you say Wednesday. I don't want people to think the show is Thursday. The show is Friday. There's a show Friday in Austin. And I don't know if you saw this on Twitter, but Blue Wackadoo is coming.
What?
Yes. Yes. So we get to meet Eric in person. So he'll be there. We'll be there. It's Tom's last road show.
How did you know he was coming? And please don't tell me you're lying to me.
No, if you go to Twitter, Liz, if you go to your Twitter feed, I think I saw it right on it. I saw it when I was sitting right here looking at your Twitter feed.
Okay, let's go to Twitter.
Yeah, let's go. Okay, now let me take a look. I thought
you in Austin Thursday. You're right. God, this makes me so happy. I cannot wait. We got to take a picture with Eric.
Wait, the show is Friday though, isn't it? John, pull that art card back up.
No, the show is Friday.
Okay. Yeah, Friday, November 7th. That's why I didn't want to confuse anyone. The show is Friday.
So we're leaving Wednesday because we want to continue to have our live show. And I'm telling our producer at the same time, John, I don't know if John knows this or not. Our live show will be remote on Thursday, but we'll be doing it remote from our hotel rooms.
Right. Yeah. Like there wasn't a way for us to leave Thursday, do our show and get there in time for dinner. So we're leaving late Wednesday night, staying in a hotel so we could film from our hotel on Thursday. So we could make it to the team dinner on Thursday and then be at the show Friday morning.
Correct. All good things. Mm-hmm. So it was supposed to be a big surprise, but apparently everybody knows. So
yeah. Cat's out of the bag.
I cannot wait to see Eric. This is so exciting.
I know. So it's exciting. I can't wait to see all the viewers. TP is going to be there. We're going to have lots of.
Well, TP says he thinks he's going to be there.
Oh, really? He's not sure?
He's not sure. He's not 100% sure.
Huh.
But yeah.
So yeah, it's going to be fun. The road shows are always great. And this one is going to be extra fun for us, Liz, because we're not speaking.
I know. That's why we're going out the night before. We're going to have a couple cocktails before our show. We didn't have any responsibilities.
We'll pre-party. We'll pre-game it.
In the morning.
I'm kidding.
Yeah, it's exciting stuff. It's very, very exciting stuff. So yeah. If you're in the Austin area, I'm pretty sure that this is, I'm not saying sold out because it's free, but we will always find room. I mean, Jenny and I will stand and not sit the entire time. We will find seats if you're in the Austin area.
Okay, so here, I think it's full, but still sign up because honestly, this happens every show. Like we've been on, I don't know, 52 cities, maybe that I feel like I said 52 cities 2 years ago. Maybe it's like 60 cities.
I think it's 200.
I don't know how many cities we've been to on the road on tour. And every time there's a big, there's a decent amount of people who said they're coming and they don't. Like something comes up, they forgot about it, or they wake up sick, or whatever. Like there are always people who signed up that don't show. We always have no shows. So
Jenny, our Tasty Live community are like our friends, right? We love all of them like we like our friends, correct? And when our friends, and there's 14 of us, try to go out for dinner, there's about a 65% show rate.
Right. Yeah. So
correct. So even if you say you're coming, like I've said I'm coming, it's about a 65% show rate when all of us try to go out for dinner. And I feel that's true of all of our friends, even in the Tasty Nation. You know, things happen.
Things happen.
Life happens.
So, but if you want to go sign up, tastylive.com/events.
Yeah.
Can't wait.
Can't wait. Awesome. Okay. So everybody wants to know, you can take the art card down now, John. How's your mom?
Oh, yeah. My mom had lung surgery on Thursday. She's doing well. She got out of the hospital yesterday and she's doing well. We'll get the biopsy results today, but the doctor said everything looked really good. Like everything looked great. This is her second lung surgery. So the last one was 2 years ago. So we're getting to be pros. When they gave me all the, when we were getting all the details of what to do when we leave the hospital and what to do at home, I was like, we got this.
Old hat.
Yeah, we got this.
Old hat.
So she's doing well. She's doing well. And tell us about your birthday, Liz. What was your best? Any best gifts? I didn't. It's not gonna hurt my feelings because I didn't give you your gift yet. I'll see you tomorrow.
No, it's okay. I can't say that because I'm, in my 40s, unlike some of our friends that are going to be here soon. I'm talking to you. So whatever I want, I buy. So my husband's like, I can't get you anything because whatever you want, you buy. And I was like, that's true. So just don't say no when I keep buying things. But yeah. So. Well, in an ironic turn of events, I am flying from Austin to Disney World.
You got a surprise trip. You got a surprise Disney World trip.
That's exciting. Yeah.
That'll be fun.
Yeah, it'll be fun. I'm excited.
Yeah. I mean, I wish I were going to Florida. I like the weather better down there. It's warm.
It's supposed to be beautiful. I'm not going to rub it in, but you told me it was the best weather you've ever seen. It's going to be 85 and sunny and 66 at the low. So we're just going for 2 days. So it's not, we'll be there for that long, but
yeah, the weather's perfect down there right now.
Yeah. Yes.
And it's not like we didn't even have a drop of rain. I don't even think it's raining down there.
I don't think there's a cloud in the sky when we get up there. Although Austin's the same way, Jenny. I think we're going to have good weather there too.
Oh, really?
Mm-hmm.
I might be a little hot in my outfit.
What are you wearing?
I got this like fringe skirt.
You did?
Yeah, it looked kind of Texas to me. I thought when I saw it in the store.
Okay, and I am lying when I said you did because wait till you see my outfit. It's super Texas. Yeah, it's real Texas.
Yeah, I was walking through the mall shopping for your birthday actually, and I passed this fringe skirt, and I thought, I think that would work in Austin. So I.
Yeah, well, okay. Well, I'm on a rental program again, so wait till you see what I got. But it is fun, like we said, especially because we have zero responsibilities except for poor Eric. We're probably gonna sit on both sides of him. But like, what seat are you sitting in? We're gonna sit on both.
Save us a seat, Eric. We'll be right next to you.
We will. Okay, so do you want to take a look? Oh, Jenny, I have a surprise for you.
What?
Markets have won.
Oh, spooze her up. Like I said, happy to be back at work. It was a crazy weekend. Happy to be back at work. Happy to be sitting here in my chair looking at the markets.
Yeah.
I got my SPX. I'm curious. I got my SPX trade on. Is yours off yet?
I'm looking. No, it's not.
Oh, Frank the Great will be in Austin too.
Did you not read the second part of the text?
No, I only saw the first.
Exactly.
Don't say anything.
Even with you, I can't even with you.
Well, who is it a surprise for the viewers?
Just
you can't. It popped up on my screen, and I only saw the first line.
Frank, now you see what I'm up against.
Hey. I didn't. Oh, and I didn't even tell the story of what happened on Halloween. But besides my mom.
Oh yeah, this is amazing. All right.
Halloween was an actual nightmare. This was like the real Halloween nightmare. My daughter, which she's
a good kid.
She's a junior in high school. I know some people were like, "Why was she trick or treating?"
Who said that?
When I told my brother what happened, he was like, "Why was she trick or treating?" So anyway, she went out. She was in a costume. She was gonna be going to a costume party later. She was in her costume. Her boyfriend was over. They were both in costumes. They looked cute. I said, "Hey, why don't you go trick or treating to a couple?"
Can we retract? The costume party was at your house. You're like, she was going to.
But yeah, I mean, she was going to be at a costume party. It was at my house, but it was a costume party, so they were in costumes. Party wasn't starting yet, and I said, "Hey, why don't you go trick or treating? Go. I'm sure a couple neighbors would love to see you guys. Go to go out for a little bit. You've got time before the party starts." While she's out trick or treating, she was bit twice by a German Shepherd.
I was more concerned about you, Jenny. I was like, Jenny's going to have a heart attack with your mom in the hospital, with a party at your house, and with your dog getting bit by a German Shepherd. I was like,
yeah, like my dog, not my daughter, not my dog. German Shepherd didn't bite my dog, bit my daughter.
No, but your dog. So I was like, we need to slap a blood pressure cuff on Jenny. She might have a heart attack.
And when I went to the hospital, I forgot my blood pressure medicine. So I was like, this is it. I was sad I didn't update my will recently. I haven't done it since in 20 years, but I was like, this is the end of me.
This is it. This is the end. This is how it ends. Oh no. But yeah, that is super scary to get bit by a dog, especially a big dog.
Oh, a German Shepherd. It was very, very, very scary. And, I don't know. I mean, I don't know what to say other than if you got a bad dog, keep it locked up at Halloween.
I mean, I'm not defending by any stretch of the imagination, but Halloween is a tricky time for random dogs. But keep it locked up. I agree with you.
Yeah, like I had both my dogs locked up.
Yeah. Oh yeah. Will Ferrell had 2 sleepy cheeses and was in the crate.
I think I need a sleepy cheese.
I'll bring it with to Austin. But although the ironic part is when your daughter was little, this was much long time ago. I'm not saying this was recently, but Jenny's daughter was at my house, and I could do this to you, Jenny. She didn't know how to take pills and she had a headache. So I put aspirin. She's like, just wrap it in a piece of cheese. So I did.
I thought you were gonna say when she was little. So she was bit by the German Shepherd now, but when she was little, she was bit by a pig at a petting zoo.
Oh yeah, I forgot about that. She was bit by a pig at a petting zoo.
Yeah, so like the family of the German Shepherd, they were very upset. Like the mother was crying, the son was crying. It was just kind of like a whole shit show going on in the neighborhood. And so I'm trying to console the owner of the dog because she couldn't calm down, and I was like, look, she'll be okay. Like she was bit by a pig before and she survived it. Like she's gonna be fine. Like this is okay.
No, but you wanted to make sure that the dog had at least had all of its vaccines.
Yeah, and it did. Yeah. So that was good. I mean, whatever. Let's get back into the markets. Into the markets.
Okay, so we'll pop in. But that being said, if we pop in the markets, SPOOs are now down 25.
They're down 25 now?
I'm sorry, 25 cents. 25 cents.
Oh, I was like, what?
But so my SPX, what time did I put it on? I think I put it on at I was at 8:59, and I usually like to wait until 9:59. Or not I usually like to wait until 5 minutes after 9, but I did it at 8:59, and my short strike is the 68.40, and it's still out of the monies. So I'm only up like $30 or $40, so I'm still waiting on mine.
I'm looking at mine. So I did a $10 wide put spread at the 30 delta and $5 wide call spread at the 30 delta. Put those on separately, put in 2 separate GTCs. 35% for each. My call spread's gone. My put spread's still on. It didn't fill yet. And mine was the 30 delta, so my short put's the 68.25.
Okay, so you're pretty far down.
It's pretty far down. That trade is a scratch. Like it's pretty much a scratch. It's pretty much like trading where I sold it. I sold it for 215.
Yeah, okay. And my plan is to close whatever happens at noon. I'm following that last rule that we had.
And I'm going to apologize to Frank because I just saw the full text.
I was just laughing. I was like, "Oh God, I know we both got the same text." And when I got it, I actually thought you're going to get it and say something. It's okay.
I didn't see the full text pop up. I just read what the first line was on my screen.
I know.
Can you open IWM? I just want to see what we have in there.
We have
just an iron condor.
Iron condor 35%. I say we take this off less than 18 days. This should be managed.
Yeah, let's take that out.
Caught my eyes this morning too. I'll pay for this and get out of it. Oh, good. We're getting back almost $800. PLTR has earnings today. We will go to the earnings list because there's lots of stuff to do today. I'm just going to make sure I get out of it. But I wanted to look at lean. It was a big loss this morning. I don't think it's still going to be. Lean hog. Oh, good. Lean hogs this morning. We were down, and it might be because the markets were really wide.
I think that's live cattle, right?
Live cattle. Yeah, sorry, live cattle. We were down like $180 this morning on it.
Oh, really?
That's why I was like, that's why I wanted to look at it when we were on here. It could be real wide markets, pre-market. Do you know what I mean?
Yeah, take a look at the chart. And you know who I met in the hospital? One of the PAs, one of the physician assistants for the lung surgeon. Her husband is a soybean farmer. And so I was like, soybean farmer. What'd you think of? Remember when like soybeans were all in the news because they
still are. What is it? ZS.
ZS. So, but she said, yeah, like nothing's really. She wasn't too concerned about it. She wasn't too worried about it.
This is all China.
I know, but I asked her, I'm like, what's going on? And, it was some insane amount of soybean. I think she said they have like 30,000 acres of soybean farm.
Wow.
Here, like in Illinois somewhere. And she wasn't really worried about it.
I'm not going to lie to you. She probably doesn't worry about it. I don't don't know that the PA's farmer's wife would worry about it. Well, this is good for them, right?
Yeah, like her husband is the soybean farmer.
Yeah. The wife
Right.
of the soybean farmer.
Yeah, she's the physician assistant to the lung surgeon, and her husband's the soybean farmer. And I asked her what she thought of everything going on in the world of soybeans, and she was like,
It's pretty funny. So soybeans are right there. Like I said, I think this must have been like a bad mark or a wide mark or something.
Wide markets.
Yeah, because we put it on 5 days ago. It's really no big deal. 6J, we're getting a move in our direction. We're still down a little bit. Maybe I was looking at this when I woke up. I doubt it, but it did look like a belly.
Everything's kind of ugly today. Like Archer, my account doesn't look good today. Okay, so I as far as who Frank's keeping it a secret from, they don't know. They still don't know. Don't worry, Frank. Your secret's safe with me.
Did he text you again? Can you just stop talking? Unless you received a follow-up text, I think we should just put it to bed.
Yeah, Archer's down today. Archer and the earnings are later this week. So what?
Archer and Oklo. Do you know what we don't have in here? We don't have any Oklo in here, Jenny. And
we get in and out. Let's get in.
Were you listening to here? They have earnings next week. Were you listening to Tony Batista?
No. What did he say?
He was saying all he reads is bad news article after bad news article about Oklo.
I don't know. My brother had a tour scheduled last week at the new Oklo facility they're building. He was pretty excited about it.
Did he go?
Well, he had the tour scheduled then, but because of the government shutdown, they had to cancel it.
Because of the government shutdown?
Yeah.
Really?
Yeah.
Oh, wow. Today is either today or tomorrow makes it the longest in history.
The longest what? Oh, shutdown.
Yeah.
Yeah.
Okay. So we don't have anything in Oklo. Your brother didn't get to go on his tour. What's a new trader to do?
Right now I just have like I have my stock, but I have downside ratio spreads. And they end in the 11-day. They end in the 11-day downside ratio spreads. Let's see what we can do. You can get it
That's
pretty
where
wide.
the earnings are. The earnings are in the 11-day cycle.
Yeah. Yeah, I know.
They're in this one, right? They're in this one.
Yeah, they're in the 11-day.
Okay.
You could get it pretty far down. Like go to the expected move. Well, mine is much higher now. My short strike is the 120, but
so you can go to.
You can just sell the 100 put. You can just sell the 100 put if you want to.
You could sell the 100 put. It's going to hold up $3,000, which is fine. It's just a lot.
I mean, if it comes back down to 85, I will be shocked because I told you, Logan had sold the 85 calls against his stock. He's been rolling those 85 calls. I said, just keep on rolling those calls. One day, buddy, one day it might come back, and it might.
So just because it's 11 days and this is through the earnings cycle, do you want to put something on just like this? We'll get 128 and 372. No.
I mean,
we're going to wait for earnings because I feel that
the hard thing in Oklo is that it holds up a lot of buying power.
And for earnings, I kind of want to do the it's in the cycle. I just want to look at this. I don't want to do it now. But if I was going to use $3,000 to sell a put, I would rather use $938. I'm not going to do this right now.
Yeah, it's $23 wide. Now, here's what I expect: that they're losing money, right? They're not making money. That's what I expect. I don't think they're going to be like killing it on earnings, but so we'll see. So we'll see what the.
So we might put a pin in that through earnings. I'm going to pop back on Twitter. I want to see if there's anything else.
How about the side, the overview? What was it the last time? On the overview. Oh, they actually did. I don't know. I mean, I thought they were just, building things, spending money, building things. But last time, earnings per share 4.3. So yeah, I mean, maybe I didn't expect
it's down 11.11. Make a wish. I wish that it goes up with the expected move.
11.11. I've got that 120 as my center strike of the ratio spread. I want it to end at 120. I want 120.
You want $4 lower?
Yeah, because I have the 140, 120 ratio spread. Like you could get it so wide if you don't buy something. Like you get a ratio spread so wide if you don't buy anything.
If you don't buy anything, you can. And you just have to put double the capital.
Yeah, take a look. Go to at the money and make a 40-point wide ratio or a 20-point wide ratio spread in the 11-day. You could do the 123 or the 120 was 100.
No.
Oh, you got to pay for it.
Here, this is how wide I can make it without paying for it. But you probably did it a while ago. Here's a credit.
I did. Yeah. I think there was more time.
That's $12 wide. That's not bad. I see what you're saying, and that's a good protection to stock. That's a good protection to stock if you have the capital you can put on the side.
Like, I wish mine were expiring this week and not next week.
Oh yeah, that would be nice if it was this week, not next week.
I know.
Would be nice. Okay, I kind of glanced at our account. There's not much to do. I'm gonna pop into Twitter because there is quite a few tweets coming in, which were great. I can't wait to see Blue Wackadoo. Jenny, I have a surprise for you. And then we'll go down.
Oh, yeah. Yeah. Thank you. My nose is running. Sorry. Sanford and Son. This was my dad's favorite. There I was. That was my dad's favorite show, and that was me. I'm coming.
I'm coming, Wazy. I'm coming. I want to show you because I was making fun of your Christmas, putting all your Christmas decorations. This is my house yesterday.
See, click on it. Click on it so we can get a better, bigger image of this. Your house looks amazing. All the Christmas lights are up.
They always go up on my birthday every year. She puts them up. And she didn't do the other bushes. What the heck? Sorry.
Yeah. What?
So these are supposed to be done, and these are supposed to be done, and they're not. Maybe she's coming back today.
Well, it looks good.
Yeah, it does look good.
Can I ask you? Can I ask you? I'm sure inquiring minds would like to know. What does your person charge?
I'm grandfathered in.
But that doesn't mean her prices don't ever go up.
Well, she doesn't. They don't go up for me.
I switched my light installer this year.
Did you? No, I know, because that's why we do this is because her and the person across the street from me, my dentist, we do them together. We do them early, and she charges us, it's pennies on the dollar for lights going out.
Well, hey, I got a much better deal when I went to Squeegee Squad. Now Squeegee Squad does Christmas lights.
Oh, good. I like Squeegee Squad. They're good.
Yeah.
Okay, let's go back. I got to go back to Easy. I'm coming, Elizabeth.
I'm coming, Elizabeth. Jenny,
Mikey, I was so concerned for her because I was like, oh no, this isn't going to end well.
I mean, my daughter ran through my door, hysterical, bleeding, crying. And I grabbed her. I was like, we're going to find that dog. Cause I didn't know, we don't know the family, didn't know the owners. I'm like, we're going to find that dog cause I need to get all of its rabies paperwork. And then she was like wobbling. And she couldn't walk. So I was like, fine, stay here. I'm going to find that dog.
Yeah. You made her go back out with you. Why didn't she just tell you what house it was?
We didn't know. Oh, my SPX. That's my SPX.
Oh, good.
Yeah. Gone.
It's good. I'm up $83, but I'm not there yet. Okay. It's good. I'm glad they're both gone.
What does that say? The Bomb Futuro fam is in Brazil has 555,000 acres. Just so
you're 30,000.
30,000 is nothing.
You got nothing. It's so funny. Okay. So, and then we got Blue Wackadoo. This is where we came in before. Yes.
And I feel bad because look, he says nothing sucks like locking in losses, sticking to my soft stop. So he's got a stop in for his positions. So yeah, I mean, I don't know it was a pretty quick downturn in the market. We went from up to down 20 pretty quickly. Was there a number or something that came out?
No, but it happens right around 9 o'clock. Do you know what I mean?
But it happened at it was after, because I think I started putting my trades in 902, 903. Maybe 905, and it started dropping maybe 905.
Jenny, you have to help me because I have a problem. I need to sit on my hands until 905. 905 is when my trades need to go in, not before.
Yeah.
905. And I put it in at 8:59, and now I'm sitting here. I mean, it's fine.
Oh. Yeah, because I feel like the things happen at 9 o'clock, so you got to wait a little bit.
905. Mm-hmm. Okay, so that's very good. And then KVUE, these abnormal option trade volumes can predict the future. Let's take a look.
KVUE.
Wait, hold on. I'm going to type it slow. It's Kenview. Okay.
So let's take a look at the options.
We have something in KView.
Okay, so obviously it was something else. No,
we just have a call spread.
Wait. Why would we ever put in? I was going to say it was something else, and it probably like changed names. But no, do you ever remember trading KVUE?
Well, we did it 24 days ago. I'm sure it was a what's your assumption? And we just have a call spread, a long call spread.
I think it was that. Then maybe that was in the unusual option activity, because look at the volume: 300,000, 200,000. Maybe that was.
I'm gonna go open interest and volume. So you got the volume.
Yeah, you're right.
And here's your open interest.
300,000. Maybe that was on the. We did it because it was on the unusual option activity.
I bet you're right. That looks like something we would do, because that is a lot. And 107 million shares have traded of this.
What did we pay for this thing?
Well, let's take a look. It gave you, we paid
45 cents.
This was for sure on the unusual option activity.
Yeah.
Because we wanted to keep an eye on it. We've got 18 days.
And what was Florida 7 saying about it?
Let's go back to it. Those abnormal option trade volumes. Oh, yeah, they can predict the future. So, yeah, okay. I like it.
Oh, maybe.
That's where we're going. I'm going to heart these too and repost. Okay. So then we're going to go to Frank Walsh. This is good. I don't have Twitter. Looking at the calendar put spread on PLTR for earnings. Looking at selling the 180 for this week and buying the 180 on 12/12. Risk is 525, like the downside after the earnings report. Okay. So let's go.
Yeah, it's 180 this week and then 12/12.
Okay. So PLTR. Which is the downside. So this week, 180, and then 12/12. So they're paying 523 for it. This isn't a bad, I think
I would go to regular D's though. I think I'd just go to 12/19 because the markets are probably tighter in regular D's.
Sure.
It's not going to be too much more. Yeah, you got like quarter wide markets instead of dollar wide markets.
I mean, this isn't bad. So you're spending $6. This is saying, and we don't mind earnings calendars. This is not an earnings setup calendar. It's an earnings calendar. You're out of the way of the expected move for the 4-day cycle. So I don't mind it. You're getting at least $2 in premium for this. So that's the one thing I want to make sure is you're getting something for buying that. It's as if you're getting, and you can keep selling in here, but if it drops.
If it stays around here. Yeah. If Palantir stays around here, you can keep selling week after week after week after week after week.
Yeah.
Yeah, so I don't mind that. But if Palantir goes to 220, you could be out $6. Or if it goes to,
I mean, the good news about a calendar with this far out. So I'm gonna give the pros and cons. I don't mind it. Like, sure, I don't mind it at all. I don't, but I'm not gonna lie to you. I'm bullish Palantir, so it's hard for me to press the button in this because I'm long 100 shares and I'm gonna protect it because it's one of my biggest long positions, or it's one of my not biggest, one of my
longest go like longest going.
Standing,
yeah. I think you bought I think when Paul said, "Oh, Mrs. Deer King, I like Palantir," you bought 100 shares back when it was 7.
Yeah, and he now is a senior at Miami.
Miami, the U. Miami in
Florida. Miami.
Yes.
Yeah, Miami. So, and he's a smart kid, smart as a tack. And he wanted me to buy a Palantir, and I think I bought it at like 12. So this is something that I've been riding for a very, very long time. But so this is not a bad, just kind of talking through the pros and cons of this. I like that you're getting as much as you can for that. And if you have a bearish assumption on this, this is a way to play a bearish without using that much capital.
Yeah, no, I don't mind it. And then the risk is only $600 through earnings. If it has a wild move, you don't have more than $600 at risk. I don't mind it.
Now, some other people are saying they don't like calendars. They would prefer the diagonal. And I don't mind diagonals either. Like if you were bearish and you wanted to sell.
If you're bearish.
If you're bearish, that's the same thing. But the calendar is going to be cheaper than the diagonal, right?
So this is $22 wide. You're paying $10. Diagonals, you're usually paying about half the width.
Yeah. So you're paying, the calendars make it cheaper, but you need it to go to it, not through it. And that's part of the problem. With a diagonal, which other people like, it doesn't matter. Anywhere to the downside, you will make money.
Right.
Yeah. Okay. So that's PLTR. Now, I don't know. Do you want to trade anything in PLTR?
Well, are there earnings today?
Yes, they're today after the close.
Okay. To look at a couple things. I mean,
175 for the 217 calendar.
That's cheap. That's cheap.
Now, none of this is a trade recommendation, and it's only because 217 is my favorite number because it lives upside down on a calculator.
So if it goes, what you hate though is if you're bullish on Palantir, you hate if it goes up too far and we don't make any money on this.
I know. So
it's only Monday, so it's going to have to stay around here for 4 days.
So what I have been liking on earnings, now I already have the stock, so it's a little bit different, but I have been liking the buffer trade.
Oh, yeah.
And paying a little bit for it. So like, there you go. Because then you'll make from, I mean, I know it says it's going to go to 225, but you can make $1,200 if it goes up.
Right. And your break even is down to 180. What is that? 185. 185.
I'm paying a little bit for it just because I wanted, but that's your break even.
Mm-hmm.
I've been liking these on earnings, and the one I did it in was Meta, and it didn't hurt me. I mean, don't get me wrong, and Meta fell a lot, and it didn't hurt me that bad.
Yeah, where did Meta shake out after all was said and done?
Meta was up this morning, but I think it's probably down today. Let me look. So, Meta's still up a little bit. It's
650. It's 650.
Yeah.
And when you did the buffer on earnings, what was your break even?
700.
Okay, so
I was fine. Yes, 700 was where I was, and then it opened up at 680. Then I closed all that and reestablished a different position. But so it did. It did cause me pain, but it wasn't nearly as bad as it would have been if I would have been just short puts up here. I gave myself as much room as I could in the buffer.
Yeah. I mean, I get what you're saying. I like the buffer for earnings. We just can't afford it in this count.
No, I don't think we should do it in this account. That's why I was saying
let's look at a crab. I want to see how expensive the crab is.
Okay, so the crab,
because we did a handful of crabs last week.
I'm just gonna make it $5 wide, right?
Okay, so before you go to the other page, you can look at this and kind of compare it to the diagonal. So you see, if we just sold that 222, you're getting like 330, 340 on that for. And if you're doing this ratio spread, you're getting 430, just $1 more. So you know that you're going to pay $1 less for the crab than you would for the diagonal. If it's not that big of a difference, to your point, you maybe are better off doing the diagonal, unless you're getting a lot for that, more for that ratio spread than just that short option.
So this is cheaper. It's $6.96. No, I mean, I didn't look at the diagonal. I was just looking at the buffer. Remember, the buffer was the expensive.
No, I know. But like, I know sometimes when we look at crabs, you say like, you might prefer a diagonal over a crab because if it goes up, you're guaranteed to make money. Whereas if the crab, if it blows through, you might not make anything.
Yeah, I prefer the diagonal.
So
but this isn't bad. $6 isn't bad.
No, and what is it? 205 to 222 plus you're paying 7. So 205 plus the 7, so 212 to 222. So you can make $10 there, and then your short spread is $5 wide. So even if it blew through, you could still make 500 even if it blows through. You can make 10, you can make 1,000 if it goes to your short strike, or still 500 if it blows through.
Yes.
Not bad.
It's not bad. It's not bad. Okay, and then I'm just going to go back and say what Jenny's point was. I think they're worth assessing. Do you know what I mean? I'm going to delete this and make this.
Yeah, you can. That's right. Yeah, to make that one, and then there it's at exactly $1 more.
Yeah, it's $1 more. Let's do a crab. I mean, let's try to make it cheaper, right? Because we'll still make money if it goes up. Now we could.
Wait.
Hold on, I did that. Now you could lose.
What you pay for it.
What you pay for it.
Yeah, you could lose what you pay for it.
And it's kind of a lot.
I know. Or do we just sell a put spread? Do we just, but then I hate that. I hate that risk reward on earnings. Like, make $1 and risk 500.
You know what? Honestly, because somebody thought it was going down, here's what we're going to do, Jenny Andrews. We're going to make
downside ratio spread.
Never mind.
I know. You got to make it too wide. I'm not going to risk $1,000 to make 90.
Closing this up.
Just throw in the 217 calendar.
I know. All right.
Only because we don't want to risk more than $1. Like, we don't want to risk too much in Palantir.
Build.
Oh, can you push the amount on this side, and I'll do it on the other side. I don't have, because I'm logged into my account, not ours.
There's follow feed and there's PLTR. Okay. Let's take a look at our Netflix that we did. We go to the trade page, Netflix. Oh no, we had the bullet. Remember, we did it because Netflix was splitting 10 for 1.
Oh yeah. Let's see. Where is it? Ooh, 1085, 1075, and it's down $40 today.
Yep.
Oh, Netflix.
Yep.
You know what is driving my husband absolutely insane is that there's some fight going on with like ESPN and Disney and YouTube, and so my husband subscribes to YouTube TV.
You couldn't watch something, right?
No,
What could you watch?
No, you couldn't watch ESPN. We didn't have ESPN this weekend because he subscribes to YouTube TV for ESPN, and we didn't have it this weekend.
Oh. With all the stuff you had going on, when did he have time to watch TV?
I wasn't home, but I would hear it. I would hear about it. If this doesn't come back, if the deal with ESPN and YouTube TV doesn't resolve, he's going to have to switch to something else.
Oh man. Yeah, Disney's been like stuck in the mud. I heard the boys talking about it this morning.
It's not terrible. Do you remember when the day I heard
but it hasn't done anything. That's what I'm saying, stuck in the mud, meaning it's not I don't think it's fallen from grace, but it hasn't done anything.
The day I heard that there was going to be that Taylor Swift series coming out on Disney Plus, that day I bought some stock, and it's still right. I think I paid $112 for it.
Yeah.
Yeah, it's
You're
still
out.
right there.
You're out 10 cents. You know what though? The chat is saying that Netflix was up this AM. Let me take a look. Yeah, I mean, my account did do a reversal. Take a look at this. So the open was
11:30.
Oh, wow.
Yeah. And if we would have had a GTC in, maybe we would have gotten out of that put spread.
Yeah.
That's why GTCs are important.
They're important. Okay, but we have time though. That's what I'm saying. With this one, we have 11 days. But that's okay because we're doing this before the split.
Right. This is going to end before the split. Throw in a GTC for 50%. What time is it? Oh, well, it's only 10:37. We got a lot of time.
Yeah, we got plenty of time. Okay, I'm going back to Twitter because I know that we keep bouncing around because take a look at this. Jack Tucker, we've got Mikey and Blue Wackadoo. Love this. These are three legends. 3 legends in a row.
Ladies, give Blue Wackadoo a hug for me at Austin show.
That's awesome. Mikey. I love it.
Mikey, hop on the flight with us and come down to Texas.
Yeah, no kidding. No kidding. Okay, Happy Bears victory Monday, ladies.
Oh gosh, that was a crazy game, and I don't know how my husband got that, but maybe because it was local.
I don't know. I don't know how he got it either. I'm glad he did because otherwise he would have been flipping tables in your house if he didn't get that one. $75 in my pocket and need $68.50 to close. Okay, so SPX, he needs $68.50, so $5 higher than it is right now. You got this, Mikey.
Yeah.
Okay.
Yeah, and he's locked in a profit. You could see he's got a profit locked in. 75.
Yeah, but this is a good peak and it's right there. But you know what though? It's gonna hold. Right? That's where you tweet.
Oh, and there's your house. So now, when will you actually turn the lights on? I know they were on because they just put them up, but when will you actually start lighting it?
Oh, I'll do it the day after Thanksgiving.
Yeah, Thanksgiving. I usually do it on Thanksgiving.
Yeah, like the Thanksgiving evening, we'll flip the switch. But they're in, they're up, they're in, but we don't turn them on until after Thanksgiving.
Yeah.
But I do like having them in. Okay, so let's take a look at this. Oh, Jenny, did you know this? Hims has earnings because I know you have Hims. Shop, Uber, Spot, PFE.
Pfizer, we've got all of these, Liz. We've got all of these. Yeah, I mean Pfizer. I've got kind of a lot of Pfizer.
Don't you have a lot of Hims too?
I have like 3 times as much Pfizer as Hims.
Oh, you do? Okay, let's go back here. Let's see what we have. Do we have Hims? No. Yes.
We have one short 50 put. With the earnings could make us or break us.
Okay.
I would just leave it, right? I mean.
Well, yeah, you could just leave it. So here's the deal. Or.
Okay, I want to.
Or you can do something like this. This isn't gonna do anything. I was gonna say.
No, but what it would do. Okay, so go to our short put. Go to our short put on the trade page. So what it would do was switching like an in the money short put to an in the money call. What that would do if Hims goes up. If Hims goes up to 50, this short put becomes the at the money, and then it blows up with extrinsic value. And so this put that's worth $7. If Hims goes up to 50. is probably still going to be worth a pretty hefty amount. We're not going to get out of it for a win versus if you switch this to a long in the money call and HIMS goes up on earnings, then we just make money 1 for 1 with this as the stock moves up.
Yeah, I agree. And the same
Yeah,
concept. The same concept here could be you could do the zebra if you wanted to, because my problem with this is I went to the near term, and
Yeah,
there's
you have to go so far down. There's so much extrinsic value.
There's so much extrinsic value. So that's why I was like, if we were willing to be short put in HIMS, I just want to see how much if I switch it to the zebra.
The zebra's going to be expensive.
I'm going to go to Delta. I'm going to go.
The zebra's, I think the zebra's expensive.
I'm putting him in as 1. Oh, I'm out of my SPX.
Oh, good. Spoo's up 8. So they were, yeah.
So here we're switching. So from this perspective, Jenny.
It's like a $900 zebra.
Yeah.
Yeah.
I'll delete this leg so we can see it and then I'll put it back in. It's $844. But what you're doing is almost a Band-Aid over a bullet hole. It's an additional $199 to where we are right now. But you make money 1 for 1 to the upside. And then to your point, if it does fall to 41, then that will explode with extrinsic value, and then you can do something with it.
So we're short the 50. How much did we lose on that trade? Like $500 or something? What are we down?
240.
Only 240.
Well, that's a roll on top of a roll, I'm pretty sure.
Yeah. So I was just going to say, like, how much is the diagonal? The diagonal's a lot cheaper and we can make some of our money back. The diagonal might be the least amount of risk here in HIMS.
Okay, so let's take a look at that. So going from that perspective to...
But go far. Go get $1. Go all the way to 53. Or even 54. Let's just get it as wide as...
profit potential? Yeah.
Yeah, because we need to make some of our money back.
This is going to be the cheapest.
Yeah, that's the cheapest way.
So, and I'm just going to show you when you pop it in together, and then we can adjust it if we want to on. We can adjust it tomorrow.
Yeah. Now, all we're trying to do is make back some of the money we lost on that put. Because how much was that diagonal? Can you take that put off?
Leave the put.
The diagonal is 46 to 53, so it's $7 wide, and we're paying
$500.
We can make $500 if it goes up,
which would be the point from here to here anyway.
I should take off all my HIM shares and put on these diagonals. It'd be a lot less risk going through earnings.
I'm doing it.
I mean, and my HIM shares, they're garbage. I can tell you right now.
Yeah, people don't like HIMs.
I know, it's my worst. It's one of my worst performers this year. HIMS.
Well, we have less risk in this. We're just getting out of that naked put.
Yeah, I'm going to. And you're gonna hear me. I have to go somewhere right after the show. You're gonna hear me do this right now. It's gonna be live on air. I'm gonna shut down.
I mean, we do this all the time, live on air. It's what our MO is, Jenny.
Those were, if you heard the ding, that was my HIMS closing, and I'm gonna put on that $2 diagonal. So if HIMS drops, I'm not gonna lose any more.
I've got that in. I paid up for it, but I want it out. So that's HIMS, that's out. Spoos are up 650. Go, baby, go.
Yeah, because I don't want to.
I want to take a look at you. That's for me, because I have. you.
And if HIMS blows through, my call of the diagonal, whatever. I've had it with HIMS.
Pretty funny. Okay, so you. I will address this later. This isn't something we need to do. Even though 16 million shares have traded, it's got a 62 rank. Is there anything we want to do in UU? There's not a lot of premium.
In UU, I don't know what to do. I got out of my UU. What are you going to do against your UU?
You know what my go-to move has been, Jenny? I've got the stock, so here's what I'm gonna do. I'm gonna buy this. I'm gonna do just the expected move. I'm gonna protect it for that cycle, and then I'm gonna go up, and I'm going to sell this.
Yeah,
that's what I'm doing against my stock.
Oh, UU is down 250.
It's down 250. It's still one of my biggest winners on the year, though.
I don't know what to say about UU.
Still one of my biggest winners on the year. And that's, I'm just going to protect it to it's down to, and this is the buffer. So you just do this without the stock. This is the buffer without the stock.
Yeah. I don't think we need to play UU. We don't need to fool around with this, right?
No, I don't think we need to. I mean, I wrote it. It's been a really good vehicle for me because I got in, I think, down here. So I'm happy with it.
Yeah, we all got in.
I'm happy with my U, but I do need to protect it. And that is a big move down today.
We all got in down low. I got out at 10 or 11.
Yeah.
You.
Yeah. Okay, so wait, hold on. I just want to make sure we're getting it. So PLTR HIMS, we talked about both of those. Do we want to look at Uber, Shop, or Spot?
There's something. And Pfizer. We push out trades. Or I guess I have HIMS as the last one. Is that the last one?
I've been pushing out everything. And I wanted to. Ajit is trying to tweet us, and it's not showing up, and I don't know why. I just want to make sure that we're not doing.
And I love seeing Jack JT again. Jack JT, we've missed you.
I know. He closed his Microsoft calendar this morning at the open I put on the other day. Nailed it. Love it.
Good. I wonder if he's still in Micron, because isn't Micron like crazy high now?
Oh, Micron's crazy high. And congratulations on your wealth, Jack Tucker.
I hope so, Jack JT.
Or Jack JT.
Yeah, this was from like 70s. Remember, it was in the 70s to 230.
I'm telling you, I think he got long here.
Why can't this happen to Intel?
It's never gonna happen to Intel. Don't talk to Tim Knight about Intel. He is he's doing that too. Okay, so you want to look at Fiserv too. So Fiserv, Shop, new Uber.
Yeah, PFE. So do they really have earnings today?
Yes,
All
they
the
do.
things I have.
And this one has kind of fallen from grace as well.
Well, it had that blip up, but
November 4th before the open.
Oh, that's tomorrow morning.
Yeah, that's what I'm saying. So you got to do it something tonight.
Huh.
There's not a lot of premium in there. I mean, I don't know if I were looking at this with a fresh set of eyes, I don't know that I would.
There's not a lot. Sometimes if there's not a lot of premium, what would you do if you were me?
So you can't, like I said, it's going to be hard to defend it because you're going to be doing something like this, right?
No, I know. To defend my stock, what am I going to do? I'm not going to do that. I'm not going to sell a call for 17 cents. I think,
Johnny, I know you have a lot of stock. I would buy this.
That's what I was looking at, but maybe I'll buy half. So like against half my stock.
Or even buy that. I mean, you're paying 29 cents. Well, no, never mind.
No, it's only 50 cent wide.
Yeah, that's terrible. I would just be buying this.
I think so. I think maybe against half my stock.
You're not going to sell anything against it.
I'm just going to let it roll. Like, I'm not doing anything. Because you figure if I buy that put for 40 cents times 10 is going to be $400 for, if you've, I think you take 10 cents in on a 50 cent wide ratio spread. This will protect you to the expected move. It's only a 92 cent move. Yeah, but then it gets me double long.
Yes.
I don't want to be double long. Honestly, when I got into Pfizer, I think it's a pretty good dividend paying stock. I started by selling puts, then put the stock. And let me see the dividend. What's the dividend?
I think it's 5% or something. Overview, 7%. And the dividend is on 11.7. So get double long.
Do the ratio spread and double down. Oh.
Get double long.
No, I'm just going to leave it. I'm not going to throw money away on those puts. If Pfizer opens up tomorrow and it's trading 20, it's not really going to matter. It's not going to even be half the dent that I'm experiencing today because of Oklo and Archer
Oklo and Archer are taking me out today. But things are coming back. Okay, so I'm going to pop back in here. I want to make sure we are getting to all of these earnings. So Jenny, I'm going to hit this because Kai was saying this morning, and we're going to go over his recap tomorrow from the SIBO floor. But he was saying last week there were bigger companies, but this week there are more. This is quantity. This is quantity this week. And then they were bigger last week. So, I mean, we've got, so you've got Hood on Wednesday.
That's my UPS guy. He's the one who's so worried. He's in the money puts in Hood. He's so worried about hopefully earnings saves them.
Yeah. So there's a lot this week.
DraftKings.
Mm-hmm. When is DraftKings? Do you see it in there?
Thursday. DraftKings Thursday.
Okay.
Fig. We have or had Fig.
You have or had. This account never did.
Where did it come from?
Figma. I mean, I believe we said this the one time.
It was a viewer. I still have it.
I think it was an IPO because I think you guys got in like the.
Oh, I can see. I bought my shares at $55.19. Yeah. So it's trading $47.70.
Yes. True story. So this is a big week.
Yeah, there's a lot. There's a
I
lot.
just wanted to take a look because we have it in. Okay, I'm going to go to triple Qs versus GLD. So GLD was up. Gold was up today. I want to go to GC and see if it's above the 4,000 level. And it is. It's maintaining it's above its 4,000 level. But I
Yeah.
just wanted to keep an eye on these. We're down on both. It's okay. This is a long-term play. We took it from Tim Knight.
Yeah, that's all right.
Yeah.
I mean, our biggest loser today is Netflix. Who thought? Who thought with the split announcement that it would be hit today?
Do you know what though? It's day one. We put it on Friday. Today's day one. It could totally turn around tomorrow.
Oh yeah, yeah.
I wanted to see where the VIX was because we have, I mean, this is pretty much an unchanged market right here. And the VIX is keeping its wings up.
I can't believe that VIX is 18, but I mean, I know we have a lot of earnings this week, but still, 18 VIX seems high to me, even with the earnings.
Look it was almost 19 today. 1883 was its high. That's high, 1883, but it's because of the earnings. You're right.
I don't know. I think there's something else going on because I know there are a lot of earnings, but I don't think that a lot of earnings justifies an 18 VIX. I feel like last week when we had a lot of earnings, VIX was not as high as 18. Was it?
Well, look at this. You can see it. So yeah, last week the one day it popped up to 2053.
Well, that was back to October 20th. So like last week, what was it just go back to
here. Yeah, this is October 23rd, and then you go to October 24th,
like
27th. Yeah, it was in the 15s. I can just
right. 15, 16. Like 15, 16, I buy that. 18 seems high.
Wow.
And I'm not saying sell vol. I'm just saying is that a tell that's there's something shaky in the market.
So last Friday it was 1854.
But during the week it was down in the 16s. You see it opened at 16 because I don't know. 18 seems kind of high to me. It does.
Yeah.
Maybe let's put on a delta buster. Let's add a short delta position. Let's just like take what the VIX is telling us and put on.
Do you know what I did this morning? And I don't know if this is right or wrong because I wanted to add some short delta when we were up like 20.
Mm-hmm.
And it's a baby trade, so you can make fun of me all you want. I went to the expected move. I did a pool medic style XSP.
Sure.
Yeah. I
Yeah.
thought it was something I could put on. I can hold it if we need to because I've got 30 days through December 3rd. It wasn't too expensive. It was a pool medic style calendar, 10-day, 30-day.
In XSP,
you could use anything. I don't know why I went to XSP. I really don't.
Is this equivalent to SPY? Is it like
SPX.
It's what?
SPX, 1/10.
1/10. So it's equivalent to SPY, SPY. It's like one SPY. It's the same thing. So whether we do this in XSP or do it in SPY, it's the same thing.
It's the same. It doesn't matter.
Yeah. That's what I was thinking.
In SPY is a little bit more liquid. We could do it in SPY. Let's try it that way. So right, this was $4.07. Oh, sorry, not SPX. SPY. Delete. SPY. Okay, so if you're going to do that, you're going to go 10-day. And I was at the 670.
Yeah.
10-day, 30-day. Now here it's a little bit different because you don't have exactly the 30-day. So
because you don't have daily.
Slightly more expensive. So yeah, we were at 420. Now we're at 460 because it's the same thing. This has 2 additional days in it.
Can you believe the 30-day is December? Like when you're going into the pool medic style and you're looking at a 30-day, we're in December.
We're in December. Yeah.
This year flew by.
Yeah.
Yeah, sure. So do it. Ship it. I like it.
That's what I did this morning. I did it in XSP. It doesn't matter. Like you can do it in any of this stuff.
Yeah. I mean, the only reason I mentioned SPY is because it's usually tighter markets or easier to,
Do you know Random Thoughts by Liz Deerking? But this is what I was thinking about. You know how we use SPX, and I love SPX. We do the SPX 0 to TE probably because we're in, this pit and we love our SPX trading. But if we're closing them, if that study that we went through last week says closed at noon no matter what, it's either closed for a profit or closed at noon. You can use whatever the heck you want.
You can use whatever you want. Yeah.
Yes. If you're doing that, you can use whatever the heck you want. It doesn't matter.
Yes. You could use whatever you want.
Yeah. So you could use SPY.
It doesn't have to be cash settled.
No, it doesn't have. If you're planning on closing, it doesn't have to be cash settled. The problem here is
SPX is 10 times. That's why we need the.
Yeah, you just need something bigger.
Yeah. But like TP sometimes will use NDX.
He'll use NDX. But if you wanted 5 times, you could go to EX.
Yeah.
This is 5 times, not 10 times.
I mean, there's still a spread. You're still doing a spread. So it's like it's spread off either way, but you need the bigger products.
Yeah.
I mean, heck, you could go do it in like Netflix.
Yeah, you could.
You know, you could do it in individual products too. Like well, does that have dailies or does that just have weeklies?
Netflix? Hold on, let me
you could only do it in something that has multiple expirations. So who has...
And then these are, like I said, these are also random thoughts, and we can look for that. You can do it in anything. So my next question is, and I feel bad, I'm going to make Jacob do this, but say it's noon. Mine's already closed, so it's not today. But say it's high noon, and I'm down a little bit, right? And I've got, let's say it's the 60, 50, $10 wide, and it's $5. What happens if instead of closing it, you roll it out?
Yeah, you could. You could, sure.
Swap, and then you would just take and buy it in the next cycle.
Hey, Teams Jacob and ask him to do that study. If it's a loser at noon, roll it.
Roll it to the
No, but you don't want to pay to roll it. You can't pay to roll it.
No, but if it's right here, you won't.
If it's right here.
That's what I'm saying. If it's a loser, a lot of times, if it's gone gapped up crazy, I'm gonna leave it anyway, because why am I closing it for full profit, right? But if it's one of those where it's wrapped around, that's why I was going a $10 wide where I'm still in the middle. If at noon, this is still gonna be a loser. So say I got 384, this is a $100 loser. What would happen if you rolled it out in time?
I mean, then you're banking on like an update tomorrow.
Yeah. You're just extending your duration.
But if the market's not up tomorrow, then you're gonna then you could be taking a full loss. Then instead of taking $100 loss, you could be taking you're rolling the dice. You got a 50-50 chance of having a full win or full loss.
All right.
I don't know. Have Jacob test it. I feel like that's gonna be hard for him to test.
I think that'll be hard for him to test too. It was just random thoughts. Now you wanted to see Netflix has they don't. They just
I didn't know, like, do they have who has like Monday, Wednesday, Friday? Because some what else? What has more cycles?
Like this is normal. You're gonna go Ubers. This is what most of them are gonna look like. Weekly.
So you could do it, I guess, and just on a Friday. On a Friday, you could do it in anything you want. The world's your oyster on a Friday. You could do it in everything.
Okay, we have about a minute left. I'm gonna make sure we got to everybody in Twitter, and I'm gonna go top down again. Whoa, wait, I'm still in Bob's. I'm going to go top down again. Thinking of going short on SPHR earnings tomorrow. And Ajit is finally going through, because he was saying he's trying to tweet us and it wasn't going through. So I don't know
good.
why.
I'm glad it's going through. And the first one is from Ryan Johnson from YouTube. So thank you for posting on YouTube. Thank you, Frank, for sharing it with us. SPHR, thinking of going short on SPHR. And Ajit...
And then hold on, I'll go to
Hood, I think.
SPHR. Yeah, he was, and he puts all of his stuff out there. SPHR. They have earnings.
Entertainment.
They have earnings. They want to go.
Is this like the Sphere? Is this like the Sphere in Vegas?
Yeah, I bet it is.
Maybe, I don't know.
Yeah, you want to short the Sphere?
That's what I bought. He's not watching. I bought Logan for Christmas 2 tickets to Kenny Chesney at the Sphere.
It doesn't mean yeah, that'll be fun. So if you want to go short, you could do a zebra.
Yeah. Put on a...
No, not in the 2-day.
No, you're in the 18 day.
Oh, you only have because they only have 18 days.
Well, just do a diagonal then too. You could do the like the 57.5 and then the 65.
Yeah, that's what I would do.
That's not too bad. Yeah, 388. Throw it in. We'll get short. SPHR.
We're gonna short the Sphere. Oh, it's only.
Oh man, the markets are too wide. Yes, look at that. $4. Usually that's a warning. If it says closing only, that's a warning to you to say like, hey, these markets are too wide. If there's something you really want to trade and you get that message, I think you can call the brokerage firm. But it's kind of like a warning of these markets are way too wide.
They are too wide. And then I just want to make sure that Ajit gets his day in the sun, because we love Ajit. And I'm sorry it wasn't going through earlier, but this is Hood short put. So he's doing the earnings trade ahead of it because the earnings are I think Wednesday or Thursday this week. So thank you very much.
Well, good luck. I'm rooting for you and my UPS guy who's also short puts in Hood.
Okay, perfect. We are rooting for both of you.
All right, it's 11. We've got to go. Everybody out there, have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you live from the Cebo floor tomorrow.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
What's going on, everybody? Welcome to Option Trading Concepts Live. I am Jamal Chandler, joined by Ryan Fred Grace today. What's up, Ryan? How you doing?
I'm doing well. How are you?
Good, man. Good to see you, buddy. Another Monday. Of course, Ryan's always on Mondays. Mikey is still out. Mikey is back en route back to Chicago, of course. Mike, Nick, and Katie were at the Whiteboard Show this weekend. I heard good things. Heard it was a good crowd. They did their thing, as usual.
They always do.
Yeah.
People turn up for it, which is awesome.
No doubt. Can't wait to hear about their exploits in San Diego. But enough about them. How was your weekend, man? How was it? Halloween?
It was pretty good. I'm kind of, as you know, anchored to the living room with my newborn, but we pushed him around in a stroller, got out, ran into some coworkers even, so saw some people, and then watched the Bills game last night, which I'm feeling better, Jamal.
I bet you are. Bills pull it out, beating... I know for a second, though, at the end there, you see Mahomes go back, you see him throw it up in the air.
Yes.
I know you were like, oh, God, not again, please, no.
Yeah, we've seen this story before as fans. But, yeah, it was a good weekend. How about yourself?
It was good. On Friday, we, there's only one trick-or-treater left for us, my 13-year-old, and, of course, that's basically towards the end. So he went out with his friends. They had a half day on Friday. They were out of school at 11:30. By like 12 o'clock, he sends me a text like, just so you know, I'm going to be out the rest of the day. All right, buddy, do your thing. And luckily, we had planned for this ahead of time because we were trying to figure out, okay, what are we going to tell him? What are we going to do? Look, it's Halloween. You love it, especially, but that age they're so mobile. He's moving around on his bike. Not that a ton of people are driving around the neighborhood, but, you just want them to be safe, right?
Absolutely.
So we kind of had to, we thought about brokering a deal, whereas we knew we were going to go to this party later. And again, the party was like a lot of the kids or the parents of kids the same age. We were going to broker a deal where we were going to be like, look, if you want to be out later, you just got to be near us. But it never materialized that way. 9 o'clock was going to be the cutoff. By the time he got to 9, he wanted to sleep at a friend's house. We allowed that since he didn't really have much going on Saturday, which was the only thing he had was a walkthrough, which gets us to Sunday. The walkthrough was for his playoff game for football. Awesome. We did win yesterday.
Congrats.
We did win the game. Yeah, that's awesome. We beat him. It was tight, man. It was tight. We had the ball first. We drove the field. We were at the goal line. We could not get the ball in, which is a whole nother story. Refs. We eventually did not score right away. We turned the ball over on downs on like the one. Then we got a safety, which was nice. And that was the whole first half. It was 2-0 going into halftime. And there was a lot of back and forth between our coaches and the refs. It was the thing. But then we just pulled away.
Pulled it
ended
out.
up pulling away, and 23-0, we won the game. So on to the next, man. We got the next game. If we win the next game, it would be championship. But one game at a time.
Awesome.
One game at a time.
Well, best of luck. And
thanks, man.
2-0 at halftime. Hell yeah.
I mean, it was crazy. It was kind of crazy.
Better than nothing.
Yeah, I know, right? Yeah. Better than nothing. But yeah, that was mostly the weekend.
I'm gonna ask.
Huh?
Halloween party, what'd you go as?
I didn't go as anything, actually.
Oh, you didn't even dress up, man?
I didn't. I know, man. Look, I need a damn break from wearing a suit, Ryan. I need a break. It's been a long time. Every year you wear a suit. I'm not the most festive person when it comes to Halloween anyway. I didn't feel like it.
I hear you.
I didn't feel like it.
I didn't dress up either, so I'm in your camp.
Yeah, we just went to the party. We hung out. We watched the World Series game, which was amazing, of course. That was, wait a minute, that was Friday? Yeah, no, so that was the Game 6. Yep. And Game 7 was incredible, of course. So, yeah, that was the weekend, man.
I had to go to bed, sadly. I heard it went to, 11 innings?
It was wild, dude. It was wild. That was definitely one for the ages, for sure. I don't think anybody expected that thing to be such a classic series, instant classic.
Yeah, that's awesome. So that's 2 in a row for the Dodgers, right? They won last year.
2 in a row.
And then they were down in the series to make it a Game 7, right? They won on Friday night.
Yep. Yeah. 2 in a row.
That's awesome.
One more is the dynasty, right?
I think so, yeah.
We'll see what happens. Overall, what are you paying attention to besides crypto? Is there anything else? And we'll get to that later.
I'm sad, Jamal. I woke up this morning sad. I was nervous over the weekend. And yeah, I mean, it's been short term here, kind of bearish. You know, when you look at crypto, equities higher earlier, I don't think it's an environment in which you're going to just see things kind of jump off a cliff, but you have a little bit more volatility in crypto. In short term, you're starting to see a little bit of a breakdown. So will 105 hold? Will 3,500 in ETH hold? I hope so. But yeah, I think this is largely just kind of technical in nature at this stage. I don't think when you look at kind of the big picture, there's anything to be all that concerned with. But short term here, we saw all-time highs at the beginning of October. We've sold off really since. This was the first year in 6 where we weren't in positive territory at month end for October. And you're seeing a continuation of this here today. To some extent, I think it's a little bit of repricing around all of the dovishness that the market had for the Fed. But, once we get some more data, and that's the other thing that makes some of this kind of random and challenging in that you haven't had a ton of data points coming out where it's going to kind of reprice things or influence the market's view one way or the other as to what the Fed does next. Not that that's the only thing that matters, but you look around, earnings have been decent in terms of, year over year rate of change, earnings per share has been accelerating. There's not much to be, in my opinion, to be too worried about, but crypto is just not trading very well right now.
It does feel like that. Like, it doesn't feel, I've been saying this for like the last week and change, I feel. There doesn't seem to be a big wall of worry to climb, there's not a whole lot worrying people. Sure, there's a government shutdown in the past 30 days, yeah, but that doesn't affect the market. I think we've seen that to this point. There isn't this macro thing that is affecting oil, if you will, or even, the gold is not even moving on fear. These things are just kind of moving for whatever wind blows them and in what direction. So it's kind of, you're right, it's kind of interesting to watch here. Markets seem to be trying to head back up here. We're up 11 right now. Volatility, the one thing that I would note is volatility kind of just moved to the downside here. This thing has been kind of stubbornly bid, and it looks like it's fading some here as we start to go back towards highs. So, well, not near towards highs. We're actually about 20 handles away from highs. But you're starting to see like volatility release a little bit into the Monday, which is kind of a typical effect we see. We hadn't seen it earlier this morning, but I think if we start to keep moving higher, you'll see it.
Yeah, we were at all-time highs in the S&P just, days ago. To your point, you're seeing a bearish trend in vol that tends to keep people in the market, right? In terms of, is this investable? Is it something where we want to stay long? Well, declining VIX or a VIX, let's say sub 15, is a lot more comfortable as an investor than a VIX that's whipping around above 20. So that's another box to check. Maybe you could point to a little bit of short-term dollar strength here recently.
True that.
Seen a reversal there in the trend that we'd been used to for quite some time. Seen a backup in interest rates in some cases, right? And we talked about kind of a repricing around expectations or probabilities for Fed funds. But yeah, I don't really, there's not much that I'm reading into where it's like, okay, we're just off of all-time highs. We're up, it's about 2% right now in the S&P.
Yeah, I mean, look, the bullishness it's undeniable. 6 months in a row, we've been up in the S&P 500, 6 months in a row in the Dow, 7 months for NASDAQ. The bullishness has been undeniable. If you've tried to do hedges, it just doesn't work. I mean, it just doesn't, and you feel silly afterwards. You're like, well, I should have just stayed long. I'm wasting money doing hedges for the most part. And skew kind of just came out the market over the last couple of days.
When you have lower levels of volatility, you're not obviously playing for this to pay off, but do you personally ever go in, and there is a negative cost to carry associated with this, but do you ever go in and buy tails in the VIX or downside puts? Like, do you use that period as kind of a point in time where you take it, I wouldn't say take advantage of, but like look to position for some downside, or how do you read it?
Yeah, so actually, I didn't do this in the Tasty account. I always talk about this because I like trading in multiple different accounts. It almost like putting on different hats, like one day I'm going to put on like a hard hat and go work on a site, you know what I mean, like a construction site. Another day I'm going to put on a fedora and go out. Like that's how I look at these different accounts that I have. So there's the Tasty Show account, and then I talk about like my personal account on the regular. In the personal, last week, whatever the 27th, was that Wednesday? Starting on Wednesday, as you can see here, once we got a little extended above the 1 week moving average here, I started putting on some put butterflies. Actually, I did it late into last week. Sorry, I did it late the week before and added more by the time we got to Tuesday in anticipation for maybe a pullback on Fed Day, which never quite materialized. Matter of fact, we went higher. And so at that point, I had the butterflies positioned around 6,800. That was a short strike. That was the middle of it, right? And the idea was, okay, maybe if we do get a pullback because we're kind of extended. I mean, just looking at this chart, it's not even a feeling that I'm saying we're extended. This chart is somewhat extended when you look up the 1 week moving average. So that was my thought process heading into the week. But as we got closer to Thursday, I'm like, all right, I'm going to start taking these off and just push it to next week or something because it's clearly not going to happen. But oddly enough, the last 3 trading sessions, we've pulled back, right? So I do look at it from the standpoint of sometimes when we feel a little extended, try a little short-term hedge. Let's just see what happens. I wouldn't even call it a hedge. It's really not. It's more of a short-term downside play to see if there's some mean reversion here, which never really quite materialized to the extent that I wanted it to. And so I kind of closed it off because, again, it would have been, if I had left it on, when we did dip on Friday, we dipped down to, well, I should do SPX because that's really what I had it on. So I had the 6950, 6800, 6750. And as you can see, we got to 6814, but I actually took it off like earlier on Thursday, late on Thursday, I took most of it off, and then I took some of it off earlier on Friday before we actually got to lows, because it's just dancing around these areas, and it's not exactly the kind of pull like sell.
Yeah, you aren't really getting dips. When it does sell off, it's less than a 1% pullback. And I think last time that we saw a big move was back at the beginning of October, like the 10th, whenever we had the volatility show up. But since then, you don't even get the dips really. So it makes it tough to want to continuously put those positions on or bet on some downside, right?
And I tell you, I mean, look at this. I mean, this is 5 days in a row we are red, but it's not like serious red. It's just red, right? Which I think personally, I think it's healthy for a market. Just because we're up here, I don't think, all-time highs don't necessarily mean that you're supposed to fall. I think it's healthy when you do have these kind of little bit of red days. I think it eventually leads to more strength. So right now, I wouldn't necessarily be looking. It could mean something could happen in either direction at this point. And I think that's one of the things you were seeing. Volatility has to be your guide a little bit. This morning, it seemed heavy, and volatility was up. Now, volatility just went red. I think it feels like we're probably going to go back up now,
Speaking of volatility, are there any other measures that you look at? Because I know you're into a lot of different ways to slice this. Whatever I mean by that. I know you bring a different perspective than I think we've talked about volatility at on the show here at times. And so curious, do you look at anything else aside from implied vol or the VIX? Do you look at vol? Do you look at any other measures of volatility? Like, how do you think about it?
I do look at VVIX. I pay attention to it when it's above 100. I think it's telling you something. I do pay attention to the ratio of VIX to VVIX. I look at that a lot.
Okay.
It's another measure of looking at, because just VIX on its own is like one thing, right? Like it could tell you one thing, but like the measure of ratio of VVIX to VIX, and I'm not sure if it does it on here. Maybe it will, but that ratio sometimes can sort of tell you something. I don't know if it'll show on here, but typically when you do VVIX divided by VIX or whatever, sorry, it won't really show it, but VVIX divided by VIX typically shows you a ratio of either high or low. So for example, if that ratio is somewhere around 2 to 1, 3 to 1, that's a high volatility environment. If
That's the vol is that much higher than the VIX itself?
Yeah.
Or it's telling you how much the VIX is, how much volatility is moving?
Yes.
Okay.
Versus
like get out of the water sort of indicator.
Yeah.
Okay.
Yeah. Versus if it's higher, so that if that ratio is above 8, 9, 10, that's a very low volatility environment, similar to what we saw in 2017. So I'll look at those type of measures. I will look at VVIX, but I look at that ratio too to see. And then I also look at volatility risk premium. I look at VIX minus, which is a 30-day measure, VIX minus 30-day historical vol, and you can see that thing too. If it's usually right now, I think it's probably around 2. It's kind of low, which means volatility is not that high. If it's above 10, that tells you something, And so I've shown this a lot on particularly on engineering the trade over the years. A lot of those who pay attention on engineering trade know I've done this. Those are the ways that I'll look at volatility, not just VIX alone. I try to look at these different ratios, and measures as well.
Yeah, I think that's super helpful, especially when you look at realized versus implied, and you start to think about even ranking that spread, or you come up with what is the spread today, and then where does that fall as a percentile over a certain period of time. And you can kind of, I think, in my opinion, you can find points where the market is, especially on the downside, it's very unlikely it's going to continue to go lower given how high implied is versus your actual move. And those can be those, kind of turning points or signals, I suppose.
True that. Talk a little crypto?
Yeah.
Some slides for us?
Let's do it. I've got some updated slides. Things have been moving quickly, so apologies. My numbers are stale, and some of the smaller market cap tokens that I put together, the numbers around yesterday, have certainly moved. But the picture stays the same. So let's jump into this. We have our crypto update for November 3rd. And as we've discussed, have some selling pressure here this morning. 105,000 on the screen. Not a number that we want to see if we're bullish. Bouncing a little bit right now. I think we're closer to 107. I think you want to see 108 come back in the picture pretty quickly here. Short term, this has been a bearish trend. We've talked about bearish price momentum in there. One thing to call out, you've seen this start to spill over into a longer time frame now, which is not a good sign. So weekly, we've gone from bullish to neutral. If we see the weekly price momentum start to break down further, it typically precedes larger downside moves, and the upside is true as well. But keep an eye on that. It's going to be slower moving. If it does, all of a sudden, as a result of a big flush, shift to bearish, that's also a signal in terms of how quickly we transition from one phase to another. But right now, we got to start the week, we got that neutral signal. So something to call out. ETH is still bullish on the weekly time frame. But yeah, it's been short-term bearish. We're starting to test some of those levels and get a little bit closer to where we saw the auto liquidations push to on Friday, October 10th. That's probably closer to like 103 in Bitcoin. But yeah, when we look at the expected moves here, you'll also see that we could easily go underneath 100,000 within the 1 week, 1 standard deviation move. But some weakness here, continued weakness, really held on. I think we saw 110 over the weekend, but continued weakness from yesterday into the start of the week. No real change though when I look at volatility. You look at implied vol for Bitcoin or ETH. This is kind of where we've been. Little bit higher end of the range, I suppose, for Bitcoin. ETH's been chopping around between 60 and 70. Solana taking it on the chin as well, getting down to some levels where, I think there could be a trade, 160-ish in Solana, 150 if you get down there. I think just realize that this stuff we get excited on the big upside moves, but that downside volatility remains the same, and in some cases can increase. So there could be a little bit more to go, but yeah, if we hold these levels, I feel pretty good. But I think you have to rethink it if you don't.
I've never really looked into this, but how does volatility work with cryptos? Does it typically is it like a gold type of situation when they go up, volatility increases, or is it more like equities?
Quite often, and it's not like 70% of the time, but more than 50% of the time, historically, we've seen a positive correlation between vol and price. So you get these expansions, like the real extreme moves, where you go, of course, because the downside can only be 0, but where you go 120% volatility. Well, that's 100% downside volatility and an additional 20% on the upside. So you have kind of this FOMO move that occurs at times. To some extent, you have limited supply when you think about things like Bitcoin, and in some ways, there's a disinflationary element to ETH at times with the burn. But that might fuel some of that positive correlation. But yeah, just given how small this stuff is, and it tends to just violently move higher, that's where you see that positive correlation with vol. That said, I mean, you get the big moves to the downside too, and it's going to spike on those numbers. You saw very high levels of volatility post the FTX collapse, for example. But what we have also observed generally over time is that volatility has continued to move lower. So if you look at where Bitcoin vol was 10 years ago, those spikes, those higher highs are much, much higher than what we've seen in terms of range-bound volatility here over the last couple of years. So I think that just speaks to the maturation of the asset class and certainly a new investor or the profile of investors that's in it today. Mm-hmm. But yeah, you do see a positive correlation at times. But certainly here, the moves in the realized vols where we have Doge up 114%, that's off of just the violent sell-off that we saw earlier in October, and then in some cases, you just get that snap back. So you have it on both sides. So that's a quick look at, the majors. If we go through here, and this is just from yesterday morning when I started to put this together, these are certainly weaker here today, but there's not really much that stands out to me. We've got a bit of a bearish environment that we've been in or that we're seeing evolve here. There's nothing else outside of Bitcoin, ETH. We'll talk a little bit about Solana in a second. There may be some developments there that I suppose more than anything, just don't sleep on it. But when I look at price performance across some of these alts, nothing that really catches my attention. I think at some point you're going to get that counter trend move where the stuff that's down 90% has some headline, and one of these things just rips like 30%. You're like, I should have been in that. So there will be those trades at times, given how beaten up some of this stuff is, certainly versus Bitcoin. When we look at things like Aptos, it's kind of been, I shouldn't say it's left for dead, but you have that kind of trading environment where all of a sudden, people who were just building for a year and then they announce something and it explodes. Mm-hmm. But right now, it's still been Bitcoin over everything, and you can see that with Bitcoin market cap dominance. But yeah,
it's been a little surprising to me seeing some of this pullback in the cryptos, given the fact that we've seen this strong correlation between cryptos and market, right? Particularly Bitcoin, particularly the big three, and even though markets have pulled back, like we said, there is a 4 or 5 day redness in the S&P 500, but it's not strong yet. There's been a little bit more weakness in this area, and it seems like Bitcoin's trying to cling to this 108, 110 level.
Yeah, fingers crossed, I suppose, because I think further weakness will very quickly materialize into a flush. I think you break 100, people will freak. It'll ultimately be a fantastic time to have bought, in my opinion, kind of when you look back at some point in the future. But at those points in time, it's really scary. 75,000 in April, the last time we really bottomed out there on a more bearish move. That was hard to buy, but I don't think that we see that this time, just given the kind of broader macro environment. But yeah, no denying the weakness that we continue to observe here in crypto, which is kind of counter to the strength in equities. That said, they have been trading with a very strong short-term correlation, so we can point that out in a second. But if we just jump to the last slide, you'll also see just more red as we get to smaller market cap stuff. Not really much aside from, I think, one that I'll call out, and I don't know where we are today. I'll pull up a quote here. But Hedera, H-bar, did have a bit of a counter trend move last week, up 12% when I put this together on Saturday. And we've seen price momentum shift in there, which is also counter what we see elsewhere. But just looking at it today, Hedera is down about 2% right now to 1803 off of that 1928 that we've got in there. But yeah, one of hope. Yeah, one to keep an eye on. The others that have traded a little bit better versus Bitcoin have been things like Litecoin, Bitcoin Cash. Don't have a specific reason for that, but when you look at price action, those have been a little bit better spots to be in here recently. That said, if we jump to the next slide, I think we've got just a quick look at relative performance. This speaks to my point around Bitcoin market cap dominance and what you typically see when there's volatility within the crypto space, when there's downside selling pressure for sure, you see flows into Bitcoin versus the rest of the stuff, and then even in aggregate, you see outflows from Bitcoin or some of those Bitcoin ETFs, which is what we've seen here recently. But yeah, just a kind of a worsening relative performance between ETH and Bitcoin, Solana and Bitcoin, Solana and ETH recently, of course, Dogecoin and Bitcoin, Doge underperforming there. So maybe it changes, but like short term, maybe there's some headline or something. This stuff moves so quickly. No reason to believe that's today, though.
Yeah, you never know. I mean, you need a headline of it feels like a lot of the headlines more recent, correct me if I'm wrong, have related to some type of governance, if you will, or something like that, something positive. And again, that's really been a lot of this year.
Yeah, I mean, to that point, I guess the one thing I would highlight here, Jamal, is Solana, usually top 3, top 4 market cap. I think people might be sleeping on it, or in some areas, where there's just like this apathy. There's a lot that's happening that doesn't seem to matter right now. Maybe it's priced in or has been, but a lot of, I wouldn't say like bullish catalysts, but just developments occurring that are seemingly being ignored. For example, last week, Western Union came out and announced that they're launching a stable coin for remittance payments or just any use case, but primarily when you look at Western Union, launching a stable coin, and they've decided that they're going to do that on the Solana blockchain network. So that's a pretty significant vote of confidence for Solana when you're looking at use cases. They could have done anything they wanted. They could have done this on a layer 2 on Ethereum, launched their own chain, et cetera, but they picked Solana. So there's some institutional developments there when you think about who's building on these chains, who's using this technology. We had a couple Solana ETFs that quietly launched last week as well, have taken in decent flows to start with. But when I look at what's happening on chain, that's where it really emerges. So a couple data points for you. Solana TVL. So when you think about DeFi, we talked about Uniswap liquidity pools last week. This is the amount of value that's locked into these protocols, into the smart contracts used to facilitate the operations of the protocol. It'd be the same as saying, in some ways, okay, what's the assets under management of this fund? I suppose is a crude analogy. How much money is being put to work in yield-generating protocols on Solana, for example? So TVL is how you would think about that. 10.8 billion today, but that's up 88% year over year. It was 5.8 billion last year at this time. I also like to look at stablecoin market cap because to participate in DeFi, for the most part, you need that dollar peg token, or if we see increased usage of it, it's likely that there's more people participating. If we see the circulation of casino chips increasing, the market cap of casino chips in the casino, it's probably an indication that more and more people are playing the games. And that's not like to say, oh, this is gambling, but just to think about how you would tie stablecoin market cap and activity together, or adoption together, users together. So stablecoin market cap on Solana is about 14.5 billion today. It was only 3.7 billion this time last year. Wow. So it's up 292%. So regardless of what price does, and price is going to swing around like $50 a week, a month at a time, right? We were at 200 just a while ago. Now we're at 160. We're going to move around. This stuff is very, very volatile. But when you zoom out for a second, those are I guess, interesting signals to me. Some things I would key in on when you look at what's happening with Solana specifically. But you're seeing something similar across Ethereum, Layer 2s, Bitcoin adoption. It's just not relevant to price at this exact moment, I suppose. And then you also have the reopening of the government. Maybe you get regulatory clarity in some areas. Maybe you get more ETF decisions in others. We'll see. But there's some stuff that, looking out maybe another couple of weeks, another month, like I'm still pretty bullish.
Because, that's what I've heard. There are some kind of ETFs on hold right now, right, as a result of this government shutdown. So that's one of the things that I feel like that hasn't been, has been largely no effect on equities, but that is definitely something that's affected Bitcoin, cryptos to some degree.
Absolutely. And when you look at on-chain data, specifically with Bitcoin, you have people that have been in this for forever and finally have the liquidity, which I believe it's less about price. Now the market is big enough with the institutional participants, with the ETF buyers. The market's big enough to come in as one of these monster whales. Galaxy Digital did a deal that they've talked about via their OTC desk, I believe, where they facilitated a $9 billion sale. And that transaction, people in the market were aware of it, probably had a little bit of pressure on the market. But you have a market now, point being, that's large enough to absorb some of these flows. And I think you're also seeing that. For people that have owned this at extremely low prices, you'd love to sell 126 at the top, but you're fine selling 110, 120, somewhere above 100, given that there's liquidity in the market where it's not going to, if you go back 5+ years, it's not going to take the market down 30% when you just try to exit your position. So I think you're seeing a little bit of selling pressure from that too.
So that kind of sale that they authorize, is that like kind of like an equity offering or whatever, kind of like that a stock would do?
No, this is more so, I have $9 billion in Bitcoin and I've held it for the last 10 years. I want to take some off. I want to sell that position. You want to do that, I suppose, in a way where, previously if you did that, there wouldn't be buyers at all the levels where it would be conducive to even still be selling that Bitcoin. Here, via some of these institutions, Galaxy being one of them, now you can go in and there's enough liquidity. There are buyers on the other side of that transaction at, relatively kind of the same market price. So that's now maybe what you're seeing that's capping some of the short-term upside, or what might be dampening some of this enthusiasm, while you have a lot of selling pressure just naturally at these levels from people that have held it for a long time.
Okay, gotcha.
But not so much like an unlock or anything like that, which you do see in other tokens. This is more so just, I rode Apple stock up from $5 and now I'm going to sell it. But previously there were no buyers at these levels that we could sustain these levels.
So these are just big position holders that are eventually
you're seeing whales, I guess in summary, you're seeing whales start to sell a bit more. Coins that have been dormant for a very long time on chain starting to move, that sort of thing. I don't read it as bearish, but you look at, what's a headwind to the market right now? Well, there's a little bit of selling pressure.
Yeah, they need time to release, some of their shares and whatever as well too, right? It's the same thing that happens, people often look at these reports as showing that insiders are selling. They need to book a profit every now and again too.
Yeah, but I wouldn't look at it as a as a bearish signal necessarily. Right. It's just kind of naturally what you see in markets, right? I think if anything, it's a positive sign of the maturation of this.
Agree.
So, those relative performance. I guess we've got our weekly expected moves we could throw up here. We've got correlations. We talked about Solana. Happy to go anywhere. There's some lore on the internet as well right now that I'm happy to share with you. Anybody that I've talked to here about it finds it fascinating. We'll see. But I'll tell you more in just a second. More on the lore. But first, looking for about a $7,000 move in Bitcoin, 350 in ETH. Solana hasn't moved too much. Let's just call it 25 or so. A little bit of premium when we look at volatility in Bitcoin as well. Slight discount in implied versus realized, as you mentioned about looking at that earlier. But week to week, not much has changed here. I think the one thing to call out is, given the current spot price and the vol of 47% for Bitcoin,
at least earlier, you now do have a 1 week, 1 standard deviation move downside that puts you underneath 100,000. I would think like buyers would show up around 100. If you get a break of 100, maybe you run some stops there, and you could see some liquidations. But to me, I just think the way that this has been trading and the setup that exists, I think it would be odd if you stayed below 100 for a long time. Now, that in itself is a sign, but yeah, it's on the screen. I just think I'm still pretty bullish here.
I would think so. I would think at that level, I think people are going to start showing up. I mean, we see this, in a lot of different assets, right? You get around these certain round numbers, I think there's a lot of activity that'll happen.
Well, and again, the environment in terms of how much weight you want to put on liquidity, I think it's important. But the environment in which we're in is generally supportive. Unless the market is crypto is entirely reading through everything else ahead of time, which is possible, I think you're still in an environment in which this trend will change or shift back to bullish at some point, and you'll want to remain long.
See ebb and flow, 100%. Yeah. Interesting, though, that the expected move now is within that range.
Yeah, getting you to some scary numbers here on the screen.
When's the last time we were at 100K? I don't even remember.
I don't know. I don't even want to think about it. Let's see. And then we're going to look it up, and it was probably like a month and a half ago, and we completely forgot about it. So we dipped on October 10th or so. I think that was the last big flush in there.
When you pull up, do you look at the future more than anything? When you think of Bitcoin, do you look at the future, or do you look at the spot more than anything?
I'll look at spot. Yeah, I'll look at the spot price, but I think either one will work for us here. But I typically will look at spot either on tastytrade or the Coinbase price.
I'm seeing the last time we were below on the future anyway. At least, yeah, this is the continuous contract. Was June 23rd.
Yeah, I was just gonna say end of June. This is what I see with the spot price. Obviously, they're going to be close. So it's been a little while. We found buyers on the flush on the 10th around 103, and we've traded as low as it looks like 106 on Wednesday the 22nd. Traded down into almost 105 again on the 30th, holding above those levels now and holding where we found buyers almost every day post that October 10th flush for the following week. So I think you could feel a lot better, certainly, if it gets back above 108. And that might, and again, sometimes it's just the price action is a sign. All right, we found buyers down here again. How many times is the price of anything going to push into a certain level, find buyers, push into it, find buyers, and eventually that just becomes a launch pad whenever that catalyst or that headline, whatever random thing it is that does come out, it kind of just catalyzes it. I think that when you build a base, you can see that.
Yeah, 100%. I think so. Good stuff, man. Good stuff as always. Folks, if you're watching Options Trading Concepts Live, of course, we are streaming on the YouTube app. You can check it out. You got any questions for us? We'll dive into those at any given point in time. Somebody's like, I can see Jamal scouting the opposing team's practices during the week. Look, Grumpy Mike, I did not. I'm actually not coaching this time around. It's kind of nice just to, we have good coaches. I'm just a spectator. I'm a parent. I'm just spectating. I will say, and I think I mentioned this, the week before, we did see a guy from the other team scouting our team this past week ahead of the playoffs. We didn't even play them, but he was scouting. Guy drove from he drove 30, 40 minutes away because they're in Aurora. He drove 30, 40 minutes away to come see us.
It's getting serious.
On a Sunday where he wasn't seriously, dude? Come on. They share tape. It's not like.
Yeah.
The teams share tape. You don't even have to do that. It's so funny. Whatever. Let's see. Any other? We'll keep looking in here through questions. I know you obviously are the crypto dude. You trade a lot of crypto, but you trade a lot of other things too. What else are you looking at these days?
I've been buying dips in the Russell and in the NASDAQ, Jamal. I've been trading the range in gold here.
What's your favorite vehicle for Russell and NASDAQ?
Oh, I stay small, man. Have a decent sized account, but prefer to come in with the micros so that I can add at different levels, right? I mean, I'll probably come in and, have a max position size in some cases of maybe 10, 20% in equities, for example. And then within that, okay, what are your positions going to be? But in order to scale into some of these ranges, and obviously you want to trade the volatility, you can't time it perfectly. I just prefer to use the micros and then build the position that way. And then you can exit it, 25% of that allocation, kind of, or 30% at a clip, whatever it might be. But yeah, MNQ and Micro Russell have been M2K, I think is the
M2K
is the symbol. Have been trading those.
These things are so easy to trade, man. It's just like,
yeah,
so easy to trade.
Because you can have, you have 6 figures in your account or whatever and put one on, and you're not that you should ever freak out, but I think it allows me to be a little bit more controlled, especially in periods where you want to be really active in the very volatile markets, but sometimes just it's a psychological thing. I've been trading platinum. And that's there's only one way to trade that. It's a huge contract. Yeah. And it went from, mid 1600s to like 1480 within a couple of days. And you're getting thousands of dollar swings. And now that's not going to break you. You'll still be able to trade the following day, but it's a little bit like, ugh. I don't like to see those big red numbers. I do like to see the big green numbers, and it keeps me coming back to it. But with the micros, there's less of that psychological element, I think. Or when you do have that really big position on, you're finally at a level where it's like, all right, I'm happy and I'm comfortable here. And then if it does break down, that's more information and I'm just out. But it's not like I wrote it all the way down and like, I need it to bounce.
Yeah, no, this is a chunky contract, this platinum for sure. I mean, this thing's got a little size on it.
Yeah, look at that move back a couple weeks ago.
Yeah, dude. I mean, well, this is during the gold fall, right? Probably the 17th.
Yeah, so you're going to see this is
too big. Ooh, yeah.
Yep.
Strong.
But that big run up there, and then the puke, you saw the same thing in silver. So I've been trading. I mean, like you, like anybody on the show, I'm sure we gravitate towards the pockets of volatility in the market, like anybody does. That's where the opportunities are. So yeah, I've been trading metals recently.
What do you think about those right about now? I mean, to me, it seems like a different trade than it was, heading into the big move and then the fade. I think the fade cleared out a lot of different people, buyers and sellers, and now it's trying to, we talked about Bitcoin and the big 100K level, and here is obviously 4,000, seems to be sort of hanging in there right now.
I think it continues to chop around here. We've seen vol come in a little bit. I think GVZ is one of the ways that you can measure that. Like, I think the conditions are still supportive of gold, why it was going up in the first place. You maybe have seen some of and this is all going to be dependent on the data, you've maybe seen some of that inflation component come out of it. Oil prices as an input there have traded a lot weaker recently. But, that at least short term, that kind of debasement trade, everybody was talking about the debasement trade, has run its course. Now you have some dollar strength. I think, you've seen a positive correlation between the dollar and gold here recently as well. But I still think this trade, could trade higher, just maybe not straight up. I'm not looking at this and saying, it's going to 5,000. Could you be back to 4,200, 4,150? Sure. And then where could you be on the downside? Sub 4,000. I'm probably a buyer of like 39 and a seller of 41 until that changes. But I don't look at this and say, I'm going to buy 4,000 because this thing's going up 500 points again. I think we've largely seen some of that come out of the market, at least short term.
Different trade, and you mentioned GVZ. It's exactly, it shows you that you could see, obviously, this is what we always talk about gold, right? But vol getting bid as the price was going up, and so this is GVZ. Obviously, you see this is gold. That's what it was. The price was going up, vol got bid, dropped, vol dropped, and that's why I say it's a totally different trade. And one of the things that was, like, I was you could check the tape, like around that 10-17, 10-20 time, I was like, this is ridiculous. It's because of the way the move was happening, but also too, just look now, 30 days out, you look at skew, 25 delta put is what we call it 34 bid. Let's just call it mid price 35.10. 25 delta call. Now let's go with that one. I mean, you can see this, and this is wide though. This is kind of weird, but it's higher, right? That's the way it should be. The 25 delta call in gold should be higher, have more bid to it than the 25 delta put. It was flat skew when it was making that huge move to the upside, and that's how you knew something was about to happen soon. You could tell.
Yeah, it kind of just runs out of steam, so to speak.
Yeah. So yeah, I mean, like I don't have any gold directional positions per se. I do have a GDX put that I probably could close out at this point. No, it's a strangle. I forgot. I have the strangle in here. I have a GDXJ. I think GDXJ.
Yeah, I've been in and out of those. And that's the other thing, too. Those ETFs, the miners, provide some opportunities at times. Have had a lot of volatility, too. I mean, I think GDX has been moving around 5 points a day.
Yeah, I mean, that's the nice thing about this. You can do so many different things. That's been the nice thing about the gold complex. You can either trade the MGC contract, which is, a lot smaller than just trading GC. You can trade GDX, you can trade GDXJ, GLD, if you will. I'm actually still underwater on a GLD put spread.
Well, and even now in a market like this, where let's say you wanted to short gold on the way up, and it took a little while, but you got the trade done eventually. You could do the 1 OZ, the 1 ounce futures, even smaller than GC or micro GC, because micro GC gets pretty large at 4,300. Yep. But yeah, 1 OZ is another way to do it there if anybody's interested.
Yeah. Hood 16 Delta short puts for $11. What?
Yeah, I'm long at 39.35 in gold right now, and I'll look to sell that out at. If we got to 4,100, I'd be at 40.50. I'd sell a little bit of it.
Nice. Keeping it tight and small. Somebody's talking about a hood put. What? In Dece, I assume 16 Delta. What? Hood 16 Delta short puts for 11.21. I don't know what that means. I don't see any 16 Delta short puts for 11.21. Okay, if you say so. If it's working for you. Oh, you're
so Nov 21.
Strangle.
Okay.
That makes sense. Yeah,
because
some earnings coming up in here. I would imagine there's going to be a lot of activity for this name. It's definitely one of those names. It's not exactly.
You got earnings today, right?
7, but yeah, it has earnings after the close. I don't have anything as of now, but my typical play is I like to play earnings for moves. I've never really been an earnings seller. I don't know. I don't like it. I feel like earnings is a great example for these crazy one-off moves, and I want to try and take advantage of those using the least amount of capital possible. That's how I think about it, earnings.
A lot of the data, when you go law of large numbers, you look at every single equity. I think the data obviously supports that there is some premium in there, and quite often the moves are overstated. But when we zoom into the handful of stocks that matter to the market, I'm with you. I think most of the time, depending on the environment and the one that we're in, at least with who's reported so far, could be reflected of the aggregate, is that it's been generally pretty positive. And to your point, that's where you get those monster moves, that binary move, that information comes out. I would want to be positioned you might be buying something that's relatively expensive on a historical basis, but it may be expensive for a reason.
Exactly. That's exactly how I look at it. It might be expensive for a reason, and it might move for that specific reason. This one, 10% move forecasting so far. $20 move on earnings. I'm curious because it's been a mixed bag on some of these major tech earnings that we've had. You talk about the Metas and the Microsofts of the world that faded on earnings. You talk about same thing with Tesla and Netflix, faded on earnings. But then you had Google and Apple to some degree that was positive on the day of, but then kind of faded throughout the day. Along with the market. So I'm curious to see what this one is going to do. Amazon obviously had a big move on earnings, I think, as well, to the upside. Amazon and Google were the main ones. I'm curious if this one, I'm trying to chill out on earnings. I haven't done a whole lot. I usually do just the big ones. I'm trying to get to the point where I just kind of chill out some and just trade some of the other stuff outside of earnings, because I don't want to. We had a great question this morning on Confirm and Send. What are some of the things that you feel, the traps that you might fall into sometimes as a senior trader? And I said it. Sometimes you get earnings and then you just become sort of this. You find yourself who are not always an earnings trader. You just become an earnings trader for the better part of 3 weeks, and it's really 50-50. And we showed a slide this morning talking about those same earnings. A lot of them have been 50% up, 50% down on the movements. And most time I'm just playing to the upside. I'm not trying to bet on any one side. Either way, I'm just trying to bet one side all the time. Upside, up, right? And trying to use as least amount of capital as possible. But that can become like a trend that you don't want to fall into all the time, right? Probabilities aren't necessarily always on your side. So to that end, Palantir might be one of the last few earnings I trade as far as the season goes. Now that we've gotten all the big ones out of the way, I might start to chill out a little bit.
I'm looking at a $15 average true range on a weekly basis, but it's been a lot higher. So if you can even get outside of that immediate one-day option expiration, which I know they're not one day here, but even outside of the 4 days, it's like maybe you go in and you play for that move, the delta move more so in the November options to the upside where you don't have as much of the earnings premium. But I think to your point too, it's like, yes, there's edge in selling volatility, selling option premium, but when there is option premium to sell, and just because there's edge in that activity doesn't mean that in every single earnings announcement, that's your edge. Sometimes you don't have an edge. So something to think about, I suppose.
A lot of times you don't have an edge, to be honest with you. I mean, is what. Wow, I didn't realize Kimberly-Clark was down this much. Somebody was talking about 100 put.
Yeah, consumer staples have been a really weak part of the market here, which also, that to me does not scream bearish equities if a sector exposure being staples, which was typically defensive in nature, if that's underperforming the broader market, I don't think that is screaming that the markets as a machine is this bearish kind of forward-looking indicator.
Yeah, it's actually a good point. It's not been good for those names. A lot of them are really struggling right now. And one of the things I look at quite often is the number of S&P 500 stocks above the 50-day moving average. We have it here on the platform, the $SPX A50R. Right now, where this number is at 36%, we would not normally be this close to all-time highs. Honestly, normally we would be probably 3% off of highs or 4% or maybe more, with this metric being where it is. And if I had to guess, a lot of the names that are not above the 50-day moving average are those consumer staples names like you mentioned. I mean, a lot of them have been struggling.
Yeah, when I look at U.S. sectors and we just look at the ETFs here as a proxy for that performance, in the last month, there's only two that are up. That's tech, XLK, and consumer discretionary, XLY. Industrials is flat, utilities is flat, healthcare down about 1%, energy as well. But we've got communications, financials, consumer staples, real estate, materials. Materials down 5.5% if we look at XLB in the last month. There really have been only a handful of stocks and a couple of sectors that have been leading us higher here, at least for now.
Yeah, at least for now.
Do you think that changes, or do you see that as a bearish kind of as a warning sign, maybe more so?
I see it kind of as a warning sign, to be honest with you, and I think it will change. I think it'll change to some degree, but I mean, the market always has a way of fleshing these things out. I do see it as kind of bearish, though, but the market clearly does not. You know what I mean? But it feels a little bit heavy, and I think this is part of the reason why those names are not necessarily participating. And at some point or another, I think you're going to see people sort of take some profits on some of these tech names that have run the Microns of the world. There's been all these deals. We come in every day, there's a new deal. Amazon made one today. Obviously, stock is up big. Nvidia was there was some news with them, and they're involved in this thing as well. So yeah, I do think so. Somebody's asking about this KMB put. I assume you're talking about one of these two, whether it's the 95 or 100. I don't blame you. I'm actually a little surprised at how much they hate this deal, actually. And I didn't realize, I mean, I guess it makes sense now that I look. I thought Kimberly-Clark was bigger, but Kimberly-Clark is only a $34 billion company, market cap-wise, I should say. So it makes, and they bought this thing for $48 billion. So they're taking on some debt. They have to be making this purchase. Just be careful with that. I personally would probably wait another day to see if there's going to be another day of selling, and then maybe jump in to sell the put, probably. That's probably how I would do it. Let's see. Who else? Any other? I mean, there's some serious, volatility increase, though. Somebody sold puts in KView. Okay. I'm surprised you can actually get some off in there, honestly. I would imagine it would seem, and now that I look at this, I would think, so a lot of times when you have a deal like this, guys, just look at November. A lot of times when there's a deal and you get bought, The upside vol is like nothing. I mean, it's basically going to, implied vol would be 10, 11, 12. And I'm not seeing that, which almost makes me wonder if there's another bid that's going to come in. I guess you have to stay tuned and see, or if they just take it all down. I just realized this is a big price now that I'm realizing. I just assumed Kimberly-Clark had like $100 billion something market cap, but I guess not.
And they bought K-View. Mm-hmm. What is K-View? What do they do? I've never even heard of them.
I know. I honestly, Ryan, I wouldn't even know who it was except a couple of months ago, or not even a month ago, maybe a month and change ago. They're the maker of Tylenol.
Oh, okay.
Yeah.
Okay.
So that was in the news, the whole Tylenol situation. That's what tanked the stock, and that's where clearly Kimberly-Clark saw as an opportunity to purchase something on the cheap. So
interesting.
Yeah.
Okay.
Yeah, they're trying to combine a whole bunch of things. I think they own I forget all the stuff that they own at this point. I still think of them as tissue paper, but
yeah, that's what I think of, like Kleenex brand, right?
Yeah. I think
they're Kleenex brand.
Things, but yeah, kind of fascinating here to see that. Let's see, only a couple of minutes left here, guys. Not as many questions. Everybody seems to got it. That's right. It was a Johnson & Johnson spinoff. Nice job, Mikos. It sure was. I totally forgot about that. Yeah, you know what's interesting to me too, and in the wake of the Fed, bonds have been sort of drifting lower here. When you look at the lower end of the back end of the curve here, 30-year bonds not doing so hot.
No, you've definitely seen, I believe, well, maybe you've seen a little bit of a steepening. I haven't seen it recently. But in there, you're talking about yield or price?
I was just talking about price.
Okay, yeah. So yield's moving higher on the back of the curve.
Yeah, it would seem so. More recently. But yeah, just talking about these bond prices. I haven't traded bonds in a bit. I couldn't figure them out, Ryan. Like earlier in the year, I was trying to play directional, and every time it would just go the opposite way. I'm done trying to play with bonds.
I hear you there. There's a lot you have to pay attention to, I think, to try to get those couple of basis point moves here and there. But I do think if you're seeing a steepening of the curve, that's generally a positive sign as well. We are in an environment still, in my opinion, in which, granted, we haven't had a ton of data with the government shutdown, but heading into this, one in which the forecasts were generally positive for growth. And so if you're seeing, the read-through in the bond market here, regardless of whether economic data is being released to support it or not, you're seeing a little bit of a read-through of that growth being expressed in a steepening of the curve. I guess depending on kind of where you're looking at, I'll look at 2s, 10s, or if you want to look at the whole thing, it'd be the 3-month versus the 30-year, which I think has steepened a bit.
Mm-hmm. Yeah, it's been, I think, more recently, I think a lot of people got caught long up in this area. They just figured, once we had the cut, bonds were going to keep rising. At least I kind of thought that. But as a result of me thinking that, I was like, I'm not going to touch it. I'm not going long. I'm not going to do it. You're not going to get me this time, bonds.
Well, do we have any economic data that's coming out this week? I haven't really looked at the econ calendar.
ADP is the only thing that's scheduled to come out. Some of the only proxy that we're going to have for the jobs report, really. Outside of that, no jobs, no NFP report on Friday, at least as of today.
We do have ISM manufacturing and services should follow. So, well, we had ISM manufacturing, came in 48.7 versus 49.1 prior to that. You want to see that above 50 that indicates an expansion. We'll see what services look like. But yeah, to your point, aside from that, nothing.
Nothing. It's just, we're just flying blind.
What are the poly market odds on reopening here?
What are they up to now?
I've got between November 4th and the 7th, 13%. And right now, November 16th or later is trading at 54%. 18% for the 8th through the 11th, 16% for the 12th through the 15th. But most bettors, I guess, traders, are betting on after the 16th of November.
I don't even know what they're betting on specifically. I know what they're betting on.
Like what's going into that?
What's your idea? What's your thought process? There's no catalyst, I would say, that's going to force.
Somebody's out there. They're doing the work, Jamal. They're following the politicians on Twitter. They've got somebody somewhere. They know, man. I don't know.
You're probably right. That's the only way that I can imagine them doing it. Seriously, man. We're at time. Thanks everybody,
you.
for watching the show. Thanks, Ryan. Thanks for coming on. You want to reach us at any given time at Jamal Chandler for me, at Trader Mikey B for Mikey, and at Ryan Fred Grace for Ryan. Of course, give Tasty Crypto a follow at Tasty Crypto at any given time. We will be back here at the same time, same place, same bat time, same bad place tomorrow here on Options Trading Concepts Live. Later.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
I have made a deal with the devil, and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is "until proven otherwise," which basically means buy every dip because they've been gobbled up pretty quickly. And even like the tariff stuff, at the bottom of the tariff stuff, I was like, ooh, maybe things are different. And now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil, and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Can't get
Howdy, everybody, and welcome back to another always wonderful installment of Risk and Reward. Happy daylight savings to all those who celebrate, to all of those who don't live in Arizona and maybe Indiana as well. I don't know if they do daylight savings in Indiana or not. I recall that being a thing in my childhood. I'm joined today, as always, by my wonderful co-host, Errol. Errol, how are we feeling? What's going on?
Feeling good, feeling great. It was blue skies at 4 a.m. this morning. So got a little bit of daylight savings. I saw the clock go back Saturday night, and I was up on the counter, and I was tripped out for a quick second. But it's been good. A little bit earlier mornings. I love it.
Times we get an awe sound effect in the first 10 seconds. Maybe we're a little too negative off the openers here.
Oh, I thought this was...
I like it too.
Yeah. Actually, it depends who you're asking. Are you more of a... Would you prefer it brighter in the mornings, or would you prefer it a little bit more daylight into the evenings? It did get dark pretty quick last night. It was like 5 a.m. I thought it was 9 o'clock at night.
I'm going to float maybe the hottest take of them all. I don't really care. I really don't care. I don't think, in neither way. The soundboard is going crazy this morning. It really doesn't bother me too much. I guess if I had to pick, I don't like how dark it gets so early in the evening now. It kind of throws off the day-night cycle a little bit.
Right,
yeah. I would prefer it to be lighter later, I guess, but at large, it really doesn't affect me too much. I come to find, if anything, it's the weather changing frustrates me more. Losing summer and having it start to get cold, and we'll start getting snow here pretty soon. That is the annoying part, but I don't think the darkness, I could take or leave it. I've heard people say when daylight savings rolls around, it'll take drivers off the road in the afternoon sooner, because a lot of people don't like to drive in the dark. So I guess that's a perk.
That's valid.
I've never noticed that myself.
Yeah, I know. I don't really like to drive in the car with my sister at night. So I mean, I guess that depends who you're asking. But I will say though, when it gets a little bit darker, I notice I'm definitely a night owl, and I think with the market opening up earlier, these type of things, I recognize how much I didn't stay up super late like I used to. And I did that Saturday night, and it was extremely satisfying. So I remember I seen the clock go back an hour, so I felt a little bit better that I was going to get an extra hour of sleep the next day. Felt good in the morning, was able to go to the gym. So in terms of daylight savings times, it was a great weekend. Getting that extra hour does a lot for your psyche. So I'm rocking with it so far.
Yeah, I actually had in my head that it was this morning that daylight savings happened. And so it wasn't until like 3 p.m. yesterday that I even figured out we had fell back. I thought it was today. And so I went through all of my morning yesterday thinking that I was having like the most productive morning ever. Like I woke up at 7:30. I was like, why am I so wide awake at 7:30? I got out of bed. I did dishes. I did laundry. I went to the gym, and I'm back, and I'm done with all this stuff. And it's still 10:30. I was like, this is awesome. But it was really just the
and I was telling you how sore my hamstrings were. It literally from that gym session right after the daylight savings hit some hamstrings, and I'm still feeling them today. So we'll get into all of that.
What's up to everybody in chat? Woof, big deal. Jared, Data Trader. Who am I missing? eMedia, Greg. Happy to see all of you. Mikos. We got some takes on daylight savings pouring in here.
He said, I bask in the glow of my monitors in a black office. It's like a casino. No idea what's happening outside. That sounds like they took you to the back rooms at the casino. That sounds like you got in some trouble.
I have my alarm set with lights to wake me up. That's a great way to do it. Big deal, to keep your circadian rhythm synced up. I wish I had the dedication to get that kind of setup going, but I like it. Unpopular opinion: daylight savings time is as dumb as AM/PM times. Even further, time zones are dumb now too. Switch 24-hour clock. Okay, a lot to unpack here. In response to your first point, well, I'll float this: we don't need daylight savings anymore. Straight up. Daylight savings was created to help, to my knowledge, agriculture producers so that they could have a little bit of extra light in the morning while they were working. We got lights now. We figured this out. So I agree that I don't think we need daylight savings at all.
Do you think it's a little bit of a dated procedure that we've been doing since back in the day? It's a little dated.
Yes. As dumb as AM/PM times, AM/PM, it is a little bit redundant, I suppose. 24-hour clock makes a little more sense. I've never really given it much thought. I think both systems work just fine.
I'm not. Are you a fan of the military system, military time? Are you a fan of it?
I'm not like against it. I don't use it myself. Like my phone, I keep to standard 12-hour AM/PM time. But I have no problems switching back and forth between the two. I mean, like all of Europe just operates on 24-hour clock.
Right.
And that does It makes sense.
It does.
It makes
Sometimes when the platforms go to the default setting or it goes on a 24-hour clock, I kind of get used to it, like seeing the 16-hour when the market's closing to 16. But outside of that, I don't think I use it too much.
Yeah, that does make a little more sense. I mean, yeah, it is redundant to be saying AM, PM.
AM, PM. Yeah.
The last thing is the only thing that I will hard disagree with. Time zones are dumb now to switch to 24-hour clock and let 9 o'clock be 9 o'clock everywhere. That I cannot get behind. You'd be getting into all kinds of crazy stuff, and I assume you mean like just in the U.S., unless you mean worldwide and you were joking. But if you mean just in the U.S., I mean, yeah, I just don't see how you get the middle. And no matter how you choose to do that, somebody is going to have sunrise at 10 a.m. every single day, all the time, with the sun setting at whatever, midnight or something crazy like that. I don't think you could make that happen. The Earth is a sphere. I'd like to short daylight savings, please. All right, Ryan, we'll see if we can get you a fill on that one. It's a lot of volume in that market right now. Whoa, Dr. Jim cut his hair
he really?
and threw out the stash. No, he's talking about me.
Oh.
That was a joke.
So I think somebody had said Dr. Jim was coming up on next. I think they were confused. I think he comes up on afterwards.
Yes, after us, but the times are confusing right now was the thing.
But either way, though, I think the Dr. Jim with growing out the hair and the stash would low-key be a look for Dr. Jim. I would love to see it, a Dr. Jim Gus.
I've made the joke before that I am Dr. Jim that has discovered the fountain of youth. I have reversed my age.
Accurate, yeah.
Has anybody told them that we're now in standard time? Daylight savings time just ended? I don't know. The concept of daylight savings is what makes this happen. I don't know which is which. I just know fall back and spring forward. That's actually a good point. I've never even considered which one is the standard time. Good point. Anyway, enough on daylight savings. We're going to talk a little bit of earnings here, just a quick bulleted earnings rundown through the rest of the week as we round out earnings season. This week is like the last big week of earnings, and then next week there's kind of just a few stragglers. I was actually able to fit all of next week into one slide, which has yet to happen throughout this series. So diving into this week, Palantir goes off after the close today. That's really the only notable one. Tomorrow we get a big bulk of them. AMD, Shopify, Uber, Amgen, Pfizer, and Spotify all report tomorrow. I compiled these logos on purpose to show that creativity is dead. in marketing, everybody has to have these minimalist logos. Look at how
I'm rocking with it. I'm a minimalist. I love it. I love the branding. I love the clean.
I go back and forth. I think you need just do some color. And I will say, I don't want to be biased here. I cherry picked the Shopify logo. Their shopping.
I was like, hold on.
The shopping bag is usually green, and the Shopify logo. This is their secondary. No. So to be fair to them, everybody else, this is their main logo.
No, I mean I like it. I'm definitely a minimalist kind of guy. But I will say what really sticks out is Palantir. Did you hear Palantir also scouts talent straight out of high school? I had seen some headlines about that as of recently, so I'll have to get back into that. But I was thinking, I was like, I feel that's kind of smart. Yeah, like if I was a larger corporation, I would probably start getting some eyes on some people right out of high school too, just like how any other serious programs that people are looking to get into do, instead of finding applicants, maybe 4 years, maybe out of undergrad, getting into graduate school, whatever the case might be. But I feel like there could be a little bit of validity to keeping your eyes on what kind of talent you want at 18, 19, 20 as they develop.
Yeah, I mean, I don't think that hurts anything. I'm sure you just have to be very careful. I mean, obviously it's dependent on the position and everything, but like if you're talking like programmers, AI development, like that side of things, kind of Palantir's bread and butter. I just feel like you have to be very careful that the people you're getting actually do have the experience, because somebody.
Well, they don't have the experience.
Well, sure,
they probably would be looking for something else.
I guess, or I mean, I just mean like high level coding or whatever may be required of them.
True.
There's really brilliant computer science people coming out of high school, but sometimes you still need university to kind of fine tune those
100%.
skills. But obviously they know what they're doing at Palantir with the way that this stock moves. So who am I to judge? Anyway, so yeah, that's today, tomorrow, moving into the rest of the week. Wednesday is kind of the last big day of this earnings season. Novo Nordisk, AppLovin, McDonald's, Qualcomm, Robinhood, DoorDash. That McDonald's logo, it's just that signature yellow. It's so much better. Just these black logos is wearing on me. And then Thursday we have AstraZeneca, ConocoPhillips, Airbnb, Constellation Energy Group to round out the week on Friday. This Wednesday is kind of going to be the biggest day we have left this earnings season. We quickly accelerate into the end, until the next one.
Yeah.
After this week, pretty much.
Yeah. Hey, Old Faithful Qualcomm. Should get some good volatility over there too. So we'll see how some of these earnings play out. I know me personally, I'm not going to be taking part in any of the earnings. I know Palantir on the last slide I'll be a little bit more keen on. But we'll see how DoorDash, some of these numbers are doing, especially during these times with debt rising, interest rates being cut. I'm interested to see, earnings like DoorDash and those kind of companies where they get a little bit more disposable income from individuals.
Yeah, DoorDash, I'm also interested to hear about the progress of their UK expansion. That was a big investment, and that's actually why I've been along DoorDash for a little while now, is because they took a big dip when they spent a bunch of money on what I had perceived as good investments in the UK. The market has adjusted to also perceive those as good investments now, it seems. But I'm interested to see how the Deliveroo and what is it? It's not Open Table. It's 7 Rooms.
It's 7 Rooms.
Deliveroo and 7 Rooms.
It would be interesting to kind of see and maybe track some data on whenever companies are spending more money, if they tend to get a little bit of a dip. Like I noticed whenever there's a larger company that has an acquisition, like we've talked about before, they'll kind of dip a little bit. But maybe that's because it's not a bad purchase, but because they just unloaded X amount of dollars to purchase said potential investment.
Well, yeah, it's a strange, nuanced thing, because obviously uncertainty tends to drive stocks down and certainty tends to bring them up. And what kind of goes hand in hand with certainty is safety. And I've always found it very interesting that it seems that the market is more keen on companies that have a lot of cash on hand and are not using it, over companies who actually deploy their cash on hand into things that are supposed to grow the business, even though they will eventually grow the business in the aggregate. And that's what I'm going to get into with my one trade of the day so far that I'll detail here in a bit. But I don't understand the market reactions to acquisitions sometimes, like the acquiring company. HIMS today too. Great point, KT. Throw HIMS in as well.
Yeah.
Anyway, in next week, as I said, we could fit it all on one slide. Pretty quiet next week. Monday is a little noisy. We have CoreWeave, Rocket Lab, and AST Space Mobile, ASTS, which has been a volatile one as of late. They just signed a big contract with Verizon. Tuesday, we have Oklo, which has been another big mover as of late. It'll be interesting to see if they can provide any fundamentals to get back up the crazy run that they've seen. Cisco and Flutter, which is FanDuel, on Wednesday, and then Disney and Applied Materials rounding out the week. And that's pretty much it for earnings season, for Q3 earnings season 2025.
Kind of coming to a close of the Q3 earnings season. Again, I got to say, maybe Disney is going to be another one that'll be interesting to watch. I think they're always a fun one. Other than that, we got Rocket Lab up there. I love it.
Yeah, Rocket Lab.
Some Rocket Lab. Good old
Yeah,
Rocket Lab.
ASTS is gonna be an interesting one. All three of these on Monday are going to be very interesting. These are all three companies that are very highly speculative, a little bit overextended beyond their fundamentals, but perhaps justifiably so. This Monday will be a very interesting batch, and it'll be interesting to see if that can move the broader market as well, or if the market kind of agrees that these things are in their own bucket right now. This is what happens when graphic designers quit the bourbon. For real. Palantir earnings tonight. Time to test if the fade Dr. Jim strategy can outsmart actual AI. Let's see who's the real machine learning expert here. Got burned on Meta earnings. Yeah, that Meta earnings was weird. I mean, they just gave it all back immediately. I'm very long CoreWeave. That's an important one over here. Yeah, I know Jamal is a big CoreWeave bull as well. It's just CoreWeave, along with Palantir, a lot of these companies that are kind of trading way beyond their fundamentals on excitement and on speculation, it's like guidance that means everything. Like, we know that the actual numbers aren't going to reinforce the share price, and that's all right. It's just about hearing about the progress and the forward guidance a lot more to me. AMAT is one that I used to follow. Yeah, actually, that's hilarious sentiment, Theta Trader, because that's exactly how I feel. AMAT used to be something I traded frequently and kept up with pretty intently, and I haven't looked at it in over a year now, I would say. I couldn't tell you the price right now, and I just looked it up.
Is that Rocket Lab?
Yeah.
Right, okay.
Rocket Lab 2. I'm going to guess 140 a share. I'm not sure. We can take a look here in a second. But that's what we got as far as earnings. We can jump over and look at some positions here. I got open. Since we're talking acquisitions, I'm going to segue in here. Let me.
Oh, good. Oklo's earnings with zero revenue to report. This might be the easiest call yet. No sales, no surprises, just pure nuclear optimism and negative cash flow gains. I thought that was Dr. Jim's burner account for a second. He said it might be the easiest call yet. No, Oklo earnings it's gonna be interesting. That's been another name that's had a lot more volume traded on, I feel, over the last few months.
Well, yeah, I mean, we have a lot of companies like that. I mean, like Palantir is the biggest case in point of that, I mean, there is no chance that Palantir provides earnings that even remotely justify their current valuation and how far ahead of their PE that they're trading. But psychology makes the markets, not fundamentals. So
yeah,
if people believe that Palantir is worth 623 times what it's currently actually worth, okay. I mean, yeah, it's like, yeah, I don't know.
I mean, Palantir was one of those underlyings that didn't make sense in 2020. It didn't make sense in 2021, and it still doesn't make sense today in 2025, almost 2026. So market's going to do what the market's going to do because valuations have been all over the place for like the last 5-6 years, it feels.
Yeah, I mean, for reference, the equation that I did the other day with Nikki Batt sitting out there at our desks was if Amazon traded at Palantir's PE ratio, Amazon would be a $50 trillion company.
Right.
That's what we're talking about here. Like Amazon's PE is 34, 35. So yeah, if you do that math out, they are a $50 trillion company, which obviously no company can be worth that amount. But for some reason with Palantir, it just doesn't seem to apply. And I always sound like I'm such a Palantir hater. I think that Palantir could be very successful. I absolutely see the thesis. It's very hard for me as a trader to get involved with it when I feel like it could logically come toppling at any given point.
Yeah. I mean, the risk to reward in your own sentiment is not justified right now, at least.
Well, yeah, I mean, it's just the crazy part is like if it moved into a still inordinate PE, if it moved into 400, it loses a third of its value. And like that's insane.
Yeah.
And 400 would still be insane. 400 would still be very close to the top of the market. And so, yeah, it's really sketchy to me in that regard. But this is what scared me off of it since forever, and it just keeps going up. So maybe it's time I get with the program. It's one of the stronger of the bunch, though. So what you gonna do? Microsoft hurting. It opened strong and faded throughout the day. Oh, you're saying stronger of the bunch.
I feel like I feel like that's kind of been most names for the day, especially any names in the NASDAQ. We were strong into the pre-market, into the morning, and then sold off into the lows for the day. And then we've been trying to crawl our way back to the day highs. See if we can make it there. We got a few hours left.
Yeah, Microsoft, Meta. Yeah, Meta. Brutal. I'm also a very long Meta. RIP. I have a lot of time, though.
What is that? We had some earnings a few days ago in Meta.
Yeah.
Trying to recover from there a little bit.
S&P 500 loses 30%. It could lose 90%. I mean, that's true. Yes, you can't say anything, and that's what I'm saying as well. Is like it is all psychology. I can sit here and spout fundamentals till kingdom come, but the psychology of the market is what actually determines these things.
I hear you. In Palantir, kind of almost feels like a musical chairs. It's like I know this thing keeps going up, but the music could stop playing at any moment.
That's a really, really good way to put it to me. Yes, because it's just like in order to continue trading that far ahead of your actual fundamentals, you have to continue to do things that are so exceptional over and over. It's like, and I want to be very clear. I don't think Palantir is engaging in any sort of fraud. I think that they're above board, and this comparison that I'm about to make has nothing to do with fraud, but it reminds me of Enron, where you get into this situation where you're fudging your numbers so you look good, and then you have to fudge them even more so you look even better the next quarter and the next quarter and the next quarter, and suddenly there is hundreds of millions of dollars of fugazi money floating around.
Yeah, and we see how that plays out almost every time, and even different realms. That just concept of
Yeah, and while Palantir is legit on that front, it's just the same thing where it's just like you have to do something bigger and bigger and bigger each time, so people continue to be able to justify this massive valuation. And it feels like that pin could drop.
Oddly enough, sometimes I feel that's how we run the American economy, though.
Sure.
It's like the overall market, right? I feel like we got to do it even better, Band-Aid, got to do it bigger and better, until we'll see what the repercussions are.
Yes.
But we're at all-time highs right now, so we haven't hit that yet.
And that's absolutely what we keep doing with debt as well.
Right.
I mean, you got to keep doing bigger and bigger things.
I've played these games before.
Yeah.
The American economy has played these games before. It's nothing new.
Yeah, absolutely. I think that's a great point. My one trade for the day is this the right ticker? Yes. Kimberly-Clark Corporation. Kimberly-Clark announced this morning that they are buying Tylenol. They are buying the entirety of Tylenol from Kenvue, its current owner. And so you see the market reaction to that news here with Kimberly-Clark, the one who acquired Tylenol. Very bad. And if we hop over to Kenvue, very good.
Very good. Great.
They are pleased. I got long Kimberly-Clark here at the bottom, which I actually am... I'm still down on. I bought this like immediately at open today, so unless this candle is green, I'm in the red. But Again, this is one that I don't understand. It's just tying back to that acquisition conversation that we just had. Tylenol is a gigantic brand. In a lot of households, like medicine is a synonym to the word Tylenol. Like, anytime there's any sort of ailment, take some Tylenol, the way that people say Kleenex or Band-Aid. And I think that I cannot help but think that part of this market reaction is driven by the recent stigma and political stuff going on surrounding Tylenol. And I just don't think that that's justified in any capacity.
I know you can't prove it, but I believe you too. You know the meme going around. Oh yeah. You just can't prove it, but I feel the sentiment and vibes you're laying out there.
No, 100%. Yeah, it's very odd, and I think that there's this stigma surrounding Tylenol right now, and they did pay a whole boatload of money. I believe it's $48 billion is the total acquisition, and they're getting a few other things from Kenvue as well. Tylenol is just the headline. So, I mean, that is a lot of money to go spending, and I can understand how that makes investors a little bit uncertain, but you're acquiring one of, if not the most, greatest brand recognition pharmaceuticals that we have ever had, ever.
Yeah.
And I don't think that Tylenol, I think they might see a little slump in sales. I think a year goes by and no one's even thinking about Tylenol in any political context anymore. I like this acquisition for Kimberly. I'm with it, Kimberly-Clark. So, yes, in turn, I have gotten long, which is, right here. I just went short put vertical to take advantage of some of that juicy put side premium off the sell-off this morning. I am long the 105 and short the 115. So to put that on the chart, 115 is this level here. So I need this by June of next year. So...
Hey, look, it's a trust the process kind of play there, especially with the shareholders. It's like, guys, we're going to be purchasing Tylenol. I know you guys got this in your cabinets right now. We're going to be dishing out a bunch of cash to purchase this, but trust the process, guys.
Well, yeah,
trust the process.
The company that owns Huggies and Kleenex, a giant, fundamentally strong company that dominates in grocery stores, acquires the largest, maybe most recognizable medicine brand that we have in the country, and then they dip 15%. It's like I find that hard to justify 14%. That doesn't really seem to compute to me. Maybe they're thinking it's an overpay. If it's an overpay, maybe like a 5-6% sort of slide could be justified. But 14% on what I perceive to be a pretty good purchase that I think will be profitable in the long term. I'm just not buying that. So
yeah,
got along here at the bottom.
To data traders, but I mean that is an aggressive move to the downside. I mean the gap down and then the continued sell off. So I mean I'm liking it too. Going to be keeping an eye on it as well. Glad you brought that to our attention.
Tylenol is an American institution. Precisely. I mean, I don't know if you were being sarcastic there or not, but like unironically, I mean, it is. I think it is. It's a fundamental thing. I mean, I was telling Errol earlier today, when I was young, like very young, like younger than 6 or 7 years old, I just thought Tylenol meant medicine. Like anytime I had any sort of ailment, I would be like, "Can I have some Tylenol?" Because that's like the kind of level that Tylenol is at. It was always kids Tylenol, by the way. My mom took good care of me. But yeah, it's interesting. They're paying more than their market cap for KView, makes folks nervous. Agree with all your other points. Yeah, and I absolutely agree with that as well. Like I can understand the nerves that come with shelling out this much money. I mean, this is a gigantic acquisition. That is a lot to post up. So I think that that's justifiable. But I think that overpays are common in acquisitions. I mean, that's why often the company that's being acquired sees that big jump. And yeah, I think that it's a good move for Kimberly-Clark ultimately. There's no room for logic here, sir. Good point. Good point. There really isn't. They're paying the equivalent of $20 a share when it was $14 a share pre-market. Yeah, I mean, like I said, overpay, and I don't doubt that it's an overpay. I just think that this might be too much. I think enough that I've made a trade on this information that I think that this is too much of a slide given the overpay. When I ultimately think that this is going to be a profitable arrangement for them. But KMB trying to get a monopoly on brand genericization. Yes.
1,000%.
Absolutely. And actually, that was going to be the next point that I was going to segue into here is this is actually such a great acquisition that I can't believe nobody's trying to stop this for antitrust concerns because the antitrust police have been out in full force in recent years. And this is just going to slide through. I don't know. We'll see. Then you get into the thing of what if this doesn't get through? What if they do bust this out for antitrust? And then 30 days from now, this thing just goes back to 120. So that would also just be good for me as well.
What's the expiration on that one again?
Huh?
What's the expiration on that one again?
June 18th.
Oh, there we go.
Yeah, I gave it some time. Like I said, I'm not like super certain of the time horizon here, but that allows me 3 earnings calls before.
3 earnings calls.
Yeah, which any one of those earnings calls, they just need to say, yeah, the Tylenol acquisition is going really well.
Oh yeah.
Acetaminophen, no good.
No good. Other than, I mean, vol is spiking today as well. That's going to be exciting. Vol hit a high of about 18, 19. We're pulling back a little bit here now as the market tries to crawl its way up. But we're getting active, coming off a VIX lows back in early July.
Yeah, we're doing some little baby pops going on the VIX. Broader markets sliding just a little bit, but still up in aggregate. Got the open up, move down situation. So we'll see if those levels can hold. What else? What about gold?
Gold has been a little bit more quiet. These positions have they still need a little bit more time to cook. Still not super volatile off the first quote unquote real pullback that we got a couple weeks ago.
Yeah, seems like this pullback might be a little more legit, where the bulls are not exactly coming through with the steam to send this any higher. It doesn't look like at this time. I'm still short silver, SLV specifically, and we're still not there. I need that a little bit lower. We're narrowly red on that position.
I mean, the position, it's been a little bit of a lackluster trade, honestly. I'm in the gold position. I'm in the metals too, but it's been really quiet.
I got too aggressive, and it was hard because I did have really excellent timing on this. I was like up in these levels when I finally got short silver. And so it was really hard to take an objective look at this chart and say how far down would look like a logical move. And I decided about 42 was that level, and I wasn't entirely wrong. It just that 42 wound up being the resistance level as opposed to seeing a confirmed drop below 42 and then channeling more in that 40 range. So hopefully we can sell back off and get back under that number. It's not a giant move that I would need. So, and also, my whole thesis for this trade is that I think whenever the government eventually resumes, that metals are going to get hurt a little bit in that exchange. Even though that was not the catalyst that originally propped them up, I do think that uncertainty element is perhaps keeping them a little bit inflated right now. ADP numbers on Wednesday AM might shake things. That's absolutely true.
The AI trade. Is Onklo the AI trade?
Onklo is the AI trade. Got to have nuclear to meet AI energy needs. I agree with the second part of that thing. The second part of that take, I agree that nuclear is going to be essential if we're going to continue to grow AI and the energy that it requires. I just don't know that I'm necessarily personally partial to Onklo as the company that's going to make that happen. I'm much more of a fan and have long been a fan of GE Vernova, which this one has. Can I get a longer dated time frame here? Let's go weeklies. Hello?
GE Vernova. IB rank a little bit down, but it's trading some volume, about 1 million shares on the day so far.
Yeah, it's ticking up. I don't know why I can't get this to expand into a longer time frame.
Go to the daily, see if that.
I'm on the weekly. Yeah, maybe we could go daily. That's a little better. Anyway, yeah, GE Vernova also had a really good 23 and 24, headed into 25. This is sort of, and it is just in my long-term account. This is what I'm buying as my nuclear exposure. In addition to the ETFs, I really like SMR as an ETF. Hold some of this as well. Just good broad sector exposure. Yeah. I'm not partial against Onklo in any capacity either. It's just not my personal favorite. But I think that your thesis is absolutely right. Onklo is one of many. URA covers a few. Yeah, quadruple U. This is the Toby Keith trade. Hut? Is that a ticker, Wolf, or are you just craving some pizza? Is this Hut?
Is Hut Pizza Hut? I don't think it is.
No, they're a PZZA, I think. Oh, that's Papa John's.
Oh, Papa John's snack pizza.
Is Pizza Hut a publicly traded company? I don't even know.
I don't remember Hut being Pizza Hut. What is Hut? Hut Incorporation.
Is there an ETF that has these up and coming energy stocks? Yes, Chase. There's a few. You could throw out a few of them in chat. SMR. Oh wait, no. What am I thinking of? Is it Quad U? What's the nuclear ETF? Or am I? No, yeah, because this is New Scale now. Is it Nuke?
For that energy ETF?
No, I know that there is a really good nuclear energy ETF. They're a part of Yum Brands. NLR? Yeah, that's what I'm looking for. NLR is the uranium and nuclear ETF.
There we go.
I also have some exposure to this in my long-term investments account, no options exposure. But yeah, NLR is a great bucket, as is URA. Yes. URA. So yeah, URA and LR. Those are your two. Pizza Hut was a banging place back in the 90s. Yeah, so I've heard. I wish that I would have gotten to experience the Pizza Huts that actually looked like huts. Now Now they've all been turned into other things, and you can just totally tell when a building used to be a pizza hut.
Yeah. I think I could have swore growing up in elementary school. So we used to have these slips that we had given out, and whenever you read your book for the week or whatever it was in elementary school, you got a free pizza from Pizza Hut. And I could have swore the Pizza Hut were still shaped as huts in the 2000s. Maybe I'm mistaken.
Yeah, early.
Maybe they were going through a transition.
That was like around the time that started to happen. But yeah, there might still be a few.
Pizza Hut's always been a top dog. That was always my dad's favorite pizza because it's kind of a lot different than your Domino's.
This is Yum Brands, Pizza Hut. What else they got? Taco Bell, KFC are also Yum Brands. A&W Root Beer Stand. I think they all flow together.
They report in the morning.
Yum reports tomorrow a.m. That's interesting.
50 IV ring, decent volume traded on the day.
Yeah, some major channeling going on here. This would be an obligatory long if I wanted to trade this through earnings. I mean, this is just beautiful if you're an options trader. This is what you want to see.
Oh yeah.
And just channeling forever before that actually.
Iron condors and strangles are loving this price action on Yum.
Or if you just figured out these channels, you could write them up and down. I mean, Arrow could draw us a value area on this chart.
Oh yeah, somewhere in there. XLE's another one, another energy, right?
Yes, XLE. That is another good one.
Built-in Pac-Man consoles with a glass top. You can eat on those sweet red glasses. Was that in the Pizza Hut?
Yeah, I think that's what I'm saying.
Yeah, Pizza Huts, they don't do it the same. Pizza Hut's out pizzaing themselves because I don't see any Pac-Man machines or gumball machines in the Pizza Huts anymore.
Yeah, no kidding. They've gone boring. Everybody's gone boring. McDonald's is getting rid of all the play places.
The little things really do matter. You know, as a kid, you just seen the play place or just seen the gumball or a pinball machine. I mean, changes your whole vibe as a kid. The little things really do matter.
Yeah, it really is. Yeah, like even just a claw machine or whatever.
100%.
I got really good memories, like going with my baseball team to wing places or
exactly.
whatever. Yeah. It doesn't even matter where it's at. ANET earnings tomorrow. Arista Networks. I can't say I have any take on this earnings call at all. I have not done any research.
Let's see, up at the highs, 55.5 IV rank, 3 million shares traded. It's pretty liquid. IV rank is there. What's the option chain looking like?
That's a good question. Let's have a look.
Okay.
Through earnings.
No, not bad. Has a lot of volatility in there.
Pretty solid premiums. These are pretty tight though. Arista Networks, computer networking company.
We got FLNC Energy. It's starting to move again. More about storage, Lobo says.
Yeah, I got no opinion on ANET. XLE has 0 mining stocks. Oh, FLNC. More about storage. FLNC. Yeah, if this is a digital storage company, which I assume that's what you're talking about, or cloud storage or whatever, anything in that vein, I think that stuff has so much upside. I mean, we just keep creating more and more stuff that needs to be stored on a cloud. Like, I always think about, how much cloud storage does YouTube use?
YouTube?
Yeah.
Oh, good Lord. I can't even fathom how much storage they probably use.
Petabytes of data.
Yeah.
Above, it has to be gigantic. And that's just one company. You think about every video hosting, every social media, all these places. And now everything is cloud on our phones too.
YouTube has dominated their space so much. There's no competitors trying to even compete with YouTube because they know it's a losing game right off the bat.
There's lots of people trying to compete in the short form space, but no one has tried to rival YouTube in the long form space. You got Twitch and Kick and companies that do live as well, but YouTube just...
And to your point in the short form space, I mean, we had TikTok. TikTok was such a out of left field kind of company, although we did have Musical.ly before. But it's Instagram's going to have to try and compete with them. YouTube themselves is going to try and have to compete. You're going to have to already be a competitor to compete with something like TikTok in short form. But yeah, large form space, not a single competitor.
Yeah, well, and it's funny because they all the social medias, and including YouTube here, started with their own one niche thing. You have, in the good old days, Instagram was for pictures, Snapchat was for sending quick pictures to your friends that would delete right away.
And YouTube was for
long form videos.
Right.
Vine was for short form.
Short form.
Golly.
There we go.
I really had an aneurysm there. Short form videos. And then you had Visco for your artsy stuff.
Yeah, that's getting a little bit more popular again too. I would say among the college students.
Yes.
Maybe more so the women's side as well.
Yeah, but you had these 5 pillars and they all served their purposes and they all served them well. And it all began to crescendo down when Snapchat rolled out stories and everybody and their mom decided that they need stories on their platform. And then we began the great merging of all social media platforms into the exact same thing. And now all of them have all 5 of those things that I just named.
Almost sounds like our fast food joints as well.
Sure.
Right.
Yeah, that's a good point.
Yeah.
That's a good point. And I mean, that's just business, I suppose,
Yeah.
is come in, fill the niche, broaden out as your customer base grows, whatever.
Yeah.
But it's just, it's taken a lot of that uniqueness out. And so, now you have, it's like you can choose where you want to scroll your short form videos, and we all just seem to see the same stuff. Whether
100%.
you're a Reels user, a TikTok user, maybe you use YouTube Shorts, Facebook Reels are big now, all these things, and we all just wind up seeing the same content.
And it just in a different format, right?
Yeah, exactly.
And it's funny because I think I'd seen TikTok stories today. I accidentally hit a couple. TikTok stories is one of the worst programmed thing into an application I've ever seen. TikTok stories, in my opinion, is not very functional at all. I was really impressed with Instagram, being able to develop their Instagram stories really almost better than I think Snapchat does their stories now.
I think Snapchat.
The UI even feels better on
Snapchat
Instagram.
has just kind of fallen by the wayside to me.
It's on the back burner.
I don't use Snapchat at all.
The group chat with the boys?
What?
You guys have a group chat?
We have a group chat with the boys, and I don't even get notifications for Snapchat. Like I am just never on there. So there will be occasionally things that I miss. Like my buddy broke his foot. His foot's been broken for 2 weeks, and I talked to him over the weekend, and he was like, "Oh yeah, my foot's getting better." I was like, "You broke your foot?" But, so it's.
I know why.
I will miss something. What?
I was gonna say I know why you have Snapchat still though.
Why?
Because your memories are in there. It's another data storage.
The memories are like sort of part of it. I honestly mainly just keep it to lurk though. I pop on and look at people's stories on occasion. That's like kind of my main use case for it.
Would you be sad if those memories were gone?
I mean,
your college days, all your college days, you had to have been using Snapchat at 16, 17.
I mean, me personally, like, not really. I mean, there's just everything that I would save to my Snapchat memories also got saved to my phone. I always had it turned on to save both. And because I haven't used it in so long, it's like there's not even, I mean, it's been like, I mean, I don't know, a long time. I really don't even think I used it in college, hardly at all. It was mainly just like a high school thing. I would use it in college to talk to girls. I will put that part out in the public.
Valid.
That it did have some utility in that regard in college, but I haven't been on Snapchat.
Says Instagram leads to major wasted time rated in brain rot. Completely agree. In my opinion, I feel Instagram is more of a business card nowadays. I feel like Instagram just feels more like a digital business card. I know there were a lot of creative people that were creating these digital softwares to have your digital business cards instead of physical ones anywhere. But I just feel like your social media platform, specifically Instagram, is more of just a business card, or any social media platform for that matter.
I'm inclined to agree, and especially Instagram. Instagram was so great when we were like in middle school, and it was just totally casual. Like you just throw up whatever, like what you're eating for dinner, stuff like that. Like that was peak Instagram to me. But now there's like this huge, even for just like normal everyday people, there's like this huge expectation of how your Instagram page should look, especially in our generation.
I put my middle finger up to that stuff. I hate that. But when I scroll on,
you got an artistic, super aesthetic Instagram. What are you talking about? I envy the way your Instagram.
Bro, that's by complete convenience, and it just happening that way. I post like once a year just to let everybody know I'm alive, but I just utilize the stories. But on that front though, like scrolling down the reels, it's like you wouldn't believe this is like, I know we get the jokes in the comments. This is like TikTok premium. I'm an Instagram premium. I mean, the level of talent that you see scrolling on some of the reels, I'm like, good Lord, I can't believe this is on a social media platform. This looked like you went to school for this.
Yeah, that's true.
And you get to come across people's talents all day. So that's pretty cool, I would say, about how connected we are with content.
Not to mention always scrolling onto something disturbing. Never fails. Yes, Rancher, that's a very good point, and I'll float mine today as I cannot. I keep scrolling straight past them as I realize what it is before it actually happens, but I cannot stop seeing videos of Jaden Daniels' elbow injury from last night.
Oh, I already scrolled past that one time already.
I've started to catch the beginning of the slow-mo clip and had to scroll by it like 5 times today because I don't need to see that. And you will always stumble across things. SPHR earnings coming up. Good time for a short. Ryan, Sphere Entertainment Group, I'm learning about for the first time. Is this just the Vegas Sphere company? Is that what this is? That's what it looks like by their logo to me, but maybe I'm misled here.
Sphere Entertainment.
Sphere Entertainment.
Co-ordinary shares. Okay.
Portfolio including Sphere and MSG Networks. Madison Square Garden Networks, I presume. That's what that means, not monosodium glutamate. I guess it could be either.
Yeah.
Oh, Dolan family, I see. Yeah. Yes, it is the Vegas Sphere, and then they also in Madison Square Garden. Time for a short question mark. Good question.
Sphere.
I guess I'm inclined to say yes. They haven't really, apart from this recent rally, they haven't really shown any propensity to make higher highs. This seems like it kind of wants to come down to me, although, I mean, it opened way lower today and has had a nice little pullback here, but Yeah, I mean, if I had to trade this, I would get short. I feel like
Data Trader said this. He says this right here is my most social media interaction. That way, Gus gets my B- humor.
Only the very best B- humor, Data Trader. I appreciate it.
I mean, it is true though. You got to find your communities because of social media. There's a lot of downfalls of it, but we get to connect and spread trade ideas because of that.
It's true. Actually, deleting an account so it no longer exists on Facebook is a Herculean task. They make it very difficult. Yeah, I have heard that to be true as well, is that it's really, really hard to fully delete a Facebook account.
Don't look up my face. I'm sad I even said that. But good Lord, I know I got a baby face on there. I haven't logged in a while.
Yeah, I got a cringe.
Yeah. Hey.
I have a cringe Instagram account floating around.
Yeah.
From middle school as well.
Yeah. I think I have maybe my senior picture up as my Facebook profile.
Yeah,
I don't even care if you look it up. I don't know what's on there.
I've never had a Facebook. In the first place. It was like my parents wouldn't let me have one when Facebook was like the only thing that there was. Post MySpace, like prime Facebook era right there, and then Instagram had come out by the time I was allowed to get on social media, and so that was.
I vividly remember
my first one.
Okay, I vividly remember asking if I could have a Facebook, so I made a Facebook, and I just had that feeling in my gut that I should ask, and I asked. My dad said yes, that's fine, and then I remember that was when you just had that first feel of social vibes, online social community. I was talking with my friends that I see in the hallways, so it was profound at the time.
Yeah,
it was cool.
No, it was really cool. It was like there was a really cool element of connectivity at that time too. I mean, that was when we were still talking about the pros of social media.
Right.
And it's crazy how far Facebook, now Meta, obviously has come since then, because now, I think of Snap, the ticker, and I think Snapchat. I think social media company. I think Google's not a good example either, but I don't know, what's something else here? I guess they're all just kind of consolidated ownership now. My point is, you don't think of Meta as a social media company first anymore. At least I don't. I think tech company when I think Meta. They've successfully reframed themselves in that regard to me. GeoCities? Non-throwing arm, Mike, which is good for him. But man, that poor kid, he cannot stay up. And the worst thing is that they were down 31 in the third quarter, and they still have him in. And then he dislocates his elbow.
Yeah, no, that's
it's a pretty gnarly video. I do not recommend.
Yeah. Errol's Facebook page is about to be a new user profile image. I'd be pretty freaked out about that. I'm not gonna lie. That's baby face E. I feel like I still kind of have a baby face, but that's definitely baby face E.
Have you ever seen the people on TikTok that go on people's live streams and take a screenshot of them and then Facetune their picture and make it their profile picture, and then they say we look alike?
Yes,
I think,
those are hilarious.
I always think that's so funny, and I think the funniest ones are where they make them just a little they'll make them bald, throw some glasses on them, and then the person will look at the picture and be like, we don't look alike, oh, you're ugly. It's like, bro, it's literally a picture of you.
I've been trolled before, but it's from some random, it'll be from my soccer profile picture in college from freshman year.
Sure.
And the most random thing, I forgot that photo even existed. And I always laugh. It's always funny.
No, it is always funny. It's just people get way too worked up about their old pictures. We were all kids. We all were just embarrassing little fetus kids. It happens.
Yeah.
Especially in the age of social media. I mean, our generation caught it the very worst, because we also existed at a time when there was no barrier of judgment for what you posted on the internet at all.
Oh, bro.
So that's the thing. These kids now come up with social media, they understand aesthetics and how Instagram is supposed to look and work and stuff. That didn't exist.
I don't know.
We wrote the book on that.
I don't know what it is. Do we just have another level of consciousness as we get older? Because I just feel even things 5-6 years ago, I mean, I just don't understand how we lack awareness, and then 5 or 10 years go by and it's I would never do that.
Oh, yeah.
It happens every time.
Oh,
too,
yeah.
And it's fascinating.
That prefrontal cortex, man.
Yeah,
I
no
swear,
joke.
I say that all the time. It really is. I'll look back on things that I haven't ever given a second thought in 5 years and be like, why the hell did I do that?
Yeah.
Why did I think that was a good idea?
Yeah.
And it's just.
I look back at my TikToks, brother, and I keep the whole catalog and the whole feed. And when I see some of those things, I'm cringing to myself. And I'm not even joking.
Yeah, I have a.
It's hilarious.
It's privated now, but I had a YouTube channel when I was young, 9, 10, 11, and
That's where it could be more of aw.
Sort of, yeah.
No.
I don't know. It's just I just cringe when I look at them. But it's how.
He has a stash too, by the way, you guys. If you want to check it out, he's still got the stash.
When I was 9, I actually came out the womb with the mustache. Rewatching Silicon Valley TV show is still informative for the market valuations and tech float today. That is a good show. I have never thought about giving it a rewatch, but I like that show.
No, I love it.
Anyway, what else we got going on here?
We do have a few minutes left. We can check out NASDAQ a little bit and see what's been going on over here before
we can pop over. You want to go trading view?
Yeah, we can jump over to trading view real quick for the last 5 minutes. We can talk about some of the areas of interest. that we have on NASDAQ set for the week, because I think this will be an interesting week, especially with NASDAQ having that massive fake breakout this morning. So if we do return to some of those levels, we'll pay attention to see if we get any more present or active selling there, because we could have some more directional positions. And last week we had this all-time highs. We labeled it all-time highs, this week's developing value. So that was last week, which is now going to make this level of value the previous week's level of value. So now we're going to go ahead and adjust our labels for the week. This is previous week's value. So this is going to be where most of the trading activity occurred for all of last week. And now we're going to readjust a little bit, and we're going to do that together because this level of value is a little bit dated. So let's go back to our fixed range volume profile, bring this from the highs to the lows, and then to the current trading price. And then you can see that the value area high is pretty much, it's near the same as what we had it yesterday when we did some analysis, or I'm sorry, last week when we did the analysis. The value area low is pretty close to last week's value area low as well, but we need to adjust it just a little bit. So I'm going to bring this down here, right at the value area high, and then I'm going to bring this down here, down to the value area low. What's nice is we get kind of a singular, straightforward value area to work off. Sometimes it's like a P-shaped distribution. Sometimes it's like a B-shaped distribution. Sometimes it looks like a double distribution. Sometimes it looks like a triple distribution. But here we got a straightforward single leg distribution. So it's a pretty picture to work off of for the week.
Very normal.
Very normal distribution, yeah. So that's going to be nice, and that's one of the reasons why we were looking for short opportunities this morning near our value area high. And then we were able to sell off down to the point of control. But so far, this is our range that we're going to be working off of as I take a quick sip of water here.
TED Talk over here. TED Talks fell off. They used to be
TED Talks, bro, they did fall off. TED Talks fell off, and I thought they were still on, but they're not. I realized they fell off after they already fell off. Why?
It was because they tried to commoditize them too hard was the thing. Like they realized that they really had something going, and so then they needed quantity. And so then I think they started, in my opinion, they started letting a bunch of people who were not TED Talk qualified get up there. And
they shot themselves in the foot.
And that's sort of what did it to me. Yeah. I don't know.
That makes sense.
Let me know your thoughts on TED Talks if I'm off base there, but that's my perception.
That makes sense. This is going to be the current week's value area that we're going to be trading off of. So whenever we come near the levels of value, we can expect some type of potential mean reversion if we're still trading within balance. And if the market wants to shift out of balance this week, whether that's tomorrow, whether that's later today, probably not later today, but whether that's later today, tomorrow, Wednesday, if we get price acceptance outside our value area low, there's a pretty high probability chance one of the first targets we'll most likely reach to is going to be the day low from last Friday. So we'll put this here. We'll do a little bit of analysis while we're live because we're not going to change any of this. When we come back tomorrow, we're going to see how price is responding to these levels that we're putting in here together so we can build off of that for the rest of the week. Let's clean that up. This was the day low. What was that now? Last week's, I think that was Friday's. I think that was Friday's low. We'll go Friday's low.
See agreement pouring in on the TED Talk thing. Good. I'm happy to hear.
TED Talks lost a lot of value.
Happy to hear I'm not off base here.
They were one of my favorites too, though. It's unfortunate.
No, yeah, it was. And I mean, there are still like a lot of really valuable ones. There's one on, I don't know why the speaker's name is escaping me right now, but there's one on like basically trusting your instincts and how, like in an evolutionary context, our instincts still work even in our modern society. And I think it's really interesting. I give it a rewatch every now and then, maybe once a year.
No, yeah, it is unfortunate, but they do have some amazing talented speakers on there. I know Tom did his TED Talk too. I forget actually.
Oh yeah, that's true.
Yeah. Do you folks have on gamma exposure? Not for the most part. I'm going to be repositioning a little bit more this week.
Are you saying do we have anything on gamma exposure? As in, like, do we have any resources for learning about gamma, or are you saying like, do we personally have any gamma exposure? My gamma plays are UNH and Novo Nordisk. Is the short answer to that. Novo Nordisk. The worst, most beaten down, terrible, horrible position in my account. But that's the type of gamma play I'm looking for. Really, really beaten down, prolonged, beaten down stock that technically still has really good fundamentals and a lot of high upside. That's the case with both UNH and NVO.
What's theirs? Novo.
NVO.
NVO.
Yeah, NVO. Which I agree, it should just be Novo. Missed opportunity. But Yeah, Novo Nordisk just been lacking, and especially with all of the RFK stuff and generally anti-big pharma sentiment in the White House right now, which I'm anti-big pharma too. I'll float that. But with that going on, it's been really beaten down. But I mean, fundamentally, it's still all there. They still have a lot of good products and are testing new good ones even still. And I don't know. But all of that said, I am getting obliterated. I mean, I've been long since about 60, and it just keeps on working down. I might even get long again here at the bottom. But this is one that I think just could theoretically in the next couple of years return to that over 100, 120 type of upside. And that's what you're looking for if you want gamma exposure.
See what Kimberly said there? Said, yeah, they were a step away from Tylenol because autism type talks. That's crazy.
Yes, I did see that.
That's hilarious.
You meant educational resources? In that regard, yeah, absolutely. If you just go to tastylive.com and type gamma into the search bar in the top right, you should have a whole bunch of videos and written articles pop up to help you out there.
Oh yeah.
Written by people smarter than us. I might add. One thing about gamma ray exposure is that it's typically very short duration. Doesn't it turn you into the Hulk or something? Gamma rays, gamma rays, I don't know, where do those fall on the color spectrum?
I'm colorblind, but I
guess that's true.
Give a guess.
I think they're really, really short is the deal. Really, really short wavelength.
Yeah, no, I'm not too sure.
Wavelength spectrum.
As for gold over here, gold has been extremely quiet and boring. Anybody doing anything in gold?
Yeah.
Dr. Jim on today should be
was right. They're the very shortest
after us today.
10 to the negative 12th wavelength.
Okay, they are the shortest?
Yep. Longest is radio waves. Followed by microwaves. There you go. There's your electromagnetic spectrum lesson for the day. Everybody, make sure you listen because there will be a test on the electromagnetic spectrum.
There will be a test.
They are green because Hulk. Dr. Jim on today? Yes, he will be on after us. Outside of the color spectrum, shortest wavelength. Yes, I did. I got my color spectrum and my electromagnetic spectrum confused there. It's been a little while since I took a physics class. My apologies. Gamma makes you green. I like it. Soul Train, I love your use of emojis. Every time you use emojis a lot in your comments, and every time I think that they are beautifully selected. It makes me chuckle a lot.
Oh, yeah. As for that, just looking at gold here, lastly, let us know what positions you guys have on in gold. Still going to be holding this one. Still have my puts on, sold gold, up 15%. Nice, Jared.
Nice.
It's been a little quiet on this end. Let us know how you're looking at managing this one because, it's looking like gold is going to want to make some decisions soon, whether that's to make some new lows, if we can find this position here.
You're on the wrong ticker.
Oh, there we go.
Yeah.
There we go.
I don't know why that happens.
Yeah, we kind of been stalling out here a little bit. So maybe those puts will be up a little bit more here soon. We haven't even had any type of significant bounce off of the first real pullback that we got to, Jared. So maybe they got a little bit more in them.
Yeah, I thought we would maybe it's hard to even call it dead cat at these levels. But I thought that we would maybe see a second but not engulfing bounce.
Right.
Yeah, that hasn't really come to fruition. We seem to have established this as the level. If Earth got hit with a gamma ray burst, it would basically destroy the atmosphere. Interesting. My follow-up question, Theta Trader, would be: are there types of rays that would not destroy the atmosphere if the Earth were hit with a burst of them? I suppose radio waves may not. Can't think of how those physics work. Oh, dollar. I was like, who's got my and sign? The silence was as I was trying to unpack Edward's comment there. Who's got my dollar? I see.
With that being said, anything else top of mind this year?
Nothing else top of mind. I'm hoping Kimberly Clark will rally. Hoping people don't hate Tylenol so much in 2 weeks from now or 3 months.
They'll come to their senses after
Anytime before June, really. It's whatever.
They're going to need some Tylenol.
We can wait till March to start
up until that point.
Tylenol if that's what everybody needs. But
at some point.
Yeah, we'll see. Just eyeing that. Interested to see what happens with Palantir earnings, just because of the fall that they have there. I might I might put on just a short because I'm stubborn on Palantir earnings, just because I think that sometime they have to have the massive donk earnings call, and I want to catch it when it happens. But yeah, looking forward to Palantir earnings, and that's pretty much all I got for the day.
Cool. That's going to be it on my end, too. Going to be looking forward to Palantir earnings as well. I'm in the same boat there. NASDAQ has a lot more volatility this week. Be sure to stay tuned on Twitter with some of the other positions we're going to be taking. It'll be a fun one. If you're actively trading futures, make sure you come check us out. Other than that, we'll be around for the rest of the week to manage our positions. So we'll see what trades we get to take.
Yeah. Dr. Jim next.
Yep.
All right. That's all we got for today. Thanks so much, everybody, for being here. We love you all. And yeah, we really appreciate you guys taking the time out of your day. We'll see y'all next time.
Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. I'm glad that you are here. Welcome to the November edition of what it is that we are trying to do. Man, it's crazy. Wait a minute. If my math is correct, it's November of 2025? Like, is it almost 2026? Am I getting that right? That doesn't feel right. It feels like it's still, what, like 2021 or 2022? But apparently, according to the powers that be, it's November of 2025. Somebody please check me on that in the YouTube chat, because that does not feel right in any way, shape, or form. But alas, it might be correct. And so welcome to the show. I'm glad that you are here, and we can all kind of, share our lamentations here together. If you're watching over on the Tasty Live network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. You can celebrate if you're a bull, a bear. Man, I don't know, but it is indeed a good time had by most. And of course, if you have a question for me, you can drop it in the chat box. The earlier that you get it in, the higher the delta that I will get to that question. So I would get your questions in the chat box as early as you possibly can. So John, bring us into the market. Let's see what's going on. Whew, man, we got some things happening out there. You got EMA S&P's up 12 on the day. You got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 120. You got the boomers down 220. And you've got the Russell 2000 Futures Index down 16 as we start strong and shoot from strength here today with our Glacier Freeze Final Jeopardy pen. You got bonds down, you got notes down, you got oil down, you got the shifties are, they're just putting a little win on the board to start the week, right? You got gold up 18. You got the Hunt Brothers. Where are my Hunt Brothers at? Silver is silver's up today too, I think, right? No, silver down 27 cents. All right, so silver getting hit a little bit. Another day, guys. We've seen this so many times over what, the last like 2 or 3 months, I think, where gold and silver are not necessarily following each other. Gold and silver are kind of, they're kind of breaking correlation, if you will. And so this doesn't normally happen, but maybe it is a new normal. Maybe this time really is different. I guess we'll have to wait and see if that is true. It's never been different, not one time in history, but maybe this is it. Maybe today is the day. You've got volatility. Let me take a look at where my volatility trader is at. You got volatility futures down 12 cents, and then you've got spot volatility, the old VIX, down 20 cents on the day. That makes sense with the market being somewhat strong. It's been back and forth. It was actually pretty weak on the open this morning. Things were looking okay, I think overnight and then into the wee hours of the pre-market morning. But then all of a sudden on the open, man, they just kind of smashed them. And now they've since kind of picked their own pieces up and they're gluing things back together. So volatility down a little bit. And well, look at Tesla. Look at that. Oh, guys, this is so cool. So we're gonna shoot from strength, not only with the Glacier Freeze, but here's our first tangent of the week. So if you guys have been following the show, right? If you've followed the show for the last couple months, whatever, you know that I flooded my car. This was what, 2 months ago, 3 months ago now. I drove onto a flooded street. The Civic couldn't handle it. Like it was over. It was all she wrote. Lights out. Not coming back. Well, I decided not to get another car because I'm like, we just got one car. I'm home most of the time anyway. It's like I'm here for work. I got my garage gym. I got everything I would need, right? As long as I've got the Ghost pre-workout coming on auto ship, like we're good, like we're set. I don't really need to leave. Well, anyway, about a week ago, my father-in-law, the Tesla guy, that's what triggered this thought in my head, right? The Tesla guy, again, he's been buying Tesla for like a really long time, like a super long time. He's been buying Tesla, he's been buying Netflix, he's been buying Apple, like he's obviously just absolutely crushing it. Well, he wants to get a new car. And so, he's excited about the new car, whatever. Well, he drives he's got a nice car now. He's got a 2013 Infinity. So it's not like an amazing car, but it's a really nice car, extremely reliable, dependable, whatever. Well, the other day we were hanging out for Halloween. Actually, we were walking around the neighborhood and trick or treating with just Amelia. Eli and Penelope went to a separate party with their friends. We're walking around, and he's like, "Hey," he's like, "I'm thinking about getting a new car." I'm like, "That's amazing." He's like, "Would you want my old car if I get a new car?" I'm like, "Well, yeah." I'm like, "How much are you gonna sell it to me for?" He's like, "No, man, I'll just give it to you." I'm like, "Give it to me?" I'm like, "Where do I sign?" And so it's like, man, I haven't had a position on in Tesla. I haven't been able to share in the fruits of all of his labor and all the risk and volatility, but it seems like I'm getting myself a nice little dividend payment on the end of that position. So anyway, nothing is set in stone. He's like, I still may not get it, whatever. I'm like, hey, that's totally cool, man. Just the idea of it possibly happening has me somewhat excited. So I will keep you guys updated. I'm no Julia Spina, but a 2010 Honda Civic to a 2013 Infinity, that is a major uptick. That is like the greatest bull market run of all time from one point to the next. So anyway, I'm excited. I wanted to share that with you guys. And so there we go. So anyway, that's not going to help you become a better trader, but even the trading stuff I talk about won't really help you become a better trader. So anyway, let's go in here though. Let's take a look at a couple of things. So number one, let's see if we do, and I see you guys in the chat, by the way, man. Soul Train's in the house. Joel James in the house. Kimberly Thomas in the house. Man, Archer Fire even showed up. Man, look at this stuff. Man, Theta Trader's here. Jared Kramer's here. Man, Peter Polishuk is in the house. Man, Wolf is in the house. Big Deal Donuts. What's going on? Appreciate you guys so much. And I missed a number of you guys, of course. But let's go into a couple of things I want to do because let me see. Who do we have tomorrow? Guys, do we have Uber tomorrow? Man, I had a nice weekend, a super nice weekend, fun holiday or Halloween night, super great weekend. Everything was amazing. Got to sleep in a little bit, Saturday night, Sunday morning, whatever. Everything was amazing. I'm like, I don't know if I'm going to do too much earnings, right? Coming into next week. I don't know if this is such a great idea. And then I look at the calendar. I'm like, well, I got to do a little Uber. We got to do at least a little Uber. It's like, we're not talking about, some crap stock like Snapchat or, some stock that's, soon to go, insolvent like Kohl's. Like, we're not trading KSS. Like, if I start trading KSS, then somebody come get me. Like, somebody come to the house, show up on the property, and sit me down and give me a talking to. Like, we've already given Autumn a couple of talking tos, which only had a mildly positive effect, I think, on the overall impact of what happened. But I'm going to need a talking to. If you guys see me slanging them in KSS, are they still in business? Man, look at this. $16 stock. They're still doing it. Man, they're really, really doing it. Kohl's Corp. KSS, there it is. If you guys see me trading KSS, then somebody come and get me, please, because it's gone very, very wrong. But for Uber, I think we'll do a little something in Uber. Nothing crazy, just a little something. But I want to look at what we currently have on, though, first and foremost. So if we look at Apple and Amazon, so these were two, and then of course I'm going to get to you guys around the halfway mark of the show, provided my video holds out, which it's only about a 30 delta on any given show. But if we look at Apple and Amazon, these were hold over earnings strategies that we did for last week. We got absolutely beaten up on earnings. We played bull stocks to the downside, and I mean Amazon just ripped higher. It's continuing to rip higher. My father-in-law has Amazon too, by the way, and so I mean he's just been hitting the Mag 7. Like before they were even the Mag 7. He was like funneling all his cash into these stocks. He's like, I think these companies are amazing. Like, I think this is so obvious and so easy. Like, why isn't everybody doing this? And I'm like, yeah, I'm not going to do any of that. And so he's got the last laugh now, but he gets the last laugh, and I might get a 2013 Infinity. I'm not exactly sure who the winner is there. And I mean, since he's the one giving me the 2013 Infinity, I guess he's the winner in the end. But yeah, he's got Amazon too. And so, Amazon ripping higher, $10 to the north side today, and so that's obviously hurting our short call spread. But Apple, surprisingly, Apple has really struggled there on the earnings. Well, the earnings came out last week. The initial move was down, but then it rallied up right away, and then it looked really strong overnight, really strong into the pre-market, and then once the market opened, it just took a complete nosedive, and it hasn't really recovered. Since then, even though the Nasdaq has been relatively strong, today and then last week. But our short call spread here, we have a 275, 285 short call spread in Apple. And now we're in a situation where we're actually up a little bit on the call spread because Apple is down. It's down to 267. Now we have to factor in the fact that, we did light a few dollars of cash on fire last week from the butterfly. So this is not exactly victory lap worthy. I mean, I'll probably take at least a slow trot up to second base, but we may not make it all the way around the bags. But if you look at Apple here, I mean, there's no reason to do anything for this vertical spread. I mean, this is very much a sit tight and do nothing type of situation where, we have the 275, 285 short call spread. We're in a good spot. We don't really need to do anything on this position. It's a defined risk strategy. Remember, with defined risk strategies, you always have the option to do nothing essentially because your maximum loss scenario. Like just how bad it could possibly get. Like it's not going to get any worse than that. So that's obviously very, very, very nice to know on the front end or even throughout the life of the trade. So when it comes time to making adjustments and whatnot, you don't have to do anything crazy just to control your risk and try to take a bunch of risk off the table. You may have opportunities to do that later on down the road. It's not typically something that happens with vertical spreads, but maybe with iron condors or even iron flies, there could be, opportunities to take risk off the table down the road if you want to. But in my opinion, if you're doing a defined risk strategy, you should never be in a situation where you're like, all right, if this thing goes south, I've just got to find a way to take off a couple of dollars of risk at some point throughout the life of this trade. That's a mistake, in my opinion. That's an easily fixable mistake at that. I mean, that's all going to trace back to position size, all of it. Like if you're ever in a situation where you're like, okay, I'm going to put this trade on. If it goes south, then I just need to make sure I take off some risk. In my opinion, I can't necessarily think of a scenario where that's not related to being too big. Maybe there's one there. And maybe if you get real crafty with how you're weaving in additional short premium and whatever, and still cutting size. I mean, maybe there's some ways around that, I think, potentially. But at the, just thinking about it at first glance here, it seems to me like it's going to be a sizing issue. It seems to me like that's going to be a position sizing issue that, again, that's easily fixable, right? You just have to get smaller. You just have to set the ego aside at position sizing order entry and just get a little bit smaller with your positions. And then you're in a situation where you can take full advantage of the defined risk. You can take full advantage of all the things we're trying to take advantage of. Probabilities, theta decay, directional shots, whatever you're trying to do with the position. You want to put yourself in a spot where you can take full advantage of whatever it has to offer you. And in my opinion, that can only happen when your size is in check. And so for Apple here, we're going to sit tight and do nothing. And I'm just thankful that we still have a little bit of a heartbeat on this position. With Amazon, I guess we have a little bit of a heartbeat. It's not very much of one. You really kind of have to, kind of press into the old stethoscope to really hear that heartbeat. But you've got Amazon up to 255, and we have our short call spread on in this too that we sold for 315. It's currently marking for over $7. You know, it's very similar to what we talked about on Friday. But on Friday, it was a different situation because the stock was at like 245 instead of 255. And at that time, I think we could have gotten out of Amazon for maybe $6.50 or so, maybe six and a quarter. And I was like, wow, we can save, $3 or $4 off of maximum loss. That's pretty surprising and kind of nice at this point. But I'm going to stay in the trade because we still have a lot of time left, blah, 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 blah. Similar situation here, other than the fact that we've now lost some of those savings because Amazon continues to go higher. I'm still looking at a situation where it's marking at $7.20. And now, of course, the hurdle that it needs to jump over, the distance that we need to run back is now further. And so the likelihood that that happens has obviously gone down. And so you may look at this situation and you may now say, yeah, I don't know, man. I think now's the time to go ahead and cut the cord. Now's the time to just go ahead and just be done with this position and kind of move on. I'm still going to sit tight. I'm still going to choose to do nothing here. We have 46 days to go. That is a very, very long time in the world of, Amazon or the world of, the overall markets. I feel like, so many times with these vertical spreads and defined risk strategies in general at that, you find yourself in a trade where you're like, this thing is gone. It's not coming back. And then all of a sudden it's back. And then all of a sudden you're like, wow, I'm like a few points away from scratching this thing. Like that happens so many times, that I just feel like, again, the default setting with defined risk strategies, in my opinion, is you put it on and you just let it play out. You put it on and you're like, hey, if this thing goes to the end, like I am willing to die with this position. And by die, of course, I mean you lose $4 or you lose $7 or whatever. It's not going to be that big of a deal in the grand scheme of your overall portfolio. But I think that needs to be your mindset going in. Again, you don't really want to be, hey, I'm getting in this trade. I'm going to cut some risk later on down the road because it may not be that easy. I mean, right now I'm kind of getting it out an off ramp here with Amazon. If I want to take it, I'm choosing not to take it. But it is still a pretty nice off ramp. We had this on Friday. We have it again here today. I mean, this is one of the benefits, by the way, of choosing the longer dated cycles for an earnings trade, right? You obviously have the gimmies and the gotchas. The gimme is if it doesn't work, you have kind of this built-in mechanism that is softening the blow of the move against you. That is exactly what's happening here with Amazon. It's essentially what happened also with Apple, and now it's continued to help us out with Apple because Apple is even lower. But with Amazon here, because we have so much time left in the trade, this is what I mean when I say, choosing longer durations just softens the Greeks. It just softens your Greek exposure so that you don't make a ton of money when you're right, and you don't necessarily lose a ton of money when you're wrong, because you have all that time left in the trade that things are just going to move a lot more slowly. Whereas, you do a front week or overnight trade or whatever, things are going to move a lot faster. So again, you just need to understand what you're signing up for. It's not a better or worse scenario. It's not a better or worse conversation. It's just hey, these are the gimmies and the gotchas. Like if I'm choosing a front week or zero DTE or overnight play, it's going to move a lot faster. The gimmies and the gotchas are all going to be coming at me at a much faster pace. If I'm choosing a 45 days or 50 days to go expiration, which is more of our normal entry point, things are going to move a lot slower, which can be really nice when the trade doesn't work, of course, because you're like, hey, I kind of need that time. I want that time. And the good thing is we already have that time. Like it's baked into the position here with Amazon. So anyway, hopefully that helps a little bit. So Apple and Amazon, we sit tight and do nothing. But the main trade I want to look at today, I want to do two things, actually. And I'm going to try to move a little bit quicker because I do want to do an Uber trade, of course. I mean, it's Uber. Again, I wasn't going to do anything, but guys, it's Uber, right? We're not talking about Kohl's. I'm not talking about Chipotle. Forget about Chipotle. We're talking about Uber, man. This thing's a slam dunk. So if you look at I say that jokingly, of course. If you're brand new to the show, whatever comes next, do the opposite of everything I do. I promise you. People in the chat, please back me up. I don't want these newcomers to feel like that they're onto something. I don't want these newcomers to be like, man, this guy, he's pretty confident, he's pretty this, he's pretty that. Don't pay attention to any of that. I promise you, guys in the chat, back me up. So Palo Alto. Is an interesting situation because we have 18 days to go in the trade. So we're inside of 21, obviously. I've got 18 days to go in the chat. And Palo Alto actually has earnings coming up here in just a couple of weeks, if I'm not mistaken. If I go to, hold on. Palo Alto has earnings coming up. November 19th. So the earnings are coming up in Palo Alto in about 2 weeks, a little over 2 weeks. So that's a little tricky for rolling out, right? I don't really want to roll into the December cycle when I know I'm taking this trade off, before earnings anyway. So I don't really want to reset the clock per se. I kind of don't mind things moving a little faster right now because I'm like, all right, I'm pretty close to a scratch. I'm only a few dollars away, about $4 away, a little less than $4. If we get a little bit of a movement in Palo Alto in our direction, which in this case would of course be lower, you've got the stock at 218, we have a 200 straddle. We could use the stock at exactly 200. That would be perfect. And so if we get a little bit of a sell-off here going into earnings, we're going to be in a nice position, I think, to take this trade off for a scratch, or maybe even a smaller loser, or maybe if everything kind of bounces in our direction, we get out for a small winner. I don't really think that's going to happen, but I wouldn't necessarily say that it's impossible either. And so for Palo Alto, I'm actually thinking, let's stay in this trade as is. I know we're inside of 21 days to go. I know we're breaking all kinds of rules, but guys, again, if you don't rat me out, we're good. It's just me and you and 500 other people. Like if we can just keep this secret and don't tell the powers that be, which I don't even know who the powers that be are now. And so as long as you just keep this between us, I think we're good, man. I think we're 100% good. And so we're going to hold on to this Palo Alto trade. Let's sit tight and let's just kind of see how things go and see where the wind blows us. So that's the first thing about Palo Alto. The unique situation of earnings coming up in a couple of weeks kind of muddies the waters a little bit. The other thing I wanted to talk about was we did Palo Alto. Let's talk about Starbucks. Okay, so Starbucks is getting blasted, of course. This was our trade that we put on in December of last year, and it was intended to be a long-term position, and it has been a long-term position. It's going to continue to be a long-term position. In fact, it's going to be an even longer-term position after the next couple of minutes. My goal with Starbucks the whole way was to be in this trade for a long time, to kind of show you guys like how you could, handle a stock that you intend to hold for a long time. It could be a Starbucks, it could be a Kohl's, it could be whoever you want it to be. And you're like, hey, I want to find ways to maybe sell some premium, maybe do some things around the edges to improve my position and kind of the basis and give myself more ways to make money and blah, 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 blah. We've done all that for the last 11 months now in Starbucks, and we're going to continue to do that. The thing I wanted to focus on here today was with Starbucks down so low. I mean, it's at 81. I mean, this guy was at under 80 earlier. I mean, it was low, man. It was really, really low. Let me bring up there's a daily chart. You can see it was all the way down to 80.20, and then today it was down to 80.60, so almost under 80. But then a few weeks ago, it actually was under 80 at 78. So this is pretty low for Starbucks. So I was thinking about this, and I was trying to think about this within the context of, okay, if I was a long-term investor and I was looking to hold this stock for a long time, what would I consider doing right here? Well, I think everybody knows who's held stock for any length of time, this would be a good opportunity to do what? To add shares, right? Your dollar cost averaging, right? You're adding shares. Sure, you can say you're averaging down. Sure, you can say you're adding to losers, but none of that sounds good. You're dollar cost averaging. You're adding tranches. You're being strategic. Like, let's dress this thing up and make it sound good. So I'm thinking here, let's do the same thing. The difference being, I don't necessarily want to buy more shares simply because, the focus of my portfolio, of course, is still going to be a heavy emphasis on, premium and options and even futures options. Not too many straight futures these days, but you never know. One might be coming on down the chutes, but futures options for sure. And so I don't want to allocate too much capital to, long share positions, but I thought let's actually marry those two things together and let's be a wee little bit strategic with what we do here. And what if we go into Starbucks? We go to the trade page. I go to the table view. What if we do a leap option? So what if we do a kind of deep in the money leap option that's maybe 3, 4, 5 months away? What that's going to do is it's going to allow us to get into essentially the equivalent of 100 shares. It's not going to be a perfect 1-for-1, but it's going to be very, very close. Essentially a 1-for-1 or the equivalent of 100 shares, but we're going to do it for a fraction of the cost. Now, I'm in a margin account. Here, I'll even show you. If I go to buy 100 shares of Starbucks so that you can see for yourself, the buying power effect would be $4,000, right? I'm getting about 50% margin on any stock positions. And by about 50%, I mean exactly 50%. Okay, that's not bad. Obviously, that would not be too awful at all. But I'm thinking, let's delete that. Let's delete the trade bar there. What if I go into I don't know, let's go to February with 109 days. If I go into February with 109 days, you got the stock at 81. What if I buy this 55 call? It's got a 94 delta, right? Remember, 100 shares has a 100 delta. This deep in the money long call is going to have a 94 delta. So it's essentially going to give me 94% of the move. So this is what I meant when I said a few minutes ago. It's going to be not even synthetically equivalent. It's going to be a substitute for the long shares, but it's not going to be a perfect one-for-one mapping. This is kind of the tracking error that we're going to have, right? Instead of getting a one-for-one move, we're getting 94 cents on the dollar. That's pretty good. When you factor in, I'm going to be able to do this trade for, it looks like they're pretty wide markets, but I'm not going to be zigging and zagging. I'm not going to be in and out of this thing every day. This is going to be kind of a set it and forget it type of position. We're going to do this for what, about $26, $27? So I'm going to be able to save another, 35% off of that buying power. So instead of putting up 4,000, I'm putting up 2,700 or whatever. That's significantly better when I want to use that capital for a lot of other things here in the portfolio. So let's go into Starbucks. Let's do this deep in the money long call, which gives me essentially another 100 shares, and it does allow me to dollar cost average, which again, if you're a long-term investor, I mean, these are the types of things you're doing all the time. And so I want to have our treatment of this position kind of mimic that. And so let's go in, let's buy the 55 call. I'll go in at the mid price, which looks like it's about 26.70, and we'll see if we can get filled. And you can see for yourself, by the way, that the buying power effect is going to be whatever I pay for it. So again, that's significantly less than $4,000 for essentially the same position. Again, not exactly the same, but it's pretty close. All right, so we got filled at 26.70. So there you go. So we are in a long, deep in the money long call, kind of a leap option. I mean, it's only 109 days, so it may not be, maybe it's a baby leap, maybe it's a mini leap. Hey, maybe it's a quantum leap for all my, Scott Bakula fans that might be watching the show. I've obviously rounded up quite a few Scott Bakula fans the last couple of weeks. We've been bringing up quantum leap on a pretty regular basis on the show, actually. And so there's your daily quantum leap verbal cameo. But then we did Starbucks. We did Palo Alto. Okay, man, I want to get to you guys, but we got to get to Uber, man. Okay. Guys, Uber. And I see you guys in the chat, and I appreciate you guys. I'm going to try to get to as many of you guys as I can. Man, look at you guys. Man, Greg Lutton's in the house. Ryan Johnson's in the house. Man, look, Daniel Perkins is in the house. Man, look at this stuff. All right. So Uber. We need to really, really think about this. Got to play it to the upside. Done. Playing it to the upside. Again, guys, just think about Uber. No, all kidding aside, just think about Uber. Think about Uber as just a philosophy. Don't even think about it as a company. Just think about Uber as a philosophy, just a way of life, just a state of mind, right? They've done something in the world that we live in, the economy that we live in, with this, these ride shares and whatever. And they have, in my opinion, like they've got like a death claw talon grip on the market that Lyft can't match this. Waymo can't match this yet. Right now, maybe Waymo's going to do it in the future, but still, driverless cars, man, I don't know. You getting a boomer into a driverless car? Nah, man, that's not going to happen. But you look at Lyft. Look at Lyft, man. Oop, that's Lyft. Lyft is only a $20 stock. I mean, Uber at $90, man, $100. Uber's been really doing pretty well for itself. So I think for Uber, let's just go in here. Again, we're going to keep it pretty buttoned up, but we're going to cut loose a little bit. Let's buy... That doesn't make any sense. Let's buy a 96, 106, which gets me right up to the expected move. 116 butterfly. So nice and wide, like super wide. It's roomy, got plenty of leg room, just like an Uber XL. And it looks like we're going to pay about $3 for it, maybe $3.15. And so this looks like a really nice trade for tomorrow. The pop is super high because our butterfly is so wide for a $100 stock. I mean, we've got a $10 wide butterfly. That's a very wide butterfly for a $100 stock. And so I thought we would maybe try expanding the width even more than we normally do. It's all relative to the stock price, of course. But this seems to give us maybe more ways to make money. Of course, if Uber goes down, which now essentially because I'm playing it to the upside, it has been cemented in, the ground now that Uber is, of course, going to go lower. But if Uber does somehow find its way higher, then we should be in a decent spot here. So let's go ahead and let's do some Uber. 323. Seriously, if you use Lyft, identify yourselves. Like, identify yourself in the chat. If you use Lyft, like, be honest. Nobody uses Lyft. Nobody uses Lyft. I'm shocked that they're still in business. How can they still be in business? Because nobody's using the product. Everybody's using Uber. There you go, 326. In fact, in a lot of airports, when you look at signs, like they don't even include Lyft on the sign. Like when you're looking for like the signage to like get to where Uber is, they just say Uber this way because they know that Uber has become the verb for ride sharing. It's just like Google. It's just like Kleenex, right? Like these actual company names have become the term that we use for the thing that we're trying to do. You're going to tell me that Lyft is going to match that? You're going to tell me that, oh man, let me Waymo this. Like nobody's Waymoing anything. Right? Nobody's Waymoing a single thing yet. Now, again, is that going to change in about 6 months? Yeah, probably. But for now, for Uber, the upside's where it's at. And so, all right, let's see here. Where are we at, though? Man, let me surprise and delight somebody in the chat. Let's see. I see you guys are trolling me for the Starbucks thing. That's good stuff. Where are we at? Can I find somebody? Soul Train says, Dr. Jim, buy an e-bike or a scooter. Man, I almost got a Vespa. Man, I was real close to getting a Vespa. You know, like one of those Dumb and Dumber deals. I was like, man, I really think that that's what I need. Like I'm always looking for ways to like, how can I up my coolness factor? Like, how can I get to another level of coolness? Like, I'm always going to be on the lower end of the spectrum, but can we somehow like, improve our state even just, gradually, even just modestly? And I was like, a Vespa would probably do that. And so we were pretty close to a Vespa, but then the father-in-law came up huge. And so, all right, so Joel James in the middle says, Dr. Jim, if I'm in a straddle, or if you're in a straddle and your call is tested, but you don't want to roll up the put and narrow your profit window, instead, how about adding another short put to adjust your delta more positive? Okay, this is a great question, Joel. Thank you so much for bringing up this question. And thanks for all the support of the show, of course, for, months now, years at this point, I think. So I've got a straddle on, and I've been testing out. Like my Palo Alto trade is actually a perfect example of this. It's exactly what you've just outlined. You have a straddle on, you've been tested on the call side, but you don't want to roll up the put and go inverted. This is a very common situation that you will oftentimes find yourself in. That's what I'm in right here with Palo Alto. So what can you do instead? Well, it's a couple of things. So number one, you could go inverted. That's always an option. That brings with it, some negative externalities in terms of, minimizing or narrowing the profit window for sure. You could also roll out in time. So keep that in mind too. Like a lot of it depends on how much time do you have left in the position. Are you at 18 days without earnings on the horizon? Then I would certainly roll it out. I'm at 18 days with earnings on the horizon, so it's a little bit trickier. But if you're at, 20, let's say, 17, 18, all the way up to 30, I would probably go ahead and roll that guy out and not really think about it. Again, leaving aside any potential earnings that might be coming up. If you're over 30, so 35, 40, 47, whatever, usually rolling out doesn't make as much sense there, because now all of a sudden you're kind of resetting the clock and going much further down much further out on the decay curve to where it's not going to decay as quickly as you would like. And so is there another option? Well, you brought up a very interesting option, which is adding a short put to help to neutralize your delta to the downside because you've been tested on the call side. Can you do this? You can. What do you have to be aware of? You are adding size to the trade in a potentially significant way. And so you might be thinking, this is how I often feel when I'm in a position like Palo Alto or any trade that's similar. I'm like, man, I'm testing on the call side. I don't really care about the put side. I'll deal with that if it happens. I just want to kind of control what's right in front of me with the testing on the call side, the rally in the stock, whatever. Well, if you've seen the show for any length of time, you've seen many, many, many examples where we were tested on the call side. We either did nothing or we did something or whatever, but then all of a sudden we got tested on the put side. All of a sudden in the same position, same cycle, the stock or the index completely reversed. And now all of a sudden my put is what's giving me trouble. My put is what's all of a sudden giving me fits. So you've got to be really careful with understanding that you are adding size, potentially double the size on the downside if things do go south. I'm not saying you shouldn't do it. I'm just making sure that you're aware of what you are signing up for. Like you are indeed, the gimme is more neutralized directional bias, more premium to work with, more opportunities to manage winners. Like there's a number of gimmies there, each of which is attractive in its own right. But you have to understand the primary gotcha is going to be if it does turn south and reverse, now all of a sudden you've got two puts that could potentially, fill up in size. Those could both be potentially 100 delta apiece. And so once you understand that, it's like, okay, this position could get a lot bigger. Now, what do you do if that happens? Well, one kind of silver lining that's kind of, that goes alongside all of that is you can always add a call to that second short put and you have no additional margin requirement for that. And so, if things start going south and all of a sudden you're super bullish, you can add a call. And so now you've got potentially the straddle in the middle and kind of this offsetting strangle that you're also working around the edges. That's probably what I would do if I was in a situation where I have a straddle, stock rallies, I add a short put, I'm okay with my size, I understand what I'm doing, I understand what I'm signing up for, and then all of a sudden it goes south, then I'd be looking to add a short call. I'd be looking to neutralize my directional bias that way. And so that's how I would approach that. Those are a couple of things to think about, and hopefully that helps, my friend. But let's see, where are you guys at? Man, I see you guys. I see you guys in the house. Org Denu's in the house. Greetings from Italy, Dr. Jim. Long call, November 7th, so a little front week action on AMD. If you can beat them, join them. No, it's if you can't beat them, join them. If you can beat them, you should never join them. But we can't beat them, so we join them on a pretty frequent basis. So if I go into AMD here, okay, so AMD is tomorrow. Okay, so Org Denu, remind me of this tomorrow. We'll do it tomorrow or some version of this tomorrow. I want to play AMD tomorrow, of course, but I'm not going to do it today because this guy's tomorrow after the bell. I want to do Uber. There was another one tomorrow morning too, I think. I don't want to do it now because I want to get to you guys, but who else is tomorrow morning? Shopify. That's right. That's right. Yeah, I'm not going to do Shopify. But tomorrow you've got AMD and Beyond Meat. Man, maybe we'll do a little something on for Beyond Meat. Maybe we'll short it. Maybe we'll play for the actual going to zero event. That would be pretty fun, especially when it rips like $10 on earnings. But anyway, remind me tomorrow, or Daniel. Sam Mel's in the house. Happy Monday, Doc. Daylight savings got everyone confused. Clocks went back. Portfolios didn't recover. And somehow we still lost an hour of sleep and a few bucks to the P&L Open Bros. Yeah, they always get us a little bit. Like we thought we kind of put them in check by getting rid of Chipotle and getting rid of Best Buy. And now they've still got Starbucks, man. And now they've got more Starbucks. Like now they've got leaps in Starbucks that they can, they can obviously draw on for inspiration. And so yeah, pretty funny stuff. But yeah, the clocks going back was super nice. Because we've gotten beyond the stage. We have three small kids, but my youngest now, Amelia, who's obviously my assistant and my intern for the show. She does all of our trading analysis. She's almost 6 now. And so she's clear of the concept of like sleeping in. And so that's kind of nice. And so, I mean, anyone who's had small kids knows exactly what I'm saying. Like the clock movement never helps you. It obviously punishes you badly in the spring, but in the fall, you don't even really get ahead. You're lucky if you break even. Now we're actually in a stage of life where we're actually getting ahead a little bit because like everybody in the house is like, oh, more sleep. I mean, even the cats are like, oh, this is amazing. And so, yeah, that's, it was really, really nice over the weekend. But let's see, Theta Trader's in the house. What's going on there, my friend? Theta Trader says, Dr. Jim, KMB is ready for your special touch. 100 straight short put after the down move and increased volatility today. Man, let's take a look at it. Didn't they just buy Tylenol? I thought that's what I heard, that they, oh man, look at that. Yeah, yikes. Down $16? I mean, I don't know, man. We're momentum traders now. I don't know. Like, have you guys seen the show with Nick and Tony in the morning? Even like Jamal and Tony this morning? It's like, I don't know. Am I allowed to take the other side? Like, I think I've got it. Like, I'm following trends now. Like, I think I'm looking for higher highs and higher lows. Like, what are we looking for? Like, I'm not even sure what to believe. I mean, I'm obviously going to fade, all of that. But KMB here, down $16. Man, I don't know. Let's see here. If I go into, it was so funny this morning too, because I completely misrepresented what Jamal was trying to say. I thought he was trying to say X, and I presented him as X, and he's like, yeah, I didn't say any of that. And he literally had just said it like a few minutes prior. But again, I was just riding high off of my Niners win that I was just completely clouded from kind of what was going on. But for KMB, what do we think of Theta Trader? You're thinking just a 100 straight short put? I mean, why not, man? We're at 46 days to go. Markets are a little bit wide, but it's been worse. I like it, man. Let's do it. 285 on the mid price. I like it. What could possibly go wrong? All right, so we didn't get filled. Maybe that's a little bit of a sign, but let me try to I'll try. Now the mid price is only 270. Let's try 270. We should get filled. There you go. Got filled at 270. There you go, Theta Trader. I think you hooked me up with XLE recently, and so maybe you've got the special touch on this one. That would be super nice and very welcome from my vantage point. So thank you, my friend. Let's see. Scramble everything. Hey, Dr. Jim, good to see the Power Hour. No. It's the Dr. Jim Power 3/4 of an hour. Is alive and thriving. Looking forward to burning some stacks of cash and drinking this blueberry chocolate banana protein shake. That sounds pretty nasty, man. I gotta be honest. I mean, it's not necessarily tuna fish and applesauce, but it's in the conversation. Like, you've got way too many flavors going on there. Like, you've got blueberry and chocolate. That is not a natural combination, my friend. Like, blueberry and vanilla is the way that you go. Blueberry and peanut butter is the way that you go. Blueberry and chocolate, that might be worse than tuna fish and applesauce, actually, now that I think about it. And so I like where your head is at, but the execution is a little bit off. But I got you, man. I got you on some stacks of cash. I mean, I can already smell the smoke in the air for Uber. We've got KMB, a little Kimberly Clark. And so there you go, my friend. You've got a couple that you can fade. You can do it today. Like, there's no reason to wait. And so Wolf is in the house. What's going on there, Wolf? I appreciate you. Ranch is in the house. Hey, Dr. Jim, what's going on, my friend? Theta Trader, the 100 strike. Yeah, I got that, my friend. Thank you so much. Ranch. Oh, yeah, daylight savings. No wonder. He just realized. Oh, that's funny. That reminds me of that. That reminds me of that Seinfeld episode when they changed the clocks and Kramer just decided he's not gonna go along with the system. He's just gonna live, an hour off, and it was just so funny. I mean, obviously Seinfeld was amazing. Arguably one of the best sitcoms ever, maybe the best. The Office is probably a little bit ahead of it, but Seinfeld was obviously amazing. And so yeah, that was a great episode when he's just like, I'm not gonna do it, and then clearly he's off for everything, which is pretty funny. But let's see. Jared Kramer, Dr. Jim, let's go. The P&L Open Bros are going to bless us tomorrow with PLTR death. Oh, is Palantir tomorrow? Big Brother is tomorrow? Hang on a second. I can do a little Big Brother. Big Brother's tonight. Man. Yeah, because we got to be careful with what we say because they obviously are listening. I feel like we got to play it to the upside. We just got to keep them happy, man. We just got to appease them. We got to keep them happy, and hopefully they let us, continue to eat and, live and stuff. And so I'm thinking, yeah, let's just go front week. I'm just going to keep this really, really simple. So powers that be, I know that you're listening. I am bullish on Palantir. I've never been more bullish on Palantir. Like, all of my data and privacy, I don't give a rip about any of that. You can have whatever you need to make your life easier. Palantir, let's play it to the upside. We're going to buy a 200 call. We're going to sell a 210 call. And we're going to do that. Look at that. Look at how feng shui that is, man. That's a $5 debit. Oh, it's 503 now. $5 debit. We're going to pay essentially half the width of the spread here. We're going to risk one to make one. It's a perfect trade. It's a perfect trade. Plus, it's Big Brother. Do you really think Big Brother is going to let itself down? Do you really think Big Brother is going to well, I guess this would be Little Brother. Do you really think that it's going to let Little Brother fall? There's no way. There's absolutely no way. And so PLTR, if you're not bullish, it's your fault now, man. Like, really. Like, I know I tell you guys to fade me most of the time, but this time, just use common sense. Just use common sense. Do you really think that Big Brother isn't in control of Little Brother's outcome here? There's just no way. And so 200, 210 call spread, $5. There you go. So no takers at $5. Let's try five. I don't know, whatever. 505 maybe? Yeah, we'll do 504. That should get filled. 504. All right, so we got filled. There's a little Palantir action for you. I'm excited about a little brother action tonight. Let's see. Oh, Peter Polishek says, good call. Nice call on those Niners. No, you mean my Niners, not those Niners. They're my Niners. And so, yeah, I mean, they're just juggernaut, man. I've been telling you guys from the beginning. So Grumpy Mike says 1983. Now it's 1984 for Palantir, of course. Sergio, Dr. Jim Tom, I need a good winner, Doc. I've given you a couple to fade. And so you do with that information what you will, but you know what to do, my friend. I know you've been around long enough to know exactly how to handle that information. And so let's see. That doesn't seem right. I'm pretty sure it's March. What doesn't seem right? Oh, it's something from earlier. Oh, you're talking about the leap in Starbucks, I think. Possibly. And yes, you could be right, or it could be something else completely. Oh, then Sam L says Palantir's tonight. Time to test if the fade doc strategy can outsmart actual AI. Let's see who's the real machine learning expert here. I mean, I'm playing to the upside, and again, I'm just doing that because I'm just applying common sense to the situation at hand, right? And again, if you don't want to do that, then don't do that. But I'm just saying, when you think about Big Brother, you think about Little Brother. It seems pretty obvious to me. So let's see. Kimberly Thomas, what's going on? Dr. Jim is in the house. QOZ 3556. Let's short the bananas out of it. QOZ. Is that QOZ? That's not QO. Hold on. QOZ? No. QGC? I can't tell what the QOZ. Is that orange juice? That might be orange juice. Yeah, no orange juice on Tasty Trade there, Kimberly. I think that's orange juice. Micro orange juice, I think. So that's like the samples they give you at Costco. Yeah, I can't do anything with that, Kimberly. I think that's an O from what I can tell, but I'm not 100% sure. And so thank you so much for being here, though, my friend. I appreciate you very much. Let's see. Rand says, when someone figures out what we're trying to do, please write it in the comments. I agree. Please do, my friend. Danish Dynamite says he's super bearish on Palantir. You're just not paying attention, man. You're just not paying attention, which is not good because they're watching you. They're paying attention to you, so you need to fight back. Fight back indeed. Samuel Doc rocking that freshly ironed shirt. It's definitely not freshly ironed, but I appreciate you. Looking sharper than a 0 DTE gamma squeeze. Man, I guess someone found time between trades and pre-workout scoops to battle the wrinkles. No, this is actually, the shirt is just made this way, and the stripes give it kind of like a it's kind of misleading. Trust me, it's quite wrinkled. And so the fact that it comes off as any kind of semblance of straight is welcomed, of course. Let's see. Where are we at? Soul Train is in the house. Let's see. Oh, wait. I scrolled down a little bit too much. Where am I at? There we go. Let's see. Tyron McDaniel's in the house. What's going on? I agree that killed TT. Not sure what that's in reference to. Let's see. There's Joel James. Kimberly says trade each product on its own merit. I agree with that 1,000,000%. Data Trader says, I feel like Jim needs a Ford Fiesta. I've got my eye on one of those too, just in case the Infinity falls apart. Or falls through, I should say. Let's see. Soul Train says, for QOZ. Are we talking about orange juice? The data says November is an up month. Are we talking about orange juice? Like, I'm not sure. I think OZ is orange juice, though. Dr. Jim caved and went with the cargo e-bike. That's what Scramble Everything says. And then Soul Train says, yeah, buy an e-bike or scooter. Easy 10 says, now that's an in-law. I agree, man. He's an unbelievable guy. And this is good. Daniel Perkins, HK, I see you. I appreciate you. Dr. Jim says, if it's free, it's for me. That's right. I mean, Tony likes to say, you can't afford free. I'm like, I can afford it. In fact, I'll stand in line for it. I'm waiting for it. Like, I'm your guy, man. You got something you're looking to give away? Check with me first. Like, you think that goes in the trash? Bring it over here. Let's have a little look at what you're trying to get rid of. And so, yeah, I'm your guy 100%. And so let's see. Archer Fire says, how about your Seattle Seahawks, Dr. Jim? Nah, man. No, I'm not a Seahawks guy. Now, how can I be a Seahawks guy if I'm a Niners guy? Like, you can't be a Niners guy and a Seahawks guy. Plus, you only get one team. This is very simple stuff, guys. You get one team. You can't be bouncing around. You can't be picking a new team each week. You get one team, and you stay with them to the end, just like I've done with my 49ers. And so, but thank you there, Archer Fire. I appreciate you. Oh, man, I'm out of time. I got to go. I got to be done. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's going on, everybody? Markets are hanging right near all-time highs. They're not that far away, and in fact, they're trying to fight for the 9th Monday in a row to the positive side, so we'll talk about that. Amazon did a big deal, another one of these deals. It feels like every day we come in, there's a new deal centering around AI. We'll talk about what Amazon did. And then speaking of deals, big deal in the consumer staple space. Of course, we'll talk about that and talk about why the stock is possibly not doing as well as you would imagine. So we'll talk about those three things and more. I have some positions to manage as usual. You guys can help me out with that. We'll look through it. And we're going to see if the markets can actually pull out another positive Monday for the win. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. And I'm your host, Jamal Chandler. I hope you all had a great weekend. I had a phenomenal weekend. Halloween, pretty chill. Went to a party. I was at my kids' football game yesterday. We are still in the hunt. We won our playoff game. It's win or go home time, folks. And that means we got to win. We won yesterday, convincing fashion. Started out a little slow. We got a safety early on because we didn't score. We were right at the goal line. Referees didn't give it to us. I'm telling you, they were against us. You could tell. At least two of them were. We didn't score, but we ended up getting a safety on them. And then that was halftime. 2-0 went to halftime. It was crazy. And finally, we started to pull away. Some nice plays from our offense. Defense held it down. Another shutout. This team has only given up on average about 2 points a game. We've had like 5 shutouts. I think 5, maybe even 6. We have 5 for sure. Been a good squad. My kid did get another sack today. He's had a sack in just about every game this year except for one. I'm proud of him. Great job. He got a little banged up yesterday, but I think he's going to be all right. He hurt his hand, but I think he's going to be okay. It's nothing serious. I mean, it could be worse, but knock on wood, he's doing all right. He's doing well. So, yeah, we got another game this weekend. I'll let you know what the deal is when I find out the deal, but we're looking forward to it. Let's pull up some slides. Let's talk about what we got going on here in markets. Markets are kind of heavy today. They do feel heavy. We were up 30. Well, we were up 20 when we came in. We ended up being up 30 on that Amazon news pre-market. And then we've kind of done nothing but sort of fade and waver since then. We're not near highs. But when I opened the show, as I said, we're still near all-time highs, basically. 69.52 essentially is what the all-time high is in futures. And the S&P 500 had its 6th monthly gain. A lot of changes also happened over the weekend, by the way. I mean, we're in a new month now. We're in November. October's gone. We only got 2 trading months left in the year, folks. Can you believe it? 6 months in a row, the S&P 500 has been up. 6 months in a row, NASDAQ has been up. 7 months in a row, NASDAQ has been up. 6 months in a row for the Dow. It's been a banner year to some degrees for stocks. They've been strong. Despite all of the tariff news, which was the weaker thing in the earlier year, some of the geopolitical stuff, markets still continue to be positive. Now, they're not positive to the tune of 30, 40%, but they're still positive, and they've been strong. And we're not even going to talk about the individual names. Those have arguably been stronger. So it's been a fascinating, strong year for markets. And like I said, just as another thing to pay attention to, we've been up for 8 straight Mondays. I just find that funny for no other reason. It's not really anything I would trade off of. Although I did trade off of it just to make it happen. I did buy a SPX 0 DTE call spread earlier in the morning, losing on it now, which is fine. Maybe I'm the one who stopped the other trend, which is the fact that the markets have been, S&P 500 has been up 1% on Mondays for the last 3 weeks. If it did it today, barring some late day move, I don't think it's going to happen for 4. It is what it is. Amazon came out with a deal earlier this morning. You saw the stock absolutely take off. Apparently, they are providing OpenAI with Nvidia chips to use on their cloud or something like that. I can't keep track of what the hell these deals mean. It doesn't matter. Just say a deal. Just say insert blank check and insert the amount of billions and add OpenAI on it, and you got yourself a stock rally is essentially what's going to happen on all these deals. We've heard about deals from AMD and Oracle, and they all kind of include OpenAI in some way, shape, or form. That is the biggest thing going on in the market, folks. And I don't know when it slows down, but it clearly provides a bid for any stock who mentions it. Amazon with a huge move today. I haven't even looked at the vol in there. I'm not sure if it went up. Surprisingly, it did not. I thought it would have shot up a little bit, but it didn't. Because otherwise, I might have thought about doing some type of strangle in there, but nah, I'm stay away. I think it's been tough on some of these strangles and a lot of these tech names. I mean, it works for a little bit, but the vol kind of stays bid. It doesn't really come in. Similar situation I just had with Oracle. I mean, that was one of the ones that mentioned deal, obviously, and I was short the Nove. I literally just closed it a little while ago because it's really not coming in that much, and I'm short the Nove. I'm not going to roll it to D's because I don't want to be short D's. I'm short the Nove where theoretically, there's no events happening, but yet, and still, it's almost dangerous to hold on to these. Like Micron. I mean, I'm short strangle in Micron. I really haven't seen a whole lot of news. I mean, it wasn't on this news with Nvidia and Amazon, but yet Micron is up big today. It's tough when these names, the volatility stays bid, and then they also kind of move around. It's getting tough to have strangles in some of these names, so I might have to start backing off. Micron, I got a situation I might have to deal with today when we get to the platform. Finally, another deal. You talk about deals in this market. Kimberly-Clark decided to go out and buy Tylenol. Obviously, the Tylenol maker, Kenvue. Now, obviously, Kenvue has been down. The stock has been rocked, mostly from a lot of the talk of the harm that potentially Tylenol does, which, honestly, as a former chemist, I mean, I've looked into the chemicals. I don't see that, but, that's another story. Look, I don't mind banter. I don't mind saying things, but it's got to be real. The science has got to add up. Show me the science, but I haven't seen it. Nevertheless, Kimberly-Clark took this as an opportunity to get something on the cheap. They decided to buy Kenvue for $49 billion, which I didn't know it was worth that much, but okay. You remember this thing was spun off from Johnson & Johnson, and so now you got, they buy it for $49 billion. Obviously, look, I don't know if you've looked at Kimberly-Clark, but anytime you look at a buyout, you need to look at how much the acquiring company is and how much they're paying for it. And honestly, they're kind of punching above their weight a little bit. Kimberly-Clark is like a $34 billion company. This is a $49 billion deal, which means they had to do debt or some part of stock and cash. And that's why Kimberly-Clark is down pretty big today. Stock's down like 15%. I know some people have been looking at doing short puts in there. I've already got a couple of short puts and a few dogs here. CarMax is one of them, KMX. I got Fiserv from that big move on earnings downside. So I haven't done anything in here in Kimberly-Clark because I'm a little worried that it might have another day of falling. Sometimes when you see a stock fall like this, there's another day of selling. I've seen it in Fiserv, that's for sure. So I'm going to hold off for now. I am not going to do anything in here, but I'm keeping an eye on it. A lot of these consumer staple names have really gotten rocked, and this one is getting rocked even more because of the deal. So keep an eye on that. But now, guess what? You got Tylenol, Kleenex, and Band-Aids all under one roof. So you can blow your nose, you can take some Tylenol for whatever headache or something you got going on, any pain relief, and then you can put some Band-Aids on your cuts. Leftovers. How does sick day culture vary around the world? Let's move to the next slide. This is the share of respondents in selected countries who said they had not taken a sick leave day in 12 months. 50% of them said that in Korea. 50%. Hard workers. I mean, but there is this thing too, like, it's not just, see, that's the other thing about culture, right? In the US, the idea is like, look, if you're sick, stay home. Right? Like, that's how we feel. Nobody wants your germs You know what I'm saying? Like, I don't want that. If you're sick, just stay home. It's no big deal. It's fine. Korea, they say no. Come to work, wear a mask, essentially, is what's going on. Japan, 40%. Asian countries, they don't play that, man. They are going to work. 38% France. I wouldn't have thought that. France and Spain, 38%, both of them. I mean, no shade. I'm just, I'm surprised. Both of them. Italy, 25%. There we go. Yeah, right. UK, 25%. I'm a little surprised by that, honestly. US, 25% of the people. Sweden, 23% of the people. 22% in Finland. Germany, another surprise that 19% had not taken a sick leave. Interesting. And then Australia, 15%. 15%. I would have thought more Germans would have gone, but I guess not. It is what it is. Let's move to the next slide. Here's volatility snapshot. Last 4 weeks. We are the blue line, or the one with the red arrow pointing at it, or if you're colorblind, I don't know if you can see any of these, but we're the blue line. This is the last 4 Fridays, if you will. Contango currently, Contango the week before, and 2 weeks prior. Of course, we were in a little bit of backwardation on that one Friday with a little bit of sell-off. And the week before was a little funky curve before that. So things have calmed down some. We were watching volatility this morning. If you heard me and Tony on the live show, we were talking about how it still had a little bit of a bid to it. And it did this morning to some degree. Then it kind of pulled back. It was 19 plus bid. It was like up at least a quarter, maybe 50 cents at one point in time. But it's still hanging around. The futures I'm talking about when I talk about VIX. VIX future, front month future, the X contract, which is November, is 18.95 bid. So it's hanging around that 18 to 19 level, which usually means a little bit more moves, maybe 1% in either direction. I mean, again, VIX 16 is 1% in either direction. The actual VIX index is 17. Surprisingly, we haven't got that much of a move. And so if you're surprised about these 1% moves, in SPX, like I said, prior to top of the show, the last 4 Mondays, I mean, I'm not that surprised. Again, that's one direction, but a VIX of 17 is implying essentially moves in a little over 1% in either direction for the next 30 days. And we've had some movements, honestly. But again, back in Contango here, if you can see. Let's move to the next slide. Bitcoin and Ether are kind of struggling to some degree. Now, they're still up year to date, but it's been somewhat of a grind, and you can just see Bitcoin hanging around this 107, honestly, 108 to 110 level. It's hanging in that area right now and hasn't really been able to budge more recently. It's really struggled since the start of October, which was supposed to be Uptober, right? It did not quite materialize that way. Let's move to the next slide. I still have my IBIT zebra on. I mean, it's out in Dece. I'm just going to hold on to it. I'm not doing anything different. Same thing with ETH A. Skew did take a hit, and I think this was mostly because, well, we just had a big event. Even though I would say, there was no volatility really expected. If you remember last week, and I was talking about the SPX futures curve, right? And for Wednesday, obviously, we had the Fed meeting. And so typically you expect some volatility bump ahead of that because, again, on average on those Fed meetings this year, we moved 1.6% in either direction. And it was pricing in less than a 1% move. I mean, I think we moved more than 1%, but it wasn't violent in any way. It was kind of quiet. I think a lot of people were sort of building up some hedges heading into that event, and that's why Skew was kind of going up heading into it. Well, it's obviously fallen since then. Skew has come down, which means downside is not quite as big as it was, but equities, you would imagine SPX still has a little more bid to the downside than upside, but it's coming. Let's move to the last slide. So, of course, we got Palantir earnings today. We got HIM's earnings today. Curious what you guys are doing in those. FANG, not like the FANG, but FANG earnings. We got GT earnings, Clorox, Shop, Uber, Spot earnings, Quad U. Hut has earnings, Pfizer has earnings, and BP has earnings, and that's just to name a few. We do get ADP private payrolls coming up on Wednesday. It's the only real look we're going to get at the jobs market. Supreme Court is supposed to hear oral arguments regarding the tariffs on Wednesday. So I think that could possibly, again, I think when all of that is done, that could create something, and maybe that's the bid that the market is holding on to when you talk about volatility. Maybe that's why we're seeing 19 in the VIX futures, because, well, I mean, if they say a certain thing on these oral arguments regarding tariffs, who knows? I mean, the market could really react strongly to that. If they say, you know, these tariffs are unconstitutional, right? Who knows? So stay tuned for that. It's about the only catalyst you got, because October non-farm payroll is not expected to happen on Friday. Number of S&P 500 stocks above the 50-day moving average is 44% of issues. Let's move to what's up, chat? How you guys doing? What's going on? You're in a put spread. Somebody is, what'd you say? You're in a put spread on Palantir. Okay. I feel you. You sold the put spread? Gotcha. Yeah, I know, right? I guess it's all relative about France, right? Why does France surprise you? Can't miss one of your 100 days of work? I mean, I know, right? I guess so. Everybody does seem to be bullish Palantir, right? It is kind of it's a fascinating thing. I don't blame you, honestly. I think I'm going to abstain from this one. I'm not doing anything in this one. I mean, normally I would do a calendar call spread in these situations. I just don't know if I can pull the trigger at these levels. I'm just going to sit and watch from the sideline. But you can, you know. Normally I would have probably done a decent nove in this one. I mean, it's maybe I wouldn't have. It's a little more than I want to do. If I was really strongly convicted, maybe I would. And if I was really strongly convicted and the 250 strike, but that seems like a stretch. Whoa, that seems like a stretch, honestly, for this thing to run at oh God, I hate when that happens. Let's see, buy these 250, sell Nova 250, $3.50. Yeah, I mean, I'm just gonna stay away from this one. I'm not that as interested. Hems is another one, just certainly not interested in this one. I don't know. I mean, it could go well. It could. And again, I say it could go well because I like playing earnings to the upside. So in my mind, I try to justify the type of move that it would have to make for me to benefit on doing one of those calendar call spreads. I talked about Micron. This is, again, huge move today, 5% move. This is one of the ones where I still left on a nove position, and so I'm kind of underwater here. This is I got to do something I don't necessarily want to do. This is 1380, this strangle is. I probably should just close it all together because this thing is just not working out well, but I'm not. 205, let's go 255. Let's do that. We're going to take that credit in. These are a little bit wider. Again, these are not the regular expiration, but I don't want to sell Dees. So I'm going to go with that, and I'm going to close this one. We're going to have to cross some markets here. I'm gathering. I got to pay a little bit to do this, but I get some credit back, which is nice. Let's just go 55. Let's just do it. Let's see what happens. Geez. That sucks when that happens. It's trades in pennies, right? No, not really. We'll have to go 60 cents. Ugh. All right, we move that out. 205, 250. A lot of times when we do something like this, we look at the chart and say, well, where could it go? I'm fine with 250. I'm fine with 205. And, that's this bracket right here. This really sucks. I probably shouldn't be short of strangle in here. But I want to get paid something in here. And so I'm going to try. We're going to do that for now. You typically don't want to pay to get more strangle on. Probably dumb, but, It's one of the higher things on the board right now, but it's high for a reason. And I will say this, I got a short leash on it from here on out. If the stock really starts to act a little bit too crazy without vol coming in, then I'm just going to move on. It's time to be done. I probably should have been done a while ago. This is the second time I actually had a strangle on in here, and it wasn't necessarily working out in my favor. Overall, it's not really that good of a day for the good guys here, honestly. It's, I got there's a lot of weird dispersion going on today. Have you noticed that? there's the things that have been down and getting beat up are getting beat up a little bit more. The energy names, the SMRs of the world, the MPs of the world, the RGTIs, Fiserv, which is a name that took a digger on earnings, is still down. IonQ is also in the same camp as RGTI. One of the things that I had counted on is that if there were going to be this many stocks down, the things that I was short upside a little bit in and vulnerable in, like a Micron, would be down too. I didn't expect on this type of day, so that kind of hurt me a little bit. Nat Gas is a short strangle that I just put on again late last week, and I tell you, Nat Gas is running here. I'm going to keep an eye on this. I think if it gets to 470, I might have to close, reevaluate, or something, do something a little bit different. But it has been on the move, so we'll see. Let's see. Maybe I will sort of dabble here and this Palantir. I mean, it seems like the stock's a little extended, but what's not extended these days? To be honest with you, I mean, I can't. I could calendarize this thing in the near term, maybe. No, these are a little high. 80 vol. I think it's best to just own the D's. This vol is kind of high, though, not going to lie. It really is. It really does make you wonder. Let's see what a strangle looks. Not that I'm going to trade a strangle on earnings. There's no way I would do that. I just don't like that risk to reward. But, I mean, this is actually a pretty good strangle. This is something that I might do come tomorrow. If it doesn't move a whole lot, I might come in and just sell a strangle in here tomorrow. That will probably be the play for me. For now, I mean, maybe we will do the 230 strike. Stock is expected to do a 10% move, so we'll play along and see. 470, guys, this is really not that cheap, but I guess it shouldn't be for stock that's expected to move this much. Wow, immediate fill there. That's a little bit more expensive than I usually like to do on a calendar call, but we'll play along. Let's see. I know Uber is another one that has earnings. I don't know. I don't always love doing it when the stock is already making a move ahead of it. This feels like an earnings move, honestly, already. What is the expected move? I mean, yeah, look at that. It's $6.89. It's already doing half of the move, right? Yeah, I don't love that. Shopify is another one that actually has quite a bit of it can pop on earnings, but it's already at highs. So I'm not going to touch it. I think that's it for earnings for me. I'm not doing anything else. But the ones to watch, I think, are going to be Palantir, going to be HIMS. It's going to be Shopify and Uber and probably Spotify. Spotify, I mean, that thing is, people talk about Netflix. This thing is priced pretty high. I guess this would be one. Let's see. This could be one where I would normally maybe get a little interested in upside. 700 strike, is it possible? $4 and change. We'll try 440. Let's see what that does. Maybe they have a good quarter. Maybe they do. The reason why I like this one more is because the stock has dipped a little bit. And if it were to go back to just this area right here, we're doing well. And that's not crazy of a move for the stock coming up because, again, it's a potential $60 move. That gets us to 700 very easy. So I don't mind doing that one. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, trade them often. See ya.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Hey everybody, got an early start today. Give us a little more wiggle room to talk about charts. Name is Tim Knight, and we are into November now, obviously. Government still shut down. Precious little data to go on, and earnings season largely dried up, although here and there, like Palantir this afternoon, AMD tomorrow afternoon, there's still some cool stuff coming out, bits and pieces. The day is fairly red in my own portfolio. I've got 24 different short positions, and just about all of them are down. A couple of defiant ones, but not too bad. And that is especially good because the ES and incur are both green. So they are going down in spite of the market overall still going up. AI still rules the roost, of course. Nvidia, I noticed, is another lifetime high, easily over the $5 trillion mark now. And Earth's equity markets completely depend upon Nvidia now. Period. That's just the way it is. So let's look through some charts at a non-frenetic pace and see what's cooking. We begin with a spider. You know our old friend the wedge here. And the wedge broke way back when? Back on September 24, and we're much higher now than we were then, even though we've been below the broken trend line this whole time, because it's a sharply ascending trend line. Just because it breaks the trend line doesn't mean it goes down. It just means it's below it. We have spent the past 6 days or so in a very tight range here, going really nowhere of note. The past 3 days in a row, we have opened strong and closed weak. There's just not a lot of incentive to push it to even more maniacal levels than it already is at. So really no change. We're just kind of hanging out. There's a little bit of news in small cap land. Here's the IWM. And Friday, for the first time, we, on an intraday basis, broke the trend line. And today, we are probably going to close below the trend line for the first time since April 7's anchor point. And it's a little annoying because early today we had a nice whoosh down, and as has been the case recently, it just gets bid back up again. That trend line is being fiercely defended because the world economy, the political scene depend on a lofty stock market more than any time in U.S. history. So there's a lot of people who really need this thing to stay up. The diamonds have been pretty weak. We're down on these about 0.5%. As you can see, the peak was last week, and day to day, lower high, lower high, lower high. And perhaps we could well break this level here, which would be a minor bearish event because that was the last important breakout that we had. But it's a pretty bifurcated market right now. Like at this particular moment, RTY and YM, both red, NQ and ES, both green. And it's the narrowest market in history. It's all dependent on a tiny handful of stocks. I read that Nvidia all by itself, just one stock, if it were a stock exchange, would be the 6th largest stock exchange on the planet. Just one stock. So we live in strange times. Bonds have been weak for a while. There was a lot of excitement and anticipation leading up to Powell's event. This was the classic buy the rumor, sell the news kind of news. He did exactly what everyone expected, but wasn't quite as expected as when he said December is not a lock in terms of another rate cut. And so that was disappointing to folks. And so bonds have been sinking and interest rates have been rising. And this is the level to watch on TLT because that's the last meaningful breakout we had. So we broke out, fell, tested it successfully, ascended higher. Now we're weakening again. Should it break below that orange level, that would be not good for the bulls. That would really affirm that that we have a failed bullish breakout on our hands. Because interest rates are rising, home builders are not too thrilled with this. And they actually peaked weeks ago, way back, actually 2 whole months ago. September 5th, this was the top of home builders. And it has slid pretty hard since then, as you can see, in a series of waves we've been moving lower. So home builders, quite weak for the past couple of months. Now, as far as I made mention of the 24 different short positions I had, and some of you write talking about, how is that set up? These are just simple equity shorts. There's no option strategy. There's no options at all for my portfolio. It's just simple equity shorts. Here's a few that caught my eye today, wanted to share amongst those 24. One is an AST Space Mobile, ASTS. And this has been going well. We've got a drop today in the double digits, about a 10.5% drop. This is a very richly valued company. It had been ascending mightily off of this beautiful rounded bottom, but that has pooped out. And we're starting to give away some of that strength. In fact, you can see here that the peak on this was in the triple digits, and we've already shorn off a good 30% in a very short amount of time. So I'm just tightening up stops along the way as these sink. GM, less dramatic, but still down, 1.38%. There was the tippity top on that one. Reddit, RDDT, this one, I kind of highlighted this one on Friday because I had come into the day short. It opened very strong, blasted higher, stopped me out here, stopped me out where that line is, and then it started to sink again. So I re-shorted it, which normally isn't a very wise idea to get back into a losing position, but it's worked out so far already. It closed with a nice profit on Friday, and it's augmenting that profit some today. So there's Reddit, RDDT, not a beautiful pattern. There's a lot of very good looking patterns. This is not one of them, but yeah, come on, there's 24. They're not all going to be winners. What else? Intel, INTC. Even though semiconductors continue to be strong, Intel, as you can see here, this is the 4th red day in a row. Red, only by that I mean the candle. A red candle doesn't necessarily mean it's a net down day. It simply means the closing price is lower than the open. But it does belie the weakness in the instrument. And so sticking with Intel there, you can see the this had broken down from this topping pattern, this distribution top, and it took a very long time, almost measured in years, to recover. But once we pushed back up to this zone, it started to re-weaken. And unlike, say, Nvidia, this is a company very much supported by government largesse, a lot of handouts, loans, bailouts, whatever they need. Now here's sort of an odd one. Now I usually like shorting stuff with, PE of 500 or never had earnings and just crazily overvalued. I was really holding off on this one. This is just plain old Kraft Heinz. Mustard, mayonnaise, pickles. This is not Nvidia. This is not Tesla. They make condiments. But I kind of couldn't help myself because it's such an amazing top. And so last week I finally gave in to my charting instincts and shorted it, and it's doing okay. We're down today over 2%, and as I said, it's a wonderful top. And this just shows don't overthink things. I mean, I'm not going to sit around and cogitate on like the demand for mustard. I'd rather just look at the big top and base it on that. So Kraft Heinz, of all things, doing well. Kind of a more traditional short for me is the likes of Roblox, which I don't know if they've ever had earnings or what, but they are very richly valued based on their fundamentals for sure. Their lifetime high was way back here. And this peaked at around 150 or so. And now we're banging around about a third less than that. But more particularly, we've had 3 really good down days here. I forgot when I shorted this. It was certainly more than a week ago, but somewhere up here, I forget exactly when, above that yellow line, definitely, because the big win was when it gapped down like so, and we had a nice plunge on Thursday. It opened stronger on Friday, but sank and closed with almost no gain. And then today we're getting another nice tumble, so over 6% drop there. So I'm just hanging on to Roblox, RBLX, as another good short. And one more, just for good measure, SMTC, Simtech. And let's back way out on this one. There's Simtech going back to the mid-90s. And this is just a mess, as you can see. It's been all over the place. But more recently, and let's just draw a couple of things since we have the luxury of time. Like so in this instance, this had the makings of a really powerful long-term bullish move because we had this long basing period. It broke out, fell, tested it successfully, resumed, hit another lifetime high, then it just fell to pieces. Bang, 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 deep down in the pattern. It invalidated the pattern pretty much here when it started to pierce below this successful retracement. So down it went, and then it recovered, but the damage was definitely done. The pattern didn't matter anymore. It was really more range bound at this point. So I went ahead and shorted this one when it closed this gap. And again, nothing dramatic, but it's easing its way lower like so. And what's nice about these is that it's got a nice, clean, kind of obvious stop loss. So that's worked out also. So that's not all 24, obviously. It's just a little sampling of them. Now, as far as crypto goes, as strong as equities have been, and just assets in general, Bitcoin ain't doing so great. Bitcoin is roughly the same price now as it was a year ago, or certainly 11 months ago. You know, you can go back to December of last year and find a price identical to what we're trading at right now. We've had lifetime highs this year. It wasn't that long when we were around like an eighth of $1 million, and it's about $17,000 below that now. It just can't seem to, the mojo's gone. So here we are right now. And if you just take your time machine back almost a year, doing the same thing. Added to which, if you look back here, there was a tremendous amount of strength. Look at these sweeping ascents like so. Not anymore. This powerful move higher has now morphed into this sort of ambling, rambling, directionless, trendless nothing. And a lot of this good stuff was, of course, driven by the new administration, the promise of the very crypto-friendly administration, a Bitcoin National Reserve, David Sachs, basically all the good news you could possibly have in the federal government if you're a crypto bro. Well, that's kind of burned now. I mean, all the excitement and verve of that is past. I mean, what else are they going to say? So it's just flopping around like a fish on a bass boat at this point. And so having said that, if you look at, say, Michael Saylor's company Strategy, formerly MicroStrategy, hence MSTR, it stinks. So MSTR is basically a large Bitcoin reserve. He has changed the company from essentially a software company to a giant Bitcoin treasury. And even though Bitcoin isn't that far below its lifetime highs, MicroStrategy definitely is. MicroStrategy is worth around half of what it was when it peaked back here last November. So negative 50% on that. And the extraordinary thing is that even though the number, like when I started, I used to work at Montgomery Securities in the early 1990s, and there's about 8,200 common stocks listed in the US. These days, I think it's like 4,000, maybe 3,500. There's a huge shrinkage of how many public companies there are, even though the economy is many, many trillions of dollars larger. being public got all less attractive after Sarbanes-Oxley, and what's come to replace it? ETFs. ETFs of every stripe. I think there's more ETFs than stocks now, if I'm not mistaken, and they're more leveraged ETFs than any time in history. There used to be just a handful. Now there's like, I think, 700 leveraged ETFs. One of them is about strategy. They came out with a ultra bullish ETF based on strategy. And how is that done? Well, worse than negative 50%. This is MSTU, and it has its own peak right here. So instead of it being down about 50%, it's down about 91%. And to the naive buyer, which I know you're not, but there are those out there who basically would be presented with, strategy is the biggest Bitcoin treasury out there. And if you think its prospects are good, how about really double down and get MSTU, which is the super bullish one, leverage bullish. And what a surprise to turn around and see it negative 91% from its peak. So yeah, these leverage funds, they can just chew that capital right up. It's just the nature of the arithmetic behind it. So yeah, that's an eye popper. Unrelated to strategy is this beauty. I mentioned this last week just by ticker, but I didn't have the chart up. This is DeFi Development, DFDV. And as a chartist, I love this one because it is one of the prettiest right triangle patterns I've ever seen. Just squeaky clean. Yeah, I mean, don't have to explain it. There's the baseline and the descending trend line, and look at what's happened. After this cracked, bang, 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 down today alone, almost 14%. So yeah, as I said, I didn't bother showing the chart last week. I just uttered the ticker symbol in passing just because it struck me as a really cool looking chart. And I'd say it's probably got a lot farther to go. It may have a bounce back, it may rally back, but the resistance is very strong at that base. So cool stuff. Gold is not being very thrilling right now. GLD is up 0.22%, and it's trying to right itself. I would say very strong resistance is represented by that price gap. And I am, again, gritting my teeth and stopping myself from buying palladium until it hopefully reaches what I would consider a good price, which, as I've said, will be around about 115 or so. So no precious metals positions in any way, shape, or form. The short idea I had about a week ago in XME is still good. That's the mining ETF. And what I think I introduced the idea when it broke the trend line here, back on the 22nd. And it did rally a little after that, but since then it's sunk. But that is a clearly broken trend line for XME. The only earnings of note this afternoon that I know of is Palantir, PLTR, lifetime high right now. Bear though I may be, I would not go near this one with a 10-foot pole because it's extremely powerful. So I'll just be watching at a safe distance. And good luck to any of those out there playing this one. But this has just been a beast and a bear killer for a very long time. Well, you know what? I think that's a good place to end. We got an early start. We'll close on time, and I will see you here tomorrow. Thanks for coming by.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back. It's so good to see you again. How was your afternoon?
Busy. Actually, not really. Good. No, it's been kind of a quiet market. I really don't feel like.
I was wondering what you were so busy about in the market. Even the S&Ps are up $6.25 after selling off a little bit when we were on the show earlier this morning. They've come back to rally. They never made a new high or anything like that. They're up around 10, 15 handles at the most this afternoon. NASDAQ up 82, Russell down 16, and the Dow down 255. Those two have been down most of the day, if not all of the day, with even the S&Ps and NASDAQ higher. Volatility hanging in there, 1905. It's mid-range after making its highs 1968 this morning. When I thought we would get a little bit more follow-through, I thought volatility was really pointing us in that direction. And then it slowly sold off, and we've kind of slowly gone nowhere from there. Kind of a rudderless ship today, really. Bonds down 6 to 117 and change. Bitcoin, not a rudderless ship. It's been down. It's been down most of the day. It's been hanging lower than this. It got down under 106. It's 107.3. Ethereum, really the culprit to the downside, down twice as much, almost $300 to 617 or so, down just about $300, or a 7.5% move. Oil, hopefully you got out earlier this morning, was making its highs. It's trading up 3 cents right now, 61.01. Gold up $26. It too has been doing nothing really today, just kind of going sideways. Silver down small, just about 10 cents. Corn, wheat, and soybeans are all up. Soybeans up significantly from this morning. Big move there in the commodities. Taking a look at the high option volume list here. On the downside, you have Netflix down $20. A coin, which has been weak all day long, down 10. It did catch itself a little bit of a rally earlier when Bitcoin caught a little bit of a rally, but it promptly sold off. UNH has been weak all day long, off of its lows by about $6, but still down around 8. Meta, after catching a bid, went up to almost 660. It's back near 640, trading near its lows. OKLO, a lot of these fringe stocks, OKLO, Roblox, all getting hurt today. AVGO down 6 and change. A big move in RGTI. For those looking at that stock, Nick and I looked at it for a brief moment about 2 weeks ago. It has earnings coming on the 10th. In a moment or so, which is really just about 25 minutes or so, you'll have HIMS after the close. It's down 98 cents right now, a stock that's been kind of depressed with the market being at highs. And then the opposite of that is PLTR, which has been trading higher and continues to make new highs, up 3% today. Decent IV rank of 35 and a lot of call skew. I'd like to talk about that after I get your comments on the day. You got Spotify and Uber. I don't know if you have positions in those. Yum Brands, BP, a couple of others too. Not the major movers that we normally, except for PLTR, I think.
Yeah, it's been probably easily the one of the quieter days, maybe the quietest and most boring day that we've had in the better part of a month for sure. And I think you can only attribute it to a new month, sort of rotation starting, things changing a little bit. If you look at a heat map today, you'll see that there's a lot of red and a lot of green, and I think there's a lot of rotation going on here. Rotation into what? I'm not exactly sure. I mean, it's hard to say. I mean, you could almost take looking at our four main indices, S&P, NASDAQ, Russell, and Dow, and say, okay, people are rotating out of the consumer staples type names and the Dow type names, and then to a little bit of the tech. I don't necessarily know, but there's definitely some sort of rotation.
Not really aggressive though, right? I mean,
yeah, no, it's not aggressive. No,
the moves have been by appointment. It seems like.
Yeah, exactly.
I actually thought we were going to get a lot weaker today than we did. I thought you had you want to play the window dressing game for the end of the month, on Friday. You want to say we get a little bit of weakness going into the first of the month here. That's what I was kind of playing for. And I think volatility last couple of days can make no excuse for it. Volatility is bid. So maybe the lows in volatility are in. Doesn't mean that the market highs are in necessarily, but it certainly seems like volatility. So I made a little trade in PLTR. Would you like to hear it?
Yeah, sure.
All right, awesome. So in PLTR, it in the beginning of the year, it was one of my stock picks on when they asked, what stock are you going to pick for the year? And I took a shot with PLTR, got a lot of flack for it. I don't really know what they do. I don't really know if they're good or bad. A lot of people talk about their products being horrible, but I've got an omnidirectional trade here for you in a 4-day time frame. What I'm doing here is I'm looking at the expected move, which is around $20 over the next 4 days or so. Now, remember, this is not going to be, you're going to have a little bit of time to do something against this, not a lot. It's not going to go to full value right away unless you get a move in the direction you need. But let me tell you what I did here. I thought a $7.50 embedded call spread was the way to go here. I bought one of the 225 calls and I sold two of the 232.5 calls. That's right at that line there. That's that expected move. I did it for 85 cents. The stock just rallied about 30 cents. You might be able to do it for 4, 5, or 6 cents. Now, maybe even more than that, better. A lot of call skew here. When I talk about call skew, what I mean is, let's just say the stock gets mid-price around, 206.5, maybe 207. So we'll go $10 higher from 207.5 up to 217.5. And you look there, the calls are around $6.10, $6.15. You go from 207 down to $10 lower than that, and you're looking at, let's see, $10 lower. You're looking at, let's see, what I do, 207 to 217.5. And 207 to 190. Oh, there is no call skew. Wow, did they take this all out? Hold on a minute here. 25 delta is 225. That's 20 handles higher. 20 delta, 185. Wow,
it's really kind of weird. Yeah, upside is a little bit, come in a little bit, I think.
Yeah, upside has come in a little bit, and you can see here the spread is kind of. I did it 85 cents, just 97 cents a moment ago as the stock is rallying a little bit. But that's what I did, about a 90% pop. What am I hoping for? I mean, I guess I want a real small inside the expected move of under 20 handles for 4 days with 85% of that. You're looking at like $16, $17 for the day. I guess that's what I'm looking for, but I'm looking for more like $10 to the upside. I'm trying to take that $6 that the stock is up today and take advantage of that by being short some further out of the money calls. You got an embedded long call spread here, so you can make $7.50. It is a 4-day play. So you'll have a little bit of room to do something against it, but not a ton of room. The first thing I would do if something was going against me, like the stock was over 225 or heaven forbid over 240, which would be almost 2 times the expected move, I'd be looking to sell the 225 puts in the same month of November, or taking the whole spread from November and bringing it out to the 45-day time frame, maybe even December, if I had to, and bypass November to buy myself a little bit of time. That's my trade there. I didn't see anything in HIMS, although the IV.
Oh, hold on. Before you go to HIMS, I got some questions because I like the trade, and I'm just curious, and I think this helps people too because you do these ratio spreads on the regular. I'm curious, why'd you choose your 227.5 strike just because it's on that edge of the expected move? Like, why not? Like, not. I don't mean to say why not, but like, why not do? Not that this is better. I curiously just want to know.
Yeah.
Why not do 225 versus 235? It's a smaller credit.
You get such a small credit. Matter of fact, when I was looking at it, it was around 2, 3, 4, 8 cents credit, and you certainly could. And I prefer to go wider, the $10 wide versus the $7.50 wide. It just, in a position like this, if I get the move lower, because this is a trade that has a small amount of short delta, it's very similar to the trades that Nick likes to make when he does kind of a crab trade where it's an upside trade, wants the stock to go higher, but if it goes too high, you get short. As you can see here, my break even is over just about over 240 or right at around 240 and 90 cents or something like that, which is almost 2 times the expected move. That's that 12 delta option. So for me, it really came down to, for the risk I'm taking, which is really a buying power effect of $2,000, I make myself, $100 or something like that if the stock goes lower. If I go another $2.50 wide, I don't make anything to the downside. And I have to say to myself, okay, well, is $2.50 to the upside worth it to make nothing to the downside, knowing that I know no idea what direction the stock is going to go? So it's almost like having, I have no risk to the downside, but at least I could profit to the downside. Where the trade that you were looking at, which was the first trade I looked at, actually, Jamal, it gives me no profit to the downside. So I take a little bit off the top to try to make some money. The other side of the coin is if we go up by over 240, do you think it's going to be 241, 242, where I'm still going to have a losing trade on, but I'll be inside my tent there? Or are we going to go to 260? And it's not going to matter, the $2.50 extra one way or the other. So that was the way I looked at the overall trade. And the stock has been strong all day. It does move in 20-cent increments. So, you do have to be careful. Put the price in at your price. You can see down it's 88 cents already where the stock just moved 20 cents. It was just up 640, and now it's up 630 and change, and it's back down to 85 cents. So you got a little bit of blip in volatility there. It looks like they're taking it out now with only about 16 minutes to go before the end of the day. HIMS I looked at, the credits are a lot smaller, but the stock, same IV rank, but the stock is a lot smaller too, right? I mean, it's a 40 some odd dollar stock, $44 stock. It's down today, down to $1.20 and change, just about a $6 expected move over the last 4 days, but a completely different stock going sideways. I wanted to sell both sides in HIMS here. I was probably going to go to December. It looks like December has a 101% implied volatility. Obviously, the shorter dated options are going to have a higher implied volatility. But after earnings, I would expect this to go into the 90s or lower, as you can see here by the back month. So December has decent implied volatility. The markets weren't as great. They're much wider, actually, than they are in Palantir. So for that reason, I said, you know what? Doesn't look like a December trade for me into earnings. Maybe a post-earnings trade. Stock sells off a little bit, maybe looking at some naked puts or maybe a put spread or maybe even both sides where you do like a strangle with a little bit of long delta if you want to play a little bit of price reversion to the mean. But that's my story for my earnings. I'm not doing anything in NVTS, Spotify, Uber, although I don't think Shop. Shop has earnings also, SHOP. Nick has a position in there. Shop is unchanged, down 29 cents. His position has a little bit of delta to it. He's short the 150 put, 170 call. He's got that with 18 days to go. Didn't put it on too long ago. The 150, 170. If this was my position, I would probably be rolling up with it. Still got a $20 expected move. So, anything can happen here, but you're looking at 40 short deltas in here. I'd be looking to pick up 20 deltas. So if I was looking to pick up 20 deltas, I would probably bring this 150 put up to the 165s. And that would give me just about my 20 deltas or so that I was looking for. But put an email into him. I didn't get an answer. So, listen, when you check the box, it's your position. You know what I mean? God, here's what happens. This is what happens when you work with your son. If I was working with Tom, I just roll up the puts and I say, hey, listen, I made the call and that's the way it is.
Yeah.
But when you work with your son, it's like, why are you touching my position? I know what's going to happen. I wanted to lean a little bit short and shop. It's okay to have delta on in a position. You don't always have to be delta neutral, that kind of thing. So.
Not that he said that to you before.
Not that he said that to me before. No. But it is dynamic. It is. I actually leaned a little bit short in Palantir because I'm starting to feel a little bit short too in the overall market. And anytime this feeling this year has come over me, it's been absolutely wrong. So I kind of did it with a very kind of Johnny-ish type trade, like the 1/2 ratio spread that I did in Palantir.
I hear you. Yeah, it's been. I think your description was accurate. We're kind of like a rudderless ship. That's kind of how it's felt for most of this day. I mean, the most excitement I feel was this morning, prior to the market even opening, with Amazon moving higher and SPOOs being up 30, and we haven't seen anything like that since. So it's been fairly quiet and really not a whole lot to do.
Yeah, 850,000 Palantir options have traded so far today. That's a lofty amount for PLCR for sure.
Yeah, I would say so. That's quite a bit. I imagine Nvidia is one of the top as usual. I mean, again, another move, another day, another deal with these guys, Nvidia and OpenAI and Amazon. I mean, another day, another deal. It just, what other deal are we going to get tomorrow? It's like every day we come in, there's a deal, and it involves OpenAI and
when do the deals stop and we don't get, and Nvidia's on its lows. I mean, I know it's up $4 and change. It opened at 208 and promptly went to around 211. So 206 here, up $4 is still a huge move to the upside on top of the moves to the upside, but losing a little bit of the oomph here in the move itself.
We're in danger, Tony. We're in danger because, again, we've been up, forget the 1% on each Mondays. That's clearly not going to happen, but we've been positive for 8 Mondays in a row, and we're dangerous. We're in danger right now of going red on a Monday. Truth be told,
you're definitely not going to be positive in the Russell or the Dow. You're talking about the S&P.
The S&P 500, yeah. And truth be told, I mean, we have 4 red days in a row, slightly red, if you count what's going on right now. I think we need that. I think we need that near all-time highs, honestly.
Yeah, I think a good little capitulation, sideways action is nice for the market. You can see the E-mini S&Ps here trading 1.8 million cars. Not a lot of volume today. Even in the SPX, I think there's only 3.4 million SPX options. That's not a lot. Overall volume for the whole market will probably be under 70 million, which is about the average-ish. We got over 100 million when we set a record last month at 107 or 10 or something like that. Now we have 70 million today. So I think market's taking a little bit of a breather here. You got to be encouraged if you're a bull. Take a breather in the market. Lack of liquidity. Usually you can get the bears to move the market a little bit, especially at all-time highs kind of thing. And you don't really have that softness here today. You really have, as you said, kind of a rudderless ship.
Bitcoin's still kind of weak here too. You would I don't know if Bitcoin is leading the market or the market's leading Bitcoin, but again, we talked about how they've been correlated, and yet Bitcoin is obviously had a tough couple of weeks here, and the market has been positive, but again, a weak couple of days here. So you wonder where we're going from here, honestly, in the absence of any real news or anything coming out besides these few earnings, and the major ones are done.
Yeah, it was just a month ago. Bitcoin was making new all-time highs, right? In the the 125-ish area. Now here we are at 107. Volatility has actually collapsed, which is normal, I think, for a Bitcoin product to the downside. I don't know. Bitcoin looks real sick to me, which means a lot of these other stocks, the bit mining stocks are all, they all move together.
Oh yeah.
BMTR and stuff like that. They all move together. All coin has been soft all day today. I think coin is down double digits, right? Yeah, down $12.45. Coin traded up to 342. It's $10 lower than that to 311 and change. The low is around 325. So Bitcoin definitely moves around. Gold is one that's kind of still in play here, even with the IV rank coming down to 42 or so. Almost 14,000 gold options have traded today. That's triple the norm. So gold is still in play, but with volatility contracting, there might be some players getting out of that market. I closed a gold trade that I had on. I took $1.50 or $2 loss on it. I was down around $8 or $10. If I had done nothing with my position, I would have been up $2 or $3. So I hold the record still for world's worst commodity trader. Even when I'm right, I'm wrong. Matter of fact, if I would have stayed in the trade today, I'd only be down around 50 cents or a buck. I'm sure my son will tell me all about that tomorrow and what I could have, should have, would have done. Yes, it's about 70 cents to $1 lower than where I closed it. So I'm sure he'll have a lot to say tomorrow. He'll be on his high horse after being on the top of the front of the stage there in San Diego.
Yeah,
so.
you know he will. You know he will, and he's going to be annoyed at you. He's not going to be. He's going to be annoyed at you that you didn't change his trade, probably, even though you think he would be annoyed if you did it.
Well, we'll see. We'll see what happens for sure. You ever trade Carvana? This is a stock I don't trade that much, but it's had a wild move today, almost a 10% move, 9% move, up $27 on Carvana.
Interesting. It got rocked on earnings, but now it's back up, huh? Yeah, no, I haven't traded in a while, but I did see the earnings move, and I was a little surprised. I mean, this has been one of the high flyers more recently, and honestly, once I saw the last couple of days after earnings, I was like, oh, it might be a little bit over, but lo and behold, big bounce.
Yeah, BE is another stock that
I'm in that.
Hasn't had much of a downtick. It had just about 2 or 3 days, about a week and a half ago, where it kind of sold off, and it's one of the biggest movers to the upside today, up 8.5. Nick was able to get out of his BE position that he's had on for, I think, about 2 months after rolling, kind of getting his face ripped off. Implied volatility getting well over 100. It's down to 87. Volatility is still good in there. No options, though, are dollar wide. I mean, I think I got emails about it today, like what, can you do in here? And most of my answers were, listen, if you're not trading a defined risk trade, there's nothing to do here because this pricing is way too wide. You can't do anything with dollar wide markets and think that you're going to get a fair fill. You know what I mean? Like you can put something in at your price if you want to, but you're not gonna be able to get filled at mid price. I took a look at some of the volume and open interest in there, and the volume is actually really, really good. So I understand why people are sending the emails, thousands upon thousands. This is volume, not open interest. Of calls have traded. But if you look here, you notice there's really not that many puts trading. Now that doesn't give you any indication of what the stock is doing. But I will say, just from looking at these December options, you'll notice that there's 1,000 on this 100 line, and there's around 1,000 on this 200 line, and there's a whole bunch of sellers in between, and it looks like somebody's doing some sort of like because there's no other volume anywhere else, you know what I mean, like any large volume anywhere else. So it looks like somebody's doing some sort of like 1 by 3 by 1 or 1 by 4 by 1, using a little bit of different varied strikes, and that's why a lot of these people that use what do you call them? Not filters, but indicators where there's action on strikes are seeing this pop up in BE after having $11 expected move. It looks
well,
like,
as you say that, it looks like a butterfly on the 150, 155, 160 line, which I don't know why you would do something that tight, but maybe they know something. I don't know.
Yeah, when you're looking at it, you're going, 50, 55, 60, 40, 4,000, 8,000, 4,000.
Yeah.
Yep. And then a big wide one here, with the 100, 150, something else. I don't know what game you can play or derive from that, but that's just in Dees, by the way. That's 45 days out. I don't know what's going to happen 4 or 5 days out. Nevertheless, put a tight butterfly on with 45 days to go. I mean, you got a $50, the stock's $140, $143, and you got a $50 expected move in December. A $5 butterfly is going to trade for nothing. I mean,
I know,
relatively
right?
cheap shot. You know what I mean? Like, because, if you have such a wide expected move, all these butterflies trade cheap because we don't know we're going to be in this big wide range. If it had a very tight range, then all those butterflies would trade very expensive because it's expected to be right here and not expected to go anywhere else. But that's not the case in BE.
We need to do is we need to draw straws and see what name is going to announce a partnership with OpenAI tomorrow. That's what we really need to do. We were during Kai's piece this morning. We identified 2 that hadn't done deals yet, right? I forgot who it was. It wasn't Google. It wasn't Meta.
I believe one of them was IG Group Holdings out of the UK. I'm just saying every stock has a top after that. So I figured I would start that route. Why not? Right?
I love it.
Why not? Why not?
Yeah,
right?
why not? Why not? Could be true. Could be true.
Why not me?
I love it.
Palantir is rallying actually by about 30 cents, 650 and change. Ivy rank at 36 is down ever so slightly. Markets are getting a little bit wider. Not too much. No, that's still good there. Though. You probably could do the spread that I wanted to do, or I did do, for 85, probably 15 or 20 cents better than you did it. Does that make you feel bad when you put on a spread and then you can do it better a couple of minutes later?
Of course. I mean, that's why we always try to wait towards the end of the day to put these trades on, right? But you can't control what the stock does.
No, you can't. No, you can't. What's your take on Palantir?
I know what you're talking about when you say a lot of people talk about it. Like, I mean, they do a lot of work with a lot of different governments on data, right? And so I think that's why people kind of don't feel the way I used to feel like that gross about the stock, but whatever. I like trading it. It is what it is. I am playing a calendar call spread for no other reason than that's just kind of what I do with a lot of these tech names.
What spec? Did you say 220 or something? Is it?
I have the 230. Yeah, I have the 230. I just do it. I usually do them towards the upside of the expected move. Kind of same type of reason for you do. So, if it goes.
Yeah, we're thinking the same thing. I'm just hoping we don't get there tomorrow. You're hoping we get there tomorrow.
I'm hoping we get to that general vicinity and I can hold on further out, right? Like, so, it's fine. I think, it's one of those trades where we could actually both win.
Yes, absolutely. Palantir up 690, 705 on the close, catching a little bit of a bid here. We'll see what happens. It does, earnings do come out after the market closes. The market just closed. I would expect to see it in the next couple of minutes. We'll see what happens there. Even the S&Ps look like they're going to be up 10. NASDAQ is going to be up 100. The Dow is going to be down 250, and the Russell is going to be down 10. Volatility sold off a little bit, down 20 cents. Jamal, thank you so much for your time. I think you're going to be on Overtime next, right?
Yes, I will.
Hardest working man in show business. We'll be back in 90 seconds. Overtime next. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
And we are back. This is Overtime. I'm Ilya Spivak in San Francisco. That's Dylan Radigan in Milan, our returning champion with a very fancy sweater, Mr. Jamal Chandler in Chicago. Gentlemen, do we have anything here? I mean, what is this today? Were the markets open?
Jamal?
Easily one of the most boring day in well over a month. Quiet day, if you will. I mean, there's really not much to speak of. Markets seem to be calming down just a little bit over the last 4 days here. I mean, what can you say? Honestly, it's probably needed. It's probably what's best. But I have to walk back my comments about this is the greatest market alive because it has been up until today.
You're gonna abandon it after 1 day, Jamal? Come on.
It needs to keep going, Dylan. It needs to keep going for me to continue to call it that. Okay, this is not okay. It's not okay.
How many times do I have to say buy the dip?
Is this the dip to buy?
Yeah. Every dip is a dip that you buy.
So,
although this is not a dip, this is not a dip. This is
not a dip. Okay, so this doesn't count as a buyable dip.
Just a day off among friends. Just relax. Okay? Not every day can be a trip to Disneyland. Okay, sometimes the market opens, the market closes, prices they didn't change that much. Everybody can calm down.
So sometimes you just go to 7-Eleven and get a Slurpee instead of going to Disneyland that day?
Sometimes you get a Slurpee and calm down.
You don't get the hot dog, though. Listen, word to the wise.
I don't
think I've ever gotten a hot dog from 7-Eleven.
No. My college self reaches from the annals of time and says, don't do it.
I have to admit, I was once slipped an edible, and it did result in a hot dog at 7-Eleven.
I like where this is going.
It resulted in no more edibles and no more hot dogs at 7-Eleven.
The annals of time they call. I would point out, here we have the S&P 500, and there is the beginning of last week, which would be the glorious gap here and continued supernova-like situations. Then there was the Fed, and then there's everything else. So something happened right here, clearly, and I would argue it's the same thing that we were talking about at the beginning of last week. This idea that the markets were priced for perfection. They had three pillars that they were standing on. The first was that the tech earnings were going to be fine. The second was that the Fed was going to endorse their pricing for 2 more rate cuts, one in October, which obviously now we have, and another one in December, and that the Trump-Xi meeting was going to be fine because Bessent was already out there. He already said everything is cool. These two just need to rubber stamp it. The rubber stamping was commenced. No issue there. The tech earnings were, for the most part, fine. Meta obviously missed. Other than that, for the most part, okay. The Fed threw a grenade out there. And we can see it.
An unwelcome grenade, I might say.
An unwelcome grenade.
No,
where Powell came out and made a whole show.
Made a whole big show. No need for that, sir.
Big show. Came out there, pounded the podium, did the stuff.
Said a little hear ye, hear ye.
And what do we have to show for it? The market sells off the very next day and has been listless since.
I mean, listless since you speak as if it's some sort of epic sojourn, and yet really we speak only of a few days.
This is certainly the case. We have a sell-off in the wake of the Fed and then not follow through. So the markets are not, as it were, panicky or anything of the sort. They are, however, unsure of how to proceed next. And this is an interesting thing because today we actually get a little bit of economic data. It's not good as such. The ISM manufacturing index comes out, and it comes out weaker than expected. A contraction in manufacturing activity was expected. They got the contraction, but it was a faster contraction than expected. Not really great signs in the internals of that report. Employment on the manufacturing side shrinks again, albeit at a slightly slower rate. New orders fall, albeit at a slightly slower rate. Inflation cools, but is still very elevated relative to even recent history. Although, in fairness, since inflation peaked earlier this year in this survey, it's down a lot in terms of pace. It's still rising, but at a much slower rate. So, still high by historical standards, not nearly as high as it was earlier this year, rising, but slower. So, kind of a mixed bag. Market ultimately doesn't do anything with it, but when the numbers come out, you can see that right here. See if we can pull this up to a shorter term chart. Okay. So, it's not like we don't notice, but we also don't really go anywhere. So, it's an interesting sort of thing. The markets don't love these numbers, but ostensibly they also don't hate them, and we're in kind of a weird sort of no man's land still. And of course, we're still on shutdown. So maybe we'll get an NFP number at the end of the week. Maybe we won't. We'll get a service sector ISM number on Wednesday. We'll get consumer confidence from the University of Michigan on Friday. The earnings calendar is kind of slow, barring Palantir, which we'll get to as soon as it comes out here. Anything on this standstill, gentlemen, that gets you to think that there is a decision to be made?
Standstill in the government, or you just mean standstill markets?
Are we doing anything with this?
Not really. No. I mean, it's not interesting enough. We're just kind of watching. I mean, we're watching from the sidelines. The one thing is that we noticed from early this morning when Tony and I were on, the VIX futures contract, the November contract, was 1910 early this morning. It did sort of fade towards the end of the day here because basically nothing happened. And I mean, I think that's kind of your cue. Like, not much is going on. There's no reason to really force much of a trade, if you will. I mean, the really only thing is this weak earnings slate that's coming up right now. So it's and I say weak because, again, a lot of the big ones have gone. I mean, this is one of the last big-ish ones, but again, this is not a Mag 7 name. This is just one of their friends. I think the other big news is for today is, look, pick a name from the tech space. Pick a big name from the tech space and get out a blank check and write in however many billion you want and add OpenAI onto it. And that's been the theme for the better part of 2 weeks. Every day we come in, there's a new deal with something involving OpenAI and somewhat of billions of dollars. And today that was Amazon.
They're building quite an ecosystem here. Palantir I have on the screen. It had a little bit of a pop here, clearly, as it came out. Not really holding yet, but we'll see. It's early yet. Results were a little bit better than expected. 17 cents a share expected. It was 21. Revenue of 1.09 billion expected, 1.18 actually. So 24% beat on EPS, 8% beat on revenue. Not bad. Clearly, and the markets like it, clearly. But Jamal, to your point, this is not one of those $1 trillion market cap situations. We're talking about, about 500 billion-ish market cap. Now, in fairness, this is the biggest name of the week as far as kind of heft.
Well, there's AMD this week. AMD this week. AMD is probably still there, right?
AMD is this week. It is a smaller name, slightly. 380, almost 381 billion market cap. But obviously a big name in the kind of universe of tech names.
Yeah.
And AI adjacent names.
True.
Qualcomm is also on Wednesday, as long as we're sort of looking at that. Maybe if we care, Robinhood. That's on Wednesday too. But I'm kind of kind of struggling to find something that's going to necessarily move the needle here, like the names that came out last week could have, and they didn't. Not really. I mean, if we...
How about, can I offer you a different point of view, if I might?
Yes, sir, of course.
This is obviously not going to be an earnings-driven week.
I would think
Nor is it
not.
going to be a data-driven week because there's no data because the government shut down, blah, blah, blah. And we know where the Fed stands, which is less rate cuts, not as soon as you think, just calm down.
Right.
Which leaves us with two sort of obvious trades from my humble and conservative and reliably, inconsistently accurate perspective. One, you got to buy the U.S. dollar. What the hell's the matter with you? If the Fed is doing what they're doing and the dollar has been jammed up as hard as it is, and I know the dollar's already performing, I feel like long dollar trades are an intelligent individual's point of consideration as long as this new Fed posture exists. In fact, I would even, as you twizzle the dizzle there around the end of that chart, I believe that ties directly to the come to Jesus speech from the Fed chairman.
It most certainly does.
So rather than sort of noodle around in the sort of unknown and unknowable world that is all the financial markets, let us isolate on a few things that we can identify. One, the pot odds of a stronger dollar have gone up substantially. The dollar has gotten stronger meaningfully in the most recent days, and there's reason to believe that it could continue to get substantially stronger from here.
I would concur. I would in particular point our attention to the euro, which at the end of last week made something of a technical break through what was support and ostensibly opened up some room for extension. Not all of them look like this. So again, here's the euro. Here it is breaking lows last week and exposing lower levels. If we looked at the pound, where, by the way, we have a rate decision this week, it also seems to be grinding through something or other. Although, in fairness, if you look at the spot level, and this is the most convenient thing ever, that we now have spot on these charts, and we can look at that as well. If you looked at spot, it's not quite breaking through yet. So when spot and the futures don't agree, I usually default to what spot is doing as far as a technical kind of consideration, because it's the more liquid thing. And the futures sometimes have sort of contract-related nuance. So I typically will look at spot to see if that's got the break. Pound is maybe not there yet. Aussie is maybe not quite there yet. Here's the Aussie right here. It's maybe still holding some levels. But the euro looks very much like it's crossed the line here. And so there are opportunities on the board here to be buying dollars with solid risk reward.
So again, in a world of unknown and unknowable, trying to focus on the things that have some variable, some at least logical basis for the trade. The dollar's been on a price extreme to the downside. The Fed has repositioned itself in a way that is dollar positive. I would also add to that, and you can take it or leave it, but recent news headlines that suggest that Berkshire Hathaway has been a mega buyer of U.S. Treasuries, which of itself is a dollar long position. So, the other thing, if you're long dollar, maybe also long bond, which I know may be somewhat contradictory to the recent Fed commentary, but I don't think that the Berkshire Hathaway crew is a bunch of idiots.
Yeah.
And so I don't mind entertaining a bond position, especially in the context of the recent sell-off. I mean, sell-off is a strong word. The recent pullback, I'll call it. So I don't mind long dollar. I don't mind long bond.
So far, so good. I mean, I'm already long the bonds. I bought them when there was the break through over here. And then when we pulled back to retest it, I added some. So, and I'm doing this through TLT verticals, again, to keep size contained. As ever, I'm constantly attempting to reduce my exposure to big, sizable things in these weird markets. And so rather than using ZB or even 30Y futures or 10Y futures, which would be the smaller and the rates-based futures, I'm looking at the ETFs, using call verticals, and keeping size contained, keeping risk defined that way. And if we see a little bit of a wiggle higher here, once we test whatever this congestion is, I'll probably add again.
So, and again, because we could swim around in this equity mess till we're blue in the face, and who knows what's going to happen. But I would be, again, call your attorney here, because I don't know what I'm talking about. So I just want to make that extremely clear. But considering whatever my attorney and your attorney might, come up with, and considering the fact that I'm explicitly telling you I don't know what I'm doing, I am telling you I believe the dollar is a lovely opportunity for any young or old man or woman. And I believe similarly a long bond position is worth consideration. The third thing that I might venture in this vacuum of information post Mag 7 earnings would be Amazon. I continue to harbor great hopes for Amazon.
You were all over that one.
In the scope of the Mag 7. Now, my hopes have been somewhat diminished because you can see the price action that has occurred, which
can we just pause for a second and say you wanted this gap?
Did I not, as a man who needs a lawyer to protect him from any of his opinions, and my lawyer should call your lawyer, and the fact that I don't know what I'm doing, but I would like to say, bullseye, my friend. I call that one dead to rights.
Weeks in advance.
I've been saying
weeks in advance.
I called that turkey right there.
Off this bottom, by the way.
Pure Radigan glory right there.
That's
when you buy.
I move we rename this the Radigan from the former silver situation.
I appreciate it. And when you buy your lady friend a new car, just don't forget to send my lawyer a thank you note. As long as I'm not held liable for future losses, I don't have any interest in your. And I hope you enjoy the money that you may have made, but do not hold me to account.
Past performance, as we know, not indicative of future results.
Any performance is not indicative of anything. Okay, it's all uncorrelated. As I said, don't know, can't say. But I did say Amazon's is the sleeping turkey out there, and that is correct. I
mean, to the point where you said they were due for a big gap, and we have a big gap.
As if I was a soothsayer in the piazza of Marrakesh with a cobra.
Do they call it a piazza in Marrakesh?
I mean, whatever. I get mixing up my languages.
We're picking up what you're putting down.
I think you understand what I'm saying, which is that I made a prediction and it came true, which I think is
yes, indeed.
To sort of we'll leave it there. But for what I would say now, I guess I'm a little less Amazon positive as a result of the gap that has henceforth occurred. But I still do love that dollar, and I don't mind me some bond. As for the rest of it, you're on your own. I can only do
Chandler. Let's come to you. You've been sitting there quietly. Let's come to you and get.
No, I'm enjoying this, man.
And get a similar readout here.
Well, but
in the absence of news,
call your lawyers and make your disclaimers, and then tell us your predictions, sir.
I'm sitting here because I'm happy. This is great. I mean, it's true. I can say that I remember when the Radigan surge was predicted. I heard it 3 weeks ago. You've probably been saying it prior to that, but
we were here. It was said.
I didn't know if it had been said prior to me being on, but yeah, you're right. That was when we talked about it. And it was a huge move, and it makes me say, and it kind of coincides with what I was saying earlier. It makes me say, what's the next name? What's the next big name that's going to do a deal?
Yeah, but I think all you need to do is call up the Mag 7 and look at whoever has not had a gap higher in the past 3 months, which is why the only reason I was nailing Amazon. So the obvious play here is going to be Meta. I would say this is probably the biggest opportunity in the Mag 7. if you're literally willing to abandon Meta because they had a Fugazi quarter and got a little jammed up, you gotta think about, you gotta better have a conversation with yourself, because I tell you right now,
or maybe your lawyer
or your attorney for sure. But I can tell you what, the folks at Meta know how to make money.
Yeah,
they know how to make a lot of it, and buying Meta at a lower stock price is not a terrible concept.
In absence of any great trade out there right now, that's actually one of the ones that I like. I have that on my personal account. They're calendar call spreads, but I have some long deltas in Meta and in Microsoft post these earnings move. I mean, these are some of the bigger names, and if AI is the theme right now, these guys are at the forefront already, right? I mean, we've heard about different deals and things that they've had happen at times. So those are two of the more interesting trades for me right now.
And even if the IV is kind of not that hot, I still don't mind some put spreads, just as relatively low risk, relatively easy money on the board in the Mag 7 is running put spreads 45 days out on Microsoft and Meta. Even if you give yourself a little wiggle room on the downside, doesn't seem like a terrible concept.
I like it.
I mean, I will say this. To my mind, Microsoft looks a little bit better than Meta here from a kind of
technical standpoint, yeah, for sure.
Perspective, from a technical perspective, at least it's near the bottom of a range where it's held, sort of give or take, rather than in apparent free fall. I would want some sort of an uptick out of Meta. I don't need to buy the absolute bottom. I would just need to get some kind of a wiggle to the top side to show where that bottom is, maybe, at least hypothetically, if it holds, and for that to give you a little bit of a better risk-reward math, at least to give you a jump-off point. So
I agree with you, but I would
wiggle here. You say, okay, back up here, maybe.
I agree with you, and that's prudent. I mean, that really is right. I mean, that's something that we're taught. We learn that, those of us who learn trading, because you don't want to be catching a falling knife. We'll pause it and say, this is Meta we're talking about in this situation. I think you at least start building a position, a small one, because when it goes, it's going to go, and you're not going to be able to get in. I mean, it's going to be going.
And might I also offer that the IV rank is higher in Meta, so the put spread gets you a little bit more meat on the bone.
That actually is an excellent point. Selling puts here does let you kind of look at this and say, well, you know what? I don't need to pick the absolute bottom. I just need for this thing to get less squirrely.
Yeah.
And that's it.
Run them at 600. Give yourself a little room. Run them at 600, 45 days out. Free money.
Well, let's take a look here. So we're at 637. Let's say we're not going to get greedy. We're going to look for a return to like 700-ish, to whatever this underside was, as a kind of preliminary idea.
Sure.
Okay. So if we did that, let's go sort of classic Tasty methodology, in this case, 46 days out. And what we're going to do is we're going to short a put vertical here. Let's see where our liquidity is. It's not bad. And let's say if we were to push this out, as we said, to 700 or so, it's not the worst. I mean, we're not quite looking at 2-to-1 risk reward, but it's not awful by any stretch of the imagination. If we decided to essentially sit right here and say, okay, I'm just going to have a really tight sort of backstop here, where if it wants to keep going and doing, to your point, let's say you give yourself room out to 600.
You go.
Okay, it's a little bit, it's not as great, but you really don't have to go out that far. I mean, if you were, let's say, even just keeping the leash here real tight and said, you know what, I'm going to get in at the money here and maybe backstop out to 620.
Sure.
Something like that. Okay. It's not too bad.
Not at all. I mean, this is one of those
Not too
names
bad.
where I wouldn't really mind being
And you have
short
to
some
look at
at
the
the money.
probabilities. Sorry, Jamal. You also have to look at the probabilities.
Yes, I mean,
you got a 2/3 chance this thing pays, as far as I can see.
well, so the probability of profit here, 52%, but also you're close ish
to one-ish
to one.
Well,
to one. I
like
mean,
80
you're not
cents,
quite
80.
there, but it's not the kind of big skew against you that you'd hate. And of course, you're selling puts here, so you're getting paid up front. So not the worst. If, on the other hand, and I would probably, because I'm a very neurotic risk reward sort of a purist.
Let's go to your Microsoft. I know you guys.
If you went to Microsoft,
no, you like
and
it. You like it better.
the IV rank here is lower, so you could attempt perhaps to buy calls.
That's right.
And said, okay, let's just see if we can run this back to 550, 560. So back to these highs. So if you did that, again, 46 days out, and in this case, we're going to go long the calls. And let's say we ran them 560, by the way, nice and liquid. Not bad.
520, 560. What are we looking at?
I mean, we're
like that.
We're risking 1.2 to make 2.7, 2.8. I mean, this is better than better than 2-to-1 risk.
But also your probability is down to in the 30%, so it makes sense you get a bigger juice because you got a less lower chance, you know.
But if you're looking at better than 2-to-1 risk reward, all you really need is to be right about 33% of the time, and you're making at least break even. And this is better. So not bad. If you wanted to tighten it up and say, you know what, I'm just going to take a little punt up to 540 and that's it. Keep it small. Still not bad. Not bad.
So I'm doing it using November, December calendar call spread options. So I'm short the 550 and I'm short the 550 and 575 in November, and I'm long the 550 and 575 in December. These are in the personal account. That's the way I'm playing it. Give myself a little
Jamal,
time.
might I ask you a question?
Yes, sir.
What's with the calendar call spread?
It's
why that specific architecture, if you don't mind my asking.
Yeah, sure. It's a good question, and the funny part about it is I used to hate calendar call spreads when I first learned how to trade. Calendar call spreads are these trades that essentially emanate out of the fact that the volatility assumption one month is wrong and the other one is right? Like that's how they initially started out. And that's how people made so much money back in the day on the floor. Something's wrong in 1 month in natural gas, but it's right in the next month. And so we're going to sell that month and buy that month. That doesn't really exist anymore, right? Everything is perfectly priced. What I use them to do, it allows me to participate to the upside without just buying straight up outright calls. It basically offsets my cost basis, right? And so
but why run a calendar spread to subsidize your long or your short position as opposed to just doing a normal spread? Like why take the time? Why instead of just selling a vertical, or why add the time component?
Because it's cheaper. So if I wanted to buy the, let's just say the 520, 540 spread in December right now, 20 wide spread, that's $8. Right? And
yeah, I mean, that's it right here.
Yeah, that's $8, right?
On the screen.
Okay, so now
right
calendar me up and show me what I'm gonna.
And that works. That works too, of course. But what I'm doing is playing for even further upside. I'm using the 550. I'm selling that 550 in the near term, so I'm collecting something there, and I am still long further upside, further out, and am doing it for $4.
Sell the short dated calendar option and buy the long dated option.
Yes.
You get more exposure over time and subsidize it with a contract that's going to expire inside the duration of the long position.
Yes, and so I'm playing for a bigger move.
Sell December by January, for instance.
Yeah, exactly. So The reason, and I do it further up. The reason why I do it further up, because again, if I did it at the 520 strike, it doesn't have as much meaning. And if it does make a big move, I don't make any money that way. So I do it further upside because my thought process is further up. I don't think my assumption is this is not going to move $10, $20. My assumption is this going to move back towards 550. I mean, for right now, that's a pretty sizable move. So
you'll take something purely intrinsic on the outside and play the volatility, basically.
Yep, with a little bit of time component, and I'm offsetting it by selling near term.
What do you say, Ilya? You like it? Don't like it?
I think for me, it's probably more complex than I would do. And in general, I mean, I'm not frequently an individual stocks.
You're not a ticker man as it is anyway.
Sort of animal, but I mean, let's price it out. So we're selling the 555 in December, yes?
Selling the 550, buying the 550 in December, selling
Buying
the
the
550. Yeah, buying the 550 in
okay.
December. Long that.
Okay, so we're buying the 550 in December. Here we go.
And then selling the 550 in
What
November.
are we selling?
550 in November.
Selling the 550 in November.
And so what this does too, in this case, is, say there is no deal that makes it happen, right? I mean, again, they've done a lot of deals. I actually don't expect them to come out with another OpenAI deal, but who knows? But in this case, it allows me to buy time because, again, we know how technical works, and this has a little bit of technical wood to chop to get back to highs. That might take the better part of a month, right? And so this is coming from somebody who used to just outright buy calls in this way upside a lot. Your calls are just bleeding in that December if you're long those, right? So why not sell some near-term NOV against it? We talk about expected moves. You can see the brown bar. This is a little bit outside the expected move. So this allows me to not necessarily be antsy about the calls that are losing a little bit of money every day in December because I'm short the NOV. And again, Ilya has the near-term. I actually have regular NOV, but that's fine too. I mean, you can do the NOV 28. It doesn't really matter as long as it's, a couple of, say, 2 weeks or a month in front of the month that you're long. So,
well, and I mean, we can see what just happened with the cost, right? So we went from $8 down to $3.50, and it looks like we're pretty even. But I mean, ostensibly, if the NOV expires and you still want that protection, you just roll that side of it.
Exactly. Yeah, exactly. And to really answer your question, Dylan, why do this? This is something that this is me maturing as a trader. Again, I just used to go just buy upside calls because I'm like, this is going up. I know it. It's going to happen. And maybe I'm right.
Straight crazy pants.
Yeah. But who knows when it happens, right? So this just allows me to be a lot more patient about the trade and not be wondering every day, what should I do with these upside calls in December that I don't have anything against, right? This is what that does.
What becomes an interesting thing, and I mean, this essentially just becomes a capital efficiency thing. So it basically gets you into the 550 December calls at a price that is much, much lower. Worst case, you have to put something else against it if basically the move doesn't happen by the end of November, in which case, ostensibly, then that call just gets expired and you just got in for 350 instead of 8.
There you go.
So as far as capital efficiency, as far as getting into a 550 call on the cheap, this does that. For me, I like directional. I use call verticals and ETFs on big kind of benchmark assets to kind of mitigate risk that way. And I'll usually go further out than 45 days. If I can get some 60s, I'll do that. And that's really just to dilute my exposure to upfront delta, to give myself more time, and to lower sensitivity to whatever the underlying does, so that I'm managing risk that way. while being directional. And speaking of, one thing that isn't being directional here, but maybe soon, and I'm in it for now, is gold, which has apparently gotten.
You're long gold here after the.
I'm short. I'm still short.
All right.
I'm still short. It hasn't shown me that it wants to break back into here, and so it's still kind of in this whatever this sell-off is.
Yeah.
But it's definitely become stuck here a little bit.
Call it 4,000. Let's call it 4,000.
Let's call it
Yes,
4,000.
for sure.
Do we think that there is more downside here? If what we're saying is we're going to have some sort of a stronger dollar, the Fed is not as antsy about going again in December. The markets have clearly walked back a good bit of that. In fact, if we look at the CME Fed Watch tool here, we're looking at a likelihood of 67% that we're going to get the cut in December. Still better than even, but down from 94 a week earlier. So clearly there's been a meaningful shift in the odds here by a significant amount. That we're going to stand still in December, 32.5%, up from 5.5%. So big shift in the wake of the Fed. And the vol here is pretty elevated, let's say, at 41.7. Do we maybe want to sell some calls here? Which is, by the way, so I have exposure here two ways. I'm selling call spreads and I'm outright short the 1 ounce future. So I've done both. At 41.7 IV, seems like selling calls might be one way to go about this, looking maybe for even just a swing down into here, even something modest. Thoughts on this?
Well, I think I've said this before more recently, but I mean, it's a very different trade from October 16th when it was making the run to the highs, right?
Mm-hmm.
I think the 16th was the day I pounded the table. It's a very different trade now for a lot of reasons. I mean, obviously the action that we see now, but the other thing, the skew is to the upside once again, which is typical for gold. And it wasn't to the upside when it was making that move on the 14th, 15th, 16th. It was flat skew. And that was the one thing we talked about. And you could kind of tell like something was about to happen, probably a move to the downside, which it did. Now it's a whole new trade again. And if I really am indifferent on price at this point. I mean, I have nothing on in the actual future. I have some ETF plays on, but if you really force me to pick a direction on a poll, I'd probably say a month from now it's higher, I would think. But does that include some dip in the meantime? Maybe it does, but you can see it's struggling at 4,000, and that's because there's a lot of people at that level. I mean, clearly buyers and sellers. I don't know which one's going to give way yet, so it's hard to tell, but there's definitely something going on at 4,000.
Yeah, I mean, you could give yourself room selling these calls at the money, let's say, and give yourself room out to 375. You're starting to get pretty close to 1-to-1 risk reward, which would be pretty great. Even if you tighten this up, I mean, you can get real close to 1-to-1 here if you wanted to take a flyer and just look at just vol extraction.
I mean, on a normal day, in a normal world, I would agree with you that gold is more likely to be lower than higher in a world where the U.S. currency has tailwinds in its favor. And for that matter, the most legendary investor in the world is long bonds and blah, blah, blah.
Mm-hmm.
My issue is I really don't know why gold went up as much as it did in the first place. I understand there was the whole sort of debasement trade discussion, which you did a pretty good job, Ilya, of refuting. And you asserted an alternative hypothesis, which was the the decoupling trade, the
The
long,
multipolarity idea.
the
Yes.
long multipolarity with gold as the bridge currency.
Yes.
But even that, I think, is somewhat compromised by some of the recent deal making and whatever between China and the U.S.
Yeah.
I mean, and so because my question is for me to really come into an opinion on what gold's likely to do from here, I would need to get a better understanding of why gold did what it did between, let's say, August 1st and October, whatever that is, 14th or 15th.
Mm-hmm.
I don't know why gold went from 3,200 to 4,000 as fast as it did. And so,
I mean, for me, it really is that multipolarity idea, largely around, and sort of the way I think about it is, here is October 10th right here, right? This is that Friday where the president spooks the bejesus out of everybody with his "we're going to hit China with 100% tariffs" thing. And you can see that here. So, I mean, that's this right there. And obviously, since then, stocks have righted the ship a little bit, but we can see here, okay, that's that day. And gold doesn't ultimately make up its mind that day. That's not terribly unusual. Perhaps waiting to see what China's going to say. China said all kinds of feisty things. It didn't look back until it ran all the way up here into the sort of approaching the mid 4,000 area, and then had this massive reval. So
but there wasn't even an obvious cat. I mean, because it was Jamal, yourself, and myself were on together on that green bar that was literally the day before gold came unraveled, and we spent most of the hour talking about how gold is due, gold is due, gold. I didn't even have a position on, and I'd made that sell off, but we did have the discussion about how can this keep going, and blah blah blah. And sure enough, the next day it got, flipped over.
It got whacked, yeah.
But if my memory serves me, there was it wasn't like there was some super deal between China and the U.S. or some super deal on rate. Like, I don't know why gold rolled over that day, other than it was overdue.
It was overdue.
Yeah, I mean, it looked overdue.
But I could say it looked overdue the day before.
Right, but there were some things that came together that day. I mean, certainly you had a little bit there already around Bessent was out there saying, listen, this is not a thing. We're gonna have a deal. Trump is gonna meet the guy. It's gonna be cool. Nobody freak out. That was already starting to get going at that point. And if we take a look at some of the kind of recent developments, in particular, I would say speeches from Fed officials kind of around then. The one that really stood out that day actually was a speech from Waller. And sort of, there was a bunch of speechifying around then, but the Fed was already starting to signal like, hey, whoa, calm down. We're not doing all of this easy. This is not.
So you're saying the gold rollover is triggered by anticipated adjustment in Fed rate cut expectations, or you're saying,
I don't think so. I think that was a helpful thing, but I don't think that was the thing. I think the thing was Bessent and company, with Trump echoing them, were walking back the China spook.
The multipolarity walk back.
Yeah.
Yeah, I think it was just overstretched positioning. I mean, you got to remember back in that day after, I mean, again, it was heading up into the weekend. It fell on that Friday. It went back up again on that Monday we were on. And that was a day where I think the previous 3 days, it was one of the top 10 as far as options trading on GLD and all these other things. I mean, it was a layup. I mean, look, I'm going to call it now. I hardly ever say that, but that one was definitely a layup for sure. The skew had changed. It was clear there was about to be a change. Did we know it was going to be $300 move in one day? No, but we knew it was going to be some type of move.
But I mean, I would say if the, I don't know what the date on that is, the 15th or the 14th or whenever that sell-off was. If that was a layup, I would say picking a direction at 4,000 is the opposite. Is I don't see how you could possibly do it with confidence.
I agree.
Either, if anything,
I feel the same.
This may be sort of a classic, like, I mean, I just don't know. I have no idea how to.
Well, so that's where kind of selling calls with vol at 41.7 is where my head would go if I didn't have exposure already. And again, I'm already selling calls here, and have been basically since back here. I missed this chestnut right here. That this was not where I got in, and had I known about 1 ounce gold futures, which I was completely oblivious to existing when this was going on, that you could see on a shorter term chart here, in sort of on the way into this sell-off, you start to see kind of the architecture of where after hours you could get something off here on the way down. It's not the most obvious, but right here, for example, but I managed to get in down here. And so this is where I'm short calls. And ostensibly, if I didn't have anything on, the only thing I would do here as we sort of hug the top of whatever this range is would be to sell calls. It wouldn't be an outright just short.
Yeah, it's tough at this point. Like I said, there's a lot going on at this 4,000 level, and I just kind of want to, I want to wait it out. I just want to see what it's going to do. I wanted to make a decision one way or another. I want the other layup trade. Honestly, this is what it boils down to. I want the other layup trade, and right now,
is it the layup trade right now? Long dollar?
Yeah, I think it is. It's certainly more layup than half court for sure, but it's that one is going to take some time, right? Similar to probably the Microsoft trade we outlined earlier, and the Meta trade.
Yeah,
might take a little bit of time. This one was, things were just getting to a fever point. You guys remember? We pulled up the
hour on it.
We pulled up the news. And then it was talking about why you should be in gold right now. I bet if you pull up gold stuff right now, they won't say that. That was the other part of the equation to the trade.
Yes, I mean, there was definitely something of a sentiment extreme. You could see it in the conversation. Before we run out of time here, while we're on this subject, I want to take us to Bitcoin here, which is also kind of hugging the bottom of its recent range. Now, I've been short into this, but from up here. And so I'm kind of trying to see now what this thing is going to do.
I mean, isn't Bitcoin at this point nothing more than some sort of a measure of speculative sentiment? Basically, sort of risk on versus risk off. That it's.
I mean, I would argue it's been that for a long time. But
it's
yes,
not a store of value. It's not a currency alternative. It's nothing. It's just the sort of purest measurement of the psychology of the marginal speculator.
Yeah. Steroids-addled NASDAQ, if you will.
Be that as it may, it sure has a lot of money being thrown at it right now, whether it's the actual crypto itself or the future or the ETF. There's a whole ecosystem around it now, right? And so as a result, it's I think I'm glad you brought this up because it's in an interesting area. I think you can see it's been trading between 100 and trading water between 107 and 110,000. And I think it's a good one to bring up because something's going to happen in here soon. Part of my feeling, what I would like to say, no, and this is a good one too, because to Dylan's point earlier, gold. The other thing that troubles me is the relationship with the dollar seems to have broken down. This one, the relationship with the equity markets is very much together, and that's the weird part.
Yeah.
Well, it's broken down, but that's the weird part because is it actually breaking down or is it just holding? is it waiting for the markets to actually fall and then it's going to fall? Or if we have a situation where market reaches new high, this thing is going to bounce back up? That's really what I'm trying to wait and see. And I don't feel like predicting. I want it to tell me.
What's interesting is sort of asking the question, which market does this have a relationship with? Because if we look at, obviously, S&P, it looks nothing like this. If we look at the equal weighted S&P, it looks much more like it. And so, and if we look at the equal weighted NASDAQ here, this certainly looks a little bit better. So you sort of wonder if really what Bitcoin is more so approximating, and again, they're not perfect, these charts, but the S&P, unlike the tech-skewed sort of headline index, this equal weighted version is basically sitting at the bottom of a range that has held since back in kind of mid-August, let's say. So right around there is kind of that mid-August bottom, and we're basically there. If we look at Bitcoin here, I mean, that's mid-August right here.
I would rather be long Bitcoin than long gold.
Interesting.
I mean, I would be long Bitcoin, long Microsoft. I would do it in this order. Long dollar is my most confident opinion.
Mm-hmm.
Long Microsoft and Meta, a near second. Long Bitcoin, a distant third. Gold, I am clueless. Haven't the slightest idea what to do with gold.
Why Bitcoin? Does it feed into the supernova
Just
theory?
because I think Bitcoin's on a low, like it's at a low, that it just on a price level basis, that gold, I think there's a reasonable case that Bitcoin can make a run at $150,000 by the end of the year. I mean, it took that run to $1.25.
Mm-hmm.
It got face pounded on the deleveraging in October. And it's sort of consolidating here in the just north of 100, $1.05 or whatever it is, $1.06. And I just feel like there's a level there, not to go all technical on your ass.
I mean, there does seem to be some kind of a range bottom down here. Now, I'm short via IBIT, and I got in around here, and I'm looking to see what this is going to be. But something's going on down here. Something is attempting to hold, and IV is not the worst. I mean, 51.6. So if you wanted to be a seller of premium here in IBIT, which is a smaller contract size than any of the Bitcoin futures or anything like this, I don't hate it. I'm on the other side of it, but if I was looking at this with fresh eyes and not waiting for this to do something, I don't hate it. My thought process in connecting this with the equal weighted S&P is that maybe what this is in fact a barometer for risk. And the headline indexes are just skewed by tech holdover. And this is telling us something, but unclear if that's actually the case. I wonder, though, if this were to break, if risk wouldn't follow down.
I think if for some reason, which highly unlikely, if equity markets break, this definitely breaks down hard.
Oh, yeah. Yeah, I think so. I wonder if this one ends up...
Are you willing to be short? I mean, we're out of time, but are you willing to be short NASDAQ or short Bitcoin? I mean, you're already short Bitcoin. So.
I'm short Bitcoin. I'm short the S&P through SPY verticals. I am not touching the NASDAQ here. It looks for now like it wants to hold up. But I'm short a little bit of SPY. This looks a little bit stronger. I'm probably going to want it to come under the recent range and then maybe look to do something if that occurs. But that is a conversation for another day because overtime is out of time here. Thank you, gentlemen, as always. A spirited conversation. We actually did quite a bit of trades setups in this very quiet, seemingly opportunity-less market. Not so devoid of opportunity, as it turns out. Stay right where you are, everybody. Macro Money is coming right up, where we're going to dig into the non-event risk, event risk week that is in front of us from a macro perspective. And we'll be back for this show in a mere 23 hours. Sit right where you are. We'll be right back.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. Cboe is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the Cboe's SPX pit. Watch Liz and Jenny live from the Cboe, only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
Did the Fed break the stock market last week? That's the question that we are asking here on Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And it's an interesting question to ask because, of course, last week was a bit bifurcated, a tale of two stories here with the Fed in the middle. Markets gapped higher and went up into the Fed meeting, stalled on the day of, and have come down since. Now, things idled Friday. They continue to idle today. Markets still not finding meaningful follow-through, but whatever happened on Fed Day, the subsequent day was a sell-off, and we've been basically stuck since. So the question in front of us here is, did the Fed actually tip some sort of scale here, sentiment-wise, or is this just a pause amid the ongoing government shutdown where we don't have data, the earnings calendar has slowed, and so we're searching for a trigger and perhaps not yet finding one? Let's begin in trying to unspool all of this with a look at last week's performance. We can see a quiet advance here for the S&P. It ultimately ends up rising 0.7% on net for the week. But what this obfuscates to some extent, as we've just said, is since the day of the Fed, our net performance here is leaving, let us say, something to be desired. So if we look at where the markets closed on Fed Day, which is the 29th, we are at this point down just about 0.6% on the S&P. As of Friday, we were down as much as 1.14%, and going into the Fed, by the close of the day prior to the Fed, we were up about 1.45%. So interesting sort of setup. And of course, the day immediately after the Fed meeting, the S&P jumps intraday to a new record high, but then ultimately ends up finishing the day down almost a full percentage point, 0.97%, which actually ends up being the biggest decline since that big October sell-off where the index fell nearly 3% or 2.7 to be exact. So we have here an interesting kind of thing where the market is not really running away to the downside, but not really finding conviction to the upside either. Whatever the Fed did, there was a one-day sell-off, and since then, crickets. Buyers not really using this as an opportunity to step back in. Sellers not really pushing the envelope. NASDAQ performing a little bit better, 1.9%, still a slower week than the prior one, and a similar story where a series of inside days is what we're looking at here, but a little bit better on the whole, if only because tech earnings last week were, for the most part, solid. Meta, of course, had a sizable miss. Amazon did exceedingly well out of its numbers. And we have, of course, also a surge from Google, and Microsoft ultimately had decent numbers, fell a little bit, but ultimately didn't go very far. And, of course, Apple had a kind of a nothing of a week where it was already out there out of reporting from the private sector and survey data and things that iPhone 17 sales were going relatively well. And so we didn't have the kind of surprise when the earnings essentially showed that. And so we had a kind of neutral response there, even though the numbers on the earnings front were reasonably solid. So kind of a week of not particularly strong conviction last week, but certainly a marker around that Fed meeting where, of course, Fed Chair Jerome Powell pointedly came out and said, just in case you guys are confused, we are not looking at December as a foregone conclusion for a rate cut. Far from it. And really made a point of pounding the podium and delivering that message. And of course, Fed Funds Futures had December well over 90% chance when this meeting occurred. We can see here the way that things have evolved since then. We're looking at now the probability that we get this hike or this cut rather in December just north of about 60%, 67.5%. That's down from 94.4 a week before. If we look at the likelihood that we stand still, 32.5%, up from 5.5 the week before. So we're looking at a situation here where the calculus has meaningfully changed for markets. And that seemed to have been an important inflection point for sentiment, whereby since that adjustment was activated, the markets haven't been able to find their stride. Looking at the rest of the asset mix here, we can clearly see yields up around that very same idea. 10-year up 2%, 2-year up 2.8%. So it is indeed the near-term story that gave us a situation here where the adjustment was most significant. Markets really focusing on what the Fed is likely to do nearer term versus the other way around. The longer end holding a little bit steadier. Crude oil moderating a little bit after that huge jump of 7.6%, down almost a percent. That, of course, around the idea that surge around the idea that the U.S. has put Lukoil and Rosneft, two big Russian oil producers, on its entities list, which basically says that if you do business with them, you're not doing business with the U.S. And that seemed to be a sort of shot across the bow for India and China to stop buying Russian crude on the gray market. And since then, things have kind of eased off. Ostensibly, the story hasn't picked up more legs, and with the Trump and Xi conversation relatively friendly or so last week, at least relative to what it could have been, a little bit cooler on crude oil, though not much. Gold, a second week of losses, down 3.4%. The dollar strong across the board. Euro down 0.9%. So is the yen. Bitcoin ultimately resolving down. So the risk sentiment gauge that is Bitcoin, which is usually sort of risk sentiment on steroids. If stocks go up, it goes up more. If stocks go down, it goes down more. Here, there's obviously a little bit of a divergence. Stocks ultimately hold up better. Bitcoin softer. Maybe that reflects the stronger dollar, but there does seem to be more here. And of course, that raises the question as to whether Bitcoin is signaling something about broader risk-taking that stock markets have yet to catch up to. As far as the data flow this week, we got the beginnings of what is the tiny bit of fundamental data that we're going to get, macro data that we're going to get this week. Obviously, the ongoing U.S. government shutdown has mostly taken everything offline. We still don't know if we're going to get a U.S. jobs report at the end of this week. Maybe we will, maybe we won't. But the Institute of Supply Management gives us a little bit of a glance at the economy, and it isn't a happy glance. Manufacturing, it looks like, was again in contraction mode. That much was to be expected. As ever, these numbers are centered around 50, where that's neutral. Below 50 is contraction, above 50 is growth. The further you go below 50, the faster the contraction. The further you go above 50, the faster the growth. Manufacturing sector, of course, the smaller of the bunch, services a much bigger contribution to the overall economy. We'll get those numbers on Wednesday. The manufacturing side coming in at 48.7. Expectation was 49.5. So we get the contraction, but it's a faster contraction than anticipated. Looking at the internals here, we get new orders shrinking, so sub 50, but we can see here at a slightly slower rate than the prior month. We can see employment shrinking, but at a slightly slower rate. So ostensibly not great, but not as bad as it was the prior month. The price side of the equation, we can see, continues to moderate. We've come a long way in cooling the pace of price growth in manufacturing. It's still relatively elevated compared to history. Going back here to sort of the immediate post-pandemic period, and we can see that on the manufacturing side, inflation was much more curtailed, and between this undershooting and this overshooting, sort of averaging near standstill, obviously there was this huge surge. One wonders what it could have possibly been at the beginning of 2025. Oh, wait, that's right. That would be the tariff rollout. Perhaps one Stephen Mirren might look at that as he says that tariffs don't impact inflation, in particular on the goods side. One would surmise, looking at this, that they in fact very much do. But since then, we've seen things settle and things have calmed down. And so perhaps we've reached a level of some kind of digestion of what these tariffs are going to mean, at least here and at least from a sentiment perspective. Though, of course, since there hasn't really been this much relief on the tariffs as to completely unwind all of this, one does wonder if maybe this portends expectations for slowing economic activity. We'll see what that ends up looking like. We have, in the wake of last week's Fed shocker, a significant readjustment and a significant reshuffling of policy expectations. As we just saw, we have this much diminished probability that we're going to get another cut in December, which, of course, in any case, was something of a smoke and mirrors forecast. We can see for the Fed here in September, they do have 3 cuts in their forecast, but we also see, and by the way, this is 4.4 is the starting line here. So from 4.4 to 3.6, that's 0.8 or 3 cuts, 0.75 rounded up to the nearest 10th decimal. But we can see that the way we got there was this big outlier of a dot on officials' forecasting. We can see the majority of officials very much skewed toward 1 or 2 cuts. Here's a third cut here being essentially forced into the median by this vast departure from the consensus here. And we don't know if that's Stephen Mirren, but I think we kind of do, at least with relative confidence. And we can see here that looking at the way things have evolved, the markets are only priced at this point for 6 basis points through the rest of the year. So we're looking at maybe a very slight chance that we're going to get this cut. Now, obviously, once we get into the actual dates, you can see this is December 10th. Once we get into the dates, the chances go up. But needless to say, this has been significantly diminished. We're still looking at 63 basis points for next year, which is, of course, well in excess of what the Fed is saying. They're still saying, again, just 1 cut here from 3.6 to 3.4. That, of course, is a single 25 basis point cut, again, rounded. So we're looking at still an important disconnect between the Fed and markets. But the larger story here is, of course, that the view for this year, at least for the last meeting of the year, has been significantly adjusted. Moreover, the view for next year has eased a bit, even though it's still expansive relative to the baseline. And we can see what the results have been. So as you've adjusted to a less dovish setting, we can see stocks have stopped going up. This is that range where we're now stuck in. And the dollar continues to push higher as we take some of this dovish signaling off the table. It continues to advance, having essentially retested the bottoms from July and then launched higher as of the beginning of October. For the rest of the week, we mentioned this Wednesday ISM services report. That'll be important to watch here. We can see the expectation is that we're going to see a slight pickup after a standstill in September, a slight pickup, but only just so in October, up to 50.7. If we take a look at what that means here, 48 and 50.7 probably averages to something approaching 50 for a sort of composite view. Obviously, services is a bigger component, as we said, of the economy than is manufacturing. So skew it in this direction, and this weak number probably discounts this down to something like a 50. And we'll see, of course, how that ultimately plays. But arguably, the biggest question here is what the price component is going to say. Since, of course, this is the biggest part of the economy, the price component here is oftentimes telling of broader trends and tends to run ahead of the baseline PCE and CPI measures of inflation by about 2 to 3 months. And when we've got this lagged here, this is CPI lagged 2 months, this is PCE lagged 2 months, we can see it lines up pretty well with this service sector ISM, which would suggest that there is some sort of an inflationary pickup in the works in the months ahead, if this is going to hold. And if that's the case, well, then the Fed might well be justified in downplaying how much easing it is going to do from here. And to the extent that this has left the markets without upside thrust, if we continue to see this shift into a more inflationary setting, then perhaps that sort of de-risking around the idea that more Fed stimulus is coming, if we keep diluting that, that could very well give us a further anti-risk adjustment. In other words, this lower and this still higher. And aside from that, a couple policy announcements. RBA is expected to keep rates unchanged. They had a slightly chipper inflation report in the most recent set of numbers, so they're not expected to do anything. Bank of England likewise seen holding rates unchanged. Their inflation has stabilized a little bit, but at a relatively higher level. And so no big changes expected there. The voting tally on the MPC expected to be 6-9 in favor of standstill, 3-9 in favor of a cut. We'll see if that reshuffling of votes actually holds up, and if we get perhaps some sort of a sense as to whether the Bank of England is thinking about changing gears. But for now, with inflation basically holding steady for the past 3 months, there doesn't seem to be a strong impetus there for one thing or another. We will have Chinese numbers on trade on Friday. See if that moves the needle on anything trade war related. And then in the absence of the jobs report, which may or may not appear depending on how this government shutdown goes, we've got the University of Michigan Consumer Confidence Survey, another kind of private sector stand-in for official data. The expectation is that we're going to come in a little bit on the headline sentiment reading from 53.6 to 53.2. If we take a look at what that looks like here, that would be a further deterioration in sentiment, which has been, as we can see here, deteriorating despite this cool-off in inflation expectations. This is perhaps the most interesting part of the current story. We can see that coming out of COVID, consumer confidence was very clearly coming down as one-year inflation expectations within that same University of Michigan survey were coming up. So prices going up, inflation accelerating, consumers don't like it. Rocket science, that is not. Once the Fed really starts to get going on rate hikes in early 2022, we can see inflation expectations start to come down and have a nice long arc from 5.4 to 2.6, basically within a hair of the Fed target as we get into the beginning of 2025. But then, of course, the tariffs. And so as this inflation expectation number comes in, sentiment improves. We can see we start to hit multi-year highs here going into the middle of last year. And then tariffs. Consumer confidence is yanked sharply lower as we jump a whole 4% on the one-year inflation expectation from 2.6 to 6.6. Now, we've given away about half of that move. We're at 4.6 now. But note that despite this kind of wiggle higher as things cool off in the wake of the backpedaling on Liberation Day after early April and so forth at the White House, consumer confidence has hardly improved. It's had this little wiggle higher and it is now right back down to where it was as the tariff scare was heating up. And so this raises an important question here. As a matter of fact, we can see the assessment of current conditions is now worse than it was then. Expectations are still a little bit better. Overall, just about unchanged. And that, of course, raises a very important question for the economy because it is 68% household consumption. And if this part gives way, well, then there's not really much of a leg to stand on. Nevertheless, for now, looking at the Atlanta Fed GDP now model here, it's not so much that we're, as ever, looking to make sense of this and use it to forecast third quarter GDP. It is entirely too early for all that. But we do see that essentially since the beginning of August, the tone for the economic data going into this model has been improving. So much so that, in fact, even the blue chip consensus here has been revised higher. So we are looking for the economy apparently to be accelerating. And so we'll see if perhaps this consumer confidence data goes that way. But then the real question is, well, if it is accelerating, then the Fed has less room to cut. And the markets don't like that. And if it's not accelerating, then the Fed is still perhaps reluctant to cut and wouldn't know otherwise because there isn't economic data in aggregate and en masse to show as much. But what we end up with then is a situation where either we have a worrying downturn that the market isn't ready for, or we have a situation where the Fed is not going to give markets everything they want and a disappointment around that idea. So however one were to go about slicing this, we end up with something that ends up being, or at least looking like, a potential risk for sentiment. With that in mind, I am looking at my exposure here, and there isn't a whole lot that I have to change. I'm still long the dollar, short the Aussie, short the pound. I got a little bit bigger, as a matter of fact, in my short euro position. You can see all of these are selling 2 contracts. This is now selling 3 because the euro seems to have continued to decline. Still short gold, both through a short call vertical and through outright futures. Still short Bitcoin. That continues to edge down through an IBIT, that's the ETF put vertical along that. A little bit short risk through SPY put verticals. Still long at the long end of the bond market through TLT call verticals. That one's been going the wrong way. We'll see if it finds bottom here or not. I'm starting to think about where the ripcord is on this. Perhaps not yet, but maybe soon. And still short a little bit of crude oil as it comes down and starts to moderate after last week, or the prior weeks, the week before last, after that big surge and all of those shenanigans. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I usually co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am also writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, well, we've got Dan, of course. And Dan, I'm also excited to say, special guest, fan favorite, Greg Magadini, Director of Derivatives at Amber Data. Greg, great to have you back on the show.
Yeah, absolutely. Thanks for having me on.
Thanks for coming on, my friend. And if anybody has a question for Greg or wants to just type some crazy stuff into the chat, get over to the Tasty Live YouTube channel and, well, pop out the chat. Join us here. We've got a lot to talk about. Greg, we've got you on the show here on a day where I think I broke the microphone. I'm going to have to hold it. But we've got you on the show on a day where there's some volatility. We've got some questions. It's October, of course, but we're down on the month right now. There's a couple days left, but curious to get your thoughts here post FOMC. Of course, what you're seeing in the options market, some trade ideas, and really where do you think we go from here into year end? What those catalysts might be. But first things first, and Dan, please jump in at any time. What's your read post FOMC? I mean, this isn't exactly what we were looking for.
Yeah, so we got a quarter, 25 basis point cut, which is 98% expected going into FOMC, so no surprises there. And then Federal Reserve Chairman Powell said, December is not a foregone conclusion of another 25 basis point cut, which was kind of expected by the market because in September they projected that in the dots. So I think that's a little bit of the hawkish tilt. But we also have a pausing of quantitative tightening. So, in crypto, it's very common to hear about the Federal Reserve prints money. That's not quite the whole story. Quantitative easing is printing money and then buying securities. So that adds liquidity. But as those securities mature, that money comes back out of the system. So it's like sterilized money printing, so to speak. So pretty much after 2020, the Fed balance sheet kind of exploded higher, and they've decided to let the securities mature and come back, the liquidity come back out of the system. So I think the Fed balance sheet hit something like, a little over $8 trillion, and now we're at 6.6 trillion. And the liquidity profile feels a little tight, so they decided to stop the maturing methodology to shrink the balance sheet, and instead, as securities mature, they'll recycle them into short-dated treasuries. So the balance sheet size will stay the same. I think that's the bigger picture. I think that's actually more important than 25 basis point rate cut. Now, Fed Powell has been very data dependent for a very long time. Obviously, the data releases due to the government shutdown are a little bit sporadic and less reliable and delayed or not released at all. So I think that's probably part of his reasoning, but we'll see what the market does. Obviously, stocks are at all-time highs, so it's a little bit hard to just want to cut rates again. It's not like the markets are crashing and he's trying to support the market. And then we'll see how the labor market sort of shuffles out. Obviously, inflation has been less scary than expected with tariffs. We didn't get sort of retaliatory tariffs from neighboring countries or countries across the world. And we've kind of gotten deals, especially like recently in Asia, being worked out. And so I think that's sort of resolving itself in terms of the inflation picture. We see oil constantly go lower. Oil's been weak. That's been helping regular CPI stay lower. So I think there's a lot of reasons why the Fed is maybe punting the December 25 basis point cut. And so the market reacted sort of accordingly, so to speak.
Yeah, I agree with you, though. I think the bigger piece here is the end of the quantitative tightening policy in December, which arguably then brings the Fed back into the market as a buyer versus letting those bonds mature and not reinvest the coupon payments. And so maybe then, ultimately, like, what does that mean for people in terms of how do you think about this? Would you agree that it's generally liquidity positive, where if you have the Fed kind of back in the market in that sense, it might free up some flows or just some liquidity from your primary dealers or some of your financial institutions that maybe otherwise would have been some buyers of that debt? The Fed kind of steps in and plugs that hole. Is that the right way to think about it?
Yeah, that's how I like to think about it. And so it reduces sort of the squeeze in very short-dated rates and overnight rates for like repo markets. The last that I read, I'm not an expert on repo markets, but the last that I read was that the repo collateral was more expensive than sort of the Fed funds rate. So it's not a fun position to be in if you're in that front end of the curve and you need liquidity. So you're just kind of paying out money to find that liquidity. So I think that's part of the tightness story. And then doing or pausing essentially the reduction of the balance sheet, I think, is a good sign. So in my mind, the liquidity profile is very bullish for crypto and hard assets, gold, silver, all that good stuff. But obviously we have some counterflows in crypto. We have this 4-year cycle. The last 4-year cycle peaked November 2021. So we're kind of approaching those dates. And the idea here is that as we go in like a little past halving, people get very positioned long because the supply of issuance every block is reduced by 50%. So that's kind of a bullish catalyst to get long. And about 12 to 18 months later, everyone's positioned long, and that's kind of ends up being a short-term top. So we had IBIT, we had a lot of institutional buyers get into the market. We've had essentially like one of the best ETF debuts in 10 years. One of the fastest growing ETFs in terms of inflows and volumes, and one of the most actively traded options in the market on top of IBIT, now currently sitting neck and neck with Deribit in terms of flows. So if positioning is any indication, we had some of that positioning going in. So I do think there's kind of two offsetting features here. The macro liquidity profile, which is for the most part constructive minus today's maybe negative surprise. And then we have sort of the traditional crypto cycles, which admittedly, those are so predictable. I have a hard time believing that they'll stick around forever, but it looks like people are still trading that 4-year cycle.
Yeah, I want to hop in on that narrative real quick, because there's a lot of talk, especially if you follow, seasoned investors in crypto, that the 4-year cycle is not, it's kind of fading, right? Because the market structure has changed, right? If we think about last cycle, that 2021 peak, what happened? We had this Terra Luna blow up, these kind of fake, Celsius, FTX, some of these like big blow ups happened because people were levered up and sort of there wasn't that clarity around regulation. There wasn't the ETF. So there's some argument there that given the ETF, given the institutional flows, given some of the regulatory clarity, 4-year cycle is not something that is true anymore. And, you know, I wonder what your thoughts are on that, given the macro setup. And then, you know, I don't know. I'm kind of in a weird spot because I do think we're toward the end of the cycle, but I don't necessarily see any massive leverage or fraud or any of this in the system, right? So we're just range bound. So maybe that's it. Maybe it's just kind of like Bitcoin ranges for a little bit until we break out again, you know?
No, it's going to blast off.
Yeah, see, Ryan's on a totally different. Ryan's in like has the most crazy delta positive view that IBIT and Bitcoin's going to go crazy. But I just wonder, what are your thoughts here? What are the catalysts?
Yeah, I mean, I think that's a great point. So to Ryan, to your point, sort of the 5 sigma right tail risk, I definitely think is a probability, at the very least, worth hedging out to own at least some units here at the tails, just in case we get hey, all the G20 countries are deciding to buy Bitcoin on their balance sheet and underpin their fiat currency with Bitcoin or something of the like. That can definitely, 4x it in 3 days type of deal. So I think that risk is real, and I wouldn't want to be on the wrong side of that scenario. But in terms of the trends that I'm seeing, if I just jump to these charts here, I do think overall the picture is bullish. I think the 4-year cycle, I totally agree with you, Dan. Like, there's a lot of fundamental structural reasons in the market microstructure why that definitely wouldn't play the same way as it has in the past. And we've seen that in the vol market. But if we look at this chart here, I think there's great ways to structure trades. So we had the October 10th, essentially like liquidations meltdown. To me, that meltdown definitely showed a little bit of froth in the market. We had as big of at least market cap adjusted, big of a meltdown as COVID's crash, as the FTX bankruptcy, for a random tariff tweet threat that moved the market 12%. So that sent vol spiking higher. But if I look at the trend since the beginning of the year, as people have been trading IBIT, so IBIT options launched in November of 2024, as that has come online, we've seen a structural decline in volatility for Bitcoin. And I think that trend continues. So this, to me, is a momentary pop. And it's a great opportunity to essentially structure a long delta, short vol. And then, if you're doing the short vol side, maybe just buy those cheapies, like 1 delta options, just in case we get the Ryan scenario, just to make sure you don't get run over on the crazy right tail risk. But I think my base case scenario, looking at the data, is still a grind higher. So if I just kind of go through a couple charts here, obviously we can see the spot vol correlation. It was really driven by the October 10th sell-off. That's sent vol a lot higher, just as the orange line. And then we can see the blue line, which is spot prices crashing. And we can see here on the scatter plot, really the most recent 25 days are really dominated by that negative spot vol correlation. But what I think is really interesting is if we look here at the term structure of volatility, we went into backwardation briefly, but we're still kind of relatively flat for the most part. We can get into a steeper contango if vol comes in at any shape. If it comes in anymore, we should get a steeper contango based off sort of this chart. And if I look at the term structure right now, I think there's kind of a couple things to keep in mind. One is I do expect a parallel shift lower in vol. And then if we actually start to steepen a little bit more, we could look at IBIT term structure. Right now, if we look at those end of year options, that's really the point where we start to roll off that term structure. So to me, there's, broken wing butterflies on IBIT seem pretty interesting. You buy the 70 call, you finance that by selling a couple 80 calls, and maybe you buy, 5 110s just in case, all for end of the year. And you structure a trade like that as volatility continues to drop, if we essentially kind of recover here and rally into the year end, you're going to kind of roll down this term structure. Your 2s that you sold to finance the 70 call that you own, the idea is that, we rally to 150K, that 1 call is in the money, those 2 shorts are at the money-ish, and you kind of collect that whole spread. So that's kind of the way that I'm thinking about it. And then for any reason, let's just say China and the U.S. don't come to agreements on some sort of deal and we crash, that call structure essentially has no sort of downside. It has a little bit of residual downside risk, slightly delta long, but you're not going to get hosed if there's any sort of a crash risk, and then you still have bullets in the chamber to essentially buy that mega dip or do another type of trade structure if we do get that mega dip for whatever reason. So in my mind, that's kind of the most favorable structure that I see here based on how vol is lining up.
Greg, outside of what we got from the Fed here today, obviously we have the upcoming discussions between President Trump and President Xi Jinping. Do you see any other catalysts that drive us higher into year end, or kind of what do you think would be behind this if we do get that grind higher, that move that you're describing?
Yeah, I don't see any other clear catalysts besides sort of the overall environment. So obviously equities are going very, very bullish right now, driven by AI. Risk assets are on. Gold has pulled back recently, but gold has had such an astounding move this year. Same with silver, same with platinum. The hard assets narrative seems to still make sense to me. And then, I still believe that overall theme of liquidity easing, both domestically here in the U.S., but globally, we're seeing rate cuts across nations, across the G20 countries. We just had a rate cut in Canada. I think recently a rate cut in the UK. We have the BOJ decision today, which is expected to leave rates unchanged. So, and they're pretty much near zero already. So I think that's kind of the bigger picture catalyst. And if we look at market caps, Nvidia is $5 trillion today. All of crypto combined is about $4 trillion. So there's still a young asset class, so to speak, for crypto.
When you put it that way, it fills me with hope. Though hope is not a strategy, obviously. Yeah, I think you look ahead at the meetings here. They've kind of floated some things. You've seen the move in the rare earth related names here in the market, and that might be a sign that you're going to get some concessions there. And so some of the the prices have come down as that pressure's been taken off. But yeah, I wonder, what would be the response in the market here if in fact you do get a rollback of these 100% tariffs that we have, you get concessions on rare earth exports, you get some deal around, IP and where the U.S. concerns are there as it pertains to kind of China stealing U.S. tech secrets or IP. And if you come out of that with, even if it's just a 6-month kind of truce, I think it would be pretty bullish, and ultimately think that you would see flows, from some of these EM funds that probably have just been sitting on the sidelines waiting for some clarity as to what happens next. You see some of that capital deployed, and I think, generally pretty positive for risk on sentiment. Maybe that's where you get the new Bitcoin all-time high sooner than later.
Yeah, absolutely. Ultimately, no one can predict the future for sure, but I think laying your chips down in a way that has some sort of upside exposure that's hopefully premium neutral or very premium cheap, caps some of that 5 sigma right tail risk with some cheapies, and then if things go the other way and crash for whatever reason, the ability to make a move in that situation and not be tied up and jammed with the position is sort of the best way to take advantage of sort of any scenario that is thrown at you, so to speak.
Yeah, one of the ways that I was looking at playing it, and just pretty plain vanilla approach here, but I'm just looking at something like November 75 calls in IBIT. They're trading at 30 cents. And obviously you can sell something against that, or you can put on the trade that you were talking about where I think you're out in December. Correct me if I'm wrong. But even if you look at, okay, could we get to new all-time highs? I think the 75 strike is the equivalent of about 130,000 in Bitcoin. And so that's what, $4,000 or $5,000 above the prior all-time high, which I think was just a couple of weeks ago, right? So this stuff moves pretty quickly. To me, it just seems like whether this happens or not, and correct me if I'm wrong, but it just seems like it's cheap to have some of these trades on in the event that, we do see some of that. You can see some of the scatterings of positions that we have here. But this is one that I'm talking about, just that 75 strike, and it's it's about a 50% implied vol, and I think you're talking about the term structure and seeing vol come down a little bit. But I would argue that in the event that you do get a short move, that vol versus where we've seen it go at times might be cheap.
Yep, that's a good point.
So, a lot of ways to play it. We're bullish into year end. I don't know, what else are you seeing out there? Whether it's Coinbase stock, Circle, like where else are you active?
Yeah, Circle's really interesting. So we just saw a ton of paper go up on the 385 November 20, I think November 23rd. It's about 23 days till expiration. I forget the exact expiration, maybe November 21st. But those 385 calls, they have about 50,000 contracts of open interest. And I think that was really interesting. All that got traded essentially in one day, maybe 2 days, but we had someone come in, buy a ton of opening paper for those 385 calls. Today Circle's 130. This thing's got 3 weeks till expiration, give or take. Obviously, we have an earnings cycle through that. But I thought that was kind of an interesting bet. I think the total premium was slightly over $1 million that was paid. It actually shifted the whole vol curve. That once that trade came in, vol repriced higher across the surface. But to me, that's really interesting. So the way that I like to think about, what's a trade that I can play in Circle? Obviously, I'm essentially long-term bullish Circle. I think the current business model is at the model of Netflix mailing out DVDs, but the broader picture is Netflix streaming, and I think Circle could be the cash of the future in a lot of ways. But one of the things that I find interesting, that I feel comfortable holding through multiple earnings cycles, is sell the 55 puts for January 2027, use that premium to buy 300 to 445 call spreads. Right now it's trading at a slight debit. Last week, I think you could put that on for premium neutral. But that's a really interesting trade. So it's about, a little over a year out. Worst case scenario, you get assigned at $55 a share on Circle, but that's essentially a built-in 3-to-1 risk reward, because Circle can go to zero and you lose $55, or Circle can go to 450 and you make $145. So that's essentially, give or take, 3-to-1 built in. And if Circle does nothing, that's fine. Let the premium all roll off. But that's an interesting type of trade, especially when you see someone buying 3-week paper or 1 month paper when they put the trade on for the 385 calls. I don't know. That just seems like either someone doesn't know what they're doing or someone knows exactly what they're doing.
Somebody knows something. They always know something.
Do you think that's not like a hedge or something? Like, do you think there's got to be like another side to that trade, right? Like, why would you just go and buy, if it's a sophisticated player, would you just go buy those deltas? Like, that just seems weird.
So if it was like part of a spread, I wouldn't expect vol to react across the surface the way that it did. If they're selling some other paper against it, but the way that this completely shifted a lot of the volatility premium. Maybe they're shorting the shares against it. But
that's what I was thinking. Like, maybe they were short the shares against it, and this is just kind of like their hedge,
Yeah, that seems kind of a funny hedge to me, though, because you're essentially like shorting shares with the 1 delta options that are really not going to give you any protection. I mean, over the next month, we can rally to 250, and then your hedge just expired worthless, and you just got hosed on the shares on a rally. So I don't know. It's interesting.
Yeah, that's a good point. I don't know, something to take a look at, because that seems unusual.
I'm going with somebody
Very
knows
unusual.
something. This is going to explode higher. We're not bullish enough, guys. Let's go. Greg, really quickly, I don't know if I had the right example up for the trade idea, but you were talking about selling the 55 put in January 27. So that's 443 days out, and then buying the 300, it was at 300, 345 or 300, 400 call spread?
300, 445.
445. Okay, so if anybody wants to follow along with that trade idea, 445 takes us all the way to the bottom of the screen, and there we go. So obviously pretty wide market. Market's closed right now, but the mid price that we have, at least on the screen, it'll change tomorrow morning, is $1.78. Yeah, nice return there in terms of, you know, your max loss. Obviously, if Circle goes to zero, I don't think anybody is calling for that here. But your buying power is probably the better way to look at this. Buying power of about $2,000 here on a one lot, and your upside max potential profit, as you mentioned, all the way up is a little bit over 14,000.
Yep. And to me, like that type of trade, that's like really a built-in 3-to-1 risk reward, where if you lose, you can get assigned to shares. And like, if you want to own the shares, you get to own the shares.
At 55. Yeah, not bad.
Yeah. So you can take assignment and you wait it out a couple of years. If it's an investment, which is kind of the way that I'm thinking about it. But this is a great way to get that upside exposure without missing the train. But at the same time, if you're not trying to buy mid-range where we are today, this is a great way to essentially sort of be on both sides of the tails.
See, those are the setups that I love, especially with crypto-related stocks, because I take the example of Coinbase back in 2022, 2023, right? Like, it went public in 2021. I think it went public around $300-400 a share. And then post FTX, post Terra Luna, post that collapse, there was a real overreaction thinking that Coinbase wouldn't have a business, when if you were just in the space paying attention, you realize like how strong and how important this company is, especially for U.S. financial services. The stock went down to $55, $40. I mean, that's like a full, I mean, to your point, investing, like I'll own that at $40 and wait until the market comes back, right? And I kind of see similar setup in Circle. I mean, I haven't dug into the business model. I don't think, I don't necessarily know that we're getting a huge blow up like we did last time. But to your point, if you think it is DVD, Netflix selling DVDs, maybe, there could be a pullback or something. You could get it under $100. You can get under $80. That seems, and hold it, because it is an important company. It is a really solid. I mean, U.S. dollar coin is only going to get bigger, right? Stable coins are the future. So, picking that up at $55 a share and holding it is not a bad, idea.
Yeah, exactly. It's one of those business models, how do you really call the true valuation?
Right.
The best that I can come up with is, what's the market cap? Market cap's about 30 billion. What else is 30 billion market cap? Dogecoin. Okay, what do I think is more valuable, Dogecoin or Circle?
Right.
I can think about it like that. Well, what about ETH? What's that market cap? Oh, $400 billion. Okay, well, if Circle is worth, let's say, a third of ETH because a ton of the transactions are USDC, blah, 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 to put Circle at about $100 billion in some, in some universe. And there's your $450 a share right there.
And I think you look at just growing stablecoin market cap across all chains, primarily ETH, but we're well over 300 billion now. I think we've talked about probably at $1 trillion sooner than later, end of this decade sort of thing. But you also look at within that, the market cap or the share of the pie on the USD side is increasing as well versus US dollar tether. So certainly more people adopting it, and obviously to the benefit of Circle. But Greg, one more question for you from the chat. This comes to us from Steven. Any thoughts on strategy, MSTR, MicroStrategy, whatever it's called, MicroStrategy stock going into earnings?
Going into earnings, no earnings plays per se. I continue to think like strategy is going to underperform. I also think, these treasury companies, we kind of got to watch out for death spiral cycles. So I think strategy is well positioned. And I don't think they're a death spiral catalyst. Their entry price is $74,000 a share on Bitcoin, or $74,000 a coin. But we have treasury companies that launched recently that bought ETH. Then we have treasury companies that are buying Solana. Then we have treasury companies that are buying SUI. And the more we go down sort of the altcoin trail with treasury companies, the more susceptible we are to a nasty pullback that forces the treasury company to sell coins to pay debt, or they can't refinance debt and they go BK. And now, under conservatorship, all the coins are sold. And then you kind of get this domino effect. I'd rather just own the coins. It's like when I'm trading gold, like everyone tries to outperform gold by buying the miners, and they always underperform gold. So just buy the gold is kind of how I like to think about it. It's more of a direct play, because otherwise it's kind of like adding another component of variance, and it's like a complex component of variance that I find less interesting. And I've talked about this before, but if anything, I like selling out of the money calls, like far out of the money calls on MSTU, especially because you have that 2x tracking error. And that 2x tracking error really pays off in high volatility assets. If something drops 50%, you have to rally 100% to break even. So that's even more compounded the crazier vol is. It's less important something like TBT, where the treasury volatility is call it 12%. But if I look at Bitcoin volatility at 40%, then that's crazy. And then if I look at other DATs that have 2x ETFs, where the underlying volatility is higher, then that's even more true. So that's the type of trade that I think is interesting with the MicroStrategy complex.
One last question for you, Greg. Put you in the hot seat. Rally into year end, do you think we see outperformance here with Bitcoin market cap dominance, or do we potentially see ETH outperform Bitcoin if they all go up together?
I think we're still in the Bitcoin phase. I think Bitcoin is a cleaner, hard money, digital gold narrative. And I think that's still what's leading right now. Obviously, we've had a pullback in gold. We've had a little bit of a pullback in silver. But this is like the best performance in gold that we've seen in decades. Silver, same thing. And so this pullback is just normal in my mind. What's abnormal is the massive rally we've had from $2,000 an ounce not too long ago to 4,400. That's pretty massive, especially in an environment where rates are pretty high, because there's a opportunity cost to owning gold is that it's not a yielding asset, and it still outperforms so strongly. So that's really where I see sort of your thesis, Ryan, about the massive upside move, which I think is definitely in the cards, and I think it makes sense to own some cheapies, just to have that risk on.
Yeah, I guess one last question then for you. When you see what's going on in gold, I mean, is that cause for concern? Does it reflect that there's something broken, or is it just that, we've been talking about for some time, and others in this space, is it just like the rest of the world's waking up to the debasement trade?
I think it's not something that makes me rest at night.
Yeah.
It's gold hanging out and just going sideways. That's everything is fine environment. Gold trending like crazy higher is not something, I don't know what it means, but I think it's no surprise that we have a pullback as the administration's flying around the globe and kind of shaking hands and kind of getting things all in order again. I think that's a good sign. It makes me feel good that gold is selling off in that sense. So yeah, I'd rather see the US dollar reign supreme, so to speak, than gold. But yeah.
Awesome. Dan, over to you. Final last words.
I don't know, Greg. I want. How's that Japanese yen trade doing for you?
Yeah, I mean that trade continues to work. Yeah, I just think it's it's just worth having that on. Just real quick to answer your question, Dan. So like the contango, so you can trade the dollar yen, which is just the FX pair. But if you look at the CME futures, CME has a yen future, and so it's quoted as the inverse is quoted in yen dollar. But what that tells us is that if you look at the future that expires in a year, it trades at about 3.5% higher than spot, and that's really capturing the yield differential between U.S. rates and yen rates. And so that makes it really interesting to own it because there's positive, or excuse me, to short it, to own dollar yen or to short the yen because there's positive carry to that short. And because FX is such a low volatility type of instrument, you can buy the put on the yen for cheaper than the contango roll down. So essentially you have free yen gamma because your theta is offset by the decay in the futures contango. So it's kind of an interesting trade. And that's one of those things that you can hedge by being long treasuries. So you kind of have a risk parity trade. And treasuries, owning treasuries is a convex trade. Owning puts on FX is a convex trade. And if they're both positive carry and both convex, it's hard to beat that.
Right. Right. Yeah, no, I thought it was interesting. I think, a little bit outside my realm. I think I'm a little bit more simple. Like I like that MicroStrategy move a lot more than this, but the way you explain it is simple enough for somebody that is a futures trader or, Forex trader and understands that. So I definitely will be checking in with you to see how that goes.
Fantastic.
Cool. Well, Greg, we'll leave it there. Thank you, as always, for coming on the show and sharing your insights. Before we let you go, though, where can everybody find you? Where can they sign up for the Amber Data newsletter that you write? It's a great piece every week. I suggest everybody subscribe. But if they want to do that, where can they find you?
Yeah, thank you. So you can find our newsletter with like weekly commentary around macro and crypto volatility. You can go to amberdataderivatives.substack.com. And if you want to check out some of these charts, you can sign up for a free account at pro.amberdata.io.
Awesome. Well, dude, thank you again for joining us here today. We will talk to you soon. Dan and I will be back next week on Monday. Until then, I'm Ryan.
I'm Dan.
Peace.